welcome to the marathon of management accounting. So basically this is paper number 12, which is nothing but continuation of your cost accounting, just advanced subject compared to your cost accounting, not much. Okay, so this marathon will be of around how many hours, sir? You can expect around 16 to 18 hours of marathon in total. Okay, so basically this particular paper has 10 chapters. Are we going to cover everything in the marathon, sir? The answer is no. The chapter number 1, we won't be discussing. Introduction to management accounting, we won't be discussing, as well as responsibility accounting, we won't be discussing in full. The basic requirement of like what is responsibility accounting, what is cost center, profit center, revenue center, all those things we'll be discussing. That's it. Functions, reporting, all those things we are not discussing. Okay. So all other chapters are going to be covered, sir. Yes. So as you guys already know, it will be of 4 days marathon. Today we will be discussing day 1, ABC, divisional performance measurement, as well as decision theory. These 3 what we are going to discuss today. Then your standard costing, day 2, standard costing, and responsibility accounting, day 2, and your this day 3, and portion of it might go for day 4. You can say transfer pricing might go for day 4. One of the, yeah, this will be day 4. Portion of that will go to day 4, and budget and budgetary control day 4. Okay, no urgency, we have enough time to complete this. Today it is very simple, small 3 chapters topic. But generally from examination point of view, out of all the 8 papers, students are a bit scared of this paper, MA, because of the question they ask. It's kind of decision making question. But you guys have to remember one thing. Wherever the ICMA is playing now, they are playing in this particular portion of decision making tool. All you need is first 40. Always remember, your examination approach should be 40 plus 20 plus 10 into 4. That means first you should secure your 40. How to secure this 40? See, your concentration should be to get around 22 to 30 marks in MCQ. All other thing is, other 14 marks you can get from any of the descriptive. With that 40 is sorted. After that you should concentrate for next 20. After that you should concentrate for your 10 marks, 4 sets, like that. Okay, so your concentration should be on that way. So passing this particular paper, in fact any paper, if you study, if you revise in a smarter manner, then it won't be difficult. However, if at all you don't study, revise, of course. If you revise wisely, easy to get. For example, you see, this decision theory is there, no? Generally, you can expect 7 marks plus around 2 marks in MCQ. One of the easiest topic, you don't have much things to discuss here. Responsibility accounting, other 7 marks. Theory in nature, theoretical in nature, but still, see, for your responsibility accounting as well as your introduction to management accounting, whatever the PYP questions are there, no, those you read and go, mostly it is sufficient. I can't say 100%, 80% according to me. If you see and go PYP questions of this first chapter as well as responsibility accounting, more than sufficient. And the good part about this is, they will give you choice. They will give you choice where 2 questions you can leave. That means if you are confident enough in your practical, then you don't have to attend theoretical question at all. But just because of 1 7 mark, don't sacrifice the other 7 mark. Okay, if your 5 questions of 14 marks is secured, then fine. Otherwise, remember, question number 1 generally will have first question of first chapter, second will be of ABC, one of the easiest chapter. Got it? So you can secure around other 7 marks over here. Divisional performance measurement also easy chapter, 7 marks. Budget and budgetary control around 17 to 14. You can go for 14 marks. Yes, I'm telling other than MCQs. Your standard costing, other 14 marks you can say, and generally students will skip this, don't skip. Because your cost accounting has the same standard costing. Of course, here overheads and sales variance will come. Otherwise, that is the case. And ABC other 7 marks. That means if at all you leave this around 20 marks also, if you leave in total 20 marks from this chapter also, still comfortably you can get that 100. I'm not telling you to leave. I'm telling you should not be scared of paper. What students will do is 1 or 2 questions they will see and they will be scared. Ayo, this attempt is gone. 1 or 2 is around 28-30 marks. Out of around 128 marks, 30 marks, how it's going to affect you? You should think from that point of view. Getting it? So, always approach should start from 0. 0 to reaching 40, 40 to 60, 60 to 70, 70 to 80, 80 to 100. Like that. It should not be ulta approach. If you start, ayo, this is gone, this is gone, this is gone, then automatically, psychologically, it will affect. That should not happen. Got it? Huh? These are the things. So, today, not much things. ABC, DPM, decision, theory. One of 3 easy topic out of all the topics. Got it? Okay. Now, shall we start with ABC? Before that, sir, what are the aspects will be covered in marathon? Of course, other than your chapter number 9 and chapter number 1, all other things, 100% conceptual coverage will be there. No doubt in that. Okay. Along with that, few illustration of study material, ICMA material, we might take for the conceptual clarity. I will tell which are those questions. Done. Plus PYP from December 23 till December 25. 5 attempts PYP we are going to discuss. 5 attempts PYP will be discussed. These are the aspects will be covered. So, sir, are we going to get the material? See, ICMA material you guys only have. What I will be sharing suggested answer sheet as well as PYP compiled. All the 5 PYPs compiled. Plus some PYP analysis is there. This is to revise because last moment you can't go through each and every question. No. So what we can do is, in this sheet you will get to know that question is on what basis. What are the questions they have asked there. Based on that you can go for solving these things. Okay. Sir, what you would suggest as your exams are 1 month? See, I would suggest you this. After marathon, whatever the chapters we discuss, PYP to anyhow we will discuss here only. Whatever chapters we discuss, you go home. Conceptually it will be clear already. All you have to do is whatever there in the study material as well as comprehensive numerical questions, just go through that once. So that topic will be revised. Otherwise, if you sit on doing it on your own, it will take your own time. Empty wall is interesting, no? When you sit to study. So, make sure you, that day's topic, you are going to cover that particular day itself. Okay. So, this 4 days, it won't be hectic also because half day. Other time you can spend on revising the concept. With that, in 5 to 6 days, if you ask me, management accounting will be sorted. And trust me, one of the easiest paper to score. You should use your brains. That's it. Okay. With that, shall we start first discussion on our chapter number 2, that is ABC. 10% they are telling, so 10% in you are telling only 7 marks. 7 marks in descriptive. 7 marks in descriptive. That doesn't mean that they are not going to ask in MCQs. Of course, in MCQ, it will be there. Okay. So, you don't have to worry. Only, sir, 10% and all. MCQ, always remember, sir, MCQ, what we should do? MCQ, all the PYP MCQs, guys. All the MTP MCQs plus book back MCQs. There are 50-60 MCQs. No, you just go through that once, because majority of the time, at least for 20 marks so far, institute is repeating the MCQs. You should use your brains well. See, of course, understanding concept, everything is there, no doubt in that. But still, end of the day, all we need is marks. Your approach should be that way. Examination time. Okay, these are the things. Now, if you guys are ready, we can start with ABC. Yes. Give me 1 minute. Yes. Activity based costing. What is this activity based costing? It is nothing but your overheads was there, no, in costing. Just the continuation of that. Overheads absorption costing method you are going to learn in cost accounting. Here you are going to go for modern approach of it, which is ABC. How this ABC works? Concentrate now. 1 second. Now listen, how things will work here. See, expenses you can divide it into 2. One, I will call it as prime cost, or we can call it as direct cost. One more is your overheads. Prime cost is very simple, your direct material plus direct labor plus direct expense. This we call it as prime cost. We call it as prime cost or direct cost because you can trace directly with the output. With that particular product, you can trace it and you can charge it directly. Whereas overheads, we call it as all your indirect material, indirect labor, indirect expense. Indirect material, indirect labor, indirect expense. Now this we call it as overheads because you can't trace it directly with any output. Now this though we can charge directly to the output. This can we charge directly to the output? No, you can't trace it. Correct? No, you can't charge it directly to the output. But can we leave it without charging? No. For example, your classes, are they recovering only faculty cost? Other cost also they should recover, no? That means for on you guys they should charge, no? On our final product we should charge other expense, no? Now when we are charging other expense, how much we should charge? On what basis we should charge? What we used to do was, there was one traditional approach. We also call it as absorption costing method. Absorption costing method, we used to absorb it. How this absorption will work, sir? See, there is a blanket rate, there is a departmental rate, different rates that I am not going to teach now. What are these things? I will tell it on departmental rate basis only. Department A is there, let's say. Department B is there. Department A is there, Department B is there. We will take the budgeted data. Of course, no. Because we are deciding selling price, etc. before we produce it or after we sell it to customers. Before we produce it, no. Otherwise, when customer asks, what is the selling price? How can we tell? So, selling price is determined before sales only, everything. That means, generally we go for budgeted amount. Correct? No? Now listen. There will be different expenses. Indirect material would be there. Let's say stores overhead. Stores overhead. Some amount here. Insurance on stock. Insurance on stock. purchase order cost, correct, purchase requisition cost, like that few material related stuff will be there, and rent could be there, other insurance could be there, depreciation could be there, power, fuel, all those things could be there, power, fuel, all those things, light, heat, those things should be there, light, heat, AC, all those things, correct? No, and your ESI, EPF of employees, we might treat it as overheads. Your indirect labor will be there, your manager salary will be there, your canteen expenses will be there. Like this, we will divide on some ratio between department A and department B. Now let's say department A, we got some amount. Department A, let's say we got around overheads as 2 lakhs. Department B, let's say we got overhead as 4 lakh. Now let's say department A is labor oriented, department B is machine oriented. Department A is labor oriented, department B is machine oriented. Now what we will do is this 2 lakh we will divide it with the labor hours. We will divide it with what? Labor hours. Let's say we expected around, budgeted around 50,000 hours, because as I already told you, the data will be of budgeted, not the actual. Can ArivuPro people say you guys that you pay 10,000 now, faculty cost, remaining after we incur, after 8 months we will tell you how much you should pay. Can we do that? Before only we should charge, no? Okay. Machine hour, let's say around 40,000 hours. As it is machine oriented, I am going to calculate here. So per hour of labor, how much we should charge? 4 rupees per labor hour. This one, 10 rupees per machine hour. By the way, this rate only we call it as absorption rate. What do we call it as? Absorption rate. This rate only we call it as absorption rate. How did we arrive at absorption rate, by the way? Absorption rate is equal to budgeted overhead divided by budgeted hours. If it's hourly basis, generally we use the hourly basis. That's why I'm taking that example only. Budgeted overhead divided by budgeted hours. Now, sometimes they will give absorption rate. Now guys, to the absorption rate, if I multiply budgeted hours, what do I get? To the absorption rate, if I multiply budgeted hours, what do we get? We get budgeted overhead. What do we get? Budgeted overhead. Is that clear? Clear or no? Sometimes they don't give budgeted overhead directly. They might give absorption rate. They might tell budgeted hours. Then you have to compute budgeted overhead. Sometimes budgeted hours also directly they won't give. You know what they will do? Say I'm not going topic basis. Whichever the relevance, I mean the linkage point will be there. That I am taking, assuming that you guys remember something of ABC. Now, budgeted hours also sometimes they might not give. What they might tell? They might tell machine hour rate. They might say machine hour rate, rupees 10 per hour. Okay. And they might say we have 3 product, X, Y, Z. And they might say budgeted units. X we thought of producing 10,000 units. Y we thought of producing 20,000. Z we thought of producing 30,000. Now, machine hours per unit they might say 0.5, 0.75 and 1. By the way, 0.5 means how many minutes? Not 50 minutes, 30 minutes. Please keep that thing in mind. Students will go wrong there. They might give 45 minutes straight away, 0.45 gone. 45 minutes means it is 0.75 hours. Correct, no? They might give something like this. Now, how to compute the total budgeted overhead? Guys, how much budgeted hours here? 5,000 hours. Hello. Here we budgeted 15,000 hours. Here we budgeted 30,000 hours. That means total is how much? 50,000 hours. Total is how much? 50,000 hours. Now I know the budgeted hours. I know the budgeted rate. Can you say me the budgeted overhead how much? 50,000 into 10, 5 lakhs. 50,000 into 10, 5 lakhs. Your budgeted overhead is 5 lakhs. Anyone, any doubt in computation of budgeted overhead like this? Now coming back to this, absorption rate we computed. No, this we are going to charge. For example, any product taking 4 hours of labor, for that we will charge 16 rupees as the overhead. 4 rupees into 4 hours. Anything is taking 3 hours of machine, 3 into rupees 10, 30 rupees we will charge. This is your traditional approach. But any problem with traditional approach here? Everything seems to be good only, no? Hello? Compared to our blanket rate, instead of dividing it to department, charging for the whole factory one rate. Other than that, this departmental rate is best, no doubt in that. But still, here also there is one limitation. What is that? Guys, can I say these things are relating to material? These things are relating to material. Can I say rent, your light, heat, all those things on the basis of space, insurance, depreciation, power, fuel, etc. These are machine related. These are machine related. Your ESI, indirect labor, manager salary, canteen expense, all those things, those are labor related. Correct, no? But your material related, space related, machine related, labor related, everything you divided with what? Labor hours. Everything you divided with what? Machine hours. That means, don't you think material and machine hours or labor hours has nothing to do? But still we absorbed on that basis. Don't you think space and labor hours, machine hours has nothing to do? Still we absorbed on that. Machine has nothing to do with the labor hours, still we absorbed on labor hour basis. Labor has nothing to do with the machine, but still we absorbed it on machine hours. Getting it or no? Then don't you think absorbing everything as per one single rate is not the right way of absorbing? That's why what we did, we came up with activity based costing. In activity based costing, what we will do, all these are materials related, no? We will not divide cost on the departmental basis. What we will do, we will divide cost on the basis of activity. We do something called as activity cost pool. Activity cost pool. That is, first we will find out different activities. Then what are the activities are similar in nature? Like stores overhead, insurance, purchase order cost, purchase requisition cost, like the different cost will be there, no? Everything is relating to material, no? That I will go do it as one cost pool. Your rent, lighting, heating, all those things are relating to your space, right? Area. So that I will take it as one more cost pool. Your insurance, depreciation, power, fuel, all those things are relating to machine, right? That I will take it as one more cost pool. Your ESI, EPF, indirect labor, manager salary, canteen expense, all those are relating to labor, right? That I will take it as one more cost pool. Now, relating to material, I will divide it with the cost driver. Relating to material. Relating to area, I will divide it with the cost driver relating to area. Relating to labor, I will divide it with the cost driver which is relating to labor. It could be labor hours. relating to machine, I will divide it with the cost driver, which is relating to machine. Could be machine hours or machine setup, number of operations, like that. Generally in ABC, in question only, they will tell what are the cost driver, what are the cost pool. You don't have to worry. Got it? Okay. You understood? Now what we will do, rather than charging one single rate, here I found out 4 different rates. I will charge on that basis. Now, sir, you told cost pool. What is that? Similar nature of activity cost bought together. Similar nature of activity cost bought together. That is your cost pool. What is cost driver, sir? Any variable which will affect the movement of the cost. More you consume or more you do that activity, which is going to increase your cost. Less you do that activity, that is going to decrease your cost. Now that variable is there, no, that only we call it as cost driver. For example, electricity. Now, the consumption of electricity is there, no? What is it? Consumption of electricity. Kilowatt hours. This only we call it as cost driver. Because if you consume more, your power cost will be more. If you consume less, your power cost will be less. Is that clear or no? If you consume more, your power cost will be more. If you consume less, your power cost will be. Got it? This is your cost driver. For example, setup cost. Setup cost. Setup cost means preparing the machine for the next batch. Now, if you go for more number of batches, setup cost will be more. Less number of batches, setup cost will be less. Now that setup is there, no? Number of batches. Number of batches is your cost driver. You are getting it or no? Number of batches is your cost driver. Purchase order cost. Purchase requisition cost. More number of purchase order, more the cost. Less number of purchase order, less the cost. Now your purchase order is your cost driver. Your purchase order is your cost driver. Is that clear? Akka. Now, those are your cost driver. Got it? Sometimes what they will do, you know, I already told you, if they don't give you full budgeted overhead, how to compute. After that, that budgeted overhead, they will tell, divided into 4 activities. A, B, C, D. They will tell A 20%, B 30%, C 40%, activity D 10%. Now what you should do, this full budgeted overhead is there, no? That should be divided in this ratio. We will get overhead for each and every activity. After that, what you should do, you should divide it with the cost driver of that respective activity. Machine hour, labor hour, purchase orders, purchase requisition, number of machine operation, like that different cost driver they will give. You have to divide it with cost driver. Then you should charge it to the product. Simple. Then you should charge it to the product. When we see the question, we will be able to revise it. Now, hope it is clear so far. Hello. Now, for MCQ, this point is important. What is the process for the ABC? First, we will determine the activities. Correct? That activities we will find cost of activities. Next, we'll find out which is our cost driver. Then we'll find out cost per cost driver. Then we will allocate the cost. This is the procedure involved in ABC. They might ask in cost of activities, nothing but cost pool. Yeah. After we find out activities and we group them into cost pool, we'll find out what is the cost of that cost pool. Then we divide it with the cost driver. we will arrive at cost per cost driver, then we will charge it to the final product. This is the process. Many times they have asked in examination, which is the right process of ABC. First determining what are the different activities and grouping them into cost pool. Then determining cost of that cost pool, overhead of that cost pool. Then dividing, finding out the cost driver. Then dividing it with the cost driver to arrive at cost per cost driver. Then charging it to the product. This is the procedure. In MCQ, if it comes, easy 2 marks. Is that clear? Pakka? Traditional approach, you understood what we are going to do. Now, I'm not using any other material, I'm using ICMA material only. By the way, what do you mean by cost object, guys? Any item for which separate measurement of cost is required. That is cost object. For example, we want to know for the CMA batch, how much is our cost? Then CMA batch is your cost object. We want to know for Chennai branch, how much is the cost? Now, Chennai branch is your cost object. There are different ways of cost driver, okay? It is a factor which causes a change in the cost of an activity. There are 4 types of cost drivers. MCQ question. One is resource cost driver, activity cost driver, volume based cost driver, non-volume based cost driver. What are these? Guys, resource cost driver means cost driver which consumes the resource. Resource cost driver means on the basis of consumption. For example, electricity cost. Electricity cost. More and more units of electricity you consume, more and more will be the cost. Less and less the electricity you consume, less will be the cost. That we call it as resource cost driver. It measures, it is a measure of the quantity of resource consumed in an activity or by an activity. Whereas your activity cost driver is on the basis of activities performed. For example, purchase requisition cost. More number of times you place the purchase, more will be the cost. Less number of times you place the purchase order, less will be the cost. Machine setup cost. More number of batches you run, more the cost. Less number of batches you run, less the cost. Now, all these are your activity cost drivers. Whereas volume based cost driver is, you can trace it with the particular volume. More production you does, more will be the cost. For example, inspection. If you want to do that quality control check for each and every activity, each and every unit, then more units you produce, more the quality control cost. Less units you produce, less the quality control. That means this you can trace it with the level of output. Whereas non-volume based means you can't trace it with the level of output. For example, anything relating to the space, whether space and output has anything to do, that is your non-volume based cost driver. For MCQs they might ask, which are, that is volume based cost. So basically 4 cost driver, guys. Which are those? Resource cost driver, activity cost driver, volume based cost driver, non-volume based cost driver. To solve other sums and all, it is not important, but for the MCQ point of view, this is important. Got it? Now, merit, demerit, all those things, whenever you have time, you go through this. Guys, now you can divide the activities into 2. you can divide activities into two. What are those, sir? One is value added activity. One is value added activity. One more is non-value added activity. One is value added activity. One more is non-value added activity. What is this value added activity, sir? Guys. Value added activity is nothing but which adds value to the final product. Any activity which adds value to the final product, we call it as value added activity. Whereas any activity won't add value to final product, that thing we call it as non-value added activity. Is that clear? Value added activity means any activity what we does which adds value to the customer or value to the final product, value added activity. Non-value added activity means it's not going to add any value. You do it or you don't do it. End of the day, it's not going to add any value. For example, now ArivuPro doing marathon. Value added, non-value added. What do you think? Value added. Customers will value it. Students will value it. It's going to add certain value to the product. Now, ArivuPro doing Valentine's Day celebration. Is it value added? Anyways, it's value added. No way. Time pass. Correct? No. Now, those activity which are going to add value, that we call it as value added activity. Those activity which won't add any value, that we call it as non-value added activity. Got it? Hello? Now, why we are discussing that, sir? Because once you segregate activities into value added, non-value added, avoid non-value added, no? Save some cost. Put that cost to the value added activity rather than going and giving the non-value added activity. Yes or no? Now, shall we see one question based on this? Illustration number 11. Illustration number 11. Of your ICMA material, which is there in page number 60. Concentrate. State whether each of the following independent activities value added or non-value added. First one, polishing of furniture used by the systems engineer in the software firm. Value added or non-value added? Value added or non-value added? Non-value added. For example, this particular table, I am taking class. Here they are doing this polishing, keeping some nice flowers this side, full. When you see it is like what you guys call it as Pinteresting, full aesthetic. Does it add any value? Time pass, no? Yes or no? So, same way for furniture, for software engineer, polishing and all has nothing to do. Give them one disc, give them one chair, let them work. It's not going to add any value to the final product. Correct? No? Maintenance by software company of receivable management software for the banking company. Banking company is our client, customer. You are maintaining their receivables management system. Software, regular updating the software, regular checking whether any security breach is there, etc. All those checking whether customer will value it or no. Of course they will value it. So that is value added. Painting of pencils manufactured by pencils factory. Value added because the quality of the pencil could be increased. Sales level can be increased. You might be knowing the story of DOMS. When earlier there was a pencil called Natraja, red and black, and Apsara, grey and black. But DOMS came up with 12-13 colors. Full jatra they did. Automatically sales increased. That means it's value added or not value added. and also it's going to increase the quality of pencil also. Customer's computer keyboard cleaning by the computer repair center. Now I went for my laptop service. When they are doing that laptop service, they saw that lot of dust is there in between the keys of my keyboard. They cleaned it and gave. Will I value it or no? It's going to add value to customers or no? So it is value added. Providing brake adjustment in cars received for service. Again, value added. Provided you adjusted brake properly. If you did ulta, gone. Got it? So this is your question. Mark it as LMR. Last minute revision question. That is on the basis of whether the activity is value added activity, whether it's adding any value to the final product or customer, or non-value added activity. That is whether you do it, you don't do it. End of the day, customers are least concerned. Got it? Yeah, that's what. If at all it's normal overhead, we don't even check which is value added, which is non-value added. We keep on incurring. But if at all we divide on activity basis, then we can divide it into value, non-value. So value added we will keep, non-value added we will eliminate. Automatically cost saving it is. Understood? Now, guys, there are different levels of activities. Different levels of activities. One is your unit level. What level? Unit level. What is that unit level, sir? Unit level is basically the activity which you can trace it with the units. Each and every unit what you produce. If you can trace any activity with that unit level, that we call it as unit level activity. For example, your quality control. Each and every activity will inspect whether it is perfect or no. Then you will send it to the customers. Can you trace or no? For example, bank loan application. Are they going to dispose it off in bulk, or each and every application they are going to read? Each and every application they check. Correct? No? Now, the checking cost of the each and every activity, can you trace it with the particular unit or no? Particular loan or no? You can. Now, that is your unit level activity. That is your unit level activity. Next is your something called as batch level activity. Blah, 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 blah. Batch level activity. What is this batch level activity? The activity which you can trace it with the batch. The activity which you can trace it with the batch. Again, MCQ very important. Batch level activity. I mean, not only batch level, any level of activity. Batch level activity, you can trace it with the batch. You can trace it with batch. For example, now, setup cost. Does it matter how many units are there in that particular batch? No. All it matters is how many batches you have run. Inspection cost. If at all per unit we are not inspecting, we are going to take samples. In one batch we will check 10 units. In one batch we will check 10 units. Now, if that batch has 1000 units, in that we are checking sample of 10, no. That means, can you trace it with any unit? You can trace it with the whole batch. That is your batch level activity. Purchase order. Are you going to place purchase order for each and every unit, or you are going to bring it in bulk? Bulk, batch, purchase, batch. So that is your batch level activity. Got it? Next one we have product level activity. Next one we have product level activity. This you can't trace it with unit, you can't trace it with batch. You can trace it directly with the product. For example, Tata Sierra is there now. You can see the advertisement everywhere in the IPL. Correct now? Is it relating to one single car? Is it relating to one batch car? Or is it relating to the whole market of Sierra? That means they are advertising the product. Now, whichever the cost, you can trace it with the full product as a whole, not one single unit. full product. That kind of activities we call it as product level activities. And all these activities need some support, no? Human resource support, infrastructure support, light, heat, power, energy, all those nonsense stuff. Supporting activity. That kind of activities we call it as facility level activity. That is supporting all these activities. Supporting all these activities like employee training, HR, building, insurance on building, depreciation on building, all those building related stuff, all those HR related stuff, all those support functions, everything we are going to treat it as facility level activity. Facility level. Clear? So we have ULA, BLA, PLA as well as FLA. What is ULA? Unit level activity, which you can trace it with each and every unit. The activity which you can trace it with each and every unit. Batch level activity. Activity which can be traced with the batch, not per unit. Product level, not with unit, not with batch. Straight away with the product. For example, marketing cost, development cost, all those stuff. FLA, facility level activity. That is support function. Is that clear? Okay. They might ask in MCQ. They might ask out of this, which is batch level activity? Option A, B, C, D. Which is unit level activity, like that. Listen. Inspection cost could be unit level, inspection cost could be batch level. If you inspect each and every unit what you produce, that is unit level activity. If you go on sampling basis, then it is batch level activity. Please keep that thing in mind. Now, shall we see this question? Illustration number 12. Illustration number 12. ABC Limited uses activity based costing and accumulates overhead into cost pool. They are asking, you are required to find out for each cost pool whether cost pool would be unit level, batch level, product level or facility level. First one, human resource, facility level. Parts management. Here your parts management means for each and every product, not for each and every unit. You can't trace it with batch also. It is for the whole product segment. Product level. Purchasing. Hey, you won't purchase each and every unit alone. Purchase cost is your direct material, that we are not concerned at all. We are talking about overhead involved in it. Quality control. It could be unit level or it could be batch level also. If at all inspection is sampling basis, batch level, otherwise it is unit level. Unit level is more appropriate. Equipment setup, batch level. Setup cost once per a batch, not for each and every unit. Correct now? Training employees, facility level. Assembly department, unit level. You have to assemble each and every unit. Receiving department, batch level, because you are relating to purchase. It is. You are going to order in bulk. You are not going to order for one single units. This is the case. They might give any of these four and they might ask you, tell which is batch level, which is unit level, which is facility level. There is one more expected MCQ. So far I told 3 expected MCQ from this. 4 actually. One is different types of cost drivers. Resource cost driver, activity cost driver, volume based cost driver, non-volume based cost driver. Then I told the process of ABC. First find out activities, cost pool, cost driver, cost per cost driver, then charge it to the final product. Then we discussed about value added, non-value added. They might give out of this which is value added, which is non-value added, option A, B, C, D, like that. Next one I told is different level of activities. Unit level, batch level, product level, facility level. Is that clear? Okay. Go to illustration number 16. This also once they have checked in the examination. Okay. So this is all about utilized capacity, unutilized capacity relating to that. Hope I am not going too fast. You guys are fine with it? I mean, not fine also, marathon end of the day. Shall we see this question? Yes? Look at this question. A manufacturing company has 3 accounts clerk responsible for processing purchase invoice of supplier. So we have how many accounts clerk? 3 accounts clerk. Each clerk is paid salary of 1,50,000 per annum. So per annum, how much is our salary cost? 4,50,000. Now my question is it fixed overhead or is it variable overhead? Fixed overhead. We have nothing to do with how many invoices they have processed. Whether they have processed 1 or they have processed 10,000. End of the day, we have to pay them salary of 4,50,000 per annum. Then, and they are capable of processing 5,000 purchases every year. That means total how many invoices we are planning? 15,000 invoices. That means we are going to recover around, recover in the sense charge for each and every invoice. How much? Salary. 30, is it? 30, right? We have to charge cost of rupees 30 for each and every invoice while determining the total cost and selling price. Relating to this, in addition to the salary, company spends 45,000 per year for printing of form, postage, etc. Assuming 15,000 invoices are processed. So now my question is, when will you incur your forms, postage, etc.? Whether invoice is raised or not raised. In both the cases we will incur this, or only and only when the invoices are raised we are going to incur. Only and only when the invoices are raised we are going to incur. That means this is your variable overhead, which is gonna be 45,000 divided by 15,000 rupees, 3 per invoice. Remember, now as it is variable in nature, there is nothing called unused used capacity, because if it's not used, you are not paying for it. If you have used, you are paying for it. So it's a variable. Please keep in mind. But fixed overhead, is that going to be like that? No. You have to pay so much. You use, utilized. If you're not going to use, unutilized. But you have to pay for that. No doubt in that. Is that clear, everyone? Okay. First one, what they're asking. First, calculate the activity during the year. 12,500 purchase orders were processed, or invoice are processed. We estimated it to be 15,000, but we processed only 12,500. You are required to calculate the activity rate for the purchase order activity. Break the activity rate into fixed and variable. Array we already did. Fixed was 30 rupees per invoice. Variable was 3 rupees per. In total it is 33 per invoice. Is that clear, everyone? Next, calculate total activity availability. Total activity availability is 15,000 units. Divide it into activity usage, 12,500. Activity unused, 2,500. Next, calculate the total cost of resource supplied. Guys, what is the total cost of resource supplied? Don't take 4,95,000. You will be going wrong there. I agree. Salary wise you supplied. 4,50,000. You don't have choice. But relating to that variable, you will supply only resource equivalent to 12,500 units or 15,000 units. 12,500 because it's called as variable for some reason. So you are going to supply the resource equivalent to 12,500 into 3. Got it? So how much it is? Sorry? Total. 4,87,500 is the total cost of resource supplied. Break it into activity used and activity unused. Activity used is how much? 12,500. Activity unused is 2,500. Relating to 12,500, I can charge 30 rupees also fixed plus 12,500 into 3 rupees also. Variable also I can charge. How much it is? 12,500 into 33. 4,12,500. Got it? Whereas for this 2,500, am I incurring any variable cost? This unused capacity, I am incurring only fixed cost. So 2,500 into 30 plus nil. 75,000. Hope you guys understood this kind of unique question. Mark it as LMR. Because it's variable, no? If we are not processing 12,500, what you will post? Empty sheets? No. That's the reason we are not incurring at all. So there is nothing called unused there. If you are incurring, there will be unused. Otherwise, no unused as such. Hope it's clear, everyone. Hello guys. Is that clear or no? That's all about ABC. Conceptually, that's all about ABC. Now we will be discussing few past year paper questions. Shall we discuss? Okay. Okay. We'll go in reverse order, okay? We'll start from recent attempt paper, then we'll go to December 23 or so. Luckily, from last 2 attempts, Institute started giving full answers. Till then, it used to be 1-line answer. 14 marks, 7 marks, whatever it is, 1-line, 2-line answers. But now, luckily, in the recent 2 attempts, they are doing that. Let's see. Hopefully, they continue it. But yeah, can't trust. December 25, you can see there, they have given 2 MCQs there. That means 4 marks from the ABC as well as question number 2B. Generally, question number 2B, they are going to ask from ABC only. But that need not be always. So far, it is like that. They can change also. No restriction as such. There is no rule that they should give that way only. So, let's see this 2 MCQs followed by descriptive. Okay, I am not using any chapter wise thing here because the problem is if I use chapter wise, when it goes to YouTube, sir, material, due to some reasons, we also won't be able to give the material. But it feels so bad to tell them that we won't share. Better chapter wise. Analysis sheet I will be sharing. If you have question paper, great. If you don't have any scanner, etc., I will share this answer key as well as question compilation also. You can use that. No problem at all. Right? Now, production, third one and fourth one, right? Look at this Third one, production details of measure Bunny Food Care are as under. Production units are 1000, 1100, 1200, 1500. Machine hour per production run. That means per batch they are telling. Please keep that thing in mind. And whenever the question says something like this, guys, whenever the question is big, all you have to do is read what they are asking. Last line, bottom approach. The rate per cost driver they are asking. Rate per cost driver they are asking. Units are produced in the production run of 10 units. If the activity cost pool during the period is 2,25,000, that means your overheads are 2,25,000 divided by what is the cost driver? Overheads are absorbed on the basis of machine hour rate. So your cost driver is machine hours. So now immediately our mind will say, array, very easy, machine hours are there, 50 plus 40 plus 30 plus 40, gone. Hey sir, this and all you can't tell, we are not that dumb also. We know we should multiply 1000 into 50, m plus 1100 into 50, sorry 40, m plus 1200 into 30, m plus 1500 into 40. Correct? No? Wrong. Why? Machine hour they haven't given per unit. They have given per batch, per run. First you have to compute number of batches. They are telling each and every batch is of 10 units. So to produce 100 units of A, how many batches we should run? Sorry, 1000 units of A, 100 batches. 1100, 110 batches. 1200, 1500. Got it? Now, may I know the total machine hours here? 100 into 50, m plus 110 into 40, m plus 120 into 30, m plus 150 into 40, m plus MRC. Sorry? 19,000. 19,000 hours. So may I know per hour how much, please? 11 point. Option B. Is that clear, everyone? In activity based costing, an item for which cost measurement is required is called as cost object. Cost driver is variable which is going to affect or influence the cost. Cost pool is something, all the similar costs brought together. Cost matrix, that is not of ABC, that is of decision table. Decision theory. Is that clear? That's all about. Don't you think you would have got 4 marks? Provided you would have taken care of this. Correct? No? Now, go to 2A. See, from the first chapter, now I am telling what are the things you should check. From the MCQ point of view, better to go through that whole chapter once. And also, evaluation of your management accounting. Stage 1, stage 2, stage 3, stage 4. That is also important from MCQ point of view. Plus, from descriptive point of view, majority of the time they will ask how your management accounting affects your business world. Global environment, some nonsense thing. That one they will ask generally. Plus, majority of the time they ask difference between MA versus, difference between MA and FA, MA and CA, management accounting, cost accounting, management accounting, financial accounting, like that. Those are the few important things. My suggestion is, whatever is there in the PYP of this first chapter, go through that once. Okay? Done. Look at this question. Second one, 2B. What they are asking? Determine the cost driver rate for each activity. Awesome. Second, prepare a statement showing the total manufacturing cost per unit for both RW1 and RP2, assuming budgeted production is achieved. So they're asking cost driver rate. Also they're asking cost per unit. Simple. So what is this page number 45? In the answer key, we'll find the answer for this question in page number 45. Okay. Innovative Robotics Limited specializes in manufacturing two advanced industrial robots. So our products are RW1 and RP2. These are our products, finished product. That means our overheads to be absorbed to this. The company currently absorbs its factory overhead based on the direct labor hour. Our existing method of absorption is direct labor hours. For the upcoming month, the company has budgeted total overhead to be 37 lakh 50,000 and 50,000 direct labor hours. That means traditional absorption rate is how much? 37 lakh 50,000 divided by 50,000. Don't do into 100 and all, not percentage. So we are absorbing around rupees 75 per labor hour under traditional method, absorption method. Further detail of the two product line are as follows. Budgeted production. RW1 we thought of producing 6,400 units. RP2 we thought of producing 7,700. Direct material cost is 700, 800. Direct labor cost is 720, 960. Labor hours are paid at 240 per hour. That means here this will take how many hours of labor? 720 divided by 240. 3 hours. This will take 4 hours. See, in this question they didn't ask. Listen. In this question they didn't ask unit cost under traditional approach. However, if they ask what you should do, very simple. RW1 is there. RP2 is there. See, I'm not concentrating on presentation here. Not a regular class. But in the examination, you know what to do. Wherever rupees, hours, everything should be thrown, as well as working should be shown very clearly. First, direct material. How much they are telling? 700, 800. Ayo sir, take total. No, they are asking per unit. No, they are asking per unit. No, why you have to worry about it? Direct material 700, 800. Direct labor 720, 960. Guys, your prime cost has nothing to do with this. Your prime cost has nothing to do with the method of absorption, because that is relating to overheads, not the prime cost. So here the prime cost is 1,420 now and 2,760. So 1,760. Is that clear? Now to this we are going to add overhead. Under traditional approach, overhead is recovered at rupees 75 per labor hour. First one will take 3 hours of labor, 720 divided by 240. So 3 into 75, 225. Second one, 4 hours of labor it will take, 4 into 75, 300. That will give you cost per unit. Simple. 1,645, 2,060. Clear? This is your traditional approach. This is your traditional approach. Anyone in doubt? Now, a recent analysis has identified that total factory overhead is 37 lakh 50,000. It can be traced into 3 primary activities: order processing, machine processing, product inspection. Now, these activities are driven by the specific drivers. The relevant data for these drivers, as I already told you, they will only give enough information for cost driver. You don't have to break your head. But generally remember, if it's something relating to batch level activity, number of batches will be the cost driver. Machine, either machine operation or machine hours. Labors, labor hours, like that. Okay, purchase order, requisition, etc. Now, first, order processing 7,50,000, and out of 3 different cost driver what they have given, which would be the better one? Number of orders processed. How much is the total number of orders processed? 600. Correct? No? 400, 200, 600. And remember, sometimes the data of the cost driver will be per batch and all. That time you can't take that itself as the denominator. That is per batch. We have seen no in that MCQ. You can't take total cost divided by that per batch. You should take the overall. You should know to convert and take. So reading question is very important. In examination, please read the question carefully. In CMA exams, time is more than sufficient. Trust me. Time is more than sufficient. You don't have to break your head. You don't have to write fast. Full panic mode. No, nothing. Take your time, read the question twice and then solve. Because once you read, you might end up missing few points. Here, luckily, they didn't tell anything per batch and all. So, overall only it is 7,50,000 divided by 600. Sorry? Per order. See, I'm answering for the first one here. Determine the cost driver rate for each activity. That one I am talking. Machine processing. Machine hours would be the good thing. So, 50,000 hours. How much? 50 per machine hour. Product inspection 5 lakh divided by inspection hours 20,000. 25 per inspection hours. Prepare a statement showing total manufacturing cost per unit they are asking. This is very simple, guys. Till prime cost, as I already told, is it going to change? It's not going to change till prime cost. So overheads, of course, you are going to divide it into different activities. First activity is order processing. Correct now? Order processing. Listen here. I'm not going to show the calculation, but in examination you should show the calculation. How, sir? Guys, how many orders are processed for welder? 400. Each and every order processed will cost you 1,250. Can I say this? This for the full welder, full product. How many units? They are asking per unit. No. How many units we have produced? 6,400. How much per welder? Sorry? 78.125. I will take it as 13. Done. Next one. 200. Correct now? 200 into 1,250. How many units? 7,700 units. 30? 32.47. Next, what is there? Machine processing. Machine processing. It is 50 rupees per machine hour. Correct now? Guys, first one is taking how many machine hours? 22,500. We will charge 50. But now this will give for whole product level. We want unit level. So we'll divide it with number of units. Number of units are 6,400. How much it will be? 170 point? 175.78 what? 78. Done. Next one. 27,500 is the machine hours for painter into 50 divided by 7,700 units. 170.57. That is your machine processing. Next is product inspection. Product inspection, guys, 5,000 hours. Each and every hours is of 25 rupees. 5,000 into 25 divided by 6,400. Sorry? 19.53. Done. Next one. 15,000 multiplied with 25 divided by 7,700. 7. This will give you cost per unit. How much is cost per unit in this case? 2020. This one 20 now. 19 point. May I know the answer for first one, please? 1693.4. Next one 2020 point. 2019.7. This will be the cost. No, rounding off it's not advised unless and until they ask you to round off. Always two decimals. If they don't ask you to round it off. Is that clear, everyone? Now listen. Which cost is correct cost? Out of these two, which is correct one? Of course, your ABC only, because that is the one which is going to take all the factors into consideration individually. So if at all they ask, by considering ABC cost as the base, find out the cost distortion. That means cost difference. And tell whether it is under absorption or under costed or over costed. Guys, in first case, it is under costed because the cost is 16,093.4. Sorry, 1,693.4. We have taken it as only 1,645. Next case, it is 2019. Here we have taken 2060. It is over cost, not over absorption, over cost. Understood? If they ask like that, you should write the conclusion and come. Don't you think simple 7 marks over here? Yes? Fine. Shall we go to the next paper? That is your June 25. One MCQ they have asked about process of ABC for 2 marks, and of course 2A traditional versus ABC they are asking. Question number 2, right? Process of cost allocation under ABC is cost of activities, cost driver, cost allocated to cost object, not cost of activities. First you should determine activities. Cost driver, no way. Activities, cost of activities, cost driver, cost allocated to cost object. C. Option C. Anyone in doubt here? Okay. 2A. Sorry, 2B. 2B. What they are asking? First, with the help of traditional system with direct labor hours as the overhead allocation base. So we are absorbing on direct labor hour basis. For the chocolate ice cream, only one product they are asking. Compute the estimated operating profit for 1,000 ice cream. Second, with the help of ABC for the chocolate ice cream, compute activity cost driver rate. Compute estimated overhead cost per 1,000 ice cream. Compute estimated operating profit per 1,000 ice cream. Shall we see the question now? This one I told. The dynamic changes, etc. What are the functions of management accounting? Hot and cold, a FMCG company manufactures and sells 3 flavors of ice cream: dark chocolate, butterscotch. Batch size of ice cream is limited to 1,000 ice cream based on the size of the fridge and ice cream molds owned by the company. Moral of the story, they are asking per batch. They are asking for 1,000 ice creams. No, that means they are asking per batch. Based on the budgetary projections, the information listed below is available. Dark chocolate, butterscotch. Projected sales in units are 5 lakh, 8 lakh, 6 lakh. Then can you quickly tell me how many batches we are going to run? 500, 800, 600, because each and every batch will have 1000 units. Per unit they have given. These three are per unit. Please keep in mind. Not for 1000. Hours per 1000 unit batches. This is for one batch. Direct labor, fridge hours, packing hours. Total overhead cost and activity level for the year is estimated as follows. Total overhead cost is how much, guys? 3 crore 60 lakhs. Got it? Direct labor hours, they are telling 24,000 hours. If they don't give 24,000, what you should do? You have to compute. How, sir? Do you know the direct labor hours per batch? Here 500 batches you are running. Each and every batch 20 hours. So 500 into 20. 10,000. 800 into 10. 8,000. 600 into 10. Total will come to 24,000. Clear? Now, may I know the absorption rate under traditional approach? 3 crore 60 lakhs divided by 24,000 hours. Rupees per labor hour. 1,500 per labor hour is your traditional approach. First one they are asking, compute the estimated operating profit per 1000 ice cream. First let's find out the cost. Then we'll go to operating profit. And only chocolate ice cream they are asking, luckily. So listen. Direct material. Guys, how much they are telling direct material? Chocolate ice cream, 15. Hello? 15 rupees, but that is per ice cream, per unit. So 15 into 1000. 15,000. See, if at all they say 10% of input is wastage, then you are not giving input relating to 1000 ice creams. You will be giving input relating to some x minus 10% is equal to 1000. You are going to give input relating to 1111.11 units. If they say 10% is a wastage, that means if you need output as 1000, that means your input is not 1000, something more than that. If you give input of 100, you are getting output of 90. Output only you need 1000. So input should be how much? 1111.11. So you should give input relating to 1111.1 like that. Got it? Generally they don't complicate like that, but to be in the safer side, I'm telling. Direct material done. Next, direct labor, 2 rupees per unit. So for 1000 units, 2000. Listen, they're not telling per hour. Please keep in mind. They're not telling per hour. If they told per hour, straight away I would have taken 10 hours for 1000 units, 10 into rupees 2, like that. Done. Now, overhead. Overhead. 1500 per labor hour. For 1000 units, directly I can multiply with 10, don't multiply with 8000. Because we want per 1000 units only. Labor hour for 1000 units is 10. So 10 into 1500. 15,000. Total cost will be 32,000. Now, sales will be how much? Sales will be, guys, 75 rupees per unit, no? 1000 into 75. 75,000. Profit will be how much? 43,000. Profit will be how much? 43,000. Is that clear? Now, what if we go for ABC? First, what they're asking, compute the activity cost driver rate. Talking about fridge, it is on the basis of 1900 fridge hour, it seems. So 2 crore 10 lakh divided by 1900. Sorry, 11,052 point per fridge hour. Correct? No. Packaging, they are telling for 950 packaging hours. 1 crore 50 lakhs divided by 950. Point per packing hours. Anyone in doubt in this? Hello. So this is for fridge hours as well as packing hours. First point is done. Next, compute estimated overhead cost per 1000 ice cream. Again, as I already told you, direct material 15,000, that's not going to change. Direct labor 2,000, that's not going to change. Your prime cost would be 17,000. But overheads, not one single overhead, we are going to recover it on two different activities. First one, fridge. Guys, how many hours of fridge is used for 1000 ice creams? 1 hour. So 1 into 11,052.63. Don't calculate, please. 1 into 11,052. 1 into... You got it or still you're calculating? Got it. Okay. Next is packaging. Guys, packaging, they are telling 0.5 hours. Correct? No? So 0.5 into 15,789.47. 7,000? Total. Sorry? $35,947.37. This will be the cost under ABC approach. Next, compute estimated operating profit per 1000 ice cream. Sales will be how much? Just because you are maintaining doing under ABC, just because you are doing it under traditional approach, do you think your customer will care? They will say, do whatever you want, we will pay how much ever your ice creams worth. Moral of the story, selling price is going to remain same. That means sales is going to remain same, 75,000, whereas cost is 35,947.37. So the profit will be 39,052.63. Simple question, isn't it? All data they only have given. All you have to do is check what they have asked, write what they need. Simple, simple, simple. If this is done, we can go to the next paper. That is December 24. Again, MCQ second and third as well as 13. 6 marks they have asked from ABC. I mean, this is actually not exactly from ABC, but yeah, relevant. And also allotment of overhead. Okay, very simple. The cost per unit of S and cost per unit of R they are asking. Let's see. Measure SB Limited produces 10,000 units of product S and 15,000 units of product R at a total cost of 2 lakh. The cost of the company is apportioned in two type of activities, that is machine hour related and labor hour, in the ratio of 3:2. That means the 2 lakh you can divide it into machine hour related cost, labor hour related cost. That is 1,20,000, 80,000. 1,20,000 and 80,000. This is only cost of activities, not for your S and R. Please keep in mind. Next, Machine hours for S is 3000, R is 2000. So total machine hours 5000, labor hours 8000. That means machine hour recovery rate will be how much, guys? 1,20,000 divided by 5000. 24. Labor related cost, divide it by 8,000, rupees 10. Hello. Correct? No. Now they are asking how much per unit of, yes, listen here. How many hours of machine S is consuming? 3000 hours. And how much is the recovery rate? 24. Plus how many hours of labor S is consuming? 5000. Recovery rate 10 rupees. See, don't go for 3000, 2000. Both are machine hour there. We need one labor hour cost, one machine hour cost. Divide it with how many units of S we are producing? 10,000, which is gonna be 12 point. Option C. If you want to check for R, you can check. How, sir? Machine hours, how much we have taken? 2000. 2000. And rate is 24. Plus labor hour 3000 per hour, 10 rupees. Divided by how many units we are producing? 15,000. How much will be the cost? 5.2. Hope you guys understood that MCQ. Next, which of the following is the main cost driver of customer order processing? Flow of product from assembly line. It has nothing to do with the customer order. Order value could be number of product supplier, whether our supplier and our customer has anything to do. Number of machine charges. So order value would be the best cost driver for customer order processing. Next is 13, is it? Which one I told? The cost of production per unit is there asking. Measure Nikita Limited purchases raw material at 35.4 inclusive of GST of 18%. Company is eligible for ITC. Moral of the story, tax is not your cost. That means excluding tax, you should find out how much. How should you exclude, sir? If cost is 100, GST is 18, total cost including GST is 118. Guys, 118 means 35.4. 100 means question mark. Rupees 30 is your material cost. Machine hour rate is 576. The product is manufactured in specialized dies having facility to manufacture 2 products at a time. The cycle time per shot is 25 seconds. That means, guys, 576 is for 60 minutes of 60 seconds. That means 3600 seconds. Correct, no? For 25 seconds, how much? Rupees 4. Now don't add 4 and write option C, because we are incurring 4 for the 25 seconds. No. In that 25 seconds, are we producing one single unit? Are we producing 2 units at a time? That means per unit 2. 30 rupees material, 2 rupees this, total 32. But 34 also they have given in the option. Please keep that thing in mind. You should be very careful. So reading question is very important. I am telling again and again and again and again. And yes, before going to exam, at least 1 mark is compulsory. If it is exclusive of tax, means you don't have to adjust tax at all, because you know that tax is not your cost. It should not form part of your cost, so you reduced. If it is not yet added and it's not your cost, then ignore. More about tax treatment. Costing marathon. Cost sheet. We'll discuss now. Calculate the cost driver rate, the rate that are used for tracing the appropriate amount of overheads to the respective products. Prepare statements showing details of overhead cost allocated to each product using A, B, C. They're asking cost driver rate as well as prepare a statement showing details of overhead cost allocated. They are least concerned about your prime cost. Look at the question now. Chennai and Metro work. It's been 2.5 years. They are still digging here on. I remember in Chennai, when we inaugurated this building, first class was mine only. I remember this class was the class which I took. Classroom. Same sound. Now it's already 2.5 years. Same sound. Astama Limited. Wow. Astama Limited. Whatever you want to call it as. Ashthama Limited manufactures 3 products PQ R, which are similar in nature and are usually produced in the production run of 100 units. That means what is the batch size, guys? 100 units. Product P and R require both machine R and assembly R, whereas product Q requires only machine Rs. So 3 products we have PRQ in the, PQR, in that P and R requires machine R as well as assembly Rs, where Q require only machine Rs. The overhead incurred by the company during the first quarter is so and so and so. Awesome. They didn't give total cost, you asking you to divide and all. They themselves have divided and given. If they give, you know what to do. Correct now? Now, first, they're asking calculate the cost driver rate that are used to approve. First one, machine department. Guys, what could be the machine department? This thing. Machine hours worked. Correct now? And luckily they haven't told per batch here. Hello. They haven't told per batch. Directly we can take 30,000, 48,000, 78,000, 78,000, 82,000, 1,32,000 hours. Correct now? So 18,48,000 divided by 1,32,000 rupees, 14 per machine hour. Assembly department, guys. Assembly hours work. You can see there for Q nothing is worked. Only for P and R. 15,000 plus 27,000, 42,000 hours. So 6,72,000 divided by 42,000. 16. And please remember 16 only, no? Please remember, just go through your suggested answer once to see the statement how to present it. Setup cost, number of batches, number of setups. So we want to find out number of batches now. We know that each and every batch is of how many units? 100 units. So P we have to produce 150, Q we have to produce 120, R we have to produce 180. Number of batches, please. 270, 450. Correct, no? So 90,000 divided by 450. 200 per batch, or you can call it as per setup. Stores receiving cost. Stores receiving, number of requisition raised on stores. How much it is? Total 120 na. So rupees 1000 per requisition. Per what you should write very clearly, because cost driver is important, no? Just don't write and come some random amount. You should tell that amount is per what? Order processing and dispatch. Customer's order executed. How much it is? 3,000. 3,750 per order. 48 per order. Inspection and quality control. Generally, inspection will be done on batch basis. So it's better to take per batch. 36,000 divided by 450. 80 per batch. Like this, one or the other thing will be there. You should be very careful. Always remember, inspection and all generally will be batch basis. Is that clear? Like this, I found out. Next, what they are asking, prepare statement showing detailed overhead cost allocated to each product using A, B, C. Now, first, if you go for first cost is what? Machining department cost. No, that is on the basis of machine hours. That means I will just write it here only. Okay. How much we are charging? 14 per machine hour. No. Product P takes how many hours of machine? 30,000 into 40. They are not asking per unit here. Luckily, you don't have to divide by number of units again. How much? 4 lakh? 20,000. Okay. 48,000 into 14. 6 lakh 70. 6 lakh 72,000. 7 lakh 54,000 into 14. 7 lakh 56,000. Done. Next is assembly department. 16 per assembly hours. 15,000 into 16. 2 lakh 40,000. Nil. 27,000 into 16. 4 lakh 32,000. Is that clear? Correct, no? 27,000 into 16. Next, what cost is there? Setup cost, number of setups basis. So, number of setup basis means, guys, here 150 setup and per setup 200. So, 150 into 200, 30,000. 120 into 200, 24,000. And 180 into 200. Always remember, the total should total should be matching with your total overhead. Otherwise, the ratio what you have taken is wrong, like that. Done. Next. Our tax money, they are not allowing us to earn also. See? Wasting our time, their time. Stores receiving 1,000 per requisition. How many requisitions? 40. So here it will be 40,000, 30,000, 50,000. Next is order processing, 48 per order. So 48 into 1,000, 250, 60,000. 48 into 1,000, 48,000, 1,500 into 48, 72,000. Got it? Next one is inspection and quality control, 80 per batch, 80 into 150, 12,000, 120 into 80, and 180 into 80. 14,400. This will give you total overhead cost for each and everything. For P it will be 30,000 plus 4,20,000, 4,50,000, 4,50,000 plus 2,40,000, 6,90,000, 6,90,000, 7,90,000, 8,02,000. Next one, 24,000. 6,96,000, 6,96,000, 7,04,000, 7,44,000, 7,74,000, 7,83,600, 7,83,600, 36,000, 7,56,000, 7,92,000, 11,92,000, 12,24,000, 12,24,000, 12,96,000, 12,96,000, 13,46,000, 13,60,400, 13,60,400. Is that clear, everyone? If you want, you can take one total column also. If at all you want. That's it. Simple question, no? But yeah, here please be careful about inspection as well as your stores receiving and setup cost. Directly they haven't given, you should use your brains. Hope it's done. First. Long time no see. Summer. Makes sense. When did you come? Last marathon? Huh? November. Wow. Very good. Keep it up. June 24. You can see there was no ABC MCQ question. However, computation of cost per batch was there for 2B. See here, first chapter they are asking difference between financial accounting as well as management accounting. Bond Limited is following the activity based costing. The budgeted overheads and cost driver volume of the company are as follows. Wow, they only have given all the cost different things as well as cost driver also they are only telling, and cost per number of cost drivers also they are only telling. What else you can expect from the institute? This much they are doing. The company has produced a batch of 5,200 component of AXL6. AXL6 is component name, final product. Its material cost is 2.6 and labor is 4.9. Usage of activities for the said batch is so and so. Required. Calculate the cost driver rate that are used for tracing the appropriate amount of overhead to the said batch. Approximate rates to the whole numbers. They are asking here, you should round it off here. Ascertain the cost of batch component AXL6 using the ABC. Ayyo. Hardly it might take 2 minutes. See there. First one. How much it is? 11.6. Students will do this. 11.6 divided by 2,200. Getting answer in 0.0000 something. Writing and coming that only. But few will use much more brains. They are asked you to approximate to the nearest number. 0. Guys, 11,60,000 and 2,200 not in lakhs. That means, right, 11,60,000 full divided by 2,200. How much? Sorry? 527 per order, not batch. Next one. 5 lakh divided by 1,360. 367.368 per movement. 19,40,000 divided by 16,800. 150. 115.475. 116 per maintenance hours. 8,30,000 divided by 1,040. 798 per setup. See, if you don't want to round it off to 116, you can round it off to 115 also, assuming 47. 4 is there, so I'm not going to round off 5, etc. Your call. Quality control, 3,52,000 divided by 1,800. 196 per inspection. 14,40,000 divided by 48,000. Sorry? Round figure. First answer is done. Next one, ascertain the cost of batch for component. First, material procurement on the basis of number of orders. How many orders are there? 52. 527 into 52. 27. Done. Next, material handling per movement. How many movement is there? 36. So 36 into 368. 13,248. Then maintenance per maintenance hours. 1,380 maintenance hours. 1,380 into 116. 118. 1,60,080. Setup cost 196 per inspection. 196 into 50. Sorry, number of inspection 56. Sorry, number of setups, no. 798 into 50. 39,900. Quality control 196 per inspection. 196 into 56. 10,976. Then machine hours 30 into 3,600. 1 lakh. That will give you total cost. Sometimes listen what happens. 3 lakh. Sometimes, and they might ask per unit how much. This is to produce one batch. One batch consists of 5,200 component. So if you divide by 5,200, automatically you will find it for cost per component. Already you found out cost per batch. Is that clear? And sometimes there is one study material question also. You just go and refer to that. 4-5 different activities they will give, and few activities they don't relate it with the final product. They will tell machine handling charges should be divided to different activities in the ratio of 2:4:1. That means before finding out cost recovery rate or cost driver rate, first divide that between different activities in the required ratio. Then the 3 different activities cost should be divided to the product. For example, here 6 activities are there. Now they will tell machinery cost is there. No, that should be divided among material procurement, material handling, maintenance, setup, quality control in the ratio of 1:1:1:1. That means 14,40,000 should be divided among all those things. After that, you have to find out cost driver rate for those activities. One question is there in study material. If I am not wrong, it should be last illustration, not sure. Hope it's clear. Shall we go to the one last attempt paper? December 23. Sir, June 23 is also ours only, no sir. But June 23, whatever Jatre they have done, they only know. Some true or false question is there, etc., etc., etc. It has completely changed after that. So I am not going to discuss about June 23 now. Is that clear? In fact, I didn't even add. December 23. Again, there is no ABC question as such in your MCQ. Straight away, 2B for 7 marks. This is the ditto question. What is there in ICI material? Okay. So just concentrate here. Following are the data what they are asking here. Calculate the total cost and operating income using ABC. First, Following are the data of 3 product line of departmental store for the year 22-23. Revenues they have given, COGS they have given. That will give you gross profit. That will give you gross profit. Cost of bottle returned is there. That is also cost only, please keep in mind. But that is only for soft drinks they have told. Yeah, cake and pizza, what they will return. Correct. Number of purchase orders, number of deliveries, etc. they have given. Items sold also they have given. First, additional information related to the stores are as follows. Bottles returned. Returning of empty bottle. Total cost 30,000. Directly traced to the soft drink line. That means this 30,000 is only and only cost of soft drink. Got it? Next. See, if at all it is traditional approach, what we would have done? Here we would have found out gross profit. Total column also we would have taken. And whatever this other additional cost is there, no? Everything we would have reduced from the total company's cost. We wouldn't have traced it to your different product line. Because that is non-operating income. No, non-operating expenses. No, you don't trace it to 3 products. You will take the total here. You will take the total. Here you will find sales. Your file COGS. This will give you GP. Now whatever the cost is there, you don't take nowhere here, only to organization. If you remember, when I say question is there, customer basis analysis, I told you in discussing, just go through that question once. Additional question discussion time or sometime. We already discussed customer analysis. That question you have to go through once. We are not doing that in marathon course. Next, ordering 3,90,000, 1,560 purchase order basis. Per purchase order how much? 3,90,000 divided by 1,560. Rupees 250 per purchase order. How many purchase orders are there? 360, 840, 360. So 360 into 250, please. 90,000. 90,000. 840 into 250. 2 lakh. That's it. Next, ordering done. This is done. This is done. Delivery 3150 delivery. Per delivery how much? 200. 200 per delivery. 660 into 200. 1 lakh. 2190 into 200. 4,38,000. 300 into 200. 60,000. Is it clear? Pakka. Delivery done. Shelf stocking. How many hours? 8640 per hour. How much? 50. 50 per hour. So 2,700 into 50. 1 lakh. 5,400 into 50. 2 lakh. 70,000. And 540 into 50. 27,000. Item sold, don't add it to the cost of. Now when you do this, COGS plus all these things will give you total cost. From the total cost, if you reduce revenue, you will get the profit for each and every product line. Sometimes they might tell about delivery. Listen, they are also smart. I say question is there, you can go and check that once. What they do is, chapter number 5 of I say, you can just, if you want, you can go and check. 4 as well as 5 you can check. In 4 also few questions are there. What they will do is, they will tell number of kilometers per delivery. Number of kilometers per delivery. And number of deliveries they will tell. And delivery cost, you have to find out per kilometer. What students will do is, They will just take the total of the kilometer per delivery and divide. Gone. That is per delivery, no. For kilometers traveled, what you should do? Number of deliveries multiplied with kilometers per delivery. Then only we'll get total kilometers. Got it? So there and all you will end up, see in these questions and all, technically you will not go wrong. You don't have to go wrong, or you should not go wrong. If you do mistake, you will be doing this silly mistake of not reading question. So please avoid that. Read the question very carefully. Because sometimes certain things will be per batch, certain things will be per unit, certain things will be per machine run, etc. You should be very careful. Okay. And if you ask my advice, sir, if we want to do some extra questions, where we can do? Go and check ICA material ABC question once. I think in class, Apna Hamara Bank we have done, no? Hamara Apna Bank, ICA material 1 question we might have done. So yeah. So ICA material hardly 5 plus 3, around 8 questions are there, 8 or 9 questions are there. You just go and check there. That's more than sufficient for ABC division. And also this question what we discussed. More than sufficient. Because their nice adjustments are there. Wherever they can drag you this side and that side, it's there. And you have already noticed that in MA and cost accounting, few questions from ICA directly taken out. So that's my advice. Once, hardly it takes 1 hour. You don't have to sit and solve. Go through that. You will find out the special adjustment where you will go wrong. Of course, when you are solving, you will do mistake. When you do mistake, then only you will learn. But make sure you won't learn in examination. Okay? Peace. With that, we have completed our ABC. Next chapter will be GPM. It looks very big, very huge. Conceptually, nothing. Zero. Now we'll be starting with DPM. Divisional Performance Measurement. This also you can expect for around 7 to 14 marks. Sometimes what happens, they will give theoretical 7 marks as well as practical 7 marks. From this what theoretical they will give, sir? There is something called as balance scorecard. One of the easiest topic to score also. Only one question they ask. What are the 4 different perspectives? Explain. All you have to do is 4 perspectives you have to explain. That is theoretical in nature. That I will explain. No problem. Now listen. What are the aspects? See, chapter looks very big. Right? In study material, chapter looks very big. But one of the easiest chapter. What are the aspects we are going to cover in this? One is DuPont. See, always remember, rather than looking into the chapter as one single thing, always you should divide the chapter into different small segments. So automatically you keep on completing. It will motivate you to complete more. Otherwise, what happens if you take the whole chapter as one thing? This is not getting over only, and it won't get over it. So it's always advised to divide the chapter into many segments and keep on target of a segment rather than the whole chapter in one single shot. One is DuPont analysis. In DuPont, of course, there are 2. One is 3-step basis. One more is 5-step basis. What are those? That I will tell. One more thing what we are going to discuss is ROI, RI. ROI and RI. Okay. And next we are going to discuss is EVA. Economic value added. Next we are going to discuss is learning curve. And learning curve, again, doubling effect is there. No doubling effect. How we are going to do that one. And next we are going to learn is balance scorecard. These are the only few things what we are going to discuss in this particular chapter or revise in this particular chapter. Wherever applicable, I am going to take the respective illustrations, and wherever illustrations are not required, etc., I will just explain it now. Anyhow, in the PYPs, we will be discussing the questions. Okay. First, what is this divisional performance or decentralization of division. Try to understand, guys, as a division, as a whole thing, whole company, if you take, you might end up not analyzing more about any particular division. And it's very difficult to control the whole company as one single thing. So what we will do, that company we are going to divide it into different division. For example, Reliance. Reliance Retail, they might divide into one segment. Reliance Consumers, one segment. Reliance Insurance, one segment. Reliance B2B Business, one segment. Like that they will divide. Now, we divided, fine. But we should control it, no? To control that, of course, we are going to hire different divisional managers. Now, these divisional managers, what they will do? They will do whatever they want to do now. That's why we should bring them reward system. Now, when we bring the reward system, we should measure their performance now. So, on different basis, we are going to measure their performance. That's what we are going to do in this particular chapter. Which division is better? Which division is more performing? Like that. Got it? Now, first we are going to discuss about ROEs. Return on capital employed. ROEs means return on capital employed. ROEs under, or return on equity, what you can say. Return on capital employed or return on equity, what you can say. Return on equity, let's say ROE, we can say it as 3-step and 5-step. Now, full income statement information they give, then we can go for 5-step. Otherwise, we can go only for 3-step. What is that, sir? Guys, return on equity, generally what we will do, we'll take the sales as well as we'll take the owner's fund or equity fund. Correct? No? But what DuPont said, don't take only that thing into consideration. You should consider FAN. When making decision, you should consider FAN. What is this FAN, sir? F for financial leverage. A for asset turnover ratio. N for net profit margin. What is said? Consider FAN. Financial leverage, asset turnover, net profit margin. Now, he gave one formula. What is that? Net profit margin. What would be the formula? Net profit of the division divided by sales into asset turnover. How sales is how many times of asset? So, sales divided by asset multiplied with financial leverage. Asset means it's our total investment, no? In our total investment, how much is through equity? I agree. When you cancel sales, asset, you will be left with net profit by equity only. No doubt in that. Same only, no? But the analysis of 3 level will happen here. The analysis of 3 level will happen here. That's what your DuPont said. So, DuPont analysis, return on equity is equal to net profit margin into asset turnover ratio into financial leverage. Net profit margin is equal to net profit by sales into 100. Your asset turnover is total asset divided by, sales divided by total asset. And your financial leverage is total asset by equity. Shareholders fund. Got it? You can see here one illustration number 1. Net income they have given, revenue they have given, average asset they have given, average equity they have given. So, net income, guys, first, what is the formula? FAN, no? FAN ulta you can write, NAF. Net profit margin, asset turnover and financial leverage. Net profit margin are basically your net profit by sales. How much is net profit by sales? 2000 by 8000 into 100. 25%. Hello? 2500 divided by 20,000. 12.5%. Correct? Done. Next is asset turnover. Asset turnover is sales by total asset. 8,000 by 5,000. 1.6. 20,000 divided by 8,000. 2.5. 2.5 times. Financial leverage. Out of total asset, how much from equity? 2.5. 8. Correct? Now, how much is return on equity here? 0.25 into 1.6 into 2.5. Sorry? 4.35. Yeah. Can I just check once again? 0.25 into 1.6 into 2.5. Don't add. 1. Done. Next one. 0.125 into 2.5 into 8. 2.5. Got it? Company A1, company B, 2.5. So, two-point analysis model allows the investor to see that although company B has higher return on equity ratio, so B is giving you higher return, no doubt in that. But look at the risk involved there. Financial leverage is 8. That means in your total investment, if 1 is through equity, remaining 7 is through debt. More riskier. Correct, no? So, than company, large portion of company's B's ROE result from its equity multiplier. The investor can also see that large portion of company's ROE is resultant of 25% net profit margin. Like that. Got it? Also, sometimes, whenever the full information they give, something like this, you can use 5-step model. Rather than arriving at, see, A and N remain same, no doubt in that. Sorry, A and F remain same, no doubt in that. But here you arrived at N, no. Directly don't arrive. Start from EVPI and arrive there. That is, here this one step will be replaced with 3 steps. One step will be replaced with 3 steps. What are those, sir? Listen. We will start with net profit, or you can say it as profit after tax divided by profit before tax, multiply it with profit before tax divided by EBIT into EBIT divided by sales. Net EBIT cancel, PBT cancel, PAT divided by sales. That is your net profit margin only. But rather than taking in one single thing, you are going to take it for 3 things. So come again, guys. Net profit, that is your profit after tax, divided by PBT into PBT divided by EBIT into EBIT divided by sales into sales by total asset into total asset by equity. This is your 5-step. Got it? So that could be done if at all the information is there from EBIT. Otherwise, it will be difficult to do so. Clear? Just go through that, illustrations, whatever they have given. No. Same answer. More analysis. That way ROE you can do. Net profit by equity, no. Why we are doing 3 steps? I told you, no. Although return of B is more, when you check from the risk point of view, like that. Although return of A is less, But when you check from net profit point of view, that is more like that for analysis. Now, divisional performance, that is under dew point. You have to remember two formulas. Which are those? 3-step, 5-step. 3-step, can you tell me? Fan, ulta fan, that's it. NAF. Net profit margin, that is net profit by sales into asset turnover. Sales by total asset into total asset by equity. Correct? Or you can go for 5-step model. That is starting with profit after tax divided by profit before tax into profit before tax divided by profit before interest and tax. That is operating income. Whereas profit before interest and tax divided by sales. That will give you this. Got it? No doubt. Next we are going for ROI and RI. What are these ROI and RI, sir? When you need answer in terms of relativity, that is in terms of percentage, you will go for ROI. When you need answer in amount, you will go for RI. I repeat, when you need amount in percentages, you will go for ROI. When you need amount in rupees, you will go for RI. Got it? Sir, will both give same answer? The answer is no. Now, how to arrive at ROI? By the way, one more formula you have to remember for ROS, guys. What is that, sir? Sometimes they have asked MCQ. Okay, that is your operating profit margin. Operating profit margin, multiply it with asset turnover. Operating profit margin multiply with asset turnover ratio. Got it? Hello. Operating profit divided by, multiply with asset turnover. Because end of the day, what is the formula for operating profit? Net profit divided by sales. Asset turnover. Sales by total asset. Total asset means total capital employed. Your net profit by sales into sales by total asset. Sales cancel. Net profit is your profit. Return on capital employed. Capital employed means total capital employed. Debt as well as equity. Not only from equity, debt as well as equity. So, operating profit margin multiplied with asset turnover ratio will give you ROS. Now, ROI. How to arrive at ROI? Very simple, guys. All you are going to do is take the operating income from the division. Operating income from the division means EBIT. Take the EBIT of the division. Divide it with operating asset of that division. EBIT you take, divide it with operating asset of that division. That will give you ROI. By the way, your operating asset means if they give only one information, take that. If they give information of opening stock as well as closing stock, then please take average of this. Opening stock of operating asset plus closing stock of operating asset divided by 2. Divided by 2. See here. Acme, a division of Ace Manufacturing, has asset of 225,000, operating income of 55,000. What is the ROI of the division? 55,000 divided by 2 lakh 25,000 into 100. How many percentage? 24.44 percentage. Got it? 24.44 percentage. Now, how to arrive at RI, sir? Residual income means after our expectation of investors, what is left? That we call it as RI, residual income. For example, what I will do is, I will take EBIT. EBIT is nothing but your operating income minus, in that minimum expectation of our holders is how much? My total investment is nothing but my operating asset. No, total investment, operating asset into KO, cost of overall capital. You might have learnt it in your FM, cost of overall capital. Because our capital investment is OA, minimum they are expecting is KO. Now KO is nothing but your minimum rate of return. Correct? Now OA is nothing but your total investment in that particular division. Got it? Now if at all my EBIT, sir, why you are taking EBIT? If the all earnings are there, then only tax is there. So tax we are not going to consider here. Tax will consider in EVA, that I will tell. Here I will take EBIT now, my operating income. Okay. From that, I will reduce my shareholders, not shareholders, total investors expectation. That's why I took KO. Because you know that debt holders means cost of expectation is KD. Equity holders means KE. KO means debt plus equity. Got it? Debt plus equity don't take directly. You should take weighted average. Correct? No? Now, my operating income, let's say around 10 lakh. My operating income is 10 lakh. I have invested around 50 lakhs. I have invested around 50 lakh and I'm expecting around 15% return on it. That means it is as good as I bought money from the market at 15%. So how much I should give them return? 50 lakh into 15%. 7 lakh, 50,000. That means after their expected return, still they will be left with 2,50,000. That means our residual income is 2,50,000. Understood? So how did we arrive at residual income? RI will take operating income, reduce operating asset multiplied with KO. That is your minimum rate of return or minimum expected return. Is that clear? Now, out of 2 or 3 projects available, if at all you have to select mutually exclusive in nature, that means out of 3 you have to select only one. Which one would you select? One with the greater RI. In case of ROI, you will select one with the greater return on investment. ROI. RI is residual income, leftover income. ROI is return on investment. Is that clear? Hello, hello, hello. Clear or no? So if at all it has positive RI, I will go for it. If at all my ROI is, how will you select whether to go for that particular project or no? If at all my ROI is, return on investment is greater than my cost of capital. My cost of capital greater. Yeah. So if at all my ROI is greater than return capital, cost of capital, then only I will select that. Otherwise, of course, I won't select that. For example, do you think any idiot will bring money at 10% in the bank loan and will invest in 8% FD? Do we do that? Why? This is your cost. On 1 lakh, you have to spend 10,000. This is your return. On 1 lakh, you will earn 8,000. Who the hell want to earn 8,000 by spending 10,000? So how to select the project? If ROI is greater than KO, go for it. If ROI is lesser than KO, don't go for it. How to select RI basis? If RI is positive, go for the project. Because RI is positive means what? Whatever you are earning is more than your cost what you got it. For example, you are earning 10 lakh, where towards repaying them 7,50,000 is going. Their interest etc. 7,50,000 is going. That means 2,50,000 still you are in the good position. No, go for it. If at all your RI is negative, don't go for it. If at all your RI is negative, don't go for it. Why? Whatever you have earned, that is not even sufficient to meet the minimum requirement of my investors. If my investors are expecting 7,50,000, I should earn something more than 7,50,000. No, otherwise don't take money only. Their expectation will be zero, your expectation will be zero, like your earnings will be zero. You are keeping their expectation at 7,50,000, earning less than 7,50,000. Is it feasible? Got it or no, guys? Now look at this question. Illustration 2. Sales they have given, gross margin etc. Operating income they have given it as 48,000. January 1st operating asset, December 31st operating asset they have given. That means we will take the average. Average is how much? 3 lakh. Average is 3 lakh. Minimum rate of return is 12%. KO is 12%. Now they are asking you RI. How to compute RI? Your operating income 48,000 minus your investment 3 lakh into KO 12%. 36,000 is it? So rupees 12,000 positive RI. So should you go for investment or no? Go for it. Hello. Clear? In the same question, if they ask for ROI, then what you should do? Your operating income is 48,000. Average asset is 3 lakh into 100. How much? Sorry? 16%. So, as per this also, it's advised to go. Why? Because you are getting money at 12%. You are earning 16% on it. Go for it. Is that clear, everyone? Look at this one more question. One more illustration we'll discuss. After that, being a company, it's a bit hard. Whenever your division performance is measured in terms of ROA and ROI for different divisions, then it's going to be a bit difficult for the company point of view. I will explain with one example why. Okay. Now, before that, look into this question. Division A is there, division B is there. Operating asset 50 lakhs. Operating income 10 lakh. ROI 20%. Operating asset, operating income, ROI 18%. What is the more successful division in terms of ROI? Division A. Hello. Which is the most successful? Division A. Second, using 16% as the minimum required rate of return, compute the residual income for each division. Which division is more successful? Guys, for A, what is the operating income? 10 lakh minus how much is the operating asset? 50 lakh into how much is cost of capital? 16% they are telling. Correct now? How much? 2 lakhs, huh? Answer is 2 lakh, right? So positive only. B, how much is operating income? 22 lakh 50,000. Operating asset 1 crore 25 lakh into 16%. 2 lakh 50,000. Any doubt? Pakka. So as per RI approach, you will select which one? Division B. As per ROI approach, Division A. Being the company, now it's difficult, no? Now let's assume Division A. For this example only, I will tell that being a company, how difficult it is. For Division A, let's say measurement is done on ROI basis. For Division B, let's say measurement is done on RI basis. Division A, measurement is done on ROI basis. Division B, measurement is done on. Now, you are a company. Now you have 10 lakhs. How much you have? 10 lakhs. That will give you return of 1,70,000. It will give you 1,70,000 of return. Now listen. We think of investing in Division A. We think of investing in Division A. Will Division A manager will agree for it? Will Division A manager agrees for this? He will not agree. Why, sir? Guys, if at all this investment is done, already we are making 10 lakh now. We start making how much? 11 lakh 70,000. 11 lakh 70,000. Now, then investment right now 50 lakh. Extra 10 lakh we will invest. Total investment 60 lakhs. Correct now? Already 50 lakh we have invested. Other 10 lakh extra we are investing into 100. How many percentage? 19 point. Before investment, how much it was? After investment, 19.5%. The manager's performance, if it is measured in ROI basis, then Division A manager will absolutely say no, because his performance is going to be evaluated on percentage. Without this project, it was 20%. After this project, it will be 19.5%. But thinking from ROI point of view, Division B, their net operating income will become 2250 plus 1,70,000. 20,000 minus, guys, operating asset will become 1 crore 25 lakhs plus 10 lakh. 1 crore 35. 1 crore 35 lakh into how many percentage? 16%. How much is the RI? 21 lakh. Earlier, how much was RI? 21 lakh 16. How much is final answer? 2 lakh 60,000. Hello. 2,60,000 is RI. Now, before 2,50,000. That means, will Divisional B manager will agree or no? Of course, he will agree, because his performance is measured in terms of RI. But from company point of view, which is in more profitable basis, A or B? A. We are interested in investing in A. They are telling no. We are not interested in investing in B. But they are telling please invest. Getting it or no? This is the case. Then you should tell them your performance is not going to be measured this way, or this is not going to be affecting your performance, something like that, and convince them. That's the only option. Otherwise, generally it is ROI, because absolute amount, it depends on the investment, no? From profit point of view, you're getting, yeah, but that is only in amount, no? Percentage wise, although it is 19.5%, it is not, it is more than, of course, 20% on 50 lakh. More than that, 19.5% on 60 lakh is more, no? Amount wise, that only will give more, but still. See this question, you will understand in a better way. See this. Nielsen Limited has two divisions with the information, following information. Division A, Division B, profits are 90,000, 10,000, capital employed are 3 lakh and 1 lakh. That is your operating asset. ROI for Division A is 30%, Division B is 10%. That means in Division B, if you invest, you will make 30%. Division A, if you invest, you will make 10%. Division A has been offered a project costing 1 lakh and giving an annual return of 20,000. Division B has been offered a project costing 1 lakh and giving the return of 12,000. The company's cost of capital is 15%. That means, being a company, on 1 lakh rupees, you will spend how much? 15,000 rupees as cost. And you will make 12,000 rupees. Being a company, are you interested in project B anywhere? Project B, we are least interested. Project A, you will incur cost of 15,000, you will make 20,000. From company point of view, 5,000 extra. You are interested. Correct? No. So being a company, you are interested in investing in Division A rather than Division B. Because being a company, Division B, if you invest, it's a loss. Division A invest, it's a profit. Divisional performance is judged on the basis of ROI. And the ROI related to bonus is sufficiently high to influence the manager's behavior. Now, what decision will be made by the management if they act in the best interest of their division? That is because their bonus is based on their divisional performance. Very simple. Division A, right now they are making 30% now. Of course, next it is 20%, means they are not okay with it because they average out. No. See there, how much is the profit now? 90,000. If they accept the project, it will be 1 lakh 10,000. Yes or no? Capital employed will be not be 3 lakh anymore. It's gonna be 3 lakh plus 1 lakh, 4 lakh. So 1 lakh 10,000 divided by 4 lakh into 100. 27.5%. Before accepting this project, how much it is? 30%. After accepting, 27.5. Will Division A manager agree? Will Division A manager agree? No. Because without accepting this, his bonus will be paid at 30% basis. After accepting this, his bonus will be paid at 27.5. Talking about Division A, how much they are making? Their existing is 10%. They are going to get 15%, something more than existing. They are happy with it. How much profit they are making right now? 10,000. If they invest there, it will be 12,000. Divide by how much we have invested now? 1 lakh. How much we are planning to invest? 1 lakh. Existing how much? They are interested in. So, on the basis of particular divisions, performance, bonus, will Division A manager agrees? Division B manager agrees. But from the company point of view, is division A is feasible? Division A is feasible because you are getting that money at 15% and you are getting return at 20%. But is division B is feasible because you are getting money at 15% and you are earning around 12%. Got it? Huh? What should managers do if they act in the best interest of company as a whole? If they act as a best interest in the company as a whole, then they should invest in division A rather than division B. Got it? Hello. You have to make decision like that. Hope you guys understood now what I was trying to tell there. Because once ROI is lower, new investment is going to give more ROI, then of course we will jump into that. But in case of the other, if ROI is already higher, the new project is ROI is going to be lower. Being a manager, I am not okay because it will average out my returns. Company point of view, of course, yes. But now, if I go and tell, you are my manager, if I go and tell you, please let me invest, what you will tell? This position you only keep because every time you will interrupt me, I can't take my own call. Then what autonomous you are telling? Division should be given with that power. No. If you want to reward them, if you want to punish them on their performance, then you should give that space for them. No. You are not ready to give them space. Whatever you want, you are asking them. But end of the day, you are choosing, then what is the point in divisional performance? Correct? No. So you should take a call on that basis. Conflict will be there. That's why you should tell them, this being a company, I'm investing for my point. Your performance is not affected by this. Yours, in our question, 20% was there. No, your bonus will be measured on 20% only. Hope it's clear, everyone. Next one is EVA, economic value added. Economic value added. Listen, EVA will be considered as NOPAT. What is it? NOPAT, net operating profit after tax, minus how much our investors are expecting. Investors, I am not telling shareholders. Investor, that is capital employed, your operating asset multiplied with KO. Ayo sir, it's RI only. No sir, in RI we were taking operating income, not NOPAT. Here we are taking operating income, but after tax. Tax thing we are eliminating. NOPAT minus capital employed into overall cost of capital. One of the examiner's favorite here. Got it? Now, how to arrive at NOPAT, sir? Very easy. EBIT minus tax. That is nothing but EBIT. T is common, no? 1 minus T. T if you take common, 1 minus T. Got it? Whereas capital employed is your equity plus debt. Capital employed is your equity plus debt. KO is nothing but your total cost of capital. KE plus KD, not directly. Weighted average basis. Got it? Is this formula clear? Everyone? Now, when to accept, sir, or when you can say that EVA is better if your EVA is positive, just like ROI only, that means that surpasses the expectation of your investors. So it is good. If EVA is negative, that means it don't meet the expectation of investors. Got it? If EVA is positive, that means it reaches the expectation of investors. If it is negative, that means it's not even reaching investors' expectation. Got it? Now, listen. NOPAT, you can arrive on different basis. Concentrate. What is it, guys? EVA is equal to NOPAT minus capital employed into overall cost of capital, KO. Now listen. NOPAT, one way I told, if at all they give EBIT, all you have to do is, from EBIT we have to reduce the tax. From EBIT we have to reduce the tax. Got it? For example, let's say EBIT they told rupees 10 lakh, tax 30%, interest rupees 2 lakhs. Now, one way of calculating NOPAT is, take the EBIT 10 lakh. No, that let it be. I'm just telling NOPAT now. 10 lakh minus 30%, which is gonna be NOPAT is going to be 7 lakhs. Anyone any doubt? This is one way. One more way, sometimes what they will do is, they will give you profit after tax. They will give you profit after tax. What they say here, 10 lakh, 8 lakh, 8 lakh, 8 lakh into 30%, 8 lakh into 70%, 87, sir. They will tell profit after tax 5 lakh 60,000. 5 lakh 60,000. But we want PAT or we want NOPAT? NOPAT. That means, of course, after tax, but before interest. After tax, before interest. So generally what students will do, for the PAT, directly they will add the interest. 2 lakh. How much it is? 7 lakh 60,000. But is your NOPAT 7 lakh 60? It should be 7 lakh, no? Hello? Then what you should do, sir, if at all you are coming reverse order, don't add back full interest, because that interest has interest portion in it. Sorry, tax portion in it. So you should add back interest after tax. Interest after tax. What do you mean by that, sir? What is the interest now? 2 lakh, right? In that you are getting 30% tax benefit, no? So net interest is how much? Net interest 2 lakh minus 30%. Because you are showing 2 lakh as your expense. When you show 2 lakh as your expense, automatically you can save in tax, no? So net, although you paid 2 lakh as interest, you saved 60,000 in tax. That means net is 7 lakhs. This is how you should arrive at NOPAT. Hope it is clear, everyone. One way of arriving NOPAT is EBIT 1 minus tax. One more approach is profit after tax if they give. What if they give profit before tax? Add back interest. You will get PBIT. From that you reduce the tax. What if they give profit after tax? Then for the profit after tax, add back the interest, but not full interest, net interest after tax. Because your interest so much is not your expense at all. Because if you pay any expense, you paid interest, no, automatically your profit will be reduced. Taxable profit is reduced. When taxable profit is reduced, automatically tax amount is reduced. Hope it's clear, everyone. Now, how to arrive at cost of capital? Overall cost of capital. Very simple. Overall cost of capital is cost of debt plus cost of equity, but in the weighted average ratio. See, cost of KO, WACC, WACC, weighted average cost of capital, as name itself suggests, weighted average it is. Cost of debt into weight of debt plus cost of equity into weight of equity, and it's always advised to take in decimal. Otherwise, what you should do, if you take the full amount in denominator, again you have to take full amount. No, in denominator again you have to take full amount. Clear? Clear or no, guys? Clear or no? Clear or no? Clear or no? Pakka. Cost of debt into weights of debt, cost of equity into weights of equity. Now, cost of debt, how to arrive at it? Vindhya ma'am would have already told in FM and all. FM marathon is also done. So, you guys should be knowing it. That is interest into 1 minus tax. Because full interest is not your expense. You are saving some amount in tax. Divided by net proceeds. Divided by net proceeds. What is your weight of debt? Debt divided by total capital employed. For example, if capital employed is 10 lakh, in that 4 lakh is debt, means weight of debt is 0.4. Weight of equity is 0.6. That is equity in the capital employed. And remember, equity means full shareholders fund. Reserves and surplus plus share capital. Full shareholders fund. Now, how to arrive at cost of equity? You have different approach, guys. You have different approach to arrive at KE. Dividend approach is there, earnings approach is there, etc., etc., etc. I am not going to explain all those things. Dividend approach means what you are going to do. P1 you will take, divided by P0 plus G, if at all growth is there. If growth is not there, D0 divided by P0 into 100. Correct now? But generally we don't use that. Generally for KE, they expect you to use, they give, but if they don't give, they expect you to use CAPM model. What is the CAPM model? CAPM model says, now listen, I have two options. Option number 1, invest in government bonds. Option number 2, invest in shares of some company. Let's say invest in shares of Tata Motors. Why will I invest in Tata Motors? Because if I invest in Tata Motors is riskier, or if I invest in government shares, it's riskier. Tata Motors is gonna be riskier. Correct now? So don't you think my expectation, see, KE is nothing but expectation of shareholders, no? Don't you think my expectation will be to earn something more than what government securities will give? So what government securities will give you is risk-free. Risk-free return. Let's say 10%. Okay? Plus I expect Tata Motors to give me premium. I expect Tata Motors to give me premium. What premium, sir? Generally, market is giving me how much return? Full. I'm not talking about Tata Motors. Generally, market is giving me how much? 15%. Whereas government is paying me how much? 10. That means that extra 5% I expect, no. But, is your market and Tata Motors same? The answer is no. We might say Tata Motors and market are related in positive 1.5. What do you mean by that, sir? In market, if the growth is 10%, in Tata Motors, it's gonna be 15%. In market, if it falls by 10%, in Tata Motors, it will fall by 15%. That is your coefficient between your market as well as Tata Motors. That is your coefficient between your market as well as Tata Motors. This only we call it as beta factor. That means if market is giving me 5% extra, your 1.5 times of market, that means not only market risk I am taking 1.5 times of market risk. So I will expect that to recover or no? So I expect you to pay me 7.5% extra. Total I expect you to pay me 17.5%. That will be your KE. So KE is one of the majors in the your EVA model. So KE, how to arrive at KE, guys? RF plus beta factor into RM minus RF. Sometimes RM minus RF, they will directly tell it as market premium or risk premium. Something like that they will tell. Is that clear? Hello, 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 hello. Sometimes cost of debt, they don't give any information. They will give balance sheet, let's say. They will tell 15% debentures. Now KD, they are not telling anything. Then what you should do? Very simple. 15% is interest, no? 1 minus T. Because although I am paying 15%, I will get tax benefit, no? I should do interest into 1 minus T. I will get what? KD. If it's already in percentage, all I have to do is interest into 1 minus T. If it is in amount, what I should do? Interest into 1 minus T divided by net proceeds. Net proceeds is how much is the value of the debt, market value of the debt. Is that clear, everyone? Hello, 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 hello. Is that clear? Sometimes they might not give one single beta. They might give 5 different beta. 1.1, 1.2, 1.5, 1.8, 2, like that. Now what you should do for that beta? Which one to be selected? You should select the highest out of all those. Because conservatism, I will look at my risk more, no? So I will go with highest beta. One question is there in study material, if you know. 5 different beta factors they have given. In that, while computing KE, you should select one with the higher beta. Correct, no? So CAPM model, KE is equal to RF plus beta into RM minus RF. Beta is highest of all the available beta. All the available beta you should take for normal years, not for abnormal years. Is that clear? They will tell if at all any abnormal years are there, that you should not consider at all. 5 years if they give and they say 3 years are normal. Out of those 3 normal years, which is highest, that you should take. If they give 5 years, if they say 3 years are normal, in that 3, whatever the normal may highest beta is there, that you should take. Don't take 5 years into consideration. Only take those 3 normal 3 years into consideration. So once again, guys, I will sum up everything here. Your EVA, economic value added, is equal to NOPAT minus capital employed into KO. KO is nothing but your weighted average cost of capital. Correct now? NOPAT, they might give in 3 different ways. Directly they might not end up giving. They might give NOPAT something like this. 1, they will give EBIT. If they give EBIT, NOPAT, what you should do? EBIT minus tax. Correct no? However, they might give EBT. If they give EBT, what you should do? EBT add interest. Correct now? You will arrive at EBIT. From that you reduce tax. Pull both the amount together. From that you should reduce tax. If at all they give EAT, what we should do? EAT add back interest, but not full interest after tax. These are the 3 approaches. Clear? Capital employed is nothing but your debt plus equity. Overall cost of capital is nothing but cost of debt into weight of debt plus cost of equity into weight of equity. Cost of equity you can compute in different way. Cost of debt, if they give interest there directly before tax, then you should reduce the tax. If they say cost of debt after tax, then you don't have to take that, only you can take it as KD. Got it? And for equity you can use CAPM model, that is K is equal to RF plus beta into RM minus RF. Beta is highest of different alternatives. Is that clear? Clear? Okay. And when you will tell they are adding value to the shareholders, if EVA is positive, you can say that they are adding value to the shareholders. If EVA is negative, they are not adding value to the shareholders. Clear? Pakka? No doubt? Also, sometimes they will not give you interest. What they do, you know, they will give you leverages. Now, sir, what the hell is leverage? That is how two numbers are related. Simple. Listen. Hope you remember FM thing. Sales minus variable cost will give you contribution minus fixed cost will give you EBIT, operating profit. In fact, EBITDA, let me take it as EBIT directly, minus interest will give you EBT, minus will give you. Now listen guys, relationship between these two, that is how fixed cost is going to affect your EBIT, that we are going to learn through operating leverage. That is operating leverage is your contribution by EBIT. However, interest is going to affect your EBT, that we are going to learn in financial leverage. So financial leverage is EBIT by EBT. Simple. You have to do that table. Take out that the upper one will be numerator, lower one will be denominator. If you merge this, you will get combined leverage. Got it? Now, let's say they said EBIT rupees 10 lakhs. EBIT they said 10 lakhs. Or let's say EBIT they didn't say. Interest they said. Rupees 5 lakh. Financial leverage they said 1.2 times. That's it. Only two information is given. Also, tax they said 30%. Now, all other information they have given, capital employed, everything they have given, no PAT information is not there. Now, how to arrive at no PAT? To arrive at no PAT, either you should know EAT. Is it given? Not given. You need EBT. Is that given? You need EBIT at least. Have they given? Then what we can do? Good. All we are going to do is we are going to take financial leverage is equal to, can I write the formula as EBIT divided by EBT? Can I write this way? Can I write EBIT as, or can I write EBIT here only, divided by EBT is nothing but EBIT minus interest, or I will write directly minus interest. What is there in that? Minus interest. Now, how much they are telling? 1.2 is equal to EBIT, I don't know, shall I take it as X, divided by X minus 5 lakhs. Can I say it as 1.2x minus 6 lakh is equal to X? Can I say 0.2x is equal to 6 lakh? X is equal to rupees 30 lakhs. Your EBIT is 30 lakhs, whereas your NOPAT will be 30 lakhs minus 30%, 21 lakhs. Simple. If they give financial leverage, this is how you are going to calculate. If they give leverage information in the formula, this is how you are going to solve. Is that clear? Anyone, any doubt in this calculation? That EVA with more than one beta factor is there in illustration number 15. Okay, you can just go through that. Illustration number 15. Hope it's clear. We'll do one thing. We'll take break now. I think 20 minutes is sufficient. 20 minutes are sufficient. We'll take break now. After coming back from break, we'll quickly discuss about learning curve effect as well as your balance scorecard. With that, the chapter will get over. Then we'll discuss past year papers. Peace. Okay. We'll start at 6:21. Sharp 6:21. Okay. Now we'll be starting with learning curve. Okay. What is this learning curve? Very simple, guys. Learning curve is nothing but when you keep on doing the repeated work again and 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 again, your speed of work will be increased. Speed of work will be increased. So that thing only we call it as learning curve effect. Generally, this learning curve you can divide it into two segments. Okay, learning curve you can divide it into two segments. One is doubling effect given, doubling effect not given. Doubling effect given, doubling effect not given. Now, if doubling effect is given, then what is that, sir? For example, they will tell 1 or set of 1, 2, 4, 8, 16, like that. If it keeps on doubling, number of units keeps on doubling, then we call it as doubling effect is there. If the double numbers are not given, for example, 1, 2, 4, 6, 6 is not double of 4, 10, 14, like that and all, then we can say that doubling effect is not given. When doubling effect is not given, we have to apply logarithm and all that I will tell. First, let's see how the doubling effect is given. Now, let's say per unit, it takes 100 hours. Per unit or set of unit, it takes 100 hours. Set means, for example, it could be produced in the set of 20 units also. Now, they might say 20, 40, 80, like that. So, for 1 unit, let's say it takes 100 hours. Now, the learning curve effect is, let's say, 80%. What do you mean by this? This is after first product, when you are producing double of that, on an average, you will take 80% of the time what you have taken. That means, on an average, you will take 80 hours. Now, listen, 80 hours is not to produce 1 unit. 80 hours is average of producing 2 units. Next one, 80% of 80, 64 is it? 64 hours. Now, 64 hours you have taken to produce 4 units on an average. Not per unit, sorry, not for 4 units. 1 unit you have taken 64 hours. Average time I am telling. How can you take 1 unit 100 hours and straight away for 4 units only 64 hours? Per unit it is. Next one please. 80% of this. 51.2 hours. That means on an average per unit to produce 8 units, you have taken 51.2. Next one. 40.96 hours. That means to produce 16 units, you have taken 40.96 hours per unit on an average. Now what do you mean by that? Now let's say, now you are producing 4 units. Now you are producing 4 units. That means how many hours you have taken in total? 256. That is, to produce 1 unit is 64 hours on an average. To produce 4 units you have taken 256. Now you got immediate order for the other 12 units. Now is 12 is doubling effect? Where? 12 is not a doubling effect, but it has doubling effect. How you know? You already produced 4. Extra you need how much? 12. That means in total how much you should produce? 16. Already you produced 4. Extra you got order for 12. Total you need 16. 16 is doubling effect now. If at all you produce 16 units, how many hours you are going to take in total? 655.36 hours. That means to produce that 12 units, how many hours you have taken, guys? 655.36 we are taking to produce 12 units, whereas 256 out of that we took to produce 4 units. That means to produce the 12 units, we have taken. So your labor cost should be computed on this basis. Your overhead should be absorbed on this basis. This is how we will compute the hours. Many students will get confused here. They will take this only as total. It's not total. Or they will think to produce that 4 units, already 2 units are produced. No. To produce that second unit, we take 80 hours. No. When you produce 2 units, on an average per unit you will take 80 hours. That means to produce 6 units you have taken. That means your second unit you took only 60 hours. Like that it is. They get confused. Third and fourth they take 64 hours. No. Total we took 256 hours. Total. That means to produce second, third and fourth, together you have taken 196 hours. To produce 2, 3 and 4 unit, together you have taken 196 hours. Like that it is. Hope you guys are able to understand. This is your learning curve effect. Why you need, sir? To calculate the labor cost, to calculate overhead absorptions, variable overhead, etc. Is that clear? They're asking many questions. Many times they have asked. Now, this is when the doubling effect is given. Recent attempt they have asked, 30 boats. They got order for other 90 extra boats. 90 extra boats they have given. What students thought was 30, 90 is not having double effect at all. They haven't given information about logarithm. And institute has that great reputation among students for giving wrong answers, wrong questions. So they thought that question is wrong. Very simple. 30 boards means set of 1. Extra 90 means you have to produce 120 boards. Set of 4. 4 has doubling effect, no? 1, 2, 4. Like that it is. Got it up? Now, what if the doubling effect is not there? Now, same question. What if they ask you 5 units? What is the average time? 5 units. What is the average time? In this case, all you have to use is, you should use the coefficient formula. What you should do, guys? You should use coefficient formula. 1 second. What is that coefficient formula, guys? Coefficient formula, this average time to produce 5 units, 1 unit. When you produce 5 units, that I will take it as y. I will take y is equal to ax to the power of b. A means how many hours you are taking for first unit. Let's say 100 hours. B is for which units you are trying to produce. 5 units. To the power of coefficient of that learning curve, they will give in the question itself. Minus something they will tell. You have to apply logarithm and you have to solve it. You have to apply logarithm and you have to solve it. Is that clear? Hello? Shall we see one question on that? Go to illustration number 23. Other learning curve thing we will see in the PYP only. Or wait, I will show. Go to this question number, illustration number 19. One question we'll see without the doubling effect, with doubling effect. First we'll see with doubling effect. Concentrate. The learning curve as a management accounting has now become this is not the question. Here. Illustrate the use of learning curve for calculating the expected average unit cost of making. Average unit cost, that means per unit they are asking. To produce 4 units, to produce 8 units. Now my question is it having doubling effect or no? 1, 2, 4, 8, 16, 32, 64, 128, 256, 512, 1024, 2048, 4096, 8182, 16364, 32,728, 65,456, all these units. Once it keeps doubling, you will get it. Now 8 is doubling effect only. Using the data below, direct labor needed to prepare first machine is 1000 hours. And also remember guys, few times it will be in minutes. One question is there in which they have given in minutes. Please keep in mind. Learning curve is 90%. That means 1, 2, 4, 8. Average hours per unit. First unit will not be having any learning curve effect because you are doing it for the first time. You will take enough time. And always remember, if the firm is new and all, where there is a scope for improvement, there only learning curve will be there. If firm is already old enough, that means they have already found out the different ways of doing the work faster way. That means there won't be any space for learning curve. But if the firm is new, you are doing a new type of work, then only the learning curve effect will be there. So, first one will take how many hours? 1000 hours. Second one will take 90% of it. That means average. Fourth will take 8-10 hours. On an average per unit I am telling. 8 will take 729 hours. Now listen here. Total hours. To produce 1 unit, I will take 1000 hours. To produce 2 units, I will take 1800 hours. Per unit 900. So for 2, 1800. To produce 4 units, I will take 3240 hours. To produce 8 units, we will take 5832 hours. Is that clear? Done. Now they're asking for 4 machine as well as 8 machine. So for 4 machine, labor hours consumed is this much. For the extra 4, for together 8 is so much. For extra 4, how much? Some 2592. Some 2592 is what we have taken, some extra hours. Now, direct labor cost is rupees 15 per hour. Direct material cost is 1,50,000. Material cost has nothing to do with the learning curve. Fixed cost for either size of the order is 60,000. You go for 4 units, you go for 8 units, fixed cost is gonna be 60,000. Answer the following 1 to 3. Please go through the relevant theory part. See? Now, first, to produce 4 units, in total how much we are going to incur? Material cost of 1,50,000 into 4, because that is per unit. 6 lakh is it? Plus lab, 1,50,000 into 4. 6 lakh plus labor cost will be 3,240 hours we will take. Each hour will cost you 15 plus fixed cost will be 60,000. They are asking per unit, no? Divided by 4. How much will be the cost per unit? Sorry? 1,77,150 per machine. What if it is 8 machines? Then machine material cost will be 12 lakh. That is 1,50,000 into 8 machine. Correct, no? Hello? 1,50,000 into 8. 12 lakh. Plus labor will be, we will be consuming 5,832 hours in total at the cost of 15 plus fixed cost of 60,000 divided by 8. One lakh 68,435. Is that clear? This is how you will compute. Now, let's say we are producing 4 machines. Immediately we got order for extra 4 at the rate of 1,50,000 or let's say 1,60,000. Will you accept the offer or will you not? Some new customer has come. They are asking you to sell extra 4 units at 1,60,000. Will you accept or will you not? Accept. Why? Cost is only 1,68,435. Why will you accept? Listen, but only relevant cost to be taken for decision making. How much, sir? Material cost of 1,50,000 per unit we will incur. For 4 units it should be 6 lakh. Correct? Plus labor cost, guys. Already we are producing 4 and we are booking 3,240 hours. If you produce 8 in total 5,832, that means to produce that extra 4 units, we are taking some, I told no, 2,592, na? 2,592, no? 2,592 hours I will take into rupees 15 plus 0. Why 0, sir? Are I produce 4 or I produce 8? My fixed cost I am going to incur. That means when I produce 4, already I have incurred. I am not incurring this for special order, no. That means if I produce 8 or if I produce 4, I have already incurred fixed cost. Does it affecting your decision making? It is irrelevant cost. So don't take it. Divided by 4 units. So how much will be the cost per unit? $1,59,075. 720. Customer is offering it 1,60,000. Will you accept or no? Cost is 159,720. They are offering you at 160. If you don't accept, you will not get anything, no? 280 into 4. You are getting almost 960 or something. So, you understood this point or no? As cost per unit is lower than the selling price per unit, we are going to accept. Generally, students will do two mistakes. One, when they see 8 units, either they will take 729 as ours, or they will take 5832 full. But 5832 is to produce all the 8 units. Anyhow, with 3240 we are incurred for 4. That means for extra 4 units we are incurring only 2592 hours. Plus, either they will do that mistake or they will take fixed cost into consideration. Fixed cost should not be taken into consideration because you accept the offer, you don't accept the offer. Anyhow, you are incurring. No. That means it has nothing to do with the decision making, only relevant cost to be taken. Hope it is clear. This is how you should make the decision. Whatever the additional cost you are incurring, that you should calculate. And if at all additional revenue is more than additional cost, you are okay with. Because here, per unit you can make around 280 rupees. From 4 units, you can make around 1320 or something. Okay. Sorry, not 1320, 1120. Hope it's clear. Now, what if the doubling effect is not there? See, all these questions you go through once, okay? Learning curve, whatever the question is there, all this you go through. Which question I told? Illustration 20 now. 23. Nice question. Concentrate. The usual learning curve model is y is equal to ax to the power of b, where y is the average time per unit of product x, a is the time for the first unit, x is the cumulative number of units, b is the learning curve coefficient, which is 80% they are telling, 0.8 by 0.2, that they will only give. Either they will give here or they will give in the data, whatever they give. For the learning curve rate of 80%, given that a is 10 hours, that means first unit will take 10 hours. Learning curve is 80%, that means coefficient is minus 0.322. You are required to calculate average time for 20 units. Is 20 out of under doubling effect? No. 1, 2, 4, 8, 16, 32. It falls somewhere between 32 and 16. So it's not under doubling effect. You have to go for logarithm. Second, total time for 30 units. Total time for 31 and 40. 31 to 40. That means you will find for 30. No. Then you have to find for 40. Total time taken for 30 units minus total time taken for 40 units. That will give you time taken from 31st unit to 40th unit. Got it? Given that log A is equal to 0.301. Anti-log is 0.5811 is so much. All those things they have given. Listen. What you should do? You should use logarithm here. You should use logarithm. Ax is equal to y is equal to ax to the power of b. First one they are asking for how many units? They are asking for 20 units. Correct now? Hello? So, average time for 20 units is your y is equal to a is time taken for first unit. 10 hours is it? 10 hours into x is 20. We are calculating for 20 units. And b is coefficient for that learning curve, which is 0.322, is it? Got it? Hello, hello, hello. Now I can apply logarithm here because in calculator I can't multiply 0.322. I'm going to apply logarithm. Before applying logarithm, please keep in mind, when you apply a into b, if anything is there, when you apply logarithm, this will be log a plus log b. Log a plus log b. If at all it is a plus b, then it is log a plus log b, directly you can apply. If it is log a into log b, you have to take. If at all it is a minus b, then it will be log a divided by log b, like that. Please keep in mind. If division is there, it will be minus. If multiplication is there, it will be plus. Please keep in mind. I mean, for example, if it is a into b, this will be log a plus log b. Log a plus log b, and always remember log 10 is equal to 1. Log 10 is equal to 1. And your log or a into b is there, a by b is there. Let's say a by b is there. This you are going to write it as log a by log b. These are the few basic things you have to remember about logarithm. Sir, but oh my god, too confusing, sir. You don't have to. Only one equation is there, ax to the power of b, and always b will be negative. So you should know what to do. Listen, what I will do here is I will write it as log 10 plus log 20 minus 0.322. And listen, log m to the power of n means you can write it as n log m. You can write it as n log m. Here anyhow n is negative, you will write it as minus n log m. So what I am going to do, I am going to write it as log y is equal to log 10, shall I take it as 1, plus minus I will take, because that n minus n log m, no, so this plus will become minus 0.322 into log 20. Now log y is equal to 1 minus 0.322 into, I will write it as log 10 into 2. Log 10. See, sometimes all those log information they don't give. Sometimes they might not give. Log 8. What you can do? Log 2 into 2 into 2, no? 2 into 2 into 2 is how much? 8. That I can write as log 2 plus log 2 plus log 2. 12 they might give. Can I say it as log 3 into 2 into 2? Log 3 plus log 2 plus log 2. 3 into 2 into 2 is how much? 12. So whatever the information they have given, you should check and you should divide. Here 20, of course they haven't given log of 20. They haven't given log of 20. Log of 3 they have given, log of 4 they have given. 2 they will give always, no doubt in that. Now I will write it as log y is equal to 1 minus 0.322 log 10 plus log 2. If at all you are comfortable with this logarithm, you can skip certain things. You can skip certain things. No doubt in that. Log y is equal to 1 minus 0.322 into log 10 is 1 plus log 2 is 301. Got it? Now log y is equal to 1 minus 0.322 minus, how much is 0.322 into, or directly you tell, no? How much is 0.322 into 1.301? 4189. 4189. Log y is equal to 0.5811. I mean, once you write here, you should not go for calculators. Is that clear? Now, I want y or I want log y? Y I want. Average time for 20 units I want. But log is there, no? All you have to do is apply anti in both the side. Okay? When you apply anti-log both the side, here anti-log, here anti-log. Anti will cancel log here. So y is equal to anti-log of 0.5811 that they have given only, I feel. 3.812. That means to produce 20 units, per unit average time is 3.812. So total time taken for 20 units will be 20 into 3.812 hours. How much it will be? Sorry? 76.24 hours. This is to produce how many units? 20 units. On an average, when you produce 20 units per unit, it will take 3.812. Next, what they have asked, total time for 30 units. See, average time for 20 units is 3.812. Total time for 20 units is 76.24. Now, one more time for practice purpose. Shall we see one more? For 30 units. Hello? Okay. What is the formula to arrive at y? Y is equal to ax to the power of b. Here, by the way, y is nothing but units to produce 30 units. I mean, average hours to produce 30 units. So, y is equal to a. First unit will take 10. X is 30 minus 0.322. Correct? No. That's not how it works. That's what exactly the learning curve effect is. For the first 10 what you take, of course, same time you won't take for 20 to 30. Because the speed there will be much more faster. So, here, log y is equal to, I am skipping certain steps, log 10 minus 0.322 log 30. I'm just skipped one step there. That's it. You understood there? Log a plus b we will take, and a plus b, and when it is bx, it will be log a minus x log b, like that. Now, log y is equal to 1 minus 0.322 into, here also I will take log 30, I will take it as log 10 into 3, that is log 10 plus log 3. Log 10 is 1 plus log 3 is 4771. So log y is equal to 1 minus, how much is 1.4771 into 0.322? 1 minus that. Final answer. 5 to 4. 4. Now apply anti both the side. Anti-log of log y is equal to anti-log of 0.5244. Anti will cancel the log. Y is equal to 3.345. This is average time to produce 1 unit when you are producing 30 units. So total time to produce this is 30 into 3.345. You can't add 20 plus 10, please keep in mind. First 10 is different, 20 to 30 is different. How much? 100.35 hours. Earlier for producing 20 it was 76.24. Now it is 100.35. That means to produce that extra units, we are taking around 24.11 hours extra. That's it. To produce that extra 10 units, we are taking 24.11 hours extra. Is that clear? Like that only you can calculate for 40 also. Shall I quickly show it for 40 also once? Y is equal to ax to the power of b. Now y is the average time required to produce 40 units. So I will apply the logarithm directly. Is that fine? Log y is equal to log a. Log a is nothing but, for how many units? For 10. For the first units, how many hours it will take? A is first unit. Minus b I will take because I know that b is my negative coefficient, 0.322. Into I will take logarithm of x. X is 40. 40, can I say it as 10 into 2 into 2? 10 into 2 into 2, or log 4 they have given by any chance? And then you take log 10 plus log 4. I skipped one more step. If they haven't given 4, you should have taken log 2, log 10 plus log 2 plus log 2. That is 10 into 2 into 2. I skipped many steps here. Hope you guys are comfortable with that. Log y is equal to log 10 is 1 minus log 10 is 1. Log 4 is how much? 0.6021. So 1.60 final answer. How much is log 4? 0.6021. 0.6021 into 0.322. This one no, log is 1 no. This is 0.6022 na. 6021 na. So 1.6021 into 0.322 is how much? 5158. So difference is how much? 48. What is the anti-logarithm of this? Have they given directly? 3.049 hours. That means when you produce 40 units, on an average per unit you will take 3.049. To produce 40 units in total you will take 121.96 hours. To produce 30 units you will take 100.35 hours. That means to produce that extra 10 units, you will take 21.64 hours. 61 hours. This is how you will compute. Is that clear? This is all about learning curve effect, but sometimes they don't give logarithm. This type of question, of course, they have to give always, but sometimes they don't give logarithm, but they might ask 30, 40, something like that. That time don't get confused. They're talking in the set. They might give for the first unit 10. 10 units, something they have given. Now they are asking for 40 units. Now we know that 10 unit is also not doubling effect. 40 is also not doubling effect. But for the set of 10 units they have given now. Set of 10 if you take as 1, 40 should be 4. For 1 so many hours, for 4 question mark, you will get no. So then you should take it in a set. Don't get confused and don't jump into conclusion that question is wrong. In examination, rarely that's going to happen. Hope it's clear. You guys understood? That's all about this. And last topic is remaining in the chapter. That is balance scorecard. What does this balance scorecard say, sir? Balance scorecard says, boss, you don't only have to look from the financial point of view in your traditional approach, like your traditional approach. Now, to stay in the game for a longer period of time, you cannot just concentrate on your financial perspectives. You should concentrate on overall perspective of the organization. Overall perspective, what are those, sir? 4 perspectives are there. 4 perspectives are there. One is financial perspective. That is looking from the point of view of company's numbers to the stakeholders, to the shareholders. Second one, customer's perspective. That is creating value to the customers, retaining the customers, giving after sale service to the customers. All those things will be seen from the customer perspective. One more is learning and innovation, coming up with new ideas, new technologies. Process improvement is next one. Whatever the process you have, improving it, reducing the cost, giving good value to the customer. If you manage these things, end of the day your financial goal will be satisfied. Of course, the main motive is to financial achievement. Anything you take, ArivuPro, do you think right now we are concentrating only on money? We are giving other values, no? Customer perspective is there, improvement in process is there, learning growth, everything is there. But why we are giving personal customer satisfaction? You will be happy. If you are happy, you will tell someone else. Now they are happy, they will pay the fees. End of the day, it will go and stand where? Financial. Why we improve lot of process? That for example, whether you have to go and stand there in the line, if you have any issues, whether you have to go and stand there in the line to meet academic people, all you have to do is write one email, help@ArivuPro. Automatically you will get the response to that in 1 or 2 or whatever it is. Why we are doing that? It will lead to the satisfaction. It reduces our cost. If it reduces our cost, automatically our profit will be more. It will take you to the financial. Learning and growth. Employees training, etc. Why we give training to employees? To work faster, to work more efficient. When they work more efficient, what happens? Reduction in the cost. Reduction in the cost leads to financial achievement. So of course, base is always financial achievement. However, other 3 aspects also should be taken. I will do one thing. I will just show it using one question only. Direct question only I will show. That is your June 2025 7B question. June 2025 7B. See there what they are telling. Briefly describe the 4 perspectives of balanced scorecard. Which are those 4 perspectives, sir? Financial perspective, customer perspective, internal business process perspective, learning and growth perspective. Now, what is this financial perspective? This perspective evaluates the profitability of the strategy. Because cost reduction relative to competitors, cost and sales growth are the key strategic initiatives. Financial perspective focus on how much of operating income and return on capital results from the reducing cost and selling more unit. So by reducing the cost, by increasing the sales, how much extra we can make, how much extra returns we can give it to our shareholders. That's what we are going to think from the financial perspective. Next is customer perspective, giving value to customer, retaining our customers. This perspective identifies the target market segment and measure the company's success in these segments. The customer perspective monitors how the entity is providing value to its customers and determines the level of customer satisfaction with the company's product or service. Customer satisfaction is an indicator of the company's success. If customers, once they buy, next time if they don't come, that means, are you doing good? If you get the repeated customers, then only it is good, no? For example, whatever the foundation students pass from ArivuPro Academy, in that around 80-90% will join for inter in ArivuPro only. That means they are happy, they are not happy. They are happy with the foundation one. What if only 10%, 20% joins? That means they are not happy. Getting it? So, the repetitive customers are the mirror for your company's success. This involves metrics like customer satisfaction, retention, market share, etc. That is your customer perspective. Next one is internal business process perspective. Internal business process perspective. This perspective focuses on internal operations that further the customer perspective by creating value to the customer and further financial perspective by increasing shareholders' value. This perspective determines internal business process improvement target after benchmarking against its main competitors. Got it? So here we will be trying to improve our own process. Automatically it either adds value to our customer or either will reduce our cost. End of the day, we will be able to achieve our financial perspective. Next one is learning and growth. This perspective identifies the capabilities of the organization. It must excel to achieve superior internal process that create value to customer and shareholders. That is training of our new employees, learning new ways of doing the things, all those things. You have to just learn 3-4 points for each and every perspectives here. Okay. If they give for 7 marks, easy cakewalk question. Business scorecard. Please keep in mind. 2-3 times they have already repeated it. It's not something like new it is. These are the few things. Now shall we discuss questions, past year paper questions for this particular chapter. Hello. Shall we? Okay. Again, we'll come back from the Ulta analysis. Fine now? December 25. We have 12th MCQ as well as we have 14 marks question, 7A and 7B. One is learning curve, one more is ROE, EVA, 2-point analysis. Not a big deal. Some unknown numbers illustration is there. No, ditto that illustration only with bit changes. They have put it in the examination question. Whoever has seen and go CMA material, sorted. Now, shall we look into all these things? First, 13th question, 13th MCQ in your December 2025. 13th MC 12th. A division of a company has operating asset of 5 lakh, generates an operating income of 1 lakh. If the company's minimum return is 15%, what is the RI? Very simple. How much is your operating income? 1 lakh minus 5 lakh into 15%. Final answer? Option C. Is that clear? Hello? Seventh question, right? Oh, sorry, this is not the one. Previous, the other one. Leave. 7A. Look at this 7A. Nice question. Measure. Sagar Limited has reported the following financial data for the financial year ended 31st March 2025. Net operating income before tax. That means they are talking about EBIT. 1,20,000. Sales is 12 lakh. Total asset is total asset total asset 8 lakh. Shareholders equity 4 lakh. Interest expense after tax. Please keep in mind, after tax. Tax rate 25%. Capital employed is 6 lakh. Weighted average cost of capital, oh my god. They only have given you KO. You don't have to worry about it at all. Now, first one. Analyze ROE using DuPont analysis. ROE using DuPont analysis. Guys, what is the DuPont formula says? Fan, right? Fan, no. NAF. Net profit margin. Asset turnover. Financial leverage. How much they are telling about your net profit? Have they given net profit? Net profit is your PAT, no? Have they given PAT? then what you should do, you should start from EBIT and you should calculate EBIT minus interest will give you EBT minus tax will give you EAT or PAT, net profit. Correct now? How much EBIT they are telling? 1,20,000. If interest was before tax, then I would have taken that directly. But interest they have told after tax 20,000. Hello. That means your interest expense was not 20,000. After reducing 25%, it is 20,000. That means, can I say that 75 is what is 20,000? If 100 is total interest, 25 is tax. After tax, it is 75. So can I say that 75 means 20,000, 100 means question mark? Ayo sir, what is that 100 etc. etc. Can I say interest minus tax is equal to 20,000? Because they are telling net tax. Interest I don't know, shall I take it as x? Minus tax is 0.25 of x is equal to 20,000. 0.75 x is equal to 20,000. X is equal to 26,666.67. Got it? So your EBT is 1,46,666.67. 25% on this will be the tax. Oh, sorry. Minus. 94,333, na? Or 93,333. 93,333.33. 25% of this. 23,333.33 na. That will give you earning after tax as 70,000. Earning after tax is how much, guys? Anyone any doubt in this? Anyone any doubt in this EAT? One more easiest way is what you know. You know EBIT is 1,20,000. You reduce tax directly. You will get no PAT. From no PAT, if you reduce interest, you will get net operating profit after tax, means nothing but your EB earnings before interest, but after tax. Now if you reduce interest also, what you get? Earning after tax. So interest directly it is 20,000, you can reduce. That is all you have to do is 1,20,000 minus 25% minus 20,000. You can do that way also if you are knowing that how the things works there. Otherwise you can follow this method. Hope this one you understood. Now net profit is how much, guys? 70,000, no? Hello? Divided by total sales is how much? 12 lakh. 12 lakh only, no? That will give you net profit margin into 12 lakh divided by total asset 8 lakh into asset divided by equity. How much is equity? 4 lakh. Correct now, guys? If you want, you can do line by line or cancel and you can do 70,000 divided by 4 lakh into 100. How much it is? Into 100. 17.5%. Sorry? 17.4. 5 someone tell 6 also. You rounded off. Is this clear till here? Anyone any doubt in the ROE as per DuPont? As they haven't asked you 5 steps, you are going to do this way. If at all they ask you 5 steps, what you should do? PAT divided by PBT into PBT divided by EBIT into EBIT divided by sales. Hope you remember. Next, what they are asking, assess EVA and interpret whether the company is creating or destroying the shareholders' wealth. It will be creating when it is positive in nature. It will be destroying if it is negative in nature. By the way, what is the formula for EVA? NOPAT minus capital employed into KO. How much is NOPAT? NOPAT is EBIT minus tax. EBIT minus tax. That is, EBIT is 1,20,000 minus tax 30,000, which is gonna be 90,000. Or you know that EAT plus interest after tax. Interest after tax is 20, EAT is 70. We only computed 90. Minus capital employed, they are telling 6 lakh. KO they are telling. They are only telling it, otherwise you have to compute WACC. Now, rupees 30,000. Positive, right? So is it creating the value or is it destroying the value? Creating the value. Simple. Discuss the relationship between DuPont ROE and EVA. Both are being a positive one. As DuPont ROE is more than your cost expectation of your investors, it is also giving the positive result towards it. And this is also, as it's the positive amount, it is also going to give you positive approach towards the situation. Okay, like that you have to write few things. Hope it's clear, everyone. Hello. So how this 30,000 is coming, sir? Can you tell me how much is your ROE? 17.5%. So the spread is how much here? 7.5%. Spread means extra how much we are getting. In terms of ROE, we are making around 7.5% extra than their expectation. In case of EVA, we are making around 30,000 extra in terms of their expectation. Hope it's clear. Clear. Paka. Simple one only, no? Shall we see the B? B. Learning curve. See there. CS LLP has designed a new type of sailing boat. They have just completed an initial run of 30 boats at the following cost. So whatever they have given, that they have given for how many boats? 30 boats. Madhu, how many boats? Material they have given, labor they have given, tooling cost they have given, reusable they have given. Moral of the story, sunk cost, irrelevant cost for decision making. Because you already incurred it. You produce irrespective of the units now, you are not going to incur it once again. Variable overhead 0.5 per labor hour, rupees 3,000. That means how many labor hours we have consumed, guys? $6,000 hours. Hope you guys understood how we got that 6,000. Fixed overhead is 0.5 per labor hour, which is 6,000. That will come to 12,000, but let it be. Here they are talking about total fixed. That according to me it's a mistake, but no worries. It's not going to affect anything there. The firm has been asked to bid the prospective contract for 90 sailing boats. That means we want to know how much is the total time taken for 90 boats. So is there a doubling effect or not there? Think wisely and tell. There is doubling effect. How, sir? 30 boards is one set. Next, 60, two sets. Double of 60, 120, four sets. But they are asking 90, no sir. Array 30, you know. Find out for 120. That means extra how many boards you are producing? You will get data for 90 boards. Understood? Because we have to bid for this 90 boards. And 80% learning curve is thought to be pertinent in this case. The MD believes that quotation is unlikely to be accepted if it exceeds 1,10,000 as the company is short of work. He believes the contract is vital. He is telling if at all we quote them more than 1,10,000, then they will not accept. If you quote something less than 110,000, they will accept. That's what they are telling. You are required to calculate the profit or loss if the contract is accepted at rupees 1,10,000. Now, all we have to do is find out how much is the cost to produce how many boards? 90 boards. Now, I can write it as 30 boards, 60 boards, 120 boards. This is one set of 30 boards. This is two set of 30 boards. This is four set of 30 boards. One set of 30 boards, two set of 30 boards, four set of 30 boards. Now average time per set. Average time per set of 30 boards. First one we computed. How many hours? 6,000 hours, no? Hello. Yes. Next one. We have effect of 80%, right? 80%, no? So 80% of this 6,000 is 4,800 hours. And 80% of 4,800 is 3,840 hours. 3,840 hours. Is that clear? Pakka? Total hours. If you are producing 30 boards, total hours you will be taking is, don't do 6,000 into 30. 6,000 is not per board. 6,000 is for one set of 30 boards. That means 6,000 hours. If at all you will produce 4 boards, per set you will take, 4 set of boards. Per set you will take 3,840. For 4 sets you will take 15,360 hours. That means to produce that extra 90 boards, that is extra 3 set of 30 boards, you will take 9,360 hours. 9,360 hours. Is that clear? Now, whether fixed cost has anything to do with the decision making? No. But they are asking profitability analysis. Now, that means you have to reduce from the contribution. Please keep in mind. First, direct material cost. How much they are telling material cost? 20,000. That is for one set, no? Here we are producing such how many sets? 3. Only for the extra 90 boards. Rupees 60,000. Direct wages. Extra how many hours we are taking? 9,360 hours. And per hour how much is the rate, guys? Listen. 24,000 is for 6,000 hours. 24,000 rupees is for 6,000 hours. That means per hour 4. So 4 into 9,360. 37,440. Pakka? No doubts? Hope you guys understood how we got that 4 rupees. We got to know we work for 6,000 hours. And we know that our total labor is 24,000. That means per labor we have paid 4 rupees. Done. Next is your variable overhead. Variable overhead is 0.5 per labor hour. 9360 is a labor hour. Rupees 0.5. 4,000. May I know the total variable cost? One lakh. As fixed cost has nothing to do with this, will you accept the order or no? 1,10,000 is acceptable, because if we give it 1,10,000, still we will make the contribution of 7,880. Correct? No. However, we have to ascertain the fixed cost. No. Profit. No. So I will reduce fixed cost also. 9360 into per hour 0.5, right? Actually, it was supposed to be 2, but forget how much it is. 4680. That will give you net profit of 3,200. Huh? This will be your profit from that particular contract. In fact, your profit is 7880. But if you recover fixed cost and all, this will be your profit. Anyone, any doubt? No doubt? Pakka? AC is working? No. Working? What? Is this point clear, everyone? Hello. This is how you should compute. Mark it as LMR. Very nice question. What people think is, doubling effect is not there. Doubling effect is there. Next question we'll see. That was December 25, is it? See, for 14 marks, simple. 14 plus 2, 16. Crazy, no? January 25, we have 10, 12, 13. 6 marks over here and 14 marks over 7A and 7B. One is balance scorecard that we already discussed, and finding out the missing figures. The illustration similar to that I told, no? So 10, 12 and 13. One last paper we'll discuss. Remaining things will continue tomorrow. Okay, 10, 12 and 13. The following they have asked their rows. Return on capital employed. I told you one formula. What is this? Operating profit margin multiplied with asset turnover. Correct, no? Hello. How much is operating profit margin? 0.28 into asset turnover is 65. How much it is? 18.2. So that is also percentage. No, you should take 0.65. No, if I take both are point, then finally you should multiply with 100. No, point won't get cancelled. You have to multiply with 100. Okay. For example, if you take 0.28 into 0.65, you will get it in decimals. No, then you have to multiply with 100. Instead of multiplying that with 100, this I multiplied with 100 and I have taken net effect. This one I told. Next one is what? 12th. A factory is making a certain product where learning curve ratio is 80% and 90% for worker A and worker B. Who is faster? A is faster or B is faster? A is faster. Don't decide on percentage basis. A only 80%, B, that is not marks. This means A will take only 80% of time what he has taken for the previous set. B will take 90% of time. That means cost under A will be lower than cost under B. Which of the following statement hold good for the factory? The labor cost for manufacturing fourth unit will be more for A. No. A is more efficient. The labor cost for manufacturing fourth unit will be more for B. Labor cost is same for fourth. No. Nothing can be said. Nothing. You can tell. Hope it's clear. Next one is what? 13. Okay. Which of the following would be considered as operating asset in return on investment computation? Land being held for plant expansion. Operating asset, guys. This fixed asset. It has nothing to do. Treasury stock. Accounts receivable is your operating asset. Common stock. All these are company basis. Only account receivable is the division basis. Next up. That's it. 6 marks. Sorted. Now we are going for 14 marks. In that already one thing we have discussed. 7B already discussed. Balance scorecard. Which are the 4 perspectives? Come on, guys. First, financial perspective. Primary perspective is financial perspective. Customer. Process improvement. Learning and innovation. Learning, growth, innovation, etc. Now, this is the same question what is there in the study material. So, I thought of discussing there, but anyhow it was there here, so I didn't discuss. Sandeep Corporation has 3 divisions whose income statement and balance sheet are summarized as below. XYZ 3 divisions. Supply the missing values through 1 to 7 in the table above. First one, asset turnover is missing. What is the formula for asset turnover? Sales by operating asset. Do you know the sales? 10 lakh. Do you know the operating asset? 2 lakh. That means 5 times. What do you mean by that? Your sale is 5 times of your total asset investment. Your sale is 5 times of total asset investment. Margin. Your net profit margin. Operating income by sales. Operating income is how much? 50,000. Sales is 10 lakh. Can I say 5%? 5% no. Next, ROI, return on investment. What is the formula? Operating income by operating asset. How much is operating income? 50,000. How much is operating asset? 2 lakh. That means around 25%. Hello. Next, going to division Y. Fourth one, they are asking sales. What and all information they have given? Operating income they have given. Margin they have given. And ROI they have given. Guys, what is the margin formula? Net profit by sales. And this they are telling 0.005. 0.5% means 0.005. 50% means 0.5. 5% means 0.05. 0.5% means 0.005. Now, net profit do you know? 60,000 divided by sales is equal to 0.005. So, sales will go that side, 0.005 will come this side. 60,000 divided by 0.005, please. One crore 20 lakhs. By looking at the numbers, students might go confused. Ayo, did I do any mistake? Check no, 60,000 divided by that will get 0.5% only. Okay. Next, operating asset they are asking. Guys, they have given return on investment, ROI. What is the formula for ROI? Operating income by operating asset. So, you know the operating income? 60,000. So, can I write ROI is equal to operating income by operating asset? Can I write operating asset is equal to operating income divided by ROI? So, operating income is 60,000. ROI is 0.025. 20. Your operating asset is 24 lakhs. Asset turnover is what? Asset turnover. Sales by total asset. Sales is 120. Operating asset is 24. 5 times. 5 times. Is that clear? Next, sales they are asking. They have given operating income. They have given operating income. They have given operating asset, asset turnover, margin, ROI. Now, guys, they have given margin, no? Hello. They have given margin. They have given operating income also. You can use the asset turnover if you want. You can use RO. No, ROI is not possible. You can use either asset turnover or you can use your margin. Which one shall I use? Margin. Okay, margin means, what is the formula? Net profit by sales is equal to margin. Now, sales is equal to net profit by margin. Net profit is how much? 10,000 divided by margin is 0.04. 2,50,000. Whoever want me to use asset turnover, what is the formula for asset turnover? Sales by asset, operating asset, that is equal to asset turnover. Now, can I write it as sales by asset turnover into operating asset is equal to sales. Asset turnover is how much? 0.5. Don't do into 100. This is in times. And asset is 5 lakh. 0.5 into 2 lakh. Sorry, 0.5 into 5 lakh. 2,50,000. Is that clear? That is your June 2025. Every time you can see around 14 marks is coming here only and around 4 to 6 marks here. December 24. Every time. June 24. 3 more papers to be discussed. Don't worry, tomorrow we'll discuss. First half an hour we'll be discussing this. Not much things are left. Then we'll be proceeding with, let's see, which chapter. Yeah, after this decision theory followed by budget and budgetary control. We'll see. No worries. Anyhow, I kept for 5 days. 4 days we announced. We'll try to wind it up in 4 days because marathon should not go for longer period also. Revision time it won't be, time won't be sufficient. But let's see, no problem. God's plan. Okay. And today's homework is whatever we discussed. Quickly glance everything. Go through your ICMA material. All the illustration as well as practical problems what we discussed in the class. For ABC, rather than ICMA material, just ICA material, provided those 2 LMR questions what I have marked. What I have made you mark. The different activity, value added, non-value added and different level of activities. That. Hope you guys learned something, utilized your 5 hours. If you wanted to learn it on your own, you know how many hours you would have taken. Now we'll be discussing December 2024 paper. Which chapter? Decision. Divisional performance measurement. 9, 10 and 11 as well as 14. 4 questions are there, right? 9, 10, 11 as well as 14. 8 marks over here. And as always, 7 marks, 14 marks question over here. Ninth one. Look at this. WDV of fixed asset of measure Vanguard Limited as on 31st of March 2024 is 22,50,000. On 1/7/2024, company sold asset having WDV of 2,50,000 for 2,75,000. Other income, that means this income of 25,000 is not included in it. Only operating income they are telling. Indirectly they are telling this includes only operating income. So how much they are telling? 2 lakh. The ROI of the company they are asking. Guys, numerator I will take 2 lakh divided by denominator operating asset. Should I take opening or should I take closing? I should take average. Opening how much was there? 22 lakh 50,000, because 31st March is as good as 1st April 24. And in between we sold WD we have 2 lakh 50. That means at last we will be left with 20 lakh asset. Correct, no? So opening was 2250. In between you sold 20 lakh, 2 lakh 50. So you'll be left with 20 lakh divided by 2. Average is how much? 21 lakh 25,000. 2 lakh divided by 21 lakh 25,000. 9.41%. That means they haven't taken average. Then next alternative, taking the closing balance of asset. What is the closing balance of asset? 20 lakh. Correct, no? Because 22 lakh 50 was there. We have sold 2 lakh 50. That means we are left with 20 lakhs. 10%. Option D. So generally they avoid giving this kind of things, because either you can go for average, either you can go for opening, either you can go for closing also. But if some answers you won't get, you can check it with the other formula. Like that you should do. Now, which of the following formula for calculating RI? Divisional profit or total profit? Total profit we don't take only. Divisional profit, no. Divisional profit minus percentage of change in sales? No. Percent capital charge? Correct. Total investment? No. Percent capital charge, divisional investment? Yes. 10th one. That is your operating income minus operating asset into cost of capital. Cost of capital is KO. Operating asset is what you have invested in that particular division. Got it? 11th one. The theory of learning curve will now only hold if which of the following conditions apply. The task must be repetitive. Yes. New work means how we will get the benefit of saving time. Production must be at an early stage so that there is room for improvement. Correct. There is inconsistency in the workforce. No, consistency should be there. Because if the employees keep on changing, if I was taking today, I will take 100 hours. Tomorrow I might take only 90 hours. But tomorrow, instead of me, someone else comes, means they will start with 100 only, no? Where you will get the learning curve effect. So both A and B. Next, this one was also there, no? No. 14, According to DuPont model, the main functional parameter, guys, fan. Correct, no? F A N. Financial leverage, asset, operating performance, all of them. Option. Simple 8 marks. Now going to the 7th one. What they're asking here? They're asking effective rate of tax applicable to the company. Beta factor they are telling. Beta factor they only have given 0.9. That means they're asking you to find out EVA for sure. Assume principle of CAPM holds good. That means KE they are expecting you to solve it under CAPM model. Calculate EVA and comment on your answer. What and all information they have given. Cost sheet they have given. Cost per unit, okay. Whatever they are telling here is cost per unit. The company sold 5 lakh units of its product at a margin of 15% on cost. There is no opening and closing stock of finished goods. That means, guys, cost of sales is 20 rupees per unit. Cost of sale is 20 rupees per unit. That means 15% profit we are making on this 20 only, not on sales, on cost only. So 15% of 20, 3. Rupees 3 into how many units we are selling? 5 lakh units. How much? Rupees 15 lakhs. Can I say my rupees 15 lakh is my profit, which is EBIT? Anyone any doubt in here? Guys, anyone any doubt in EBIT? Computation? No doubt? Okay. On 1st of July 2023, company sold asset of 2,50,000 to measure Isomil Limited. The cost and accumulated depreciation of the asset was 3,50,000 and 1,50,000. That means you made asset of 350, which was already depreciated to 150. That means cost of that was 2 lakhs, or WDV of that was 2 lakh. You sold asset 2 lakh worth at rupees 2,50,000. That means 50,000 you made a profit, but that is not a normal profit. Correct? No, that is not an operating profit. The company charges depreciation at 10% under WDV method. There is no tax on profit on sale of asset. The market capitalization of the company is as follows: 12% bond, 12%. That means they are helping you with the debt. 10 lakh it is. Equity and reserves and surplus is your shareholders fund. Correct? No? That is 8 lakhs. Total 18 lakhs. So 18 lakh will be denominator, 10 lakh will be numerator when computing the weighted average cost of capital. Additional information: risk-free rate of return 10%, Nifty return, that is market return, is 15%, and beta factor is 0.9. Now they are asking you to compute EVA. Guys, can you tell me, for EVA computation, what are the data we need? NOPAT minus capital employed into KO. Correct? Now, NOPAT, very simple. You know the EBIT? How much it is? 15 lakh. Now, from the 15 lakhs, if you reduce tax, which is 30%, 10.5, yeah. 10.5 lakhs will be your NOPAT. NOPAT is how much, guys? 10.5 lakhs. 10 lakh 50,000 minus capital employed. We know that we have, no, this is for the company, no? Let it be. First, let's go for our cost of capital. WACC. KD is how much? KD, guys, here interest only they have given. All I have to do is interest into 1 minus T. Interest is how many percentage they are telling? 12% into 1 minus T, 0.3, right? So how much it's gonna be? 8.4 percentage. Your KD is 8.4 percentage. Anyone, any doubt here? No doubt? Okay. Next is your KE. KE you are going for CAPM model. Risk-free return plus beta factor RM minus RF. Risk-free return is how much? 10% plus beta factor is how much? 0.9. RM is how much? RF is how much? 14.5%. We know KE, we know KD. Shall we find out KO, WACC? That is nothing but KD 8.4 into weight of debt. Guys, if the total capital employed is 18, your debt is 10. So out of 18, 10 by 18 is your weight of debt plus 14.5, into out of 18, 8 is equity. So may I know the answer? Sorry, total final KD plus KE. How much? 13.30 now. Check once. %11.11%. 11.11%. Now, capital employed, we know that total we have employed 18 lakhs from the company point of view only, into KOE is 11.11%. So whenever you get that 11.11, 3.33 and all, what you should do? Take the continuous number in your calculator so that you will get a proper answer. So 18 lakh into 11.11111111111111. 1,99,999.9999. Continuously we are getting. This 11.11 also continuous number only you got, right? Or it was having some many 1111 only. So here how much you told? 20 lakh. Hey, 19 lakh, how is that possible? 1 crore, 1 lakh it should be. Hope you press percentage sign also. One percentage. When you apply percentage, of course, it cannot exceed 18 lakh, no? So 8,50,000 is your EVA, and as EVA is positive, they are adding value to the shareholders. As EVA is positive, they are adding value to the shareholders. Hope it is. No, that's what 11.1111. How much you take, that matters. If you take only 11.11, you might end up getting 1,99,000 something. So how much you take, full numbers, that's what matters, recurring numbers. Hope it's clear, everyone. Shall we proceed? Don't forget to write the comment and all. As it is positive in nature, as EVA is positive in nature, it's creating a value to our shareholders. It's not draining it out. 7B. What they're asking? Analyze the estimated sales price of fountain pen for the initial order of 16 units. Now my question is 16 having doubling effect or no? It has. Assess the minimum quoted price per unit if the repeated order of 20 units is also received from the same customer. Approximate up to 2 decimals. That means 16 units time, you know. When you get repeated order for 20, you should compute for 36 units. So difference between your whatever you produce 16 and extra unit of 20 will take you to 36. Got it? To know the time for that 20 units, what you should do? Already we incurred for 16 hours. No, that learning curve effect will continue. No, if it's for 36 total, how much it will be? So for 16 so much, for 36 so much. Difference will be for 20. Got it? See, already we are producing 16 units. Correct? No? That, I mean, we will compute for this one, initial order of 16. Our customer is telling we need for extra 20, continuous order. That means total we have to produce how much? So anyhow 16 will be computed. After that 36, that means this time whatever we incur here, total time, that is for extra 20 units. Got it? Huh? Now listen. So using that, we are going to take the decision regarding what should be the minimum price we will be charging. And is 36 has doubling effect? 1, 2, 4, 8, 16, 32, 64. That means 36 don't have doubling effect. So we should go for logarithm. We should go for logarithm. Now see, Nitos Limited, a manufacturer of a fountain pen, received an order for 16 units of a new fountain pen named Goldex. The first unit was made in 20 direct labor hours. So first unit will take 20 direct labor hours. Sometimes they will give minutes, please be careful. Okay. The production manager expects 80%, index is 0.322 negative for the type of operation. So far 6 units have been completed. In total 81.91 direct labor hours have been recorded. Then the cost and sales price of the first unit of fountain pen have been estimated is as follows. DM will be 20. Direct labor 20 hours it takes, 6 rupees 120. Variable overhead is 0.5 per labor hour, 10. That means how many labor hours? 20. Close it over was only good. I mean, government job, no metro. 10 minutes they will do and they will it done for the day. Which one? Minutes. You can take in minutes only, but later you should divide by 60. Whatever total you get. First, why you want to do? Like, I mean, you can do it in minutes also, no? At last you can convert it. Fixed overhead apportioned rupees 5 per direct labor hour. So here exact 20 hours only they are apportioning. Profit markup is 20% on cost. Sales price is 300. Analyze the estimated selling price of fountain pen for the initial 16 orders. That means, listen, 1, 2, 3, say 4, 8, 16. Average time per unit. Per unit, okay, please keep in mind. Average time per unit. First unit will take 20 hours. When you prepare 2 units, that time average one per 1 unit is 80% of 20, 16. When you produce 4 units, it's gonna be 12.8. When you produce 8 units, it's gonna be 10.124, 24. 80% of this. 8.192. You can take 8.19 only there. Now listen. Here, how many hours you are going to take for 16 units? 16 into 8.19. Total hours. 131.072 or 4. How much you guys have taken? Take 2 decimals. If they don't tell any other things, take 2 decimals. 131.04 hours. Now, listen. Direct material for 16 units, it's gonna be 3,320, right? Per unit 20 rupees, for 16 units 320. Direct labor per hour 6 rupees, for 131.04 786.24. Variable overhead 0.5 per direct labor hour. So 131.04 into 0.5, 65.52. And fixed overhead is 5 rupees per labor hour. So 5 into 131.04, 2. And that will give you total cost. Sorry, 1,826.96, and they are telling profit margin is 20% on cost. So into 20%. Point 39. Only two decimals. Second one, may I know the selling price? Sales. Point 35. Now my question is this 2192.35 per unit or all the 16 together? 16 together, but they are asking selling price per fountain pen. That means for 1 unit. So divided by 16. 137 point. Anyone any doubt in the first one? Next, what they are asking, minimum price to be quoted. Listen, extra 20 units. That means I want to know how many hours we will take. So to know how many hours we will take, already we are producing 16. Already we are having some learning curve effect. For 36 units, how much we will take, we have to find out. You remember yesterday's? Yes. So what you should do? Logarithm. Correct? No. Y is equal to ax to the power of b. Y is log y is equal to log a. Logarithm of a. A is how many hours the first unit will take? 20. Correct? No. Minus, because b I know that it is 0.322, because here also 80% they are telling coefficient, into ax, that is log a plus log x. Sorry, log x. Log x is how much? For how many units you are computing? 36 units. Got it or no? In fact, you don't have to simplify nothing here, because log 20 they have given. Or you don't have to apply logarithm only. Awesome, directly you can do. Crazy. They didn't give log values, they have given direct values. How, sir? Y is the average time taken for 36 units, no, per unit. A is what? 20 units, sorry, 20 hours, into x is 16 to the power of minus 0.322. Y is equal to 20 into, how much is 16 to this? 0.4095. Yeah. How much it is? Y is equal to 8.19. No, 36. No, it is. Sorry. 36. Because we want to find out average time per unit when we are producing 36 units. How much it is? 0.3154, and final answer 31. Round it off to 2 decimals. They are clearly telling 6.31. So for producing 36 units, in total, how many hours we will take? 227.09. Whereas to produce 16 units, how many hours we had taken? 131.04. So how many hours we are taking to produce that extra 20 units? Sorry? 96.05. So this is the labor. Got it? Now, material cost is how much, guys? 20 rupees per unit. So 20 into 20. 400 or 4000? 400. Labor 96.05 into into 6, right? How much it is? Sorry? 576.3. Next is your variable overhead 0.5 per labor hour. 96.05 into 0.5. 48.03. Now, next. Fixed overhead they are telling. Guys, fixed overhead, how much they are telling? 5 rupees. Here they are asking assess the minimum quoted price. So we are assuming that we are having enough number of orders. That means there is no opportunity cost as such. That means fixed cost also to be considered for calculating the total cost. So how much it is? 5 rupees per labor hour, no? So 96.05 into 5. 480.25. That will give you total cost. $1,504.58. To that we have to add profit. How much profit they are telling on cost? 20% on cost. So cost is 150.58, 04.58, 20% on that is 300, that's it. 992. That will give you sales. .5. Now this is for 20 units. Per unit how much? So we have to charge them 90.27 to achieve whatever we have to achieve. So no need to apply logarithm. They have given values directly. You don't have to apply logarithm and find out. Is that clear? Simple question, isn't it? You should always know when learning curve is there, whatever existing is there, for that it will get added. Okay? Not that we are starting from 0. Then what is the point of learning curve effect if at all you want to start from 0? From 17th unit we started. That's the meaning there. From the 17th unit till 36 units, those are the extra 20 units. No doubts? Next, going to June 24. June 24. Question number 2. Question number 5 and 6. That's it. 6 marks plus question number 7. They have asked EVA as well as learning curve effect. Ditto thing they repeated in the December 24 also. So 5 and 6. Sorry, 2 is there. Huh? According to DuPont methodology, the parameters are, can you imagine June 24 they are asking this question and repeating it same in the immediate next attempt. Only ICMA can do all these things. Very nice. Next one. Yeah, this attempt they should give December 25 paper only. 5. Born a division of Bant, a manufacturing company, has total asset of 12 lakh and operating income of 3 lakh. What is the RI if at all? 15% is COC. 3 lakh is your operating income. 12 lakh is your operating asset. 0.15 is your minimum rate of requirement, that is KO. An employee of Doxin Limited took 5 hours to complete the first unit of job in the assembly using 80% incremental this thing. Second job will take how many hours? 4 hours. And how was the exam? You will say easy. Listen, are they asking average time to produce 2 units, or are they asking time taken to produce 2 units? Time taken to produce second unit, correct? No. Here, when you apply learning curve, you get average time per unit. So, average time to produce 1 unit, when you are producing 2 units, are 4 hours. That is 5 into 80%. So, 4 into 2. Total 8 hours. First unit only took how many hours? Then second unit took how many hours, guys? Option B. Understood? Don't go wrong there. They are not asking you how much is the average time for 2 units. They are asking you what is the time taken for the second unit. Next one. That's it. Seventh one, you can see there. Calculate EVA they are telling. Okay. What are the information they have given here? What are the few informations they have given here? Summarize balance sheet. These two are 40 lakhs, right? This is your equity, correct? And 12% bond, 10 debt. So other things, fixed asset and all they have told, forget. Measure SOA Limited is engaged in manufacturing of electrical transformers. The sale and cost detail for the year ended 31st March is as follows. Selling price they have given, PV ratio they have given, margin of safety they have given. Guys, marginal costing concept. At margin of safety, contribution is equal to profit. Contribution is equal to profit. So, margin of safety is how much? We don't know. But we know that that is 60%. Correct? No. Fixed cost is 25 lakhs. Tax rate is 30%. RF is 8%. RM is 17%. Beta factor is 1.1. Debt equity is 1:4. I think they don't have to give. We only know it. 25, 15, 40 and 10. Correct, no? 10 and 40. 1:4 only. If they don't give also, you should know what to do. But here, few things are very nice. One, you don't know EBIT. What you can do? Do you know the fixed cost? Do you know the fixed cost? Guys, at break-even point, contribution is equal to, at break-even point, contribution is equal to fixed cost. That means, can I say that my break-even sales in rupees is nothing but fixed cost divided by PV ratio. Because break-even sales into PV ratio is equal to contribution at break-even, and we know that contribution at break-even is equal to fixed cost. That's why we get profit is 0. Now, do you know the fixed cost? 25 lakhs. Do you know the PV ratio? 0.2. So, how much it is? Break-even is 125 lakhs. And one more thing we know here, that is out of total sales, 100%, whatever the margin of safety is, the remaining thing is break-even. If margin of safety is 60%, break-even is 40%. That means, can you tell me, 40 means 125, 60 means question mark. 1 crore? 3 crore. 3 crore. 1.875 lakhs. Got it? For 60, I'm just checking for MOS directly. Now, this is my margin of safety. And I know that at my margin of safety, a 187.5, right? At margin of safety, contribution is equal to profit. How much it is? 37.5 lakhs. So this will be your EBIT. This is how you will compute EBIT. Anyone any doubt in this? They have given marginal costing concept as well as this one. Now I got to know my EBIT, profit. But for EVA I need NOPAT, right? NOPAT will be how much? EBIT minus tax. 37.5 minus 30%. 26 lakh 25,000 minus capital employed. Capital employed, somewhere we computed, no, total 45 lakhs, right? Huh? 14, 50. Equity 40, debt 10, total 50. Into KO we want. KO we don't have. KD we have by any chance? Not directly they have given, but we know that KD is equal to interest into 1 minus T. Interest is 12. 1 minus tax percentage is how much? 8.4 percentage. But here the EBIT calculation is different. That's it. K is your CAPM model. Risk-free return 8 plus beta factor 1.1 into market return 17 minus 8. Sorry. Sorry. 17.9. That is 8 plus 1.1 into 9. 1.1 into 9 is 9.9. 9. Yes, yeah. So now we know the weights also here. Guys, cost of debt is how much? 8.4. Out of total equity, I mean total capital employed, 1:4 is the debt equity. That means 1 lakh of debt will have 4 lakh of equity. So total 5 lakh. No, in denominator you should be very careful what you take. Don't take 1/4. Plus 17.9 into 4/5. 16. 16 means fine. I heard 60. Done. Now, guys, capital employed into 16 percentage. How much it is? Final answer. 18,25,000 is your EVA. Simple calculation. 7 marks. Easy 7. Rewards and everything is easy only. We are writing exam now. EBIT you should know, but according to me, once you revise your marginal costing, EBIT should not be the problem. Because in marginal costing, few basic things we learn, like break-even point is nothing but fixed cost by PV ratio. Then automatically we get to know that total sales is whatever you are applied, no marginal costing concept. Everything is very basic concept. You will be knowing it. I mean, you should be knowing, as it's revision for some reason, not reality check. But revise, few more days are left. Give your best so that you can avoid sitting and studying again for the next 6 months. So it's completely your choice. Studying fully, like giving yourself 100% to that and studying in that 30-20 days. 30 days today. 35 days. To be precise, today 35 days. But today you will be tired, no? Tomorrow onwards we'll start studying. So whatever the days are left, just give your best. You never know. Correct? That is the thing. Shall we go to the next one? Which attempt? December 23. Why? 7B is there. I didn't see. If 7B is simple question, you see now. Chichi. No worries. Look at this 7B, everyone. Zeman Limited manufacturing company has 10 direct workers. How many direct workers we got? 10 direct workers who works for 25 days in a month of 8 hours per day. The estimated downtime is 25 of the total available time. Estimated means it's always normal. The company makes gift items. Awesome. Company has received an order for 30 units from the customer. The first unit of the gift item takes 40 direct labor hours to manufacture. Moral of the story. Is 40 having doubling effect? Sorry, 30 units are the order, no? Is 30 has doubling effect? Because, see, sometimes you can say it as a set of 1, but they are given for 1 unit. You can't, this is set of 1 unit, not set of 5 units, 10 units, not like yesterday's board question. Company expects 90%. Learning curve for this type of work. Company uses a standard absorption, costing and cost data is as under. Direct material is 60 per unit. Direct labor is 6 rupees per labor. Variable overhead is 2 rupees. Fixed overhead is 7,500 per month. That means you have to absorb it to each and every job. Out of the data available, you can absorb it on what basis? By any chance have they told in a year how many units you are going to produce in a month? No. But by any chance have they told in a month how many hours you are going to work? That is 10 workers, 25 days. How much you will work in a month? Sorry? 2000. But we know that in this 25% is normal idle time. 1500 hours. So we should absorb our fixed overhead in 1500 hours. So how much is the absorption rate per hour? 7500 divided by 1500. Rupees 5 per hour. Is this point clear, everyone? Rupees 5 per hour. Calculate the total cost per unit of the gift item for the first order of 30 units. If the company receives the repeat order from the said customer for 40 units of the gift item, that means we should compute for 70 units how much? Already we are achieving 30, no? Learning curve effect will continue. So for 70 how much? Don't start from 0 to 40 because you are already achieving 30. If it's new item altogether, then you have to start from 0. If it is new customer, new item, etc., then you should start from 0. Because when it is new customer, new thing, you are doing it for first time, no? Will there be any learning curve effect? Here it's continuous. Asset, from 31st to 70, how much we have to calculate? Ascertain the price per unit to be quoted to yield a profit of 20% on selling price. All figures are to be rounded off to the whole number. Awesome. Given data they have given, you can see their logarithm data they haven't given. Mark this question as LMR because of this fixed overhead adjustment. One question is there in your study material also, of course, similar question, but still. December 24, yeah. Now listen, for the first 30 units, what is the formula? Y is equal to AX to the power of B. Y is nothing but number of average time required to produce 1 unit when you are producing 30 units. A is the time taken by first unit, which is 40. Correct, no? X is your units what you are calculating for. You are calculating for 30 units to the power of, somewhere they have given, no, minus 0.152. So how much is 30 into minus 0.596? So 40 into 0.596 is how much? 20? 24 hours. If you want to round it off to whole number, then it is 24 hours. You are going to take how many hours, guys? 24 hours. Is that clear, everyone? Done. Our final figure, we'll round it off to whole number. Now you tell me the exact number, how much it is. Sit there on. How much? 23.84 hours. To produce 30 units, how many hours you need in total? $715.2 hours. Done. Now, total cost per unit they are asking, that's it. So direct material will be how much, guys? 60 into 30, 1800 is it? Direct material 1800, direct labor 715.2 hours into 6 rupees per hour, 4292. Okay, variable is 2 rupees per labor hour. So 715.2 into 2 rupees, 400.4. And your fixed overhead is 5 rupees per hour. So 5 into 715.2, 3576. May I know the total cost here? $11,097.6. And how many units we have? 30, right? So per unit, how much is the cost? 369.92. So they are asking you to round it off to nearest whole number. So you are going to take it as 370. You are going to take it as 370. Anyone, any doubt in the first point? Generally we avoid, and final figure will round it off. Okay, if you want to round off everywhere, you can keep rounding off, but again here the decimals are the major things. If you are saving 0.5 hours, it's good deal only. Next, what they're asking, if the company receives the order for the 40 units, repeated order, not the total 40. If they change it to 40, then I will compute for 40, extra 10 units question mark. Here, along with the 30, they are giving us offer, they are offering us extra 40. That means I have to compute for 70. Y is equal to average time required to produce 70 units. I don't know, whenever we start learning how, they will also start. Yeah, I heard they will give only 1-page question paper. I mean, case scenario questions are not there. You have to write like direct question. Features, that, this, and crazy, no? One case will be there. But corporate accounting, right? Seriously. Nice. Y is equal to A is how many hours? 1 unit. 40 hours, right? And we are computing for 70 unit minus 0.152. So how much is Y? 40 into 0.524. 20.96 hours. 20.96 into how many units? 70, right? How much it will be total to produce 70? 1467.2. To produce 30, how much? Somewhere we computed now. 715.2. How much is the extra time we have taken to produce extra 40 units? 752. 752 hours is what we have taken extra. So direct material cost will be 60 rupees per unit. 60 into 20. 1200. Then labor will be 6 rupees per hour. 752 into 6. 4,500 and the decimal was bit, I mean, it was coming in the hundreds position. Yeah, I mean, you don't write rupees and all that way, but generally I avoid. Next is what? Variable overhead, 2 rupees per direct labor, 752 into 2. 1504. Done. Next, fixed overhead, 5 rupees per hour we have decided. So 752 into 5. 3,760 na. That will give you total cost. This will be your total cost. But we want to make the profit of 20% on selling price. That means 25% on cost. Or in simple, if the selling price is 100, profit will be 20, cost will be 80. That means 80 means 10,976. 100 means, sorry, 20 means question mark. 2,744. Total 13,720. But this is for how many units? 40 units. Per unit how much? 343. Got it? How much is 60 into 40? Then how we took 1,200? 2,400, no? How much it is? For 40 units we are computing, no? I think labor and all is correct only. Hours we have taken. How much is total? 12,176. And 80 means 12,176. 3,044. 15,220. 381 na? 380.5, 380. In institute answer, they have given 2 lines. Calculate however you want. If it matches, you have done correct. If it's not going to match, institute answer is wrong. Chill. Suggested answer, luckily these days they changed it, the way they give. At least management accounting, it's fine. 2 lines they are giving. In costing, that also they are not doing. Random stuffs they are doing. That much fees they take. Hope you guys understood this. No doubts. One last paper of this particular chapter. Which are the MCQs? Fast. December 23, no? Two, 4, 5, 9, 12, crazy, 10 marks from MCQs. Can you imagine? 2, 4, 5, 9, 12. Whoever thought of skipping, skip. Now, which one of the following statement best demonstrates the concept of learning curve? Learning curve is a linear cost behavior influenced by learning. Learning curve is a judgmental method of estimating the cost when learning is present. A learning curve is percentage by which average time per unit produced decreases as the output doubles. Learning curve is percentage by which average time falls as output increases by 1 unit. Learning curve is a percentage by which average time per unit produced decreases as output doubles. That's what the learning curve, no? Next. 4. EVA is a concept that closely related to residual income. EVA is computed by subtracting the adjusted total cost of capital from the adjusted after tax income. Before interest, yeah. Subtracting adjusted after tax income from the total divisional investment. No. Even RI is also not that. Dividing adjusted after tax income by adjusted divisional investment. No, we take cost of the divisional investment. Do we take operating asset, or we take a capital employed, or we take capital employed into KO? That is, we take cost of that capital invested. Dividing adjusted after tax income by adjusted total cost of, that is, subtracting the adjusted total cost of capital, that is nothing but your C into KO, from the adjusted after tax income, that is NOPAT. Got it? Next one, please. 5. Actually, 5 is your decision theory. Okay, make it as decision theory. 9th one. Measure Shibaji Limited as a capital employed of 4,50,000. Its operating income is 1 lakh. Minimum expected return is 14%. So 1 lakh residual income they're asking, 4,50,000 into 14%. So many questions were asked like this for RI and ROI. Please keep in mind, simple questions. Sorry. Option D. Next one, please. 12. Okay. 12th one is, according to Norton and Kaplan, the balance scorecard, they are the one who came up with that, should be used as a control system. No, it's not a control system, diagnostic system, no, strategic system. That's what we strategize. No, we take it into 4 perspective. To achieve our financial, we divide our requirements into 4 perspective: financial, customer, process improvement, learning and innovation, growth, etc. So all those are strategy, how to retain it, how to retain the customers, all those things. So it's relating to strategic system. Next one, please. That's all. 7A and 7B. Measure Strelok Polymer has provided you the following data for the year ended 31st March 2023. Total capital employed is 45 lakh. Awesome. Debt equity is 1:4. That means in that 45 lakh, 9 lakh is debt, 36 lakh is equity. 1:4. Interest rate of debt 12%. Don't take it as KD. KD is interest into 1 minus T. Effective income tax is 31.2%. RF is 10. Your RM is 15%. Degree of financial leverage 1.1. Why they would have given this? Yesterday itself we have discussed. If anyone is watching in YouTube continuously, 2 hours before we have discussed. I told you yesterday. Using financial leverage, we'll find out EBIT, because financial leverage, what is the formula? EBIT by EBT. EBT is nothing but EBIT minus interest. Correct? No. Here I know the interest. How do you know the interest, sir? I told no. 45 lakh is there. In that 1/5 is what? Debt. So debt is how much? So equity is how much? 36 lakh. Alright, debt is 9 lakh. Interest on that is 12% of it, which is gonna be 1 lakh. 8,000. So your interest you know. So you can find out EBIT using that. Beta factor is 1.4. Calculate the EVA and comment on your answer. Approximate up to 2 decimal places. So very simple, guys. First shall I find out EBIT fast? Hello? Shall we find out EBIT using financial leverage? What is the formula for financial leverage? Come on, guys. EBIT by EBT. Can I write EBIT by EBT minus interest is equal to 1.1? Sorry, EBIT minus interest. Correct? Now, EBIT, shall I take it as E? E divided by E minus interest is how much? If at all they had given you after tax, you have to add it back and take the gross interest. How much? 1 lakh? 8,000. No? Is equal to 1.1. So, E is equal to, or I will write E minus 1.1 E is equal to 1,08,000 into 1.1. 1 lakh. I just skipped there one step. Hope you guys are fine with that. E is equal to rupees 11,88,000. So your EBIT is equal to rupees 11,88,000. So NOPAT will be 11,88,000 minus 31.2 percentage. 8 lakh 344. That's all. No point, nothing. So NOPAT we got. Next one, capital employed, that they only have given 45 lakhs. We want KO. KO is nothing but weighted average cost of capital. KD first let's find out. KD they told 12%, right? But it's not 12. 12 into 1 minus tax. 0.312. Tax is 31.2, no? How much is KD? 8.26. Round it off to 2 decimals. 8.26 percentage. KE will be how much? Risk-free return. How much is risk-free return, guys? 10%. Plus, how much is beta coefficient? 1.4. How much is market return? Market return, where is it? 15. Sometimes they will tell just premium, okay? That time you should directly take, don't do RM minus RF. 15 minus 10. So, KE is equal to 17%. KE is equal to 17%. Anyone any doubt in this? No doubt. Now, how much is your NOPAT? 8,17,344 minus how much is your capital employed? 45 lakh something, no? 45 lakh into KO is not yet found out. KO is equal to 8.26 into 0.2. 1:4 is the ratio, no? So 1/4, sorry, 1/5 is 0.2 plus 17 into 0.8, 4/5. How much is it? 15.25225. 15.25 percentage. May I know the EVA over here? Akka, 45 lakh amount, how it's going to 6 crore? Or you are converting it into Pakistan rupees or what? 1,31,094. 7 marks. Institute answer key has given nice one line answer. EVA is equal to 1,31,094. How you got? Like this you got. Hope it's clear, everyone. Hello. And also, they are asking you to comment. What is the comment here? As EVA is positive in nature, no, as EVA is positive, it's going to create value to shareholders. Got it? So the spread available between shareholders and this is 1,31,094. Got it? Okay. You want to take photo? Take first. Learning curve, point B. Guys, point B, point B, point B. 3, 2, 1 and done. They're asking learning curve here. Nice. Mother Keshav Industries received a work order to make 64 pieces of logo engraving work on MS end fitting, which involves intricate labor operation. The logo engraving is done in a specialized machine which process 2 logo engraving at a time. Moral of the story: if you are taking 1 hour, in that 1 hour you will be producing 2 units like that, 2 together. That means here you should find out for the set of 32, not for 64, because in a simultaneously 2 units are getting produced. The first 2 engraving work were completed in 10 minutes time. They have given in minutes, please keep in mind. The operation is subjected to 80% of the learning load. By the way, 32 means, is it having doubling effect or no? 1, 2, 4, 8, 16, 32. 64 also has doubling effect. That doesn't mean that you should calculate for 64, because 10 minutes you are taking for 1 unit or 2 units. Got it? So here we are thinking of set of 2 units. And the direct labor rate per hour is 100. Determine the total time and labor cost required to execute the work order. If repeated work order of 100% of the original quantity is also received, that means for 64. Straight away, double of that. Again, doubling effect. From the same customer, what will be the total time and labor cost necessary for the repeated work? First, they are asking you total time and labor cost required to execute the work order. Ayyo, this and all they are asking for 7 marks. Very good. Good, no? So, one set of 2 units, 2 set of 2 units, 4 set of 2 units, 8 set of 2 units, 16 set of 2 units, 32 set of 2 units. Also, I will take 64 set of 2 units because 32 is required for first answer, 64 is required for second answer. First order will take how many minutes? 10 minutes. Correct now? So, how much is the learning curve effect? 80%. Crazy. So, second one will take 8 minutes. On an average, per unit. Not that second one will take 8. Second one will take how many minutes, by the way? 6 minutes. Why? Total it will be 16. In the 10 is already taken for the first one. Got it? Total will be 16. No. Already first will take 10. No. That means second will take. Second unit will take how many minutes? 16, right? Sorry, 6, right? Wrong. It will take 10 only. Why? 2 units are produced together. 1 and 2 will take 10 minutes on an average. 1, 2, 3, 4 will take 8 minutes on an average. Like that. 2 units are produced together only. No, that's the thing. Forget so much complication they don't do. Let's not complicate, at least in marathon. Our life only complicated, sir. Why you are sparing us in marathon? Correct? No. You should say no only, because for that you should attend the class. No. Sir, convocation, sunscreen. Can you imagine costing? She didn't attend classes regularly for 2 weeks. You know what reason she told? Sir, I had convocation. So if at all I went out, I would have got tanned. So to avoid tanning for my convocation, I stayed in home. If you told on day 1, I would have bought you some nice sunscreen. Hey, you attended. I know you would have slept only. Notes completion only says it. Management, what you had? Manager. Guys, 4 means how much? 6.4, is it? 8 means 5.12. 16 means 096. 0. How much? 28. Next one. 2.624. Forget 10 minutes, mates, their first place. Now, first one, what they are asking. Determine the total time to execute the first order. Total time to execute the first order. Don't multiply 64 into 2.62 because first order is for 64 units. 64 units could be done in set of 32. We are calculating for set of 32. Each and every set here consists of 2 units. No. That means 32 set will consist of 64 units. Why you took the set, sir? Because the 10 minutes they have given for one set, not for one unit. How much it is total hours? 32 into 3.28. 1 not. That's it. That's it. Please be careful. Got it? 104.96 minutes. And labor cost required. How much is the labor cost? 100 rupees. If you multiply 100, how much you will get? See, I told no. All these mistakes end up doing. Minutes, madam. Payment is per hour, no. You should convert it into hours, no. Divided by 60. So while writing, you write slowly, calculate slowly. Ayo, I'm getting answers. Let me write very fast. One. Whatever you write also will be wrong. How much it is? How many hours? 75 hours. Correct, no? Into rupees 100. How much it will be? Rupees 175. Got it? Next, what they have asked. What is the total time and labor cost necessary for the repeated work? Guys, how many minutes we will take to produce 64 set of 2 units? $160? 167 now. 64 into 2.62? 64 into 2.62. 167.68 minutes. Now listen. So how much extra time we are taking? Don't take total. That is to produce 128 units. We want to know for extra order of 64 units. We take 62.72 minutes in terms of hours. 1.05 hours. See there, to produce first 64 units, we took 1.75 hours. To produce next 64 units, we took just 1.05 hours. Got it? By the way, into rupees 100, which is gonna be 105. This time they have given 4-line answers for this. Anyone, any doubt in these computations? With that, we have completed our discussion on DPM. If you need, take a break of 3 minutes, then we are starting with decision theory. Okay? Now we'll be starting with decision theory. What is it? Decision theory. That is how to take the decision in the different scenarios. That basically you can tell that there are 4 units: decision making under certainty, decision making under risk, decision making under uncertainty, decision tree. Decision making under certainty is not that important, whereas these 3 generally they keep asking. The 2 decision tree they generally keep asking, but one of the easiest concept so far. Okay, decision tree. Whatever the data they have given, they will be giving in terms of table. All you have to do is draw one tree. Done. Decision making under certainty means what, sir? You will be knowing the outcome. You will be knowing the outcome. So you have to make the decision in that scenario. Now, for example, let's say I am into some healthy snacks. I own a company. Assume I own a company which is having this healthy snacks. Now guys, I have 2 alternatives here. Let's say I operate from Bengaluru. Yes. Now let's say, however, final match mood. Now let's say I operate in Ahmedabad, Gujarat. Now I generally sell my products in the stadiums. Now I have 2 possibilities. One, RCB going to finals. One more is, who is laughing? You support CSK, is it? I can't even laugh. What to do? One is RCB going to finals. One more is RCB One is RCB versus MIHE. One is RCB versus Punjab. One more is RCB versus Rajasthan. Let's say these two are the alternatives I have. Now, if this comes, my sales will be, let's say, 2 lakh. If this thing comes, my sales will be 1,50,000. Now, 2 days prior to the finals, don't you think I will get to know exactly how much will be my sales? Now, let's say Punjab versus RCB is the finals. Then my sales will be 2 lakh. Now, the information here is very certain. So, when I know the information clearly, what is going to happen, I will select the best alternative out of this. No, I will select best alternative. So, when only one state of nature is there, when outcome is only one state of nature, in that scenario, you will select the best one in that particular scenario. But that one ice cream and tea question is there. Illustration number 1, you have to go through that once. Okay, that guy will go to the this department where they tell whether it's gonna rain or it's not gonna rain. So if it's gonna rain, he's going to sell the tea or something. If it's not gonna rain, he's going to sell the ice cream. So how much he will make? All those things, nonsense stuff. Solved case. That is decision making under certainty. Now, what is your decision making under risk? Here exactly you can't tell. But using the probabilities, we are going to compute certain things. I will just show it here. Using the probabilities, we are going to conclude certain things. For example, see here. Look at the solved case number 3. Subbuji is a small vendor who is undecided on to what to sell in the fairground, as a fair is to be organized in next 10 days. He has the option of selling the tea or he has the option of selling the ice cream on a day 1 of the fair. He has made a projection that selling tea would fetch him profit of 300 if it rains on 16th August. So, but if it is sunny and humid on that day, he would not have much customers, then he would make the profit of 30. So on 16th, if it's rain, he is gonna make rupees 160 by selling the tea. However, if it's not gonna rain, he is going to make 30 rupees. So listen here. Tea, rain, sunny. If it rains, he will make 300. If it's sunny, he will make 30. Done. If he sells the ice cream, his profit is much higher in the hot and humid day. So if it is sunny day, he will make 150 rupees. Whereas if it is raining, he is gonna make profit of 10 rupees. How much would he make, or you want to make the decision regarding whether to go for ice cream or to go for tea? Sorry, 300 I wrote. Now listen, they have told probability somewhere here. The probability of it's gonna be hot and humid is 0.85%. 0.85. Probability is 0.85. If it's gonna rain is 0.15. In this case, what I should do? I should take the decision on the basis of my expected returns. What is that expected return, sir? Different returns available and probability of that return we are achieving. Probability into returns. That is 300 into 0.15 plus 30 into 0.85. Sorry, 70.5. My expected return, we call it as X dash. 70.5. Got it? Next one, 10 into 0.15 and 0.85 into 150. Sorry, rupees 129. Out of these two, which is giving you more expected return? Selling ice cream is giving you more expected return, so go for ice cream. Got it? You are going to take a call this way. Whereas if the information is certain, yeah, if at all he was sure about what is going to happen, then it falls under certainty. Now, if it is certain, guys, if it's gonna rain, certainly it's gonna rain, you know the information, then you would select T. You will make 300 rupees. If it's certain it's gonna be sunny, then you will sell ice cream because that will give you 150. T, if you sell, it will give you 30. So you will go for 150. This is how we will take decision under certainty as well as uncertainty. Got it? But don't you think risk is also involved? You are thinking only from the return point of view, no? Don't you think risk also to be taken into consideration? That's why what we will do, we have standard deviation. Standard deviation is nothing but your risk. That is, what could be the deviation from the value you expected? What could be the deviation from the value you expected? How to arrive at it? How to arrive at it? Standard deviation, you remember the formula? Standard deviation is equal to square root of probability is there here. Summation of probability into x minus x dash whole square. X is what? Different returns available in different alternatives. X dash is what? Expected rate of return. Probability. Summation of all those we do. That is standard deviation. Sorry? After x minus x dash? Yeah. You can write anyway, but make sure you will multiply probability to the deviations. Square of the deviation. And that to cancel that square, we are using the square root. Simple. Got it? Now, let's say two alternatives are there. A, B. As per return, you are going to select A because that is giving you more return. As per X dash, you are going to select A. But as on the basis of risk, you would like to keep lower risk or higher risk? Lower risk. So, lower standard deviation you select. Let's say B is giving you lower standard deviation. So as per returns, you are going to select alternative A. As per risk, you are going to select alternative B. Now my question is, which one would you select at final? A or B? Why? Return is not there, no? Return is also less, no? Guys, in this case, what you should do, you should consider both return and risk into consideration. That only we call it as COV. Coefficient of variation. What is this COV, sir? We consider both sigma as well as expected return. Sigma as well as expected return. More coefficient of variation, more the risk. Less coefficient of variation, less the risk. Got it? Whichever is lower, you are going to select that. Is that clear? These formulas you have to remember, guys. What is your x dash? X dash is summation of probability into different returns. Sigma is what? Standard deviation, square root of summation of probability into x minus x dash whole square. And if at all any contradiction arises, then we use the term COV, coefficient of variation, that is your sigma by x dash, that is standard deviation by x dash. Look at this illustration number 1. We are comparing two investment projects. Both have the expected return of 20%, but the standard deviation of A is 15%, whereas standard deviation of B is 9%. So you will select which one? B, because both are giving you same return, no? Then you will go with one with the lower risk, no? However, if at all you want to take a call on COV, then it will be for A, sigma is 15 and your expected return is 20.75. For B, sigma is 9, expected return is 20. How much? 0.45. Which is riskier? A is riskier. A is relatively riskier. Got it? What is it, madam? Shweta, any doubt? Tell, that's okay. What is sigma? Sigma is sigma, like Hardik Pandya. Like Ara. Sigma is standard deviation. SD. Now, even this we call it as sigma, but here standard deviation. Now, two investments have different expected returns. Project A's expected return is 20%. Standard deviation is 15%. Project B expected return is 10%. So on the basis of returns, you will select which one? A, because that is giving you 20%. And your sigma or standard deviation is 9%. On the basis of risk, you will select which one? B, because standard deviation is 9%, no? Less risk in B, less return in B. High return in A, high risk in A. So, you would select return basis में A, risk basis B. Okay. However, if you want to find out which is relatively riskier, all you have to do is standard deviation divided by expected return, 0.75. Standard deviation 9 divided by expected return, 10.9. Which is relatively riskier? B is relatively riskier because COV is more. I mean, there is nothing called, you have to select this one only. If you want to take risk, you will go for B. You want to take risk, you will go for A. If you don't want to take risk, you will go for B. It's like that. Tell me, mutual fund is better or FD is better? Need not be. For me, FD is better. Money is safe. When market is down also, money is safe. For few, mutual fund is better because return is more. So it's like that. There is no right wrong here. Based on company's risk taking ability. CV is high means it's a riskier one. So if you're fine with taking risk, go for it. Like that it is. It's a, you should write it as relatively riskier. That one is compared to this relatively riskier. Look at this. You are required to select from the following project which are mutually exclusive. What do you mean by mutually exclusive? Either you are going to select project X or you are going to select project Y. You can't select both project X and project Y in the same time. So, estimated net cash flows are there, project X and project Y. The expected value of both the projects are 3 1000. That means they have given X dash as well as Y dash as 3000. If you want, you can compute on your own. How to compute X dash? Come on. Returns, if I take it as X, probability if I take it as P, X dash is probability into returns. 2000 into 0.3, 600. 3000 into 0.4, 1200. 4000 into 0.4, 0.3, 1200. Total will come to 3000. Understood? Next one. Y. This one I will take it as Y. This one I will take it as P. Expected return I will take it as Y dash. So 1000 into 0.2, 200. 2000 into 0.2, 3000 into 0.2, 4000 into 0.2, 5000 into 0.2, total. Got it. Now, returns wise, which one would you select? Can't select at all because both are giving you same. So, in this scenario, it is advised to go for COV and SD. First, let's find out SD. What is the formula for SD? Come on, guys. Square root of summation of P into X minus X dash all square. Got it? Now, here I will write X minus X dash whole square directly. Is that fine? Into probability also we'll do here only. Okay. Guys, X is 2000. X is 2000. X dash is 600. 1400. 1400 into 1400 multiplied with 0.3. X minus X dash is 1400. Square of that is 1400 into 1400 multiplied with probability 0.3. How much? 5,88,000. 3000 minus 1200, that is 1800. Sorry. Sorry. X dash is 3000, no? 2000 minus 3000, 1000 into 1000 into 0.3. 3 lakh. Okay. Next one. 3000 minus 3000, nil. Next. 4000 minus 3000, 1000. 1000 into 1000 is X minus X dash square into 0.3. Probability. 3 lakh, right? So, this is 6 lakh. So, your standard deviation is square root of 6 lakh. How much? $770. 5966. This will be SD for project X. Project Y will see. Shall I directly do it? Y minus Y dash to the, multiplied with probability. Hope no problem, everyone. Y minus Y dash whole square probability. So Y dash is 3000, is it? So 1000 minus 3000, 2000, 2000 into 2000 into 0.2. 8 lakhs. 2000 minus 3000, 1000, 1000 into 1000 into 0.2. 2 lakhs. Okay. 3000 minus 3000, nil. 4000 minus 3000, 1000, 1000 into 1000 into 0.2 probability, 2 lakh. 5000 and 3000, 5000 minus 3000, 3000, 3000 into, 5000 into 3 minus 3000, 2000, 2000 into 2000 into 0.2, 8 lakhs. So this will be 20 lakhs. Standard deviation would be square root of 20 lakhs. 2, 1. So risk wise, of course, you will select X only because less riskier, standard deviation is less. Standard deviation means how much deviation might be there compared to what you expected, like that. So guys, if you want to compute coefficient of variance, standard deviation 774.6 divided by expected returns 3000. .55. Next one, 1414 divided by 3000. 747. 0.26. Next one, 47. So as the coefficient of variance of y is more, it is relatively riskier. 47, 25.83%. Project X is selected since CV is less. If at all you want to take less risk. Got it? I mean, if at all you select Y, then you are dumb. Not that risk factor, non-risk factor. Are you are going to make the same amount, then why the hell you want to take risk also? Got it? So, how to take a call whenever there is a risk, guys? All you have to do is expected returns. Expected return. However, based on expected return, if alternatives 1 is selected based on SD, if alternative 2 is selected, then it's always advised to go for COV and select one with the lower COV. Got it, guys? Hello? Now, there is something called as expected value of perfect information. Expected value of perfect information. Now, what is that expected value of perfect information, sir? Now listen. Without perfect information, using probabilities. Without perfect information, using probabilities, I will be making some decision. Correct? No? Let's say I am into cricket betting. Assume. Okay? I am betting on CSK. I am betting on CSK. Then I am telling CSK will lose. Now, based on that, my expected value came to around 10,000 using the probabilities, lot of things. Now let's say someone came, some random person named Srinivasan. Okay. Now Srinivasan came and is like, okay, you are betting and all, only 10,000 is your expected value. Don't worry, I will give you perfect information. I will give you perfect information. Today CSK is going to lose. 3 no balls they are going to bowl in this over. Correct? No? Now like that perfect information if he is ready to give, will he give it for free? No. He will ask for money, no? Now, with that perfect information that CSK is going to lose on Sunday against LSG, now how much money I can make? Let's say I can make around 18,000. I can make around 18,000. Now, how much money I am ready to pay to Srinivasan for this perfect information? Maximum 8,000. Because if we demand for 12,000, what I will tell? Your information you only keep. For you, if I give 12,000, then I will make how much? 6,000. Without taking your information, anyhow I am making 10,000. No. So maximum for the person who gave us perfect information, how much we will be ready to give? 8,000. Now this 8,000 only we call it as EVPI. Expected value of perfect information. This only we call it as EVPI, expected value of perfect information. How to arrive at expected value of perfect information? Expected value without information based on the probability what we calculate, x dash, etc. Now, when the person comes and gives me information, then what will be my expected value? Expected value with perfect information. Now, this difference is there, no? That only we call it as EVPI, kind of examiner's favorite. If at all they ask from the risk one, generally they will ask this, EVPI. Is that clear or no? Expected value without information, how much I am making now. With perfect information, how much I will make. The difference only we'll call it as EVPI. That is nothing but how much is the maximum I am ready to pay to person who is giving me information. How much I am ready to pay to that particular person who is giving me perfect information. In given example, it's 8,000. Got it? Using this sum, I will show. Okay. Using this illustration number 4, I will show. See, they have given demand here, they have given alternatives here. Generally, alternatives we will take vertically, and different payoffs we will take horizontally, or different possibilities we will take horizontally. Now listen. Demand, it could be low, it could be medium, it could be high. Alternatives are building a small apartments, building a medium apartment, building a large apartments. Now, what is the probability of demand will be lower? 0.2, medium 0.35, high 0.45. Always remember, cost and profit conclusion should be ulta. Cost means we will go for one with the lower expected value. Cost means we will go with the one with the lower expected value. Profit means we will go with the higher expected value. Please keep that thing in mind. Now listen. Let's find out expected value. If I go for my small apartment, then it will be, my expected returns will be, x dash will be 1400 into 0.2 m plus 1400 into 0.35 m plus 1400 into 0.45. Expected value. See, I am doing expected value without information. How much? 1400. Next one, 1100 into 0.2 m plus 1600 into 0.35 m plus 1600 into 0.45 m plus MRC. $1,500. Next one, negative 1300 into 0.2 m plus. Everyone got 1500? Check Nitya. Negative 1300 into 0.2 m plus 1200 into 0.35 m plus 2100 into 0.45 m plus MRC. Sorry, 105. Now, out of all this, which one would you select? Medium, because that is giving you highest expected value. Now, in the same question, if they ask you to find out EVPI, then how to do that, sir? See, right now I am making 1500 without perfect information. With perfect information, how much I am going to make? If it's a lower, I will select which one? Small. If it's the demand is low, I will select small, because I know exactly demand will be low. So of course I will select small one. If he says demand is gonna be medium, then I will go for medium here, because that is giving me highest profit. If I get to know that demand is gonna be high, then I will go for large apartments. Understood? With that perfect information, I will go for the maximum in that scenario. What is the expected value of this? 1400 into 0.2 M plus 1600 into 0.35, M plus 2100 into 0.45, M plus MRC. $1,785. So 1785 is what we are going to achieve with the perfect information. That means what is the value of perfect information? 285, because that's what maximum I'm making. No extra, that's what I'm making. No, so if at all anyone is asking me to give money for the perfect information, maximum I would be ready to pay is 285. If they ask for more than this, I am only not gaining anything more than that. Anyhow, I'm going to make 1500. I'm fine with it. Hope EVPI computation is clear. Selecting the best alternative in the different scenarios. Clear? Done. Now, this one is also nice question. Only one question is there like this. Look at the fifth illustration, everyone. Fifth illustration. The following information is available for a company. Sales volume 10,000, 12,000, 14,000, 16,000, 18,000. Probability of that we are achieving is 10, 15, 25 and 30 and 20. Projected sales and cost. Selling price will be 6 rupees. Variable cost is 3.5. Fixed cost is 34,000. They are asking you probability that the company will at least break even. What do you mean by break even? No profit, no loss. That means in simple, at break even, contribution is equal to fixed cost. So here per unit contribution is how much? 2.5. Correct? No. Now listen. If at all my contribution going to be 34,000, then I will achieve break even. If I sell 10,000 units, how much will be my contribution? 25,000. If I sell 12,000 units, how much will be my contribution? 30,000. If I sell 14,000, how much will be my contribution? 35,000. That means try to understand somewhere if I am able to make something more than 14,000, then I will be able to break even. So what is the pause? See, if I sell 10,000, I won't be able to break even. If I sell 12,000, I won't be able to break even. That means in these two scenarios, I won't be able to break even. I won't be able to break even. What is the probability of not being able to break even? 25%. That means can I say that around 75% probability that I will break even? There is nothing but total of 14, 16 and 18. Got it? So the probability of break even is 75%. Probability of break even is 75%. Next, what they are asking? Probability that the profit will be at least 10,000. That means my contribution should cover my fixed cost plus profit. Fixed cost plus profit. That means my contribution should be somewhere between, somewhere more than 34 plus 10, 44,000. So when you sell 16,000 units, how much will be worth? 40,000. If you sell 18,000, 45,000. That means only and only if you sell 18,000 or more, then only you are going to achieve profit of that. What is the probability of you making 18,000 or more? 20%. Simple. So 20% is the required probability. Understood? This is very important question. Mark it as LMR. Nice question. Kind of different. You should think a lot. EVPI in that question we got 285, right? This trying to set the price and all is there. We'll do one thing. One nice question is there relating to that cement and all. It's illustration number 13. Decision tree, is it? These are few nice questions. Illustration number 13 as well as practical problem number 8 regarding fixation of the prices. One without any loss, one more with loss is there. We'll check. Now listen guys. TT News Agent starts a weekly health magazine. The owner buys the magazine for 0.3 each and sells them at a retail price of 0.5. That means how much we will make? 0.2 per magazine. Yes or no? At the end of the week, unsold magazines are obsolete. That means of no value. The estimated probability distribution for weekly demand is, weekly demand will be 20. That probability is 0.2. Weekly demand is gonna be 30. That probability is 0.55. Weekly demand is gonna be 40. That demand is 0.25. You are required to calculate the what is the value of expected value of demand. Guys, if at all it is 20 units, how much you will make? Rupees 4, right? 0.2 per this thing you will make. So 4 rupees you will make. If at all 30 units is the demand, you will make 6. If at all it is 40, you will make 8. Correct? Now what is the expected value of this? 4 into 0.2. Oh, expected value of demand they are asking, no? This I am calculating in terms of amount. In terms of unit also I will tell. Now, how much is this? 4 into 0.2 m plus 6 into 0.55 m plus and 8 into 0.25 m plus MRC. Sorry, 6.1. 6.1 in terms of amount. In terms of unit, 20 into 0.2 m plus 30 into 0.55 m plus 60 into 0.2, sorry, 40 into 0.25 m plus MRC 30. On an average, in a week, you can expect around 30.5 magazines. Got it? Sorry? Because that's what we are making. We are selling at 0.5, we are buying at 0.3. That means we are making only 0.2 per magazine. That's what matters to me. Not that how much my sales is, how much my profit will be. Is that clear? Now, next question is important. Listen, everyone, next question. If the owner is to order a fixed quantity of magazine per week, how much should that be? So if he decides to order few magazines, how much should he order? Whichever the magazine size gives him the highest expected return, he should order that. Correct? No, he can go for 20, he can go for 30, he can go for 40. In this case, how to solve this? Please concentrate. Very important. Listen very carefully. This question as well as one more cement question, both marked as LMR. I think Akhilesh sir, while going back, he reduced AC temperature and went. Check and come. 13 as well as practical problem 8 I told, no? These two are very important. Listen. Alternative. As I already told you, alternative will write vertically. What are the three alternatives we have? We can keep 20 magazine, we can keep 30 magazine, we can keep 40 magazine. Demand. We might get demand for 20 magazine. Hello? We might get demand for 30 magazine. We might get demand for 40 magazine. What is the probability of getting demand for 20 magazine? 0.2, 0.55, 0.25. Correct now? 0.2, 0.55, 0.25. Got it? Now listen very carefully. Listen very carefully, guys. Listen. If I keep 20 magazines and I got demand for 20 magazines, all the magazines I can sell. Hello? And to buy that 20 magazines, how much I had spent? 20 into 0.3, which is 6 rupees. When I am able to sell off all the 20 magazines, how much I will recover? 0.5 into 20, 10 rupees. That means in this scenario, I will make 4 rupees. Got it? Now, I have 20 magazines. Demand came for 30. So, how many magazines I can sell? 20 only. Because I have maximum 20. That means 10 rupees I can make through sales. For that, I bought a cost of 6 rupees. Sir, why are you taking cost directly? Can't you take 0.2? I will tell. I mean, I can take, but later part you can't take. That's the thing. Okay? You will get confused there. That's the thing. Listen. Now I got demand for 40. Maximum I can satisfy is 20. So my sales will be 10. Cost will be, I will make 4 rupees. So expected value is how much, guys? In this case, 4 rupees only. Expected value is 4. Got it? Now, next one. 30 magazines you kept. Hello. 30 magazines you kept. You got demand for 20. So your sales will be 10. But cost will be, yeah, he always keeps at 16. Akhilesh sir always keeps at 16. His class is always like Antarctica. Penguin AK. 10 minus. Listen, this is why I was writing the cost there. Because now you bought not 20, you bought 30. So how much you spent to buy? 30 into 0.3, 9 rupees. That means you will make 1 rupee. Understood? Next. If you get demand for 30, you have 30 magazines in your hand. That means by selling it 30 into 0.5, 15 rupees you will make. Correct? Variable cost will be, cost of buying that will be 9 rupees, which is gonna be 6. Now, you got demand for 40. If you got demand for 40, guys, how much sales you can make? 30, no? Because you kept how much? 30. So, you are going to make sale of 15. Cost is 9. You will make 6. What is the expected value? 1 into 0.2, m plus 6 into 0.55, m plus 6 into 0.25 M plus MRC. Five. Okay. Now, hope you guys are able to understand this. One more question is there, cement question. Why that is special, sir? That is also like this only. But here, if any magazines are left over, are you receiving any money for that? No. But in that question, if any cement bags were left over, you will receive some money. That means for sold unit, different income. For unsold unit, different income. I will tell that, leave. Now, if at all you kept 40 units, you got demand for 20. That means your sales will be 10, but your cost will be 40 into 0.3. You will lose 2 rupees. You will lose 2 rupees. Next, you got demand for 30. You kept 40. That means your sales will be 15, but cost will be 12. You will make 3 rupees. If you got demand for 40, crazy, you will make how much rupees? 40 into 0.5, 20 rupees sales you will make. Cost will be 12 rupees. You will make 8 rupees. So what is your expected value there? Minus 2 into 0.2 M plus 3 into 0.55 M plus 8 into 0.25 M plus MRC. $3.25. Got it? Out of all these alternative, which is giving you more expected value? So we would advise him to go for. Now, what if he has a perfect information? What if he has a perfect information that he is going to get demand of lowest demand 20 units, then he will select 20. If he is going to get a demand for 30, then he will select 30 because that is the highest. If he is going to know that he is going to get a demand for 40, then he will select. So what is the expected value with perfect information? 4 into 0.2 M plus 6 into 0.55 M plus 8 into 0.25 M plus rupees 6.1. Therefore, EVPI will be how much, guys? Now we are making 5 rupees. With perfect information, we will make 6.1. Then you will be max to max paying for them 0.1. 1 point. Did you guys understand this? Simple question, no? Simple question, but nice one. Please mark it as LMR. In fact, LMR Pro Max. This question as well as practical problem 8. And this probabilistic budget is there, okay? Nothing. In different probabilities, different sales will come. You have to compare budget for that. One PYP question is there, one question is there in study material. Both you go through it on your own. I don't need separate revision kind of stuff. You just go through it on your own. It's simple one. Okay, I mean it takes a lot of time. That's the thing. If I want to explain it, but nothing is there. Question looks big. Nothing is there. You have to do budget with the probabilities. That's it. Next, which question I told? Practical problem 8, right? This is one more nice question, guys. Concentrate. One more nice question. Concentrate. Okay. In this chapter, few MCQs are there, practical MCQs. In fact, all the chapters of MA has this practical MCQs. Majority of the chapters. Please go through all those practical MCQs. Look at this question. Nice question. Comprehensive numerical question 8. Cement Co is a company specializing in the manufacturing of cement. Concentrate guys, very important. This time in examination this question is there. Think so. Concentrate. A product used in the building industry. The company has found that when weather conditions are good, the demand for the cement increases since more building work is able to be taken place. Cement Co is now trying to work out the level of cement production for the coming year in order to maximize the profit. The company has received following estimates about the probable weather condition and corresponding demand level for the coming year. Weather, good, average, poor. Probabilities are so much, demand are so much. Each bag of cement sells for rupees 9. Cost of that is rupees 4. It's just like that question only, no, but small changes there. Here, if cement is unsold at the end of the year, it has to be disposed of at a cost of 0.5. Sorry, I told income. No. Here you have to incur some extra cost to dispose of the unsold. Their magazines you are not incurring any extra cost. Here you have to incur extra cost. Or they can give it ulta also. If the cement bags are unsold, it could be disposed of at 0.2 rupees, 0.1 rupee like that. For the amount, what we are going to receive. Here cost, they might give receipt. In that case, you should add it to the income. Here you should reduce from the income. Here unsold bag disposed cost, you should reduce from the income. No, if at all they give scrap value is so much, then you should add it to the income. Cement Co has decided to produce one of the three level of production to match the forecast demand, either 350 or 280 or 2 lakh. It has now decided on which level of cement production to select, calculate, construct a payoff table matrix and show the possible profit outcomes. Listen. Here, first alternative will be taken vertically and outcomes will be taken horizontally. Outcome in the sense demand. Demand. Listen here. I have three alternatives, either to produce 3,50,000 bags or 2,80,000 bags or 2 lakh bags. Either 3,50,000, 2,80,000, 2 lakh bags. Now, demand could be low, good, average, poor, weather basis mein. So, demand could be on the basis of weather, which is good, average, poor. What is the probability of it's gonna be good? What is the probability that weather gonna be good? 0.25. What is the probability that weather gonna be average? 0.45. What is the probability that weather gonna be poor? Got it? Now listen everyone. If the weather is good, you can sell how many bags? Our demand will be there for how many bags? 3,50,000 bags. Correct now? If weather is average, then it will be 2,80,000. If weather is poor, that will be 2 lakhs. Is that clear, guys? Now listen everyone. Listen. Very important. Listen. Now let's say my production is 3,50,000. I got demand for 3,50,000. How much sales I will be able to achieve? 3,50,000 into 9. Sorry? 31,50,000. But cost for producing this 3,50,000 will be how much? 4 into 3,50,000. 14 lakhs. Am I left out with any bags here? That means there is no disposed cost. That is important. There is no disposing cost. So how much is it? 17 lakh. Got it up. Next one. What if my demand is 2,80,000? Then maximum I can sell is 2,80,000. So 2,80,000 into 9 rupees. 25,20,000. But I am producing how much? 3,50,000. So I will make the sales of, incur cost of 14 lakh. But now guys, around 70,000 bags are unsold. If at all scrap recovery was there, I would have added to the income. But here we are incurring extra cost to dispose it off. So it is reduction from whatever I am receiving. If at all it was scrap recovery, I would have added it. As it is reduction, I am going to reduce from my sales. How much guys? 70,000 bags I have to dispose. To dispose of each and every bag, I have to incur 0.5. That means 35,000, no? How much will be my final earnings in this case? No doubts? You guys are able to understand. This is the special point in this question. Next, what if you keep stock of 3,50,000 bags, but you got demand only for 2 lakh bags? Then sales will be how much guys? 2 lakh into 9 rupees. 18 lakhs. Cost, of course, you produce 3,50,000, so it's gonna be 14 lakh. Now, you produced 350, you sold only 2 lakh. That means 1,50,000 is unsold, no? That you should dispose of. Are you disposing it off for free of cost? You are incurring 1,50,000 into 0.5. 0.75, which is going to be, got it? Now can you tell me the expected value please here? 17.5 into 0.25 m plus 10.85 into 0.45 m plus 3.25 into 0.3 m plus MRC. $10.2325. From where you are getting 250 and all? Oh, probability. Done. I will write in lakhs, okay? So 10,23,250. Now, next one. If you keep stock of 2,80,000, although you got demand for 3,50,000, how much you can sell max? 2,80,000. How much will be your sales amount? 2,80,000 into rupees 9. 25,20,000. What is the cost of producing 2,80,000 units? 2,80,000 into rupees 4. So now 11,20,000 is your cost of production. Are you left with any stock? Whatever you produced, everything is sold. 0 is the cost of disposal. And you will make 14 lakhs. Clear? Next one. If the demand is 2,80,000, your sales will be 25.2 because you produce so much. Cost will be 11.2. Are you required to dispose of anything? Whatever you produced, everything is sold. 0. You will make 14 lakhs. Now, if the demand is poor, then your sales will be restricted to 2 lakh. 2 lakh into 9, 18 lakh. But you are producing 2 lakh 80, no, which incurs cost of 11.2. That means 80,000 is waste. That 80,000 you have to dispose of at a cost of 0.5 per unit, which is 0.4. Guys, if at all someone else would have taken from you at 0.5, then the 0.4 I would have added, because that is scrap recovery. How much it is? Sorry? 6.5. Now, can you tell me the expected value there? 14 into 0.25 m plus 14 into 0.45 m plus 6.4 into 0.3 m plus MRC 11.72 11 lakh 72,000. Is that clear, everyone? Anyone doubt? Now, next 2 lakh. Guys, if you go for 2 lakh production, you got demand for 3 lakh 50. Max to max you can sell is. So if you sell 2 lakh units, you will make the sales of 18. Correct now? And the cost of production is 2 lakh into 4. 8 lakh. Should you dispose of anything? Whatever you bought, everything is sold now. That means you will make 10 lakhs. If demand is 2 lakh 80, then you can sell up to 2 lakh. Cost of that 8. Should you dispose of anything? 0. It's gonna be 10 lakhs. If the demand is gonna be poor, that means still you are going to sell 2 lakh units. You produce 2 lakh, sold 2 lakh. That means your sales will be 18, 8, 0. Because you have to dispose of 0 bags. You will make 10 lakhs. So your expected value here is going to be 10. So moral of the story, which is giving you more expected value, 11.72. That is, when your production is 2,80,000, your expected value is more. So you would recommend them to produce 2,80,000. Is that clear? Clear? Please mark it as LMR Pro Max, this particular question. And anyhow, you know that workings you won't find in the answer key of institute. With that, we have completed our discussion on risk under certainty, decision under certainty, decision under uncertainty, risk. Now we have to go for decision under uncertainty. Now uncertainty means what, sir? Here the probabilities you know, right? What are the outcomes going to be, you knew, right? But worst part is, in case of risk under uncertainty, you don't know what is going to happen. There is no probability as such. There is no probability as such. In that case, what you should do, sir? We have different methods for ascertaining the expected value there. We have to prepare something called as payoff matrix. We have ArivuPro, we have Savage, all those things. We are going to see that. We'll do one thing now. We'll take a break before you guys become ice cubes. Yeah, we'll take a break now. 5:32. Let's take a break of 20 minutes. Yes, 5:53. We are starting with risk under uncertainty. Okay. Now we'll be discussing on decision making under uncertainty. What do you mean by decision making under uncertainty, sir? Here the probabilities also won't be known. In this case, what are the aspects we are going to apply? Basically, you have something called as maxi-min or minimax, guys. We prepare payoff table and we try to do something. Here maxi-min or minimax is nothing but your, we call it as conservative approach. We call it as conservative approach. How that will work, sir? Out of the given alternatives, if it's an income, as per my conservatism concept, I would assume I'm going to make the lowest income. So I will select the lowest income. And out of all the lowest, I know that these are the lowest I can achieve. So out of this, out of worst, what is best? That is, out of that minimum, what is maximum? That is minimax. First we will select the minimums of all the alternatives. In that, we are fine with selecting one with maximum. So at least so much we will be able to make. That is your minimax method. If it's a cost, we would like to keep our cost low or high. Yeah, you would love to keep your cost high. No one would love to keep their cost high. Everyone wants to keep their cost low. But as per minimax, what happens? I will select the worst scenario. That is, what is the maximum cost I might incur? What is the maximum cost I might incur? First I will select. In that, I would be loving to keep the minimum alternative. That is your minimax. In case of cost, it is minimax. Got it? Next one, Laplace. What place? What is this Laplace? We also call it as equal likelihood. Equal likelihood. That means we assume that all the alternatives are there, no, all the scenarios, all the outcomes are there, no, probabilities of all the outcomes are same. For example, for one alternative there are 4 outcomes. We assume probability of all the 4 is 0.25, 0.25, 0.25, 0.25. For one alternative there are 5 different outcomes. Then we will assume it as 0.2, 0.2, 0.2, 0.2. Each and every outcome has the same alternative. That's what we are going to. Got it? Savage. We also call it as regret strategy. What is that, sir? If at all I had selected the highest out of that scenario, that outcome, then for not selecting that highest, what I would be losing? That is savage. And Howix is just like your probability. Highest into probability of that highest, we call it as alpha, plus lowest into 1 minus alpha. Don't worry, all these things we are going to discuss. Okay, we'll show you through the example. See here. Go to illustration number 8. It's a profit matrix. Profit matrix means you want to keep it high or you want to keep it low. High, because it's a profit revenue. Shall we start? Savage is regret. Now, Howix, we call it as Howix. No. Alpha method, Howix method. Shweta, you know alpha, right? Sigma, you got to know. Alpha, you know. What is alpha? Hardik Pandya. Alpha is this. Oh. Infinity is what? Now, listen. Given the following payoff table of profits generated by an entity under different condition, state which can be chosen for as the best act using Maximax. Maximax means we are taking the risk, complete risk. Best of best. Conservatism means what? Best of worst thing to going to happen. Here we are going to take best of best, but this is maximum of maximum. Maximum of maximums. Second one, maximin, that is maximum of minimums. Minimax, or we call it as regret strategy, we also call it as Savage criterion, and equal likelihood we also call it as Laplace, and Hurwitz alpha criteria, where alpha is equal to 0.4. Now listen, first one, maximax. First I should select under alternative, which one is maximum? S3. S3 is maximum, so maximum is 8. Under alternative 2, 6. 6. These are the maximums. Now, maximax means maximum of maximums, 8. So, we are going to select alternative 1. We are going to select alternative 1. Is that clear? So, as per maximax strategy, it's gonna be alternative 1. Anyone, any doubt? Next. Maximin. This is your conservative approach. My minimum, whatever it is, in that maximum I would love to achieve. That is, I'm trying to think that my profit will be least out of alternative 1, which is minimum, minus 1. In alternative 2, 0. In alternative 3, 0. Correct? No. In this, we will select the maximum. Maximum of minimums. That is A2 or A3. Maximum of minimum. 0 is maximum compared to minus 1. Because it's a profit. So, it's gonna be either A2 or A3. A2 or A3. Is that clear? Next one. Savage is very important. Listen. If at all the state of nature was S1, then highest was which? So I should have selected alternative 2. But in the state of nature 1, instead of alternative 2, if I select alternative 1, how much I would lose? 3 rupees I will lose. If I select alternative 3, I will lose how much? 6 I will lose. What 0? Huh? No, that is dash A3, A3. Next, if at all the alternative, the scenario will be S2. Sorry. I don't want to write the minus there. Because end of the day, everything will be minus only. Next, S2. Everything is highest only. There is no regret. You select in the state of nature 2. You select alternative 1, alternative 2, alternative 3. It has nothing to do. S3. It would be great if you select alternative 1. However, if you choose alternative 2, then you will lose 6 rupees. If you select alternative 3, you will lose 2. Is that clear? In the scenario 4, you can go for 4. However, if you select S4, you will lose total 5. 5, not 3. Please keep in mind. If you select A2, you will go for. Got it? Now, if at all you select A1, what will be your maximum regret? 5. Correct? If at all you go for A2, what will be your maximum regret? If at all you go for A3, what will be your maximum regret? You want your regret to be more or you want your regret to be less? Less. When you want your regret to be less, then select the lower. Minimax. Maximum. All the maximum regrets I will take. In that minimum I will select. This is your savage. Hope you guys understood. Savage. So you will go for A1. Savage. So please don't take directly here. First, under that particular state of nature, what alternative would have given you highest? That we will select. and based on that we will take a call. Next is your equal likelihood Laplace. What did I say? Each and every alternative has the same probabilities. That means what is the probability of S1 occurring? 0.5, sorry, 0.25. 4 alternatives are there, no? S2, 0.25. S3, 0.25. S4, 0.25. Got it? Now, what is the expected value in case of alternative 1? 3 into 0.25 m plus 5 into 0.25 m plus 8 into 0.25 m plus m minus or m plus minus 1 into 0.25 m plus. Probability, no? Equal importance. If 2 alternatives are there, I would have taken 0.5, 0.5. 3 are there, I would have taken 0.33, 0.33, 0.33, 4, 0.25, 0.25, 5, 0.2, 0.2, 0.2, 6, 0.16, 16, 16, 167, 167, 167, 7, some random stuff, 13 something will get. Hope it's clear. First note, how much is the expected value? Sorry? 3.75. Next one. 6 into 0.25 m plus 5 into 0.25 m plus 2 into 0.25 m plus 0 into 0.25 m plus MRC. 3 point. A3. 0 leave. 5 into 0.25 m plus 6 into 0.25 m plus 4 into 0.25 m plus MRC. 3.75. So either you will select A1 or you will select A3. A1 or A3. Hope it's clear, everyone. You have to prepare the table and you have to show it, okay? Now, Hurwitz alpha, as it is the, listen, profit thing, then I would love to achieve the maximum profit. So, what is the maximum profit I can achieve in case of alternative 1? 8. Correct. What is the probability of that? That is nothing but alpha. 0.4 plus what is the minimum I am going to achieve? -1. If probability of achieving highest is 0.4, probability of achieving lowest is 0.6. 1 minus alpha. .6. Okay. Next one. A2. As it's a profit, I want to achieve higher. Possibility of achieving higher is 6. 6 into 0.4 plus lower is 0. 0 into 0.6. 2.4. Yes. Now, cost means ulta it is. A3. A3 is highest I want to achieve is 6. Probability is 0.4. Lowest is 0. 0.6. 1 minus alpha. So, which is going to be 2.4. Out of alternatives, which one is better? A1. Is that clear? So, under first one, we will select A1. Under second one, it's going to be A2 or A3. Third one, we are going to select A1. Correct now? Fourth one, we are going to select fourth one. A1 or A3 now? How come they took A2? Actually, it's A3 only. They lost it. Oh, here they have given. Select A1 or A3. Just change the answer in books. And Hurwitz, we selected A1. That is maximum in A1 alpha plus minimum in A1 alpha into 1 minus alpha. Alpha is like a probability there. Hope it's clear. If it comes in the examination, you will be able to solve now. Simple marks it is. If you get confused, you are going to get confused in the regret. So there you should be very careful. Okay. Now from cost point of view, shall we check? Guys, cost point of view. Go to illustration number 9. Illustration number 9. JPS is preparing summer camp in the jungles of Bagora district of Darjeeling to train individuals in the wilderness and survival. JPS estimate the attendance can fall into one of the 4 categories, either 200, either 250, 300, 350. The cost of the camp will be the, so that those are scenarios, S1, S2, S3, S4. Camp will be the smallest when its size meets the demand exactly. Deviations above or below the ideal demand level incur additional cost resulting from the constructing more capacity than needed or losing income opportunity when the demand is not met. Letting A1 to A4 represent the size of camp, that is 200, 250, 300, 350, and S1, S4 the level of attendance, that is either 200, 250, 300, 350. The cost matrix is given. Select the best alternative under minimax conservatism, because cost it is. First I will think what is the maximum cost I am going to incur. In that I will go for minimum one. Laplace, Savage and Howicks they are asking. All the 4 they are asking. First one, let's discuss from minimax point of view. Out of alternative 1, what is the maximum cost I am going to incur? In case of alternative 2, in case of alternative 4, in case of alternative 4, got it? So maximum I will be making is, incurring the cost is 25, 23, 21, 30. In this, I would love to select lower one because I want to keep my cost lower. So 21, alternative A, 3. Got it up. Sir, but conservatism is lost. No, sir. If at all you select the lower cost, first already I applied conservatism and I estimated my cost will be the highest. My cost will be the highest. In that cost highest, I am not idiot. Of course, I am applying conservatism, but I am not idiot to select one again with the highest. I know that these are the maximums I am going to incur. In that, why I will select one with the highest maximum? I will select one with the lowest. Next, Laplace. Laplace is equal likelihood. That is, 4 alternatives are there. So the probabilities are 0.25, 0.25, 0.25, 0.25. So 5 into 0.25, m plus 10 into 0.25, m plus 18 into 0.25, m plus 25 into 0.25, m plus MRC. 14.5. 8 into 0.25, m plus 7 into 0.25, m plus 12 into 0.25, m plus 23 into 0.25. $12.5, yeah. Okay. 21 into 0.25, m plus 18 into 0.25, m plus 12 into 0.25, m plus 21 into 0.25. Next one, 30 into 0.25, m plus 22 into 0.25, m plus 19 into 0.25, m plus 15 into 0.25, m plus MRC. So which one would you select? A4, because it's highest. You will select A2 because we are thinking from the cost point of view. We would love to keep our cost lower. 12.5. Got it? Next, what they are asking? Savage. This is important here. Concentrate. State of nature 1 is achieved. Then I would have gone for best alternative was A1. Sir, you should select highest. No, sir. We are thinking from cost point of view. So the best alternative is 5. Instead of going for alternative 1, if you go for alternative 2, you will lose 3. If you go for alternative 3, you will lose 16. If you go for alternative 4, you will lose 25. Got it? If at all S2 was the nature, then you should have selected A2. However, if at all you selected A1, you would lose 3. A3, you would lose 11. A4, you would lose 15. Got it? Next, if at all it was S3, you would have selected either A2 or A3. If at all you select A1, then you would lose 6. If at all you select A4, you would have lost 12, right? 7. Got it? S24 is the scenario, then you should have gone for A4. However, if at all you have gone for A1, then you would have lost 10. A2 you would have lost. A3 you would have lost. Now, in this, which is my maximum regret? Ayo, why maximum regret, sir? Cost it is. In profit also maximum regret only. Regret is already in the conservatism approach. Regret means how much I am going to lose maximum. So in this case, it is 10. Guys, listen. Sir, cost no, sir. Take the minimum. No, because it is not the cost. Here it is a regret. Regret, conservatism approach, I assume that my regret will be the highest. Next one, 8. Next one, 16. Next one, 25. In this regret, I would love to keep the lowest regret. A2. Is that clear, everyone? Hello? Generally, you might end up doing mistake there while selecting the regret which to be taken in the different alternative. You should select the highest. Sir, cost no, sir. Should we select lowest? The answer is no. Why? Because it's not the cost or revenue. It's all about regret. Next one. Hurwitz's criteria. They are not telling how much is the alpha. But you can compute no. I mean, alpha is not given. But you can go for it. How, sir? Listen. What is the formula? Hurwitz. Here it's a cost. So minimum into alpha plus maximum into 1 minus alpha. Got it? If at all it's a profit, then it is maximum into alpha plus minimum into 1 minus alpha. Now, maximum is how much? Sorry, minimum is how much? 5. 5 alpha plus maximum is how much? 25, 1 minus alpha. That is 5x plus 25 minus 25 alpha. I have not 5, x5 alpha. Okay. So that is 25 minus 20 alpha. 25 minus 20 alpha. This is how they got that. Huh? They said what? No, that you can't do. Decision is not possible. Because alpha is unknown, no? Next one, A2. What is the lowest? Because it's a cost. 7 alpha plus. What is the highest? 23. 1 minus alpha. 7 alpha plus 23 minus 23. So 23 minus 16 alpha. Got it? Like that you should do for the remaining stuffs also. That is your alpha basis. Anyone in doubt? No doubt? Next one is your decision tree. Whatever the alternatives are there, you are going to put it in the decision table. You are going to put it in decision table. For example, generally the first point we are going to write it in square. After that, we will use the circle. Okay. So listen here, I will just show it one. A company can choose launch of new product XYZ or not. If the product is launched, expected sales and expected cost units will be like this. Sales they have given, units they have given. If they launch, if they don't launch. If they don't launch, they will lose nothing, they will gain nothing. Zero. But if at all they launch, sales could be 10,000, sales could be 15,000. Correct? No. If they launch, sales could be 10,000, sales could be 15,000. Now, unit cost, when you are selling 10,000 units, it could be 6 rupees per unit, it could be 8 rupees per unit. When you are selling 15,000, it could be 6 rupees per unit, it could be 8 rupees per unit. And when there are more than one probabilities there, you should take joint probability. For example, now, here 0.8 is there, here 0.7. I will multiply these two. And I will take on this amount. Like that, we should do the decision tree. Okay. All you have to do is just go through few decision trees. You will get the idea about it easily. Okay. You don't have to worry about it much. With that, we have completed our decision theory. Okay. Simple chapter, yet around 7 to 10 marks easily you can expect from this particular chapter. Okay. Fine. Now shall we see few past year paper questions of this chapter. And then we'll jump into the next one. Okay. Second. First, let's discuss December 2025 PYP. See there, guys. Question number 14 and 15 MCQ are your decision theory questions. Question number 14 and 15. Business is deciding between three investment options A, B, C. The profitability of each option depends on four possible economic scenarios: recession, stability, growth, and boom. How many unique payoff values will be existing in the payoff table? Very simple. If you take three alternatives are there, A, B, C, and possibilities are four: recession, stability, growth, boom. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 4 into 3, 12. There are 12 alternative or 12 different payoff matrix will be there in these scenarios. So always remember alternatives in the vertical and state of nature or the outcomes in the horizontal. Demand also. 14th one. Two investment projects have the following characteristics. They have given ER as well as they are given standard deviation. They are asking you which is relatively riskier. The one with the highest COV. COV is sigma by expected return. So 15 by 20%, 0.75. 9 by 10, 0.9. So project B is bit of relatively riskier because the coefficient of variation is higher. Got it? Can you imagine? If I'm not wrong, these are the same numbers what they used in illustration also. Correct? Done. Simple PYPs. 1, 2. Done. Next, decision theory. 8A. Generally 8A will be decision theory. It will be like decision theory plus your responsibility counting. Identify the course of action. Swadhish Limited based on Maximin criteria, Maximax criteria, Laplace as well as Wix. So see there. Swadhish Limited, food product company, is contemplating introduction of the revolutionary new product with new packaging to replace the existing product at a much higher price, S1, or moderate composition, S2 and S3. That means these are the three different alternatives available for them. Whereas the possible state of natures are so and so. The marketing department of the company worked out a payoff in terms of yearly net profit. They are talking from profit point of view for each of the strategies and their expected sale. First one, they are asking maximum. That means maximum of minimums. You are conservative. So in this case, which is maximum 7? Sorry, maximum, no? Minimum you should select. Conservatism. So 1,50,000 is what you are going to make in A1, S1, irrespective of what scenario is. At least you are going to make so much. In case of S2, at least you will make 4,50,000. In case, 0 is there. In case of S3, you are going to make at least 2 lakh. When you are going to make at least this much, you are going to, of course, going to the alternative which is going to give you short, highest of it, maximum of it. That is S3. You will go for alternative S3. Maxi max. Second one is maxi max. Here the second one is maxi max, guys. Very simple. How to arrive at maxi max? So maxi max is maximum of maximum. It is not the conservative approach. Ulta of it. Maximum what you are going to achieve here. 7 lakh. Here. 5 lakh. Here. Out of all these, you will select the. Very risky. Because you are expecting best of best. Everything. In case of maximum, you are expecting best out of all the worst scenarios. Laplace criteria, very simple. You are going to take everything as a 0.33, 0.33, 0.33. I mean, you have to take in your calculator continuation number 0.33333 like that. So you will get the proper amount. 7 lakh into 0.333333 m plus 3 lakh into 0.33333 m plus 1,50,000 into 0.333333 m plus. So first one it is 1,33,333, 1,33,333 plus 1,02,33,333 plus 50,000. 2,83,333, right? No? Check. 3,83,333. How come? Yeah. If you take that, you will get this number soon. 7 lakh into 0.33333 if you take, you will get 2,33,333. 3 lakh into 0.33 if you take, you will get 1 lakh. 1,50,000 into 0.3333 if you take, you will get 50,000. So 1,50,000 plus 2,33,000. Total 3 lakh. Next one. 5 lakh into 0.33333, that is your 1,66,666.67. Correct, no? And 4 lakh 50 into 0.33, 1,50,000. So it is 3,16,667. Next one. 3 lakh into 0.3333 m plus 3 lakh into 0.33333 m plus 2 lakh into 0.33333. That is 1 lakh, 1 lakh, 2 lakh, 2 lakh plus around 83,000. No, not 83. 66,000. 2 lakh 66,667. So as it's a profit basis, you are going to select S1. Alternative 1. Is that clear, everyone? Hello. Next, what they are asking? Laplace done, no? Hurwitz criteria. Alpha is 0.4. As we are discussing profitability, I will select the highest into 0.4 plus lowest into 0.6. Because if Hurwitz is 0.4, 1 minus Hurwitz is 0.6. So highest is 7 lakh. 7 lakh into 0.4 M plus 1,50,000 into 0.6 M plus MRC 3 lakh. Got it? Next one. Highest 5 lakh. 5 lakh into 0.4 M plus lowest 0. Ignore. So how much is 5 lakh into 0.4? Got it. Now talking about S3. Highest is 3 lakh. Lowest is 2 lakh. So 3 lakh into 0.4 M plus 2 lakh into 0.6 M minus MRC 2 lakh 40,000. That's it. So here you will select one with the S1. Is that clear, everyone? This question they have asked, what are the characteristics of responsibility reporting? All those things you have to see once. That was about December 2025. Now we are going to June 2025. Shall we proceed? So what are the questions, guys? Question number 5. Question number 15. So question number 5. MCQ question number 5555. A new product is expected to generate the following profit or loss. What is the expected profit or loss from the product? They're asking you expected returns. 1 lakh into 0.1 M plus 50,000 into 0.5 M plus negative 20,000 into 0.4 M plus how much it is? 27,000 profit. The next one which I told 15. The value of coefficient of optimism, that is your Hurwitz, is needed while using realism, maximin, minimax, equal likelihood. Guys, equal likelihood is your Laplace. Realism is your Hurwitz. We call Hurwitz as realism. Okay. That is your optimism, realism, all those things. Next one. 8A. Computation of expected values. Simple question they would have asked. 8A. Based on expected value of the net cash inflows, which project should be undertaken by Linku? Calculate the value of perfect information about the state of market. So they have 1, 2, 3, 4, 5 projects. Correct? Can you tell me the expected values quickly? 550 into 0.2 M plus 480 into 0.4 M plus 580 into 0.4 M plus MRC. What you are searching? Go ahead and search in study hall. What is it? 534. Done. Next one. 450 into 0.2 M plus 500 into 0.4 M plus. Come again now. 450 into 0.2 m plus 500 into 0.4 m plus 570 into 0.4 m plus MRC. 518. Okay. Next one. 420 into 0.2 m plus 450 into 0.4 m plus 480 into 0.4 m plus MRC. 456. Yes. Next. 370 into 0.2 m plus 410 into 0.4 m plus 430 into 0.4 m plus MRC. 410. Next. 590 into 0.2 m plus 580 into 0.4 m plus 430 into 0.4 m plus MRC. 522. Out of this, which alternative you would be selecting, guys? Project Q. You would select project Q. Is that clear? You select one with the highest expected value. Also, they are asking EVPI. Now, if the conditions were poor and you had a complete information, you would have selected which alternative? Project Q. Correct now? If the conditions were good and you had full information, project Q would have selected 590. If at all condition were good, then you would have selected again project U only, because 580 highest. Next one, if at all conditions were excellent, you would have gone for project Q 580. So with the perfect information, how much would be your expected returns? 590 into 0.2 m plus 580 into 0.4 m plus 580 into 0.4 m plus MRC. 582. With the perfect information, you would have made 582. So expected value, or the calculate the value of perfect information is, if at all without perfect information you would have made 534. With perfect information you are making 582. That means 48 you would have made. How much you would have made? Value. Got it? Expected value with perfect information is 582. Expected value without perfect information is 534. So your value of perfect information you are ready to pay is 48. Anyone, any doubt in this? What is the significance of identifying responsibility center into responsibility accounting? All those things. Here is go through once. Next attempt, shall we go? That is attempt December 2024. December 2024, guys. No decision theory MCQ. Okay. 8A, they have asked decision tree. Look at the question, everyone. Mr. Gurbik, a farm owner, is seriously considering the drilling of a farm well. Awesome. In the past, only 70% of the well drilled was successful at 200 feet of depth in that area. Moreover, on finding no water at 200 feet, some persons drilled it further up to 250 feet, but only 20% struck water at 250 feet. That means the prevailing cost of drilling is 50 per feet. The farm owner has estimated that in case he doesn't get his own well, he will have to pay rupees 15,000 over the next 10 years in the present value terms to buy water from the neighbor. Following decision can be optimal. Do not drill any well. Drill up to 200 feet. If no water is found at 200 feet, drill further up to 250 feet. You are required to draw an appropriate decision tree. Identify the farm owners under expected market value. Listen here. Very simple. First, we have two alternatives. Alternative 1. Sir, 3 alternatives are there? No, sir. No. Think wisely. 1. Do not drill. Do not drill. If at all you don't drill, then you end up paying how much over the 10 years? 15,000. You end up paying 15,000. However, if at all you drill, this is drill, but again, only till 200 feet. Only till 200 feet. When you drill only up to 200 feet, not him, only up to 200 feet, you can get the water or you can not get the water. Water, no water. Correct? No. What is the probability of you getting the water? 0.7. What is the probability of not getting water? 0.3. Now, if at all you get water, great. You will stop there. Where, how much you will be spending then? 50 per feet, right? Yes. So for 200 feet, you will end up spending 50 into 200, 10,000. You will end up spending 10,000. Got it? However, if it's a no water, you have two choices. Choice number 1, drill further. Do not drill. Drill. Do not drill. Now, if at all you do not drill straight away, when you didn't get water in 200 feet, if you didn't drill, then still you have to incur around 15,000 rupees throughout the 10 years. Not only so much, those people came to drill the bore, no? Will they go back without taking money? For 200 meters, feet they will take, no? How much they will collect? 10,000 they will collect. In this case, the cost will be 25,000. And guys, what is the probability of this? Do not drill, that they didn't tell. Forget. Drill. Now you drilled. Now there are two possibilities. Drill 250 feet, right? Drill 250 feet, extra 50 feet. You have two options. One is you will find water. One you will find no water. If you find water, then your cost will be just 250 into 50. 12,500. However, if at all you do not find, then your cost will be, first to drill you have to pay 12,500 plus to get the water you have to pay 15,000 over the 10-year period. That means 27,500. 27,500, no? Now, what is the probability of no water? Whoever drills it, what is the probability of them getting water? 0.2. Because you can see there, they have clearly told. The prevailing cost of drilling, some person drilled it, only 20% struck the water. That means remaining 80% will go with no water. Like this, you are going to prepare. That's 7 marks for this. Got it? Now, what you should do? What are the costs you are going to incur? First one, straight away 15,000, no doubt in that. Second one, if you go, it is 0.7 into 10,000. Like that, you are going to keep on finding out the cost, and whichever is the best cost, you are going to select that. For example, the 200 feet is there, no? So 10,000. What is the possibility of you incurring only cost as 10,000? 0.7. Next, no water 0.3, then you might end up not drilling. What is the cost of that? 25,000 into 0.3. If you drill it further, then 250, you have two chances, water, no water. If you get water, 12,500. What is the probability of that? 12,500 into 0.2 into 0.3. Two conditions should satisfy. In 200, we should not get the water, possibility is 0.3. And in 250, we should get the water, there is 0.2. Joint probability. And next one is drill and don't get the water, 27,500. What is the probability of that? 0.3 into 0.8. When you do like that, you are going to get the different cost. Whichever is lower, you are going to select. Yeah, at last you have to just total it and write it. Okay, simple. Shall we proceed now? Which attempt? Division 24, December 24 is done. June 2024. Question number 4 and question number 15. 9 is also there. Question number 9. 4, 9 and 15. Laplace criteria is the feature of which of the following? Deterministic model, decision making under certainty, decision making under uncertainty, optimization. Decision making under uncertainty. Correct? No. Chapter unit 3. Next one, what I told? 9. This is June 24, is it? SNG Limited is choosing which of 3 products PQR to make and has calculated likely payoff under 3 possible scenarios A1, A2, A3, giving the payoff matrix, profit or loss they are telling. That means from profit point of view. Using Maximax, that is best of best. What is the maximum profit in case of alternative 1? 80, alternative 2, 150, alternative 3, 100. In that we will select 150. So we will go for alternative 2, that is at product R. Option C. Is that clear? Next one is 15th. Expected return of 2 mutually exclusive projects are 15%. Standard deviation of project 1 is 20%. They're asking you COV. So 20 by 15, 1.33, right? Project T2, it is 10 by 15, 0.67. Option B. Option B. Got it? Next is 8, right? 8A, no? Again, decision 3 they have asked. Represent the above problem in form of decision tree and suggest the option that should be selected by the company. What they are telling, a textile company is considering whether to enter the new market or no. In case the company decides to enter the market, it must increase its production. To achieve the higher production, it must either install a new plant with the cash outlay of 3 lakh or pay overtime wages to its workers, which are expected to amount rupees 1 lakh. If the company decides to enter the market, there are 60% chance its shareholders approve the installation of new plant. A random sample of current market structure reveals that 40% chances for achieving a high level sale by company, 30% chance of achieving the medium level sale, 20% chance of achieving the low level, 10% chance of achieving no sale. Further, a high level sales will yield profit of 10 lakh, medium level will yield 6 lakh, low level will yield 2 lakh. If there are no sale, the company will lose 5 lakh apart from the cost of equipment. Very simple. First, I have two options. One, enter market. One more, do not enter. Enter, do not enter. If you don't enter, you are losing nothing. Simple. You are losing nothing. Zero. However, if you enter, you have to spend some money. Either to increase the production through installation of new machine, or through increase the production through your overtime. Now you enter, I agree. So new plant and your overtime. If at all you go for new plant, you have to end up incurring 3 lakhs. How much you have to end up incurring? 3 lakhs. However, in fact, cost it is, so I will take minus. If you do not enter and if you go for overtime, then you have to incur 1 lakh. Got it? Now, in the new plant, again, you have two alternatives. Alternative 1, shareholders will approve. Shareholders do not approve. If shareholders do not approve, I don't install any machine. Zero. My cost will be 0. However, if my shareholders approve, then it is going to be 3 lakh. Correct? No. So instead of here, I will write there. Okay. Now, let's say they approved. Then you can achieve sales in 3 or 4. High level, medium level, low level, 4. High level, medium level, low level, and no sales. What is the high level? 10 lakh you can make. Correct? No. What is the medium level? 6 lakh you can make. What is the low level? 2 lakh you can make. No, you are going to make minus 5 lakh. And best part is what you know. It doesn't matter you are going to make it with the new machine or without new machine, with employees. Still, in case of employees also we will get same output only, no? In case of employees also we get same output only. Same amount we will make. Is that clear? Now, what is the probability of you making 10 lakh? A random sample of the current market structure, 40% chance of achieving high sale, 0.4, 30% chance of achieving medium, 0.3, 20% of low, 0.2. And no sales is 10%, 0.1. Okay. So 0.4, 0.3, 0.2, 0.1. Now, what is the best alternative here? Listen, what is the expected value of achieving 10 lakh? Try to understand. First, we have to take a approval. We have to take a, so that we will incur minus 3 lakh. What is the possibility of that? 0.7. 0.7 or 0.6? Shareholders approving 0.6, right? 0.6. And with that, how much will be the outlay? Around 1,80,000. 1,80,000, no? With that, you can achieve either 10 lakh. That will become 4 lakh. That means net you will make around 2 lakh, is it? Net you will make around 2 lakh. However, if at all you go for a medium one, then the possibility is 0.3. So 0.3 into 6 lakh, 90,000. 90,000, 90,000 only. Sorry, 1,80,000. 1,80,000 minus 1,80,000, 0. Next one, 2 lakh. 2 lakh into 0.2, 40,000. But you already incurred cost of 1,80,000. That means you will lose minus 1,40,000. Next one, negative 5 lakh. Negative 5 lakh into 0.1, negative 50,000. Negative 50,000 and negative 1,80,000. Negative 2,30,000. Like this, you are going to check for each and everything. Whichever gives you highest, you are going to select. Got it? Whichever gives you select highest EMV, you are going to select that. Next one, please. June or December? June is done, no? No, June 24 is done. Now we are going for December 2023, one last one. There is one MCQ. There is one MCQ and one decision theory, that is with the probabilistic budget that you have to go through. 3 lakh is what you are going to spend on equipment, no? If you want to install equipment, you have to spend 3 lakh, right? Yeah. Probability of them accepting is 0.6. So probability expected value is 3 lakh into 0.6. Now December 23. That probabilistic budget you have to go through once, okay, on your own. I'm not going to discuss now. Which question I told? Question number 5. Expected value in decision analysis is a standard deviation using the probabilities as weights, the square root of the squared deviations, a measure of difference between the best possible outcome and the outcome of the original decision, that is your EVPI, an arithmetic mean using the probabilities as weights. Expected X dash is arithmetic mean, no? Option D. That's all. With that, we have completed decision theory. So far we have completed ABC, which is around again 10 marks. Divisional performance, which is again around 18 marks. You can keep 16 to 18. 16 only you keep, around 26. And decision theory, again around 10 marks you can keep on an average. 36 marks are covered. Done. Fine. Now we'll be discussing on responsibility accounting. What is this responsibility accounting, guys? As I already told you about DPM, divisional performance measurement, where we are going to divide our whole organization into different divisions and we are going to evaluate their performance. Now when you divide them into different divisions, you can map them into different centers where they will be held responsible for their respective center. The particular manager, they will be taking care of that particular division, that particular department, they will be held responsible. So like that, dividing the organization and holding any particular manager responsible for that division, that only we call it as responsibility center. Okay, so that we can divide it into, our responsibility center could be cost center, revenue center, profit center, investment center. What? Cost center, profit center, revenue center, investment center. Now what is this cost center, sir? Cost center is a responsibility center in which manager will be held responsible for incurrence of the cost. That is, we will determine some standard cost. No, if at all the cost is well within the standard cost, he will be rewarded or she will be rewarded. If the cost is more than standard cost, we are going to punish them. That is your cost center. Whereas revenue center is the manager will be held responsible for the generation of revenue. Generation of revenue. Not only generation of revenue, sometimes there will be some cost like marketing expense, etc., directly related with generation of revenue. For that also we will hold them only responsible. That particular center we call it as revenue center. And profit center, here the managers are responsible not only to generate the revenue, also they are responsible for incurrence of the cost. That is, they should give us profit. They are responsible for generation of profit. How to generate a profit? Reduce cost, increase revenue. Next one is investment center. Investment center is like a autonomous. Like you don't have, like you have full autonomy. You are not only going to generate revenue and incur cost, even you have power to make the investment. Even you have power to make the investment in the right projects. That we call it as investment center. So these are the responsibility center which are only responsible for profitability but also have an authority to make the capital investments. Got it? Guys, your cost center performance will be measured in terms of how much cost we have saved. Revenue center measurement will be done on the basis of how much additional revenue we have generated. Profit center is on the basis of profits, whereas investment center on the basis of return on investment, ROI. On the basis of return on investment. Got it? Profit on the basis of amount of profit. For example, now cost center means, guys, your accounts team, human resource team, production team, by any chance are they related to the generation of revenue? Nowhere they are related to the generation of revenue. However, coming to revenue centers, marketing team, they are directly related to generation of revenue, sales team, all those people. Profit center, you are taking it as one separate division. For example, you take Reliance, then Jio in Reliance. Now, Jio, they are not only responsible for incurrence of cost, they are also responsible for generation of revenue. They are responsible for generation of profit. That is your profit center. Investment centers are like your separate business altogether, SBUs. SBU, strategic business units. For example, Tata Motors, although it is part of Tata Group, Tata Motors has the autonomy, freedom to invest. Now, that is your investment center. Guys, cost center could be standard cost center or discretionary cost center. What? Standard cost center, discretionary cost center. Now, what is the standard cost center, sir? These are the cost center where your input-output ratio is achieved or input-output ratio could be determined. For example, if you want to produce 1 lakh units, if you know that you have to use 2 lakh kg of raw material, now input-output ratio is there, no? This kind of cost center where input-output ratio could be ascertained, we call it as standard cost center. Whereas discretionary cost center is, you can't exactly tell input-output ratio. Service sector. For example, now we have to give results, let's say. ArivuPro is like, okay, faculty center is a cost center. They have to give us result. How to measure? Can we exactly tell that, okay, one faculty, 10 students? No. You can't link that input output. Generally, your service segments are falling under this discretionary cost center. Cost center whose output cannot be measured in financial terms. Thus, input output ratio cannot be defined. Whereas standard cost center are cost center where output is measurable and input required for output can be specified. Got it? These are your few responsibility centers and all. just you have to go through that chapter once fully, and these are the important things. What are the different cost centers, how it's going to affect, how it has measured, all those things are important. Go through that once, please don't leave, because your eighth question is that only, along with your decision theory. You know how easy decision theory is. Hardly we have 4-5 concepts, correct? No, so that's the reason you have to prepare it. Hope it's clear. Pakka? Great. So fine. You just go through that PYP questions of responsibility accounting, just chapter number 9. You just go through that. Okay. MCQ you want to see? Yeah, of course it's there. MCQ should be there, no? In December 23 it's not there. December 24 1. Here they have asked cost center and profit center. What do you mean by cost center? What do you mean by profit center? Difference, all those things. Here they have asked what are the different responsibility centers. There is nothing called points and all. You have to write proper concept to that. In professional exams, there is no particular benchmark as that. Here no MCQ. Here they're asking basic control functions of responsibility centers. And here responsibility accounting, 2 questions in MCQ, and significance of identifying responsibility centers. Responsibility center, 2 marks here, and characteristics of responsibility centers. All these you have to go through once, whatever is there in PYP. And also I recommend you guys to go through those 2 questions. Which are those, sir? One is that warehouse supervisor is responsible for warehouse as well as this one. They have given few costs. You have to find out which are his cost. Always remember, any manager will be responsible for those costs which are in his control. Those costs which are controllable by him. If at all any cost which is not controllable by him, how can you hold them responsible? Correct, no? So always remember, any manager will be responsible towards controllable cost. Then that one question you have to check. That one question is there. You will get to know illustration. That warehouse, shipping, all those costs, etc. is there. That one question. Plus one more thing is like your production department planned certain things. Because of your purchase department making delay, that is marketing department making delay in getting the product, you are forced to work overtime and you are incurring some extra cost. Now that extra cost should be put it on production manager head or marketing manager head? Marketing manager head, because they did the delay. That one more illustration is there. Those 2 illustrations go through. Okay, with numbers, with concepts. I mean those 2 plus this PYPs. If you go through from responsibility accounting, according to me, more than sufficient. PYP would be sufficient. Okay. Hope it's clear. Fine. We'll do one thing. We'll close for the day. Tomorrow we'll start with the standard costing, and it won't take much time. Standard costing. Fast it will get over, and followed by, we'll see, marginal or something will start. Okay, or if it feels heavy, then we can go for budget or something and we'll match it. Most probably it might go to 5th day, but let's see. Not much, no worries. Until you are learning, it's absolutely fine. Chalo, we'll see you guys tomorrow. Bye bye. And today whatever we have learned, DPM as well as the DT as well as your responsibility. 3 you have to go into. Sure. Bye bye. Thank you. Okay. Now we'll be starting with standard costing, one of the chapter where you can expect around 14 marks. Okay. Chapter where you can expect around 14 marks. Basically, standard costing is a technique of cost control. This is the technique to control the cost. Basically, we will be restricting the cost to the extent of predetermined cost. We will restrict our cost to what extent? Predetermined cost. Predetermined cost itself, we call it as standard cost. That is, first what we will do, we will set the standards. That is, my expense should be so much, my income should be so much. Like that, we will set the standards. After setting standard, whom should be held responsible? That responsibility also will check, because okay, we set the standard, my cost should be so much. Now my cost is exceeding more than that. Whom should we hold responsible? My cost is going less than that. Whom we should have held responsible? So we should clearly define who is responsible for this particular thing. Whether purchase manager, production manager, HR manager, general manager, who? Like that. Then we will incur the cost. Then we will compare our actual cost with the standard cost, predetermined cost. There we will find the deviations. Those deviations could be positive in nature or it could be negative in nature. Now, positive means what, sir? Favorable. Positive means favorable. What do you mean by favorable? You are getting benefit from that. If it's a cost variance, then it is favorable if at all your actual cost is lower than the standard cost. Because I thought of spending 5,000, I'm spending 4,000. Is it good or is it bad? Good, no, because you are saving the cost. So that is favorable. That is, when the actual cost is lower than standard cost, it's favorable. Vice versa. That is, actual cost is more than standard cost, it is adverse. Got it? Whereas, talking from the income point of view, if your actual sales, actual revenue is more than budgeted revenue, then it is favorable. If actual is more than standard, in case of revenue, it's favorable. I thought of earning, let's say 2 lakh rupees. I am earning 2,50,000. Favorable, adverse? Favorable. However, if it is ulta, I thought of earning 2 lakh. I am earning 20,000. That means it is adverse. Got it? Like that, we will find out a deviation. We will find out a variances. In standard costing, we use the term variances for the deviation. Then we will analyze what are the reasons for such variations. Then we will take the corrective measures. Is that clear, everyone? Next, talking about the cost. Guys, cost point of view, you can divide cost into material, labor, overhead. Overhead, you can further divide it into variable overhead, fixed overhead. What is it? Variable overhead, fixed overhead. Whereas for the cost accounting purpose, for the costing purpose, it is only material cost, labor cost. Whereas for management accounting purpose, material, labor, overheads, in fact, sales variance is also there. Got it? Oh, great. Someone please remind me immediately after labor cost to change the video, so that for costing whoever is studying, that will be easy. Now, first let's discuss about material cost variances. Guys, cost variance is very simple. How much I have predetermined standard cost and how much I have actually incurred actual cost. What? How much I have predetermined standard cost, how much I have actually incurred actual cost. The difference itself we call it as material cost variance. How do we arrive at a standard cost? Standard quantity into standard price. Actual cost is actual quantity into actual price. If the standard cost is more than actual cost, favorable. If the actual cost is more than standard cost, adverse. Now, what do you mean by standard quantity? Guys, always remember, standard quantity means standard quantity for actual output. Standard quantity means standard quantity for actual output. Whereas actual quantity means quantity consumed, not quantity purchased. Please keep in mind, unless and until they ask you to compute on the purchase point, they will ask, find out the price variance at the purchase point. Unless and until they ask you particularly find out purchase point, always remember actual quantity means quantity consumed, not quantity purchased. Quantity consumed, not quantity purchased. Is that clear, everyone? Oh, great. Now, your material cost variance is standard cost minus actual cost. Standard cost is nothing but standard quantity for actual output. What do you mean by that, sir? For example, let's say you want to prepare biryani. You saw some YouTube video. They tell half kg rice, half kg chicken. Now my question is, that is to prepare 1 kg of biryani. But in your home, let's say 6 people are there. That means you have to prepare 3 kg of biryani. Now, for 3 kg of biryani, rice should be 1.5 kg or half kg? 1.5 kg, no? Can you tell that actually you consume 2 kgs of rice? Rice was supposed to be only half kg. That's what they said in YouTube video. No. Because in YouTube video, they said for 2 people. Half kg is for 2 people. Now in your home, there are 6 people. That means for 2 so much, for 6 question mark. Like that you have to find out. That is how you will arrive at a standard quantity. Got it? So always and always and always and always and always you have to remember this point. Standard quantity means standard quantity for actual output, not standard quantity for standard or budgeted output. I repeat again. Standard quantity means for standard output, not for budgeted. In fact, anywhere, wherever we use the term standard, always remember standard means standard for actual. Got it? Now, those variances could be due to 2 reasons. Either you have paid more or less than what you estimated, or you have consumed more or less than what you estimated. How that formula derived, all those things I am not going to explain now. But remember, price variance means how much you should have paid and how much you have paid. I repeat again, how much you should have paid for the actual quantity. How much you have paid for the actual quantity. What? How much you should have paid for what quantity? Actual quantity. How much you have paid for the actual quantity. Can I say how much you should have paid for the actual quantity as standard price was supposed to be paid? For what? Actual quantity. What you have paid? Actual price you have paid for actual quantity. So in simple, can I say it as standard price minus actual price into actual quantity? So the price variance is standard price minus actual price into actual quantity. So standard price minus actual price into actual quantity will give you price variance. Done. Next is usage variance. What is this usage variance, sir? Usage variance is how much you should have consumed. How much you have consumed. How much you should have consumed. How much you have consumed. How much you should have consumed is your standard quantity. How much you have consumed is your actual quantity. So standard quantity minus actual quantity will give me the extra quantity or less quantity what I consumed. That I should multiply with standard price. Why standard price, sir? Remember, your price variance is responsibility of your purchase manager. Usage variance is responsibility of your production manager. Now, whether production manager has anything to do with paying more or less? No. Being a production manager, we told you, you are going to get this material at 100 rupees, standard price. Now our purchase manager paid 120 rupees. Should I hold my production manager responsible for it? No way. I should not hold my production manager responsible for it. Got it? So remember, my production manager should be held responsible for the standard prices, not for the actual prices. So what is the formula for the usage variance? Standard quantity minus actual quantity into standard price. Standard quantity minus actual quantity into standard price. Is that clear? Everyone, is that clear? Done. So when it will be favorable? If at all I consume less than what I thought of consuming, that is, if my standard quantity is more than actual quantity, then it is favorable. If I consume something more than what I thought of consuming, that is, if my actual quantity is more than standard quantity, it is adverse. Got it? Now that is your usage variance. However, if at all two or more raw materials are involved, then that usage variance could be further divided into mix variance, yield variance. Yield variance is also known as sub-usage variance. Mix variance is there. Now, what is that, sir? Due to the quality, whatever the variance is arising, that we call it as yield variance. Due to the wrong mixing, whatever the quantity we are consuming extra, that we call it as mix variance. Now, what is that, sir? First, talking about yield variance, that is quality. Talking about yield variance, that is quality. That is nothing but, you want fever tablet? You have. Of course, you should be having. So, listen. Where were we? You should not keep it on and all. Papa, she's getting fever. Yeah, turn it off, I think. Yield variance is quality. That is, for example, now let's say we wanted to use 1 kg of chili powder. But what to do? Chili powder is not that spicy. So we changed our standard. You might have seen your granny and all telling, in our time, if we added this much chili powder, it used to be spicy. Now you add 2 spoons also, it's not spicy. That means they're changing the standard, no? So now that new standard, we call it as revised standard quantity. That new standard, what we call it as? Revised standard quantity. Now, how to arrive at revised standard quantity? Total of what you consumed actually, that should be taken in the standard ratio. Whatever you actually consumed, material A, material B, total of that should be taken in the standard quantity ratio. That only is our revised standard quantity. So RSQ is total of actual quantity in the standard ratio. Total of actual quantity in the standard ratio. Got it? Now, that is your new standard. As per old standard, you should have consumed how much? That is your standard quantity. So difference between your old plan and new plan, old standard and new standard, that itself is due to quality issue. For example, old standard, we were supposed to use 1 kg of chili powder. As per new standard, we decided that to give the same taste, we have to use 1.2 kg of chili powder. Are we using 1.2 kg? No. We are deciding that we should use 1.2 kg. That means we are deciding on our revised standard quantity. So, difference between your standard quantity and revised standard quantity, that we call it as yield variance. We call it as sub-usage variance. Yield or sub-usage variance into standard price. Got it? Quality is whose fault? Purchase manager, production manager. Purchase manager. Why? Purchase manager bought the low quality product. Why production manager should be held responsible towards this? So yield variance, if any, it should be held. Who should be held responsible? Purchase manager should be held responsible. Got it? Okay. Next is your material mix variance. Oh, by the way, when it is favorable, If my new standard is less than old standard, earlier you thought of using 1 kg of chili powder. Now because of the quality of that crazy quality, you are supposed to use only 0.8 kg. Is it favorable or adverse? Favorable, no? You are saving 200 grams of chili powder, no? Yes or no? So if the RSQ is more than SQ, then it is adverse. Because earlier my chili powder was supposed to be 1 kg, now I decided to be 1.3. That means I am using 300 grams extra chili powder. Adverse. Whereas if my old standard, that is standard quantity, is more than revised standard quantity, it's gonna be favorable because you are using less. You are using less. Hope it's clear, everyone. Great. Next, mix variance. Mix variance is, okay, I agree quality was the issue. So how much chili powder you should have used? 1.2 kg, no? But are you really using that? No. Your actual quantity might not be same as revised standard quantity. So what you will do, that difference we call it as mix variance. I agree old standard I will forget. As per new standard you should have used 1.2 kg of chili powder, no? But how much you are using? You are using either more or either less. If you are using less than new standard, favorable. If you are using more than new standard, adverse. That is RSQ minus AQ into SP. RSQ minus AQ into SP. Revised standard quantity minus actual quantity into standard price. Revised standard quantity minus actual quantity into standard price. Got it? Now this is all about your material variances. Generally students will be able to answer price variance, usage variance, but yield and mix there will be lot of confusion. So remember this code word, guys. Let's say one Sunday I will go to home, open the cooker, rice is there, next gravy will be there. What you are expecting? Chicken. Correct, no? If you are vegetarian, I don't know. I am not. What? Sambar. What you expect? No, this vegetarian. Sundays what you will prepare? Something special. Sambar. So every day you prepare what? Whatever it is. Okay. Now, you will go and ask your mom, what is there for lunch? She will tell rice, and you are expecting for chicken, but she will tell rasam. And what's your reaction? Seriously? Rasam, are you serious? So, what is it? First, what she said? Rasam. And what did you say? Seriously. Correct, no? In rasam, R stands for revised standard quantity. A stands for actual quantity. S stands for standard price. That A you write it as equals. M is your mix variance. Got it? In your seriously, S stands for standard quantity. R stands for revised standard quantity. S stands for standard price. L is equals. Y is yield. Which one? S for standard quantity, R for revised standard quantity, S for standard price, L is equal to Y is yield. Okay. Now, sir, other two also we get confused. Then what you should do? Let's say there is one daughter-in-law named SAP, not SAP. You can call her sap, whatever you want. Okay, she will go and ask her mother-in-law. What do you say mother-in-law in Hindi? Sasuma. We say sasu. Yes, say. Yes, you. She will go and ask mother-in-law, what you have prepared for lunch? She will tell rice and rasam. What your sap will say? Seriously? Rasam. SAAP is standard quantity, standard price minus actual price into actual quantity is equal to price variance. Sasu is standard quantity minus actual quantity into standard price is equal to usage variance. Whereas seriously, you know already, yield variance is equal to standard quantity minus revised standard quantity into standard price. Whereas rasam is revised standard quantity minus actual quantity into standard price is equal to mix variance. Okay. Sap went to Sasu and asked what's for lunch. What did mother-in-law say? Rasam. What she replied? Seriously, rasam, what is wrong with you? Are you vegetarian or what? Go and eat grass instead. I mean, she will tell. So, this is material cost variance. Got it? Few keywords you have to remember. I mean, I feel bad for those people who are not vegetarians but vegan. Paneer also they can't eat. Ghee, no. I would have stopped eating only. Always remember, guys, standard quantity means standard quantity for actual output. RSQ is total of actual quantity in the standard quantity ratio. Actual quantity means material consumed and not material purchased. Listen here, one more thing. Sometimes relating to this actual quantity, they might give opening WIP, closing WIP also. What? Opening WIP, closing WIP also. How does that work, sir? Try to understand. I will just show what is this opening WIP, closing WIP adjustment. Concentrate. Units produced during the period. Units produced during the period. Let's say 10,000 units. Opening stock of WIP. That means that was not even raw material, not even finished goods, somewhere in between. Let's say 2,000 units were there. 2,000 units, material wise, 80% complete. Material wise, 80% complete. What do you mean by that? Already whatever one unit takes, of that 80% is already introduced in the previous period. That means to complete that, we will consume only 20%. Now, next one, closing WIP. Closing stock of WIP, let's say they are telling 4,000 units. Let's say they say 40% complete in terms of material. 40% complete in terms of material. That means now standard quantity 2 kgs per unit, or let's say 5 kgs per unit. 5 kgs per unit. Now my question is, standard quantity means standard for actual. Now how much is your actual output? Not 10,000, guys. Not 10,000. Then how much, sir? Try to understand this. 10,000 is what we have produced. Hello? 10,000 is what we have produced. Now, in this 10,000, 2,000 is out of opening WIP. 2,000 is out of opening WIP. I will take 2,000 units first. Remaining 8,000, of course, out of what we introduced during the period. Closing 4,000 although it is not consumed, still it took some material in it, no? Still it took some material in it, no, to the extent of 40%. Now listen, how to compute how much is the actual quantity of material consumed, or let's say standard quantity. First I will tell standard quantity, standard for actual output. Actual they will only give. You have to find out standard for actual. Listen, 2000 units, actually it should have consumed how much? 5 kgs. So standard is 10,000 kgs. Correct? No. But whatever is required of that 80% is already complete or no? Whatever is required of that 80% is already complete or no? That means during the period it will take remaining 20% of material. That's it. Not the full 100%. And few people will take 80% directly. No, 80% is already consumed in the previous period. Balance you should take, which is gonna be 2000 kgs. This 8000 units are completely introduced during the period. This will consume straight away 40,000 kgs. Whereas this 4000, I agree, introduced during the period. But is it already consumed all the material? No. It consumed only to the extent of 40% of material. Sir, you should take 60. No, sir. It's a closing stock. What do you mean by that? We introduced during the period. That means it was 0% complete when we introduced. But end of the day, it was 40% complete. That means we consumed 40% during the period. Then opening, why you took the difference, sir? It was already 80% complete. To complete it further, we consumed only 20%. So we are thinking of how much should be consumed during the period. So which is gonna be 8,000. Remaining 60 will be next year consumption. So 4,000, 520, 20 into 4, 8,000. Total standard is 50,000 kgs. Sir, that if you do 10,000 into 5 also you will get 50 only. No, sir. Why you told so much drama? Coincidence. All the question it won't match like this. Hope it's clear, guys. There are 2 illustrations based on this. Please go and check once. There are 2 illustrations. Last 2 or 3. There you will find these illustrations. Please go and check that once. Now, is this point clear about opening WIP and closing WIP, everyone? What if they say opening WIP, labor wise 80% complete, material wise 100% complete? Then opening consumed should consume 0 kgs of material during the period, because its material wise already completed. Just process is remaining. Closing, what if they say material wise 100% complete? That means full 100% is consumed during the period, to be consumed during the period. 0% means 0. Closing. Opening 0% means 100% is consumed during the period. But generally opening 0% won't be there. Why? If you are working on something, there should be some material, no? For example, if I ask you to do biryani, you can tell biryani is in WIP if some rice is gone, masala is gone, chicken is gone. 1 out of this is gone at least. No, it is in WIP. What is there in WIP, sir? Cooker. No. Then it's not a biryani, WIP at all. So to be in WIP, opening some material should be there. Got it, everyone? Any doubts here? Akka. So this is the treatment of your opening stock of WIP, etc. Now, closing stock means if it's generally material can't be 0. Because without material, you can't work on it at all. Closing stock also. You tell me, how can something be 0 in closing? If to be consumed as, considered as WIP, you should have started work on it, no? Till then it's raw material only, no? That means you haven't started working on it. That is the thing. Then it's not WIP at all. To start working, you should introduce bit of material at least. Now. Listen, they might say something called as standard loss. Standard loss is nothing but your Normal loss. Generally, when you give some input, what output you can expect? Generally, when you give some input, what output you can expect? That's what we call it as standard loss or normal loss. They might say something like this. There is a standard loss of 20% on input. If they don't say on input or output, it's always on input. Whereas A is, in this, A is 40%. B is 60%. What do you mean by that? As per standard, if at all you are going to give 100 kg of input, in that 20 kgs will be lost. Output will be 80 kgs. Understood? In the standard, if at all you give 100 kg of input, then 20% will be gone as a loss and 80 kgs will be output. Now to get this 80 kgs input, we have to give 100 kg, output, 100 kg input we should give, no? In that 100 kg, 40 kgs will be A, 60 kgs will be B. 40 kgs will be A, 60 kgs will be B. Is that clear, everyone? Hello, hello, hello. Now, let's say this is for standard, no? Let's say we produced 800 kgs. Actual output is how much? 800 kgs. That means now my standard quantity for A and B will be how much? A, B, standard quantity. A, try to understand for A. Guys, as per standard, if you give 40 kg of, or to get 80 kg of output, how much input you should give? 40. Now, actual output is 800. How much you should have given? 400. So, standard quantity for A is 400 kgs. Is that clear? Now, talking about B. Guys. As per standard, to get 80 kg of output, you should give 60 kg of B. Now, actual output is 800. You should have given how much? 600 kgs. 600 kgs. This is your standard quantity. Now, let's say actual quantity. You have consumed 450 kgs of A and around 700 or let's say 750 kgs of B. Sir, but you are supposed to consume 600. That's what we are checking, no, in standard costing. We didn't buy it at the price what we expected. That's what the price variance is. We didn't get it at, or we didn't use the quantity what we expected. That's what the quantity variance is. If at all we use exactly how much we should have used, if we bought exactly how much we should have bought, then will there be any variances? Of course, standard and actuals will not match. Now, this is your actual. Now, RSQ I told, no, RSQ, revised standard quantity. How to arrive at it? I told you it is actual quantity, 1200, right? 1200, no? Actual quantity in the standard ratio. What is the standard ratio? 40%, 60%. 1200 into 40%, 480. 1200 into 60%, 720. Got it? So, total of your actual quantity in the standard ratio, that's what your revised standard quantity is all about. That's what your revised standard quantity is all about. Is that clear, everyone? Any doubts? Pakka? Now, sir, but that 40%, 60%, if you are not okay with that, then what we can do? Simple. Take the total of SQ. 1000, 1000, no? Guys, when it was 1000, A was 400. Now it is 1200. Question mark. 1200 divided by 1000 into 400, you will get 480. 1200 divided by 1000 into 600, you will get 720. Either of the ways you can do, but make sure you take the correct numbers. Anyone, any doubts so far? No doubts. Next. So about AQ it's clear. About RSQ it's clear. Done. Now, when only one type of material is used, there won't be any mix variance. When only one type of material you are using, what mix you will do? Correct? No? There won't be any mix variance. Whatever your usage variance, that will be equal to yield variance. Method of valuation of inventory, if the question is silent, is FIFO. What do you mean by that? If at all opening stock of raw material, etc., they have given. As I already told you, AQ means actual quantity consumed, not actual quantity purchased. AQ means actual quantity consumed, not actual quantity purchased. So, actual quantity consumed, not actual quantity purchased. So, consumed you will find, no, in that our first assumption is whatever was there in opening, that was consumed first. Remaining was consumed in the later part. Whatever was there, that was consumed first. Remaining thing was consumed in the later part. I think in class we solved, no? The other day. That one ICI material question I told, no? Just I will show this question, okay? This is illustration for a ICI material question. See there, ABC Limited produces an article by lending two basic raw material. It operates a standard costing system and the following standards have been set for the raw material. Material A will be 40%, material B will be 60%. Standard loss in the process is 15%. What do you mean by that? If at all you give 100 kg as input, you will get 85 kg as output. So to get 85 kgs, 40% of that 100, 40 should be A, 60% of that 100, that is 60 should be B. So how to arrive at a standard quantity now? For 85 you need 40. Your actual output is 1700 question mark. 800 for A. And next one. To get 85, you have to introduce B 60. To get 1700, how much you should have introduced? 1200. And always remember, loss percentage on input and loss percentage on output won't be same. If at all they say 20% loss on output, then output you should take it as 100. Input you should take it as 120. For example, if at all they are told here, standard loss in process 15% on output, then here you should have taken output as 100, input as 115. That is to get 100, you should introduce 115. In that 115, 40% will be A, 60% will be B. So to get 100, you should introduce, let's say 106, 115, right? 115, 46, 115 into 40%, 46. So to get 100, you have to introduce 46. You have to get 1200, question mark. To get 100, you have to introduce 69, B. To get 1700, question mark. Like that you are going to do. Clear? That is difference between your loss on input and loss on output. Whatever on what basis they give, that you should take it as 100. Now listen. Position of the stock and purchase for the month of April is as under. A is there, B is there. Guys, they are telling opening stock 35, closing stock 5, purchases 800. Opening stock 35, closing stock 5, purchases 800, and you bought it at 3400. That means per kg you paid 4.25. Whereas next one, 40 was opening, 50 was closing, you bought 1200 at the rate of 3000. That means you bought per kg at 2.5. And opening stock is valued at standard price, they are telling. Moral of the story, although actual quantities out of opening and purchase, both don't have the same purchase price. Both has different purchase price. I mean standard actual price. Now listen. 35 was there. You bought 800. So total available was what? 835. In that 5 is still remaining in your stock means how much you have consumed? 830. Talking about B. Opening was how much? 40. You bought how much? 1200. So total available became 1240. In that still 50 is remaining with you means you consumed how much? 1190. Got it? So you can see here consumed are 830 and 1190. As I already told you, when the question is silent, we are going to apply FIFO. What do you mean by that? Out of this 830, first we will consume from opening. How much was there? 35 was there. I consumed 35 first. Remaining out of 830, remaining is 795. That is consumed out of purchases. That is the meaning of this. Understood? Going to this 1190. 1190, first 40 will be consumed out of opening stock. Remaining 1150 is consumed out of purchases. You know that actual price for opening stock they are telling equals to standard, whereas for the purchases we computed 4.25 and 2.5. Your RSQ is very simple. Only more than 2 standard is there, then only it will come. More than 2 standard is there, 2 or more standard is there. So 2020 in the ratio of 40 and 60. 808 for A, 1212 for B. Now wherever the actual price is involved, everywhere 2 lines will come like this. Material cost variance, standard 800 into 4. We should have incurred 3200. But actually how much we are incurring? Relating to 35 kgs, we are incurring at the rate of 4. Relating to 795, we are incurring at 4.25. Your actual is 3518.75. So adverse. Like this we will do. Price variance. Again 2 lines will come because actual prices are there. Whereas usage variance, all these variances only 2 lines. Reason being standard prices. There won't be any actual price involved in this. Is that clear everyone? No doubt. Great. That's all about your material. Not much. Questions of whatever is there in your material, please go through that once. Very important only. So please go through that once. However, past year paper questions we will see. Okay. You don't have to worry about it. In management accounting also we'll see. In cost accounting also we'll see. Right. So that is your material cost variances. Come on guys. Material cost variance is standard cost minus actual cost. Standard cost is standard quantity into standard price. Actual cost is actual quantity into actual price. That will be due to 2 reasons. Price variance, usage variance. Price variance is standard price minus actual price into actual quantity. Usage is standard quantity minus actual quantity into standard price. Standard price. Now usage variance could be divided into yield, mix. Yield is standard quantity minus revised standard quantity into standard price. Mix is revised standard quantity minus actual quantity into standard price. SAP, SASU, Rasam, seriously are the 4 things you have to remember. With that, we have completed our discussion on material cost variances. Now we'll be jumping to labor cost variance. However, so far in ICMA Institute, they never check that, but you never know when they are going to check it. So listen, If you go to our YouTube, you will find, I think in ArivuPro main channel, we have uploaded that. Wait, I will show that one question. Whenever you are having time, just go through that. I will show it. So if you go to YouTube and search, what title we have given? I think baddie. Not Rastrith is not baddie. This one. One question is there on material cost variance. Please go and watch it. Okay, if time permits, because these are missing figure questions. They haven't given full information. They are given only few information. Using that few information, you have to compute full requirement. That's what this question is all about. Just go through. Okay. That is your material cost variances. Hope it's clear, everyone. Now shall we go to the labor cost variances? Yes. Give me 1 minute. Okay. Labor cost variance. Again, guys, cost variance is very simple. Standard cost minus actual cost. Standard cost means standard hours into standard rate minus actual hours paid into actual rate. Whatever you are actually incurring the cost, that one. I repeat again, standard cost means standard hours into standard rate. Actual cost means actual hours paid into actual rate. Is that clear? By the way, standard hours means standard hours for actual output. Standard hours means standard hours for actual output. Is that clear? Your standard hours includes your normal idle time. Please keep in mind. For example, if the standard time for this marathon, let's say content only I should give is 20 hours. Then standard hour they can't keep it as 20. Standard hours they should keep it as 24. Why 24, sir? 20 hours can I teach continuously? We need break, no? Is it normal or abnormal? Normal. Taking break once in 2 hours is absolutely normal. So it's a normal idle time. So they can't tell me standard Rastrith sir complete in 20 hours. Then Rastrith sir will be completed in 20 hours. So they have to allow me 24 hours. Getting it? So always remember your standard hours will already inclusive of normal idle time. Okay, normal idle time. So guys, standard cost minus actual cost will give you labor cost variance. Now the reasons for the variance could be 3. If the question is talking about idle time, 3. If the question is not talking about idle time, 2. What are those 3, sir? 1. You are paying either more or less than what you expected to pay. Who will be held responsible? HR. Because they are the one who is going to negotiate. 2. Idle time. Here idle time means we are discussing about abnormal idle time. Because normal idle time is already adjusted in the standard hours. So idle time. Third one is your efficiency. You are working slower or faster than expected. Got it? So who will be held responsible for idle time and efficiency, sir? Production manager. Because they are not working. You saw them not working. You should have made them work. Correct, no? Efficiency. You saw them working slow. You should have made them work faster. And here, standard may more than 2 or more type of labor is there. Then you can divide further into yield and mix. Yield is also known as sub-usage. Mix is also known as gang. Mix is also known as gang. Got it? Now, rate variance is very simple. How much I should have paid? Standard rate. How much I have paid? Actual rate. For the actual hours paid. Just like your price variance only. Standard rate minus actual rate into actual hours paid. If the standard rate is more, favorable. If the actual rate is more, adverse. Got it? Next is idle time variance. Idle time means abnormal idle time. What is that abnormal idle time? Sir, what do you mean by idle time? You paid for it, they are not working. So actual hours paid minus actual hours work, the difference is there. No, that we call it as idle time. I repeat again, actual hours paid minus actual hours worked is idle time. So idle time into, we are thinking of production manager. Production manager will not be okay with actual rate. It's always standard rate. So difference between actual hours paid and actual hours worked is idle time. Idle time into standard rate will give you idle time variance. And always remember guys, idle time variance can never be favorable. It's always, why? Because it's idle time. You are paying, they are not working. When or what on earth makes people think that you are paying for them and not working is favorable? Correct? No, it's always adverse. For example, CSK and MSD. Paid but working or not working? Not working. Is that idle time? Idle time. But is it adverse or favorable? Clearly favorable. CSK fans will know this. Dhoni fans won't be knowing, but CSK fans knows that. If he plays, adverse. So, always remember, idle time is always adverse, except in case of comment section. What they will put? Instagram ID I will only tell CA_Rastrith. They will come and tell what? Bully me like what? Okay, RCB they will say. What RCB they will say? 49 they will say. I will say 2 years. They will say 5 cup. I will say 2 years. Okay. I mean favorable because one not playing, so no one is there to play slow. One more reason is, although he is not playing, he is making sure the ticket sales are happening. Every time he goes to practice session, so automatically that people think that he is going to play this match, this match, this match. Only real fans know that unofficially he is retired, but still can't help. Now listen. Your efficiency variance is, you should have completed your work in standard hours, but you are completing it in actual hours. So if at all you complete it in a faster way, that means if your actual hours are lesser than standard hours, favorable. If you complete it by taking more than standard hours, it is adverse. So efficiency variance is standard hours minus actual hours worked, because see, if you take this, standard hours, or let me say actual hours worked, standard hours, or I will take standard hours, standard hours and actual hours paid. Guys, or I will take something like this. Standard hours, actual hours worked, actual hours paid. Now, that's okay, eat. Actual hours worked and actual hours paid is there. No, this we have already addressed in our idle time variance. That means you don't have to address it again. This we have already addressed in our cost variance. Correct? No, Now this we have to address in efficiency variance. Got it? That's why efficiency variance is your standard hours minus actual hours work, not actual hours paid. Please keep in mind. So if at all you work for more number of hours than the required, adverse. If you work for less number of hours than the required, favorable. Got it? Now your efficiency variance could be divided into yield variance, mix variance. Yield variance is due to quality. That is standard hours minus revised standard hours into standard rate. By the way, revised standard hours is nothing but your actual hours worked in the standard ratio. Actual hours worked in the standard ratio. Whereas your mix variance is revised standard hours minus actual hours worked into standard rate. Revised standard hours minus actual hours worked into standard rate. Generally, labor variances, they would ask in the MCQ. Labor and material, generally they might ask in MCQ if it's a management accounting. If it's cost accounting, of course they will ask in the like descriptive also. But management accounting, generally they will ask in MCQ. How they will ask? They will give one or the other variance and they will ask what is actual quantity, what is standard quantity, what is standard price, what is actual price, like that. So mix variance is revised standard hours minus actual hours work into standard rate. Revised standard hours minus actual hours worked into standard rate. Few notes you have to remember, guys. Standard hours means standard hours for actual output. Here opening stock, closing stock, all those drama is not there. Idle time refers to abnormal idle time, as normal idle time is already included in the standard hours. Idle time variance is always and always and always adverse. Yield variance and mix variance is also known as sub-usage as well as gang variance. And always remember the difference, know the difference between these two. Rastrith worked for 20 hours. Rastrith completed work of 20 hours. Is it same? I repeat again. Rastrith worked for 20 hours. Rastrith completed work of 20 hours. Is it same? No. Rastrith worked for 20 hours means my actual hours worked is 20. Rastrith completed work of 20 hours means I have completed the work which would have taken 20 hours. So I would have taken more than 20, less than 20. That means the 20 is a standard hours for the actual hours output. Got it? So know the difference between standard hours as well as actual hours. Actual hours work and we have completed work of so many hours. Both are not same. Generally, if they give like that, so many hours of work is done. Then, for example, in that costing, one last illustration is there on labor. In that they said skilled worker, unskilled worker, semi-skilled worker, 32 employees, 58 employees, 22 employees, something like that. These are the standards. In 42 hours week, these many things are done. Like that they will tell. Now, and they said, we have completed work of 1800 hours. Standard hours of work completed or something they use the term. That means whatever the work you have done, for that standard hours are how much? 1800. Now that 1800 to be divided in what ratio, sir? Standard number of employees they had given, no? Skilled we need 30, semi-skilled we need 50, unskilled we need 20. In that ratio you should divide. Okay? Please mark it as to be referred is that illustration. Last illustration in your costing. So if question says work of X number of hours done, then X is equal to standard hours for actual output. And RSH is total of actual hours worked, okay, not actual hours paid, actual hours worked in the standard hours ratio. If abnormal idle time information is not given, then your labor cost variance is just efficiency variance plus rate variance. Efficiency variance plus rate variance. Is that clear, everyone? And sometimes what happens, you know, they will give only one type of worker. Standard hours, they will give only one type of worker. But actual hours wise, they will tell three type of worker. earning different amount. Now, how to find out RSH? Always remember, RSH will come into picture only and only if there is more than one standard hours. Because actual hours worked in the standard ratio, no? When the standard ratio has only one type of worker, there won't be any mixed variance. Mixed variance will be 0. Please keep in mind. Your usage variance only will be your yield variance. All those things you have to keep in mind. I mean, yield variance will be equal to usage variance only. Mixed variance won't be there. If only one type of worker is there, there won't be any mixed variance. Actually, you might bring 10 type of workers. No one cares. You might bring 10 type of worker, but as per standard, it was supposed to be one worker, one rate. No. That is the thing. And one more thing. Listen, if they say group of workers working together, a department has 100 workers. Department has 100 workers. When the department works for 1 hour, they can produce 25 units. They can produce 25 units. Now, actually we produced 250 units. Actually we produced 250 units. Can you tell me the standard hours for this? For producing 25 units, you need 1 hour. For producing 250, question mark, 10 hours. Correct? No? Wrong. What did I say? Is each and every individual producing 25 units? All 100 workers together, if they work for 1 hour, that means how many labor hours it is? 100 labor hours. If all the individual work together for 1 hour, that means they have completed work of 100 workers. For example, one student can write 2 pages. Now, I have 100 students in my class. If all of them writes for 1 hour continuously, how many pages will be there with me? 200 pages. Because one student can write 2 pages in 1 hour. 100 students wrote 200 pages. That means my one student would have taken 100 hours to write these 200 pages. Where 100 students in just 1 hour they have written. That means always remember, for the department of 100 workers, the labor hour is 100 hours. That means you should take in 1 hour you are completing 100 hours of work. So to produce 25 units, labor hour required is not 1 hour. Labor hour required is 100. Now you are producing 250, question mark. Got it? Hello? So if at all in a department where instead of 100 only 80 workers are there and they are working for 40 hours, then what is the actual hours worked? Not 40. 80 workers working for 40. 3,200 hours. Something like this you have to take. Please keep all these things in mind. Whatever is there in material, that is more than sufficient. Whatever is there in material, that is more than sufficient. Got it? Got it? Okay. Which one? Yeah, that I will. So labor cost variance, can you tell me the formula? Standard cost minus actual cost. Standard cost is standard hours into standard rate. Actual cost is actual hours paid into actual rate. That could be divided into rate variance, efficiency variance, idle time variance. Rate variance is standard rate minus actual rate into actual hours paid. And idle time variance is actual hours paid minus actual hours worked into standard rate, always adverse. Efficiency is standard hours minus actual hours into standard rate, actual hours worked into standard rate. Your efficiency variance could be divided into mix and yield. That is Yield is standard hours minus revised standard hours into standard rate. Mix is revised standard hours minus actual hours worked into standard rate. Got it? And also remember, if at all idle time information is not given, then your actual hours worked and actual hours paid will be same. No difference. Got it? That's it about your labor variances. Labor cost variances. Hope it is clear, everyone. Yeah. So there won't be any idle time variance as such. Hope it's clear, everyone. Great. With that, we have completed our material and labor. Okay. Overhead variances. Guys, now we will be discussing overhead variances. Overhead variance could be relating to variable or fixed. Overhead can be variable or fixed. But always remember, any overhead variance it is. Overhead cost variance is very simple. Your under absorption or over absorption, that itself we call it as variance. Overhead variance. Either under absorption or over absorption, that only we call it as variances. Under absorption means, what is it? You incurred more but you recovered less. Is it favorable or adverse? Adverse. Over absorption means you have incurred more, recovered less. So it is favorable. You have incurred more, recovered less, that is absorbed less. That we call it as under absorption. It is adverse. You have incurred, you incurred more, you incurred less, you recovered more, absorbed more. That is over absorption. Favorable. So actual overhead, anyhow they will only give. You don't have to worry about it. But absorbed overhead, guys, you have to check whether you are absorbing it on the unit basis or on the basis of hours. If you are absorbing it on hourly basis, then absorption will be standard hours for actual output into standard rate. Standard rate means your absorption rate. How do we arrive at absorption rate? I told now while telling ABC. We'll take the total budgeted overhead divided by budgeted hours. Budgeted overhead divided by budgeted hours will give you standard rate, absorption rate. That we are going to multiply with standard hours for actual output. However, if at all you are absorbing it on the basis of units, you will absorb it on actual output. That is actual output into standard rate. Why, sir? Because if at all you take the actual hours, guys, then your efficiency also will get adjusted here. Because you wouldn't have worked at the speed you should have worked, no. That means your efficiency also will get adjusted here. So to make sure that is not going to happen, your hourly basis may the absorption will be done on standard hours basis. So how to arrive at absorbed overhead in case of hours? Standard hours for actual output into standard rate. In case of units, actual output into standard rate. How do you arrive at a standard rate, guys? Budgeted overhead divided by budgeted output. Budgeted overhead divided by budgeted output. In case of standard rate per unit. If you want standard rate per hour, it would be budgeted overhead divided by budgeted hours. Budgeted overhead divided by budgeted hours. Is that clear, everyone? Now going to your variable overhead. Variable overhead cost variance, as I already told you, any cost variance it is. Always remember, any cost variance, it is always actual overhead minus absorbed overhead, or you can say absorbed overhead minus actual overhead. You can say it as absorbed overhead minus actual overhead also. If the absorbed overhead is more favorable, actual overhead is more adverse because you have under absorbed. How do you arrive at absorbed overhead? Actual output into standard rate or standard hours for actual output into standard rate. Here variable overhead variances could be two. One is expenditure variance, one more is efficiency variance. This is just like your labor variance, because nature is also like that only, no? Variable means labor also, you produce more, you will incur more. You produce less, you will incur less. Variable overhead is also same. You work more, you will incur more. You work less, you will incur less. So, first one is expenditure variance. Hours basis. Standard rate is what you should have incurred. Absorption rate is what you should have incurred. But actual rate is you incurred something more or less. So, standard rate minus actual rate into actual hours. Sir, paid or worked, sir? Worked. In overheads, there won't be anything called as paid. So, standard rate minus actual rate into actual hours will give you variable overhead expenditure variance, just like your labor rate variance. Next one is efficiency variance, that is standard hours minus actual hours into standard rate. That is, you should have completed the work in standard hours, you have taken actual hours. Remember guys, either it's labor efficiency variance, variable overhead efficiency variance, fixed overhead efficiency variance, it's always standard minus actual. It's always standard minus actual. Is that clear? Hello? Variable? All the three places. Not only there, anywhere, wherever efficiency comes, it's always standard and actual. Is that clear, everyone? Now, unit basis. If you want expenditure variance, how much we thought of recovering? Guys, we thought of incurring standard rate on standard output. Standard rate on standard output. Whereas, actually we incurred actual overhead. Now, how do you arrive at standard output? Guys, standard output is, if at all you worked at 100% efficiency, how many units you should have produced? For example, let's say 10,000 hours you have taken. Your actual hours is how much? 10,000 hours. And you produced 4,800 units. So your actual output is how much? 4,800. Standard hours per unit is, let's say 2 hours. Standard hours per unit is 2 hours. Now remember this. Standard output means at 100% efficiency, how many units I should have produced. That is, in the 10,000 hours per unit, if I had taken 2 hours, if at all I worked at 100% efficiency, I should have taken 2 hours, no? How many units I should have produced? 5,000 units. But how many units you have produced? 4,800. Got it? So, you should have produced 5,000 units. This is your standard output. So, how to arrive at a expenditure variance in terms of amount, guys? Standard output into standard rate minus actual overhead what we incurred. Standard output into standard rate minus actual output actual overhead what we incurred. Expenditure variance in terms of units. Whereas efficiency variance, guys, very simple. In terms of hours, how many hours I should have taken and how many hours I have taken. Standard hours minus actual hours. In terms of units, guys, how many units I should have produced. In that 5,000, in the 10,000 hours, how many units I should have produced? 5,000 units. But how many units I have produced? Are you more efficient, less efficient? Less efficient. Why? You should have produced 5,000, but you are able to produce only 4,800. You are working slow. What was 5,000 by the way? Standard output. What was 4,800? Actual output. So difference between your actual output and standard output multiplied with standard rate will give you. And standard rate per hour as well as standard rate per unit won't be same. Please keep in mind. Here, for example, if your budgeted overhead was 20,000, hours wise, you would have taken 10,000 hours. That means 2 rupees per hour. Unit wise, you should have taken 20,000 by 5. 4 rupees per unit. Please keep in mind. Is that clear? By the way, remember this also. Standard hours per unit. into budgeted output. If I do, I will get budgeted overhead. Why, sir? Guys, what is budgeted overhead divided by budgeted output? Standard rate, no? Now, how much ever the time you, sorry, not budgeted overhead, you will get budgeted hours. So budgeted hours divided by budgeted output if you do, sorry, budgeted hours divided by standard hours per unit if you do, you will get the budgeted output. Got it?
Standard rate minus actual rate is what, sir?
Expenditure variance into actual hours. In terms of hours, into actual hours. This is for units. So that's it. Not much thing. This is your variable overhead variances. Hope it's clear, everyone. So variable overhead variances, variable overhead cost variances, absorbed minus actual. Absorbed is. Yesterday I said no. In that it's there same. Want to write what? Okay. Take it down. Absorbed. Where were we? Absorbed minus actual. Absorbed is budgeted overhead divided by budgeted hours. Very simple. Absorbed overhead, if you want it in the hourly basis, standard hours per actual output multiplied with standard rate. If you want in unit basis, actual output into standard rate minus actual overhead. That could be due to expenditure variance, efficiency variance. Expenditure is standard rate minus actual rate into actual hours, and your efficiency is standard hours minus actual hours into standard rate. Generally, it is always advised to go for hours wherever it's possible. Wherever it's not available information, then only go for unit basis. Okay, that is the thing. So
Generally, they will not ask you.
generally unit mein they don't ask. Take. So standard output means standard units. I mean for actual time taken. That is how many units you should have produced at 100% efficiency in the taken time. Got it? Now we are going for fixed overhead variances, where many students will get confused in this, which is in fact rubbish, easiest topic. Easiest topic. What do you call it as in Tamil? Like in Kannada we call it as apashakuna. Like that you did now by leaving calculator. Now, yeah, whatever. Now listen, guys. Your fixed overhead, you should always remember one thing. It is a fixed overhead. What do you mean by that? It won't change along with the output. And tell me one thing, from the fixed overhead point of view, if you work for more hours, is it better? Or if you work for less hours, is it better? More hours, it's better. For example, if we take class in this building for 24 hours, it's better. Or if we take class for 10 hours, it's better. 24 hours. Why? Rent will increase, No. But revenue will increase. Rent won't increase, but will revenue increase? Absolutely yes. You're getting it. So please remember that point in mind. From fixed overhead point of view, if you work more and more, better it is. Hope it's clear. Now, proceeding. Listen how it works. And your actual overhead, will it change along with the units? Will your budgeted overhead change along with the units? No. Now let's say your actual overhead is rupees 10 lakh. Your actual overhead is rupees 10 lakh. Or wait, I will take that example and I will show here only. Okay. Few times they will give calendar information, few times they don't give calendar information. Based on that, I will be explaining. First, let's say they haven't given you calendar information. They haven't given you calendar information. First, they have given few information here. Concentrate. Budgeted overhead they are telling 15 lakhs, sorry. Units produced they are telling 7,500 budgeted units to be produced, and 2 hours is the standard time. I told you one thing, budgeted output into standard hours per unit. If you do, what you will get? Budgeted hours. How much is the budgeted hours? 15,000 hours. Budgeted hours are 15,000 hours. By the way, if I do budgeted overhead divided by budgeted hours, what do I get? Standard rate. So 15 lakh divided by 15,000, standard rate is 100 per hour, not per unit, 100 per hour. Whereas actually we incurred 15 lakh 60,000. Actually you produced 7,800. You have taken 16,000 hours. Guys, how much will be the standard hours? Standard hours means always standard for actual. Actual, how much you produced? 7,800. As per standard, you should have taken how many hours per unit? So what is your standard hours? So you should have taken 15,600 hours for the actual output, where you have taken 16,000 hours. First one, fixed overhead, cost variance. I told you cost variance. Your absorbed overhead minus actual overhead. Actual overhead is how much? 15 lakh 60,000. Absorbed overhead is what? On hours basis. Standard hours for actual output into standard rate. Standard hours for actual output is how much? 15,600. Just now we computed. Into rupees 100. 15 lakh 60,000. Moral of the story. Your actual overhead is 15 lakh 60,000. Your absorbed overhead is 15 lakh 60,000. So your cost variance will be nil. Your cost variance will be nil. Got it? Now listen. If at all any cost variance is there, how to check? For what reason it is? What could be the reason there? Listen. Guys, let's say your actual overhead is somewhere here. Your budgeted overhead is somewhere here. Your absorbed overhead is somewhere here. Concentrate. Guys, difference between your absorbed overhead and actual overhead is what? Or let me take actual overhead here. Actual overhead somewhere here. Budgeted overhead. Guys, difference between your actual overhead and absorbed overhead is what? Just now we have discussed. Cost variance. Correct, no? Correct, no? So this is your cost variance. This could be due to two reasons, guys. Reason number one, you might have incurred more or less than what you estimated. What you estimated is your budgeted overhead, no? Sir, but in variable you didn't tell this. In variable, that more or less concept only it won't come. Because if you consume more, you will incur more. If you consume less, you will incur less. Got it? So remember, either reason number one is you have incurred more or less than what you estimated. Reason number two is you haven't absorbed how much you thought of absorbing. Reason number one is you have incurred more or less than what you should have. Second one is you have absorbed more or less than what you should have absorbed. Now cost variance is clear. Absorbed overhead minus actual overhead. Guys, next is about incurrence. Next is about incurrence. You thought of incurring how much overhead? Can I say it as budgeted overhead? What you thought of incurring is your budgeted overhead. Yes or no? What you have incurred is your actual overhead. This is relating to incurrence of expense now. So we call it as expenditure variance. We call it as what, guys? Expenditure variance. So what you planned of incurring, budgeted overhead. What you have incurred, actual overhead. That we call it as expenditure variance. So standard rate minus actual rate, all those drama is not required, not required. Why? Here, actual hours work has nothing to do with the fixed overhead. You work, you don't work, you have to pay. So here expenditures won't change along with the level of activity. So straight away. Is this clear? Now, you thought of recovering how much, guys? You thought of recovering budgeted overhead. Hello. You thought of recovering budgeted overhead. But you recovered how much? Absorbed overhead. You thought of absorbing budgeted overhead. Because your absorption rate is computed on what basis? Budgeted overhead basis. But you absorbed how much? Absorbed amount. Now, this difference we call it as volume variance. Because you are absorbing less or more. You are absorbing less or more. What is the reason? Reason is you produced less or more. If you produced more units, then you would have recovered more. If you produce less units, you would have recovered less. Is this point clear, everyone? Hello. Produced more means you recovered more. If you produce less means you recovered less. That means it's all about production. Got it? So, know this, guys. Difference between your absorbed overhead and actual overhead, we call it as cost variance. How much you have incurred, how much you have absorbed. If you have absorbed less, adverse. If you have absorbed more, favorable. And that will be due to two reasons. One, either you incurred more or less than what you planned. One more is you produced more or less than what you planned. By the way, this one is very clear here. Cost variance, I can write formula straight away. Cost variance, absorbed overhead minus actual overhead. Then that could be divided into expenditure and volume. Correct? No. In case of variable, it is expenditure and efficiency. Here it is expenditure and volume. Expenditure is also very clear. Difference between your budgeted overhead and actual overhead. Difference between your budgeted overhead and actual overhead. Now, my question is, when it is favorable, when it is adverse? Expenditure. You have incurred more than budgeted. Adverse or favorable? Adverse. If actual overhead is more than budgeted overhead, adverse. If budgeted overhead is more than actual overhead, favorable. Is that clear? Now, next one I told. Volume variance. What is volume variance? How much you have absorbed minus how much you thought of absorbing. How much you have absorbed minus how much you thought of absorbing. By the way, how much you have absorbed, how do we compute that? Standard hours into standard rate. Correct? No? Absorption of overhead on the hourly basis, standard hours into standard rate. On the unit basis, actual output into standard rate. Correct? No? Minus budgeted overhead. How did we arrive, guys? Can I write it as budgeted hours into standard rate? How, sir? Budgeted overhead divided by budgeted hours was what? Standard rate. Now can I write it as budgeted overhead is equal to standard rate into budgeted hours? That only I have written there. Got it? So if you want to simplify and write it, you can write it as standard hours minus budgeted hours into standard rate. That is, from how many hours you should have absorbed and from how many hours you are actually absorbing. From how many hours you should have absorbed, from how many hours you are actually absorbing. Tell me when it is favorable, when it is adverse. If the absorbed overhead is more than budgeted overhead, favorable, because you are recovering more than what you planned. Whereas your absorbed overhead is less than budgeted hours, adverse. That means if the standard hours are greater than budgeted hours, favorable, because you are absorbing more. If the budgeted hours are greater than standard hours, adverse. Got everyone? Any doubts? Pakka? Great. Now, guys, you produced either more or you produced either less. What is the reason? What could be the reason? Reason for this volume variance could be two. One is you worked slower or faster than what you expected. That is efficiency. Second one, you didn't utilize or you overutilized the capacity what you allotted. Either one, you worked less efficient or more efficient. One more is you have underutilized or overutilized our capacity. Now, efficiency. What is it? Standard hours minus actual hours into standard rate. Standard hours minus actual hours into standard rate. In how many hours you should have completed the work and how many hours you have taken actually. Capacity variance, guys. How many hours you have actually worked? How many hours we were expecting you to work? We were expecting you to work for budgeted hours, but you have worked for actual hours into standard rate. Now my question is, in this question though it's very simple. If the standard hours are greater than actual hours, you have worked faster, favorable. If actual hours are greater than standard, you have worked slower, adverse. Correct? No? But what about capacity? More you work, better it is. For example, let's say ArivuPro people, assume pay me 50,000 rupees. Now they say, sir, in a month you have to take class of 200 hours. Now for the same 50,000 rupees, if I take a class of 190 hours, is it better for them or not better for them? Not better, because they are paying equivalent to 200 hours. I am working only for, but if I work for 220 hours, will they have to pay me something more than 50,000? No, fixed overhead it is. But are they getting work done? Is it good or bad? Good. So always remember, if actual hours are greater than budgeted hours, favorable. If the budgeted hours are greater than actual hours, adverse. Always remember, while writing conclusion, you should be very careful. While writing conclusion, you should be very careful. Is this point clear, everyone? Simple only, no? What you guys told? Difficult. Your head. Simple only, no? So, listen here. One more time I will write on hourly basis. Just concentrate. There could be absorbed overhead. There could be actual overhead. There could be budgeted overhead. Correct? No? Your absorbed overhead minus actual overhead. Your absorbed overhead minus actual overhead, that itself is your cost variance. How did you arrive at the absorbed overhead? Standard hours into standard rate minus actual overhead, they will only give how much you have incurred. Is that clear? Now, that could be due to two reasons. One, you have produced more or less than what you estimated. One more, you have incurred more or less than what we have estimated. So first let's go for our more or less than what we expected, incurred. That we call it as expenditure variance. That we call it as expenditure variance. How much we had estimated, budgeted overhead. How much we have actually incurred, actual overhead. How much we have estimated, budgeted overhead. How much we actually incurred, actual overhead. That is your expenditure variance. Is that clear? Next one is you have under recovered or over recovered due to the production. That means we are talking about volume variance. We are talking about volume variance. Volume variance is all about, boss, how much you should have absorbed. That is your absorbed overhead. Minus how much you have absorbed. That is absorbed overhead. Minus how much you should have absorbed. We thought of absorbing budgeted overhead. That's how we computed budgeted rate, standard rate, everything. Correct now? Okay. By the way, absorbed overhead, if you divide and write, how to arrive at it? Standard hours into standard rate minus budgeted overhead is budgeted hour into standard rate. So you can simply write it as standard hours minus budgeted hours into standard. Standard hours minus budgeted hours into standard rate. Simple now. Now that volume variance could be due to two reasons. One is you are not working in that speed what we are expecting you to work. Efficiency variance. One more is you are not utilizing the full capacity what we have asked you to utilize, or you are utilizing more. It could be other way around also. So efficiency is you should have completed work in standard hours, but you have taken actual hours into standard rate. If at all your actual hours are less, favorable. If your actual hours are more, adverse. Capacity is you should have completed work of budgeted hours, but you have working for actual hours into standard rate. Either you are under utilizing your capacity or you are over utilizing your capacity. Either you are underutilizing or you are over utilizing. Is that clear? Now listen, everyone. I don't think so. Cost variance should be the problem. Absorbed overhead minus actual overhead. I don't think so. Expenditure variance should be the problem. Budgeted overhead minus actual overhead. If at all you get confused, it should be volume, efficiency, capacity. Volume, efficiency, capacity. Now let's say Madhu, do you have dogs in your house? Let's say she has dog in her house. Okay, she has a dog in her house. Madhu has dog in her house. She loves the dog. Full love. Okay. Now, let's say dog's name is Paw. We'll keep it as Pra. Something like this. Now, let's say the dog loves to see the sea, beach. Dog loves to see the sea. So, she want to take dog to the sea, to see the sea. So, do you know to drive four-wheeler, madam? You know to drive four-wheeler. How good driver you are? Let's say Chennai to Goa. Can you go? No. So, but you want to go now. Can you take the dog in bus? No. I mean, if it's really dog, no. Pet is not allowed. Then how can you go? Cab. What you will pick it and go? So she booked the cab. What she booked, guys? Cab. Why she booked the cab? To go and see the sea. To go and see the sea. And after the trip, dog fell ill. Dog is not feeling good. So dog she has to take to hospital. If it's a human, she will take to doctor who has done MBBS. But is it a human? No, it's a dog. Pra is a dog. Now, this dog she has to take to the doctor. Which doctor? Veterinary doctor. Awesome. What is the degree done by that veterinary doctor? BVS. Bachelor's in Veterinary Science. Bachelor in Veterinary Science. Now listen, guys. Cab is there, no? C for capacity. Capacity variance. Capacity variance is nothing but your actual hours minus budgeted hours into standard rate. Got it? Whereas C is there, no? E for efficiency. E for efficiency variance. S for standard hours. A for actual hours into standard rate. By the way, in BVS, V stands for volume variance. V stands for volume variance. B for budgeted hours. S for standard hours into standard rate. Got it? So, come again, guys. Your fixed overhead cost variance is absorbed overhead minus actual overhead. Absorbed overhead is standard hours into standard rate. Standard hours into standard rate. Whereas actual overhead they will only give. That could be divided into expenditure variance, volume variance. Expenditure variance is how much you thought of incurring budgeted overhead, how much you have incurred actual overhead. How much you thought of incurring budgeted overhead, how much you have actually incurred, that is actual overhead. Difference between your budgeted overhead and actual overhead is your expenditure variance. One more reason is your volume variance. How much you thought of recovering absorbed overhead, budgeted overhead, how much you have actually recovered absorbed overhead. So absorbed overhead minus budgeted overhead, that is nothing but standard hours minus budgeted hours into standard rate will give you volume variance. Reasons could be two. Efficiency, capacity. Efficiency is standard hours minus actual hours into standard rate. Capacity is actual hours minus budgeted hours into standard rate. Got it. Got it. Now, look at this question what we are discussing. We got to know that cost variance is nil. What about expenditure variance? You estimated to incur 15 lakhs. You incurred 15 lakhs 60,000. That means 60,000 you have incurred more. Favorable, adverse. Incurred. Adverse. Because you spent 60,000 more on the cost. 60,000 adverse is your expenditure variance. Next is volume variance. That is the difference between your absorbed overhead and budgeted overhead. Budgeted overhead is 15 lakh. Absorbed overhead is how much? 15 lakh 60,000. How, sir? Standard hours per actual output into standard rate. 15,600 into 100. 15 lakh 60,000. That means 60,000 you have absorbed more. Favorable, adverse? Favorable, because you over recovered. So 60,000 favorable. Reason could be two. Efficiency, capacity. Efficiency is in how many hours the work you should have completed. 15,600. But you have taken how much? 16,000. That means 400 hours you have taken more. Favorable, adverse? Adverse. 400 into 100. 40,000 adverse. Got it? Next one is your capacity. Capacity is basically how many hours you are expecting to work. You are expecting you to work for 15,000 hours, but you actually work for 16,000 hours. That means you are overutilizing your capacity, underutilizing your capacity. Overutilizing your capacity by 1,000 hours. So 1,000 into 100, 10,000. Favorable or adverse? Favorable, because you are, sorry, 1 lakh, no, 10,000 into, sorry, 1,000 into 100, 10,000, 1 lakh. So 1 lakh favorable. That is your capacity variance. Simple, no? Then why you are giving so much respect to this? Huh? Formula also easy only, no? Now it is easy. When you sit on your own. Now, guys, on the basis of when they give the calendar information, then what we should do? Shall we see? Listen. When the calendar information is given, your fixed overhead cost variance is not going to change. Just because calendar information is given, fixed overhead cost variance is not going to change. It will be absorbed overhead minus actual overhead only. Correct? No? Cost variance is absorbed minus actual only. Whereas your fixed overhead variance could be divided into expenditure and volume. Expenditure also not going to change. Budgeted overhead minus actual overhead. Whereas your volume variance is also not going to change. Fixed overhead volume variance, that is absorbed overhead minus budgeted overhead. See, these three formulas according to me should not be the problem if you know this. If you are able to draw this, this should not be the problem. Volume, that's what, these three together. Cost, volume, expenditure. And if you know Madhu and dog's love story, then that other three also should not be the problem. This also you take, no? Take, madam. Wait, let me make. Which one? This one. Done. Which one? Story. Because of me, what will I? Fixed overhead, volume variance. Guys, listen. As per our old formula, fixed overhead volume variance was divided into two. Efficiency, capacity. But here, guys, you are producing more or less due to three reasons. Reason number one is efficiency. Reason number two is capacity. Reason number three is calendar, due to change in the days. So, what are the formulas, sir? Fixed overhead, efficiency variance. As I already told you, either labor, variable, fixed, whatever nonsense it is, always efficiency variance is standard hours minus actual hours into standard rate. Standard hours minus actual hours into standard rate. Next, this is important. Fixed overhead, capacity variance. You are working for actual hours, I agree. But now the days what you planned, so many days you are not working. You are working for either lesser days or more number of days. Either you are working for lesser number of days or more number of days. So for you, comparison purpose, I am not going to give you budgeted hours now. I am going to give you revised budgeted hours. I am not going to give you budgeted hours. I am going to give you revised budgeted hours. Sir, how to arrive at a revised budgeted hours? Listen. Let's say we plan to work for 2,600 hours. When in a normal month we are working for 26 days. In a normal month we are working for 26 days. Now, let's say due to some abnormal reasons, we are able to work only for 25 days. That means 2600 I planned for 26 days, but I am working for 25 days, which is gonna be 2500 hours. This is your revised budgeted hours. That is budgeted hours for the budgeted days multiplied with revised budgeted days. Got it? Now, next one, what did I say? Fixed overhead, calendar variance. Fixed overhead calendar variance is very simple, guys. How much I thought of working now minus how much I have worked into standard. Got it? How many hours you thought of working as per the earlier? So in 26 days you thought of working 2600. Now you are able to work only for 25 days. For 25 question mark. That means 2600 by 26 into 25. Is that clear? So listen here. Volume variance is what, guys? Volume variance, what did I say? Difference between your standard hours and budgeted hours. Difference between your standard hours and budgeted hours. Somewhere in between, actual hours will fall. Somewhere in between, actual hours will fall. Somewhere in between, revised budget hours will fall. Now, guys, difference between your standard hours and budget hours is your volume variance. Difference between your standard hours and budget hours is your volume variance. Whereas difference between your standard hours and actual hours is your efficiency variance. Difference between your actual hours and revised budgeted hours is your capacity now. Capacity. Difference between your revised budgeted and budgeted hours is your calendar. Simple, no? Anyone any doubt in this? Any doubts? Paka? Simple. Hope now you remember the formulas. Yes? If you don't remember the formula, at least try to remember these many things, guys. Listen. At least 3-4. See, always remember one thing. One more mistake what students do. They will ask for 7 marks. In that 1 or 2 formula you might not be knowing. Other formulas easily you know. For example, expenditure formula. Whatever data they have given, you have to apply that budgeted minus actual. Simple. Still, few will not write. Array, you are leaving and coming 1 to 2 marks. Mad or what? Always remember, if you want 100, you can't help. But when you want that 40, 50, 60, 70, all these 2 to 3 marks also will add up. Rather than leaving it and getting like 0 from that particular question, if you attend, you will get 2 to 4 marks. No, why you want to lose that? Stepwise marking is there. Please keep in mind. Now listen. As I already told you, this is your absorbed overhead. This is your actual overhead. Difference between absorbed overhead and actual overhead, we are going to call it as cost variance. Difference between absorbed overhead and actual overhead, we call it as cost variance. Now, in between somewhere, your budgeted overhead will come into picture. Your difference between actual overhead and budgeted overhead is expenditure variance. Difference between your absorbed overhead and budgeted overhead is volume variance. Difference between your absorbed overhead and budgeted overhead is volume variance. Now listen very carefully. Your volume variance could be taken as calendar information is not given, calendar information is given. Okay, no calendar information, there is a calendar information. Now, if it is no calendar information, the line will be short. That is your volume variance was what? Absorb minus budgeted, no? That is standard minus budgeted hours. Standard hours, budgeted hours. Correct now? Somewhere in between we say we get actual hours. Now, standard hours and actual hours, the difference we will write it as A, standard hours minus actual hours, efficiency variance. Difference between your actual hours and budgeted hours, we write it as capacity. Got it? Now, if the calendar information is given, then the line will be bit more big. Because, of course, this is standard and budgeted hours, no doubt in that. In between actual hours will come. But not only so much, one more, revised budget hours will come. Now, standard hours minus actual hours, irrespective of what variance it is, always it is efficiency variance. Correct now? Whereas difference between your actual hours and revised budgeted hours, that we call it as capacity variance. Whereas revised budgeted hours minus budgeted hours, we call it as calendar variance. Simple, guys. That's it. I don't know why this is considered as most difficult, but yeah, many will skip it, but one of the easiest it is. Not your photo, what you are taking. She's asking this. Both you have taken, yours as well as that. Why? It's not coming nice. Camera issue. If it comes nice. Madam, it's not about camera all the time. Not iPhone. But yeah, photo will come nice. You click it in Snapchat after applying 10 other filters. Good. Done? Hope it's clear, guys. So see here, in this I will show how to arrive at revised budgeted hours. How much was the budgeted hours? 8,000. That was for 20 days. Now actually we are working for 21 days. Then revised budgeted hours will be, guys, 8,000 we planned for 20 days, but we are working for 21 days. 8,400 hours. This is how we learn. Is that clear? And your unit wise also it's not going to make much difference. So see here, guys, fixed overhead cost variance is absorbed overhead minus actual overhead. That could be divided into expenditure, volume. Expenditure is budgeted overhead minus actual overhead. Volume is absorbed overhead minus budgeted overhead. That also can be written as standard hours minus budgeted hours into standard rate. Whereas unit wise it is Actual output is what you absorbed minus budgeted output is what you thought of absorbing. So actual output minus budgeted output into standard rate. Calendar information given, calendar information is not given. If the calendar information is not given, then it is efficiency and capacity. Efficiency is standard hours minus actual hours into standard rate. If you wanted in units, how many units you should have produced in the taken hours? That is standard output minus actually how much you have produced, actual output into standard rate. If at all you want capacity, don't give the effect of efficiency. That means instead of actual hours, you should have taken standard output. Instead of budgeted hours, you should take budgeted output. If the calendar information is given, standard hours minus actual hours into standard rate will give you efficiency. Revised budget actual hours minus revised budgeted hours will give you capacity. Revised budgeted hours minus budgeted hours will give you calendar. So in units, all you have to remember is standard hours are replaced with actual output. Actual hours are replaced with standard output. Budgeted hours are replaced with budgeted output. Revised budgeted hours are replaced with revised budgeted output. Generally, unit wise they don't ask. Whenever it's possible to go for hours wise, go for hours wise. So standard rate means budgeted overhead divided by budgeted hours or budgeted output. Revised budget hours is budgeted hours divided into actual days divided by budgeted days. Revised budgeted output is budgeted output divided by budgeted days into actual days. Instead of hours, you are going to take units. That's the only thing. Is that clear, everyone? Anyone any doubt here? This PDF you didn't share? She shared. I mean, sometimes she might not share also, or she might share it to like different numbers. Done. Any doubts so far? No doubts. Questions on this, whatever is there in the PYP, that we will discuss in a later part. Now we have to discuss two more variances. One is your sales variance, that is revenue point of view. One more is your reconciliation of difference between your budgeted profit and actual profit will be there. No, reconciliation of that is what we have to discuss. Only once they have given the examination so far, it's kind of advanced topic. Okay, fine. We'll do one thing. Shall we take a break now for around 20 minutes and then we'll continue? Okay, 25 minutes, 25. But yeah, you want break now only, or? No, that is not my wish. I mean, you have to match with your friends' timings and all. No? Done. Shall we take a break now? Okay. We'll take a break now and break till 5:40. Then we'll start with our sales variance plus reconciliation. Not much. After that, we'll see PYPs. Now we'll be discussing sales variances. Basically, sale is a revenue. Please keep in mind. So whenever you are giving a conclusion, you should be very careful. Guys, sales variance is just like a material variance. Page number 305. Sales variance is just like your material variance. First one is sales value variance. Guys, sales value variance is just like your material cost variance. That is actual sales minus budgeted sale. Actual sales minus budgeted sales. Actual sales is what? Actual quantity into actual selling price. Budgeted sale is standard quantity into standard price, or budgeted quantity into standard price. You can write budgeted quantity into standard selling price. Got it? Same it is. Here there is nothing called standard for actual. Budget itself is standard. So actual sales minus budgeted sales. Actual sales is actual quantity into actual price minus budgeted quantity into selling price, standard selling price. Now my question is, when it is favorable, when it is adverse? When actual sale is more than budgeted sales, favorable. When actual sale is less than budgeted sale, adverse, because it's a income. More the income, better it is. Got it? Now, value variance could be divided into price variance, volume variance. What? Price variance, volume variance. Price variance is just like your material price variance. What is the formula? Actual price minus standard price into actual quantity. Same like material only, ditto material. But here I am writing actual for standard later, because if actual price is more than standard price, it's favorable, because it's a revenue. If actual price is more than standard price, it's favorable. If standard price is more than actual price, it's adverse, because you are not able to achieve so much sale. Volume variance is just like your quantity variance. That is actual quantity minus standard quantity into standard price. Same. There is nothing called budgeted standard separate. Same it is. Actual sales minus budgeted sales or standard quantity into standard price. Got it? Now, their usage variance was divided into mix and yield. Here volume variance is divided into mix and quantity. Now, mix is actual quantity minus revised standard quantity into standard price, whereas quantity variance, that is nothing but your yield variance, is revised standard quantity minus standard quantity into standard price. If new standard is more than old standard, better, because it's a revenue, favorable. If the old standard is more than new standard, adverse. In cost it is ulta. Got it? If the old standard was more than new standard, we used to call it as favorable in costing, because earlier we thought of using 10 kgs, now we are planning to use 9 kgs. But now the thing is, old standard is less than new standard, means new standard 12 kgs, old standard 10 kgs. But we are thinking from the revenue point of view. We are able to sell more, sales will be more. That is the thing. Got it? So if RSQ is more than SQ, favorable. If AQ is more than RSQ, favorable. Ulta of cost. That's it. Hope it's clear, everyone. Anyone any doubt? This is your sales variances in terms of value. In terms of value. So what is it, guys? Sales value variance is actual sales minus budgeted sales. Your value variance could be divided into price variance, volume variance. Price variance is actual price minus standard price into actual quantity. Volume variance is actual quantity minus standard quantity into standard price. That volume variance could be further divided into mix variance, quantity variance. Yield, we call it as quantity. Mix variance, quantity variance. Mix variance is actual quantity minus revised standard quantity into standard price, and volume variance is, quantity variance is standard quantity minus revised standard quantity into standard price, or RSQ minus SQ. But always you should remember the conclusion. If RSQ is more, it's favorable, as it's a income. Got it? Sometimes they will ask you to do it under margin. They will ask you to do it under margin basis. What is this margin basis, sir? Try to understand. What is the value variance you have taken? They will ask it as sales margin or sales value margin variance. Margin means profit. So then what you should do, your actual quantity into actual profit. Actual quantity into actual profit minus standard quantity into standard profit. By the way, how do we arrive at standard profit? Very simple. Standard selling price minus standard cost. Standard selling price minus standard cost. Whereas your actual profit would be actual selling price minus, guys, majority of the time they don't give you actual cost. So you will consider standard cost itself as the actual cost. Try to understand. Very simple here. Your budgeted profit and actual profit might not match. The reason could be relating to cost. That is, your actual cost will not match with standard cost. One more reason could be sales. That is, your actual sales might not match with standard sales. Correct? No? This we have already addressed and we came till here. Now, when you are computing sales variances, don't go back to actual cost. Just stay in the standard cost and find out. That is the thing. So, for margin variance, for actual profit, we generally reduce standard selling price from the, actual selling price from the standard cost only. Okay, I will show the example what is there here. Don't worry. Selling price margin variance they might ask, then it is actual profit margin minus standard profit margin into actual quantity. Sales volume variance is your actual quantity minus standard quantity into standard profit, standard margin. If they ask the margin instead of the prices, you have to take the margins. If they ask the margin instead of the prices, you have to take margins. That's it, nothing else. Instead of prices, you have to take margins. Got it? Now, mix variance also same. Quantity variance also same. I will just show one example here. Fine. See here. XYZ and Co manufactures and sells 3 products. It provides the following data for the month of September. Budgeted sales they have given, units sold, selling price, standard margin they have told. That means, can you tell me the standard cost? Guys, how did you arrive at a standard margin? Standard selling price minus standard cost, no? Now, standard selling price was 15. That time margin was 8. That means standard cost was 7. Standard price was 10. Margin was 5. That means your standard cost was 5. Standard price is 8. Margin is 2. That means your standard cost is 6. Your actual prices they have given here. How much is 14,300 divided by 1,100? 13. 17,100 divided by 1,900? Huh? 9. 27,000 divided by 3,000? This is your actual profit. Sorry, actual purchase price. Actual margin is how much, guys? Your actual price is 13. Standard cost is 7. So 13 minus 7. 6. Next one. 9 minus 5. 4. 9 minus 6. 3. This is how you will arrive at actual margins. Understood? You will reduce your actual prices with the standard cost. You will arrive at margins. Now you have to take this and you have to solve it. Simple. Margin basis as well as your price basis. They have given few illustrations. You have to go through that. That's it. By the way, how to arrive at RSQ? RSQ is nothing but total of your actual quantity in the standard ratio. How much is the total of your actual quantity, guys? 3,000, 3,000, 6,000. Correct now? 6,000 no? 6,000 in the standard ratio. 1:1:1. 2,000, 2,000, 2,000. This is your RSQ. Revised standard quantity. Using it, applying the formula, I don't think so. It should be difficult for you guys. Got it? Now, next one is there, something called as reconciliation, guys. What is it? Reconciliation. What is that reconciliation, sir? Our budgeted profit might not be matching with our actual profits. Budgeted profits might not be matching with our actual profits. What are the reasons? Reasons could be the cost, reason could be sales. overall reconciliation. Now, reason could be quantity, cost, reason could be profit. I will just show it that example only. Okay. One illustration is there. With that only I will show it here. 40. Not 45. 345 page number. Illustration 53. Just concentrate on this. Illustration 53. Majority, around 60% possibility of not coming is there. Other 40% possibility of coming is there. Just concentrate what is it. Guys, budgeted they have given, actual they have given. Direct material, direct wages, variable overhead, fixed overhead, net profit they have given. Guys, these are your cost. These are your cost. This is your profit. Guys, cost plus profit is what? Sales, no? So can I say that your budgeted sale is 100, actual sale is 126.5. I am telling it again, this is the budgeted cost, not the standard cost. In all the cost variances, whatever we have discussed, everything we have discussed on the basis of standard. Everything we have discussed on standard basis. Please keep in mind. Now, actual material price and wage rate were 10% higher. Actual sales price are higher by 10%. Actual sales price is higher by 10%. Guys, listen. What is your actual sales they are telling? 126.5, yeah? Actual sales they are telling is 126.5. Budgeted was 100. In that they are telling your actual price are 10% more than budgeted price. That means, can I say that if the budgeted is 100, if the budgeted is 100, actual is 110. If the budgeted is 100, actual is 110. But here actual is 126.5. That means budgeted is how much? 115. That means, can I say that around 11.5 lakhs is what I got due to price variance alone? Just because of change in price, I got 11.5. Just because of price variance, nothing else. Just because of price variance, I got 11.5 difference. That I will take it as sales price variance. And as we are able to make more, it increased. Sales price increase means favorable or adverse? Favorable. Then fine, but still your budgeted was 100, no? Still you are making 115, no? This what should be the reason? You sold more number of units. You sold more number of units. So this 15 we sold more again, favorable. That is due to sales volume variance. That is due to what, guys? Sales volume variance. Got it? This 15 will be due to sales volume variance. Hope it is clear. So, how much percentage more compared to the budgeted? Budgeted was 100. We are selling 15 more. That means 15% is what we are selling more. 15 is what we are selling more. Anyone, any doubt here? So, your sales volume variance is 15. So, total sales value variance is 26.5. Anyone, any doubt here? No. Next one. Going to material price variances. Going to material price variances. How much they have told actual? 66. How much they have told actual? 66. And they are telling prices are 10% higher. That means, can I say if at all material cost was budgeted 100, actually we are incurring 110. If at all we budgeted 100, actually we are incurring 110. But during the period we incurred 66. That means budgeted was how much? 60. That means this 6 lakh rupees is whatever we extra incurred just because of price variance. Just because of price variance, I will call it as material price variance adverse because it is increasing. It is increasing. Done. Next one is very important. Next one is very important. Concentrate. You budgeted your material price to be how much? 50. But actually you are incurring how much? 66. In that 6 is due to price variance, no doubt in that. Can I tell that remaining 10 is due to usage variance? No. Because I would have told this if at all I am comparing my standard cost with actual cost. If at all I am comparing standard cost with actual cost, I would have told this way. But am I comparing my standard cost with actual cost or budgeted cost with actual cost? That means, remember here, budgeted cost, standard cost, actual cost. These two will give you price variance as well as usage variance, no doubt in that. But difference between your budgeted and standard is there, no? That is due to what reason? You are able to produce more than budgeted number of units. You budgeted for 100 units, you are producing 115 units. You budgeted for 100 units, but you are producing 115 units because 15% extra you are producing. This one we call it as volume variance. This one we call it as volume variance. For all the three it will come. Say, sorry, your material, labor, variable overhead. For all the three costs, budgeted minus standard will be your volume variance. From standard to actual, it's our normal variances. In that standard to cost, price variance is done. But I want to know the standard cost. No. Guys, you budgeted 100. When you budgeted 100, your material cost was supposed to be 50. Now, you are producing 115. So, your standard cost should be how much? This is standard for standard. Now, I want standard for actual. 57.5. That means your standard should be 57.5. Budgeted is 50. That means 7.5 you are incurring extra just because you are producing more than budgeted units. We call it as volume variance. We call it as volume variance. However, we incurred 66. In that we got to know that price variance is 6. Correct? No? That means this 2.5 should be your usage variance. Understood? This is how you should do. See there. Volume variance 7.5. Usage variance 2.5. Total variance 16. Budgeted minus actual. Got it? Next, going to wages. 30 was budgeted. 33 is actual. $30 is budgeted, 33 is actual. Now what they are telling here? They are telling wages are 10% higher. That means when you budgeted 100, you incurred 110. That means 33 is after incurring that extra. So what was that? Basic was 30, is it?
30.
Basic was 30. That means here 3 is there, no? That is due to wage rate variance. Wage rate variance. Okay. But you can't leave it there only. Everything is sorted. No. Why? This is budgeted. This is budgeted. That means 30 is when you planned to produce 100 units, but actually you produce 115. So how much should be your standard? $34.5. That means 4.5 here extra I am incurring just because of volume variance. Just because of volume variance. Guys, if that is the case, your standard should be 34.5, no? Your actual should be 34.5, no? But your actual is just 33. Moral of the story, 1.5 you are saving. Why you are saving? Because you worked fast. Efficiency variance. Like this. So, wage rate variance is 3, volume variance is 4.5, your efficiency variance is 4.5. Got it? Your efficiency variance, standard is more, actually is, your efficiency variance is 4.5. Like this you will be doing it. Got it? Next, variable, what they told. Variable, nothing they told about increase, etc. That means try to understand. 6 is when you planned what you incurred. Now, 6 is when you planned for 100. Now, for 115, how much it should be? 6.9. That means 0.9 you should have incurred more just because of difference between standard and budget. 0.9 adverse. But you incurred how much? 7. That means you should have incurred 6.9 as per actual output, but you incurred 7. That means 0.1 you incurred because of efficiency. Because expenditure wise they are not telling anything. They are not telling it's increasing, decreasing, nothing they are telling. Got it? Total 1 is due to variable. Next, talking about fixed overhead variances. As it has nothing to do with the units. You thought of incurring 10. You incurred 12. That means 2 you are incurring extra. 2 you are incurring extra. Adverse. Now all you have to do reconcile is you can take any one of that. You can take any one profit. Let me take what they are taking here, standard profit. Budgeted profit they are taking. How much is budgeted profit they are telling? 4. Correct now? To reach this 4, to take this 4 to 8.5, what we should do? Here cost and all we have taken adverse. What do you mean by that? Our costs are more than what we budgeted. That means in budgeted we have booked less cost. In actual we have booked more cost. So to meet our or to take our budgeted to actual, we should always try to do what actual may we have done. That means in actual we have booked more expense. No, more expense means here you should reduce the profit. So whatever the adverse is there, that you reduce from the budgeted profit. Favorable means what? You have incurred something less than budgeted. In budgeted you have showed more expense. Here you showed less expense. So in budgeted also reduce the expense from budgeted profit. Reduce the expense means add back to profit. Sales also that way. So whatever the favorable is there, add back to budgeted profit. Whatever the adverse is there, reduce from the budgeted profit. You will arrive at, see here. These 3 are favorable. So we added. These 3 are adverse. So we reduced. We will arrive at actual profit. This is how we will arrive at.
How do you know we should take expenditure from efficiency? They have taken expenditure.
No, because if at all it was due to expenditure, like this material price and rate they should have given. Overhead, whatever you paid more like that. Here they didn't tell anything. That means it should be. Otherwise also material also we couldn't be known, no. Like knowing, no. Whether it is due to price variance or whether it is due to usage variance. So generally they give, if the question is silent, then your budget and actual amount is same like that. Got it? Mark it as one LMR question, and before going to exam, you just see and go this. That's it. That as well as your illustration 54. See and go. Now, with that, we have completed our discussion on standard costing. If you guys are ready, we can see PYPs for this particular thing. Shall we? First we'll go to December 25. Second. December 25, you can see there they have asked two MCQs, 9 and 10, and two practical problem, 5A and 5B. So total around 14 plus 4, 18 marks from this particular chapter. Who is planning to skip? All the best. Which and all? 9, 10 now. They are asking variable overhead cost variance. What is the formula for variable overhead cost variance, guys? Absorbed overhead minus actual overhead. See there. Budgeted production is 6,000 units. Budgeted variable overhead is 1,20,000. Standard time for 1 unit is 2 hours. That means how much is the budgeted hours? 12,000 hours. Budgeted output into standard hours per unit. 12,000 hours. Your budgeted overhead is 1,20,000. So standard rate would be how much? 1,20,000 divided by 12,000, which is gonna be rupees 10 per hour, not unit, per hour. I'm not doing as per unit, I'm doing it as per hours. Actual production is 5,900. So standard hours are how much? Standard hours are 5,900 into per unit it is 2 hours, right? So it is 11,800 hours. 11,800 hours. Sometimes they will give budgeted hours, sometimes they will give budgeted output. Using that you should find out standard hours per unit. After that you have to find out standard hours for actual production. They might give budgeted hours 12,000, budgeted output 6,000. Using that you will be able to find out standard hours per unit. Then you have to multiply it with the actual output to arrive at standard hours for actual output. 11,800 is standard hours. So your absorbed overhead is how much, guys? 11,800. That is standard hours for actual output into standard rate 10 rupees minus actual overhead is 1,22,000. So 1,18,000 minus 1,22,000, 4,000 you have under absorbed, adverse. Option B. Adverse. Anyone, any doubt in this? Simple, isn't it? Next, 10th one, right? Measure N-Store Limited produces 500 units of product A in 12 hours per unit. What they're asking here? Labor efficiency variance. No. What is the formula for labor efficiency variance? Come on. Standard hours minus actual hours into standard rate. Same. I mean, if they don't give idle time, there is no difference. If they give idle time, then only you should differentiate. So, produces 500 units of product A in 12 hours per unit against standard hours of 16 per unit. That means how much is your standard hour? Standard hour they are telling you can take up to 16 hours per unit. For 500 units, how much it will be? 8,000 hours. Talking about actual hours. 500 units you have produced by taking 12 hours per unit. 6,000 hours. That means difference between your standard and actual is 2,000 hours and the standard rate is 48 per hour. 96 favorable because you have taken less number of hours than the budgeted. Simple, isn't it? Only 2 questions, right? MCQ. Which one of the following responsibility center of the organization unit whose manager is responsible for generating revenue and as well as managing expense related to current activity? Generation of revenue as well as which one? 5A. They're asking you budgeted profit and actual profit for the period you have to find out 24-25. The variance in profit analyzed into cost variance, sales price variance, volume variance. Correct now? Listen here. The standard cost data for 3 product XYZ manufactured by Preet India LLP are given below together with the budgeted sales and unit selling price. Budgeted sales they have given, selling price they have given. That means budgeted profit. Can you tell me how much is the budgeted profit per unit here? 12, 12, 16. Correct now? 12, 12 and 16. So how much is your budgeted profit here? Per unit 12 rupees from 25,000 units. 3 lakh. Per unit 12 rupees from 20,000 units. Per unit 16 rupees from 15,000 units. 2 lakh. Total budgeted profit 4 lakh 80, 7 lakh. 7 lakh 80,000. That is your budgeted profit. Your actual profit here per unit 8, 6, 17, 18, 18, right? Okay. So 20,000 into 8, 1 lakh 60,000. 22,000 into 6, 1 lakh 32,000. 16,000 into 18, 2 lakh total. 5 lakh 80,000. Therefore, your budgeted profit is 7 lakh 80,000. Your actual profit is 5 lakh 80,000. Next, they are asking cost variance. Next, they are asking cost variance. Guys, cost variance. How much is your budgeted cost? 25,000 into 40, 20,000 into 60, 15,000 into 80. Sorry, here. 28 into 25,000, 48 into 20,000, 64 into 15. But the thing is, 25, 20 and 15, is it budgeted data or is it actual data? Standard data. Budgeted. Cost variance, we are going to take standard cost for actual output. If you take the cost here 25,000 into 28, 20,000 into 48 and 15,000 into 64, that is cost for standard. I want standard cost for actual output. So standard cost is 28, actual output is 20,000. So how much is 28 into 20,000? Or simple. Cost variance, shall I write it as standard cost minus actual cost into actual output?
Sir, if they didn't mention what cost variance it is, we can do anything.
No, because the cost variance they have given, they didn't tell anything particular. So forget. You tell me the standard cost first. 28 into 20,000, because always remember standard cost means standard cost for actual output. How much? 5,60,000. 22,000 into 48. 10,56,000. 16,000 into 64. 10,24,000. Whereas your actual costs are 20,000 into 30. 6 lakh. 22,000 into 50. 11 lakh. And 16,000 into 63. 10 lakh 8,000. That means first one 40,000 adverse because your actual is more than standard. Next one 44,000 adverse, actual is more than standard. Next one 16,000 favorable because your actual is less than standard. Please keep in mind, don't take the budgeted cost and actual cost, take the standard cost and actual cost. Standard cost means standard cost for actual output. Is that clear? Next, what they're asking, sales price variance. What is the formula for price variance? Actual price minus standard price into actual quantity. Sales volume variance. What is the formula? Standard quantity minus actual quantity into standard price. Okay. All other detail is there. I am not going to do that now. Hope you guys understood that. Simple question. Look at this. The standard set of chemical mixture of Chemco Limited is as under. Material A, material B. Standard mix are 80%, 20%. Standard prices are 50 and 100. Standard yield in production is 75%. Moral of the story. If at all you give input of 100 kgs, you will get output of 75 kg. Standard. Actual might not be same. Now, in this 100 kg, A will be 80, B will be 20. That means, can I say that to get output of 75, we have to give 80A. Correct? No? How much is our actual output? 1800. So, to get 1800, how much should be the 1920 kgs. So this is the standard quantity for A. What about B? To get output of 75, we have to give input of 20. You are getting 1800. How much you should give? 480 kgs. Standard is 1920 and 480. Anyone any doubt in this? Anyone any doubt? Okay. Standard quantity clear? If the standard is clear, all other thing is simple. Cakewalk. I will just do the table and show. I am not going to apply the formula and all. I will just do the table for you guys. A is there, B is there, standard quantity, standard price, actual quantity, actual price, revised standard quantity. Standard quantities are 1920, 480. Standard prices are 50, 100. Wherever it's kgs, you have to mention kgs. Wherever it's rupees, you have to mention rupees. Actual quantities are 1400, 600. Actual prices are 60, 90. Revised standard quantity is your total of actual quantity in the standard ratio 80-20, right? So that is 1600, 400. That's it. One and all they're asking price variance, mix variance, yield variance. In fact, cost and usage they're not even asking. Price variance, yield variance, mix variance. Don't you think it will be easy? Always remember, whenever more than two materials are there, it's always better to prepare this particular table first. Then all you have to apply is data of this table to the answers. First one, what they're asking, price variance. What will be the formula? Standard price minus actual price into actual quantity. And mix variance, standard quantity minus, revised standard quantity minus actual quantity into standard price. Yield variance is standard quantity minus revised standard quantity into standard price. Isn't it simple? Here the only thing is computation of your standard quantity. Now I don't think so. After solving so many sums in our regular class, etc., determining standard cost should be the problem. That's it. Simple 14 marks. Simple 18 marks in fact. Lose also, max to max 8 you will lose, 10 you will gain. So that is the thing. Is that clear? Next, going to June 2025. June 2025 standard. Only one question they have asked, 7. Here 6A. They have asked for 7 marks. So total 9 marks they have asked for. Which question I told? 7 now.
Management accounting material labor.
It might come. Now only we solved. I mean, they should not ask according to me because there is already covered in costing. But yeah, if they give, they'll give. Standard costing, 7th one. What were the actual hours work they are asking? Now, ABC Limited uses standard costing system. The following information pertaining to the direct labor for product X for the month of March. Standard rate is 8 rupees, actual rate is 8.4. Standard hours allowed for the actual production is 2000 hours. This is your standard hours. Efficiency variance is 1600. What is the formula for efficiency variance? Standard hours minus actual hours into standard rate is equal to efficiency variance. By the way, if the standard hour is more than actual hours, favorable or adverse? Favorable. If the actual hours is more than standard hours, it is adverse. Correct now? So, how much is your standard hours? 2000 minus actual hours, we don't know, into standard rate. Standard rate is 8 is equal to, as I have written, actual hours in negative. Adverse means what? Actual hours is more than standard hours. So actual hours is denoted in negative, then answer also will be in negative. I am not writing negative because it is adverse. Try to understand. I am writing negative because adverse means your actual is more than standard and actual is denoted in terms of negative sign. If at all I had written it as actual hours minus standard hours, I would have taken straight away 1600. You are understanding why I wrote minus there? So 2000 minus AH is equal to minus 200. So AH is equal to 2200 hours. Option A. AH is equal to 2200 hours. Anyone any doubt in this? Going to the A na? They're asking sales value variance, sales value price variance, sales value volume variance, sales value mix variance, sales value sub volume variance. That is your quantity variance, yield variance. Now, what and all they have given? Budgeted actual sales for the month of April 2025 of two products, Joy and Toy of measure Chandan Limited were as follows. Budgeted, we are planning to sell 6,000 units and 10,000 units. Selling prices are 5 and 2. Actual are 5,000 at the rate of 5 rupees, 1,500 at the rate of 4.7 and 7,500 and 1,750 at different rates. Budgeted cost for this one is 4 and 1.5 respectively. But you don't need that information. Why? Because they're asking value variances. They're not asking margin variances. So, first one, can you tell me the sales value variance formula? Actual quantity into actual price minus standard quantity into standard price. Now, actual quantity we have into actual price will give you sales of Joy and Toy. Standard they have given budgeted here, that will give you budgeted sales. Next one, price variance. So, standard price they have given 5 and 4. Actual quantity they have given 5,000 at rate this one. Sir, if the 4 lines are there, how can we solve? I showed you already one FIFO method. ICI material illustration 4 I showed now. What I did? Standard I took 1 line. For actual I used to take 2 lines. Total of that I used to reduce. Volume variance, what is the formula? Now, if you get answer in negative, is it favorable or adverse? Favorable. Because negative means your actual quantity is more. Got it? So just don't conclude that negative means adverse, positive means favorable. That's what I'm trying to say here. Mixed variance, they're asking what is the formula? Actual quantity minus revised standard quantity into standard price. By the way, RSQ is what? RSQ is total of actual quantity. 6,500 and 9,250 na?
$15,000.
15,750. Now 15,750 you should divide between joy and toy in their standard ratio. Standard ratio is 6 and 10,000. That is 3 is to 5. How much it is? 15,750 divided by 16,000 into 6,000. 9,000. Anyone any doubt here? Anyone any doubt? Sales value sub-volume variance. What is the formula? Sub-volume is yield. It's your revised standard quantity minus. There is no problem provided you write conclusion correctly. Favorable or adverse. If the RSQ is more favorable, if SQ is more adverse in the material, sorry, sales. If it's material, ulta, like that. Hope it should not be the problem to calculate. Fine. Quickly go through this, then we'll go to the next one. Simple questions. Which is the next question? This was June 25, right? December 24. There was one MCQ, that is question number 6, and they have asked 21 marks of standard costing. They have asked one MCQ and 21 marks of standard costing. That means 23 marks in total. Question number 5 straight away for 14 marks. Question number 6A for 7 marks. MCQ 6th, right? See there, measure Littles Limited operates in a single shift. Awesome. Standard production is 8 units per shift of 8 hours at rupees 200 per hour. Actual production is 5 units per shift. The company allows 1 hour for lunch break. That means that is a normal idle time. Actual rate of labor is 210. Labor efficiency variance they are asking. Guys, what is the formula for efficiency variance? Standard hours. Standard hours to produce 8 units is 8 hours. But we are producing 5 units. That means standard hours are 5 hours. Correct? No? For 1 unit, 1 hour. That means for 5 units, 5 hours. Minus actual hours. Actual hours we have taken. Actual production is 5 units per shift. That means we have taken 8 hours. Into standard rate. Standard rate is 200. Standard rate is how much, guys? 200. So how much it is? 600. Favorable or adverse? Adverse, because you are taking more hours. 600 adverse. Got it? But the actual time taken is not 8 hours. Why? In the 8-hour shift, there is 1 hour for lunch break. That means actually we have taken only 7 hours. Actual hours paid is 8 hours, but actual hours worked is just 7 hours. For efficiency it is 400 adverse. Is that clear? Next one which I told? 5, right? For 14 marks. Okay. What and all they are asking? Calculate the standard product cost for 1 unit they are asking. Okay. Next, Analyze the variances for material, cost, price and usage, labor, rate, efficiency and cost, and fixed overhead, expenditure, efficiency, capacity and cost. Simple 14 mark question they are asking here. Concentrate. Boston Limited uses standard costing system in a factory. It started trading on 1st April 2023 for manufacturing and selling of one product. Standard cost per unit is as follows. Direct material 10 rupee per kg, and per unit you need 20 kgs. That means what is the material cost per unit? Standard. See, you need 20 kgs, 1 unit, and per kg you have to pay 20 rupees. That means material cost is 400. Sorry, 10 rupees, right? So material cost is 200. To produce 1 unit, you need 20 kgs. To buy 1 kg, you have to pay 10 rupees. That means to buy 20 kgs, you have to spend 200 as per standard. Direct labor. Standard rate of pay is 5.5 per hour and you are supposed to work in 12 hours. That means 66, 12 into 5.5. 66 no? Done. Next. Production overhead. All classified as the fixed only. That means there is no variable overhead as such. Budgeted to rupees 9 lakh. Standard time for producing 1 unit is 12 machine hours, where the normal capacity is 60,000 machine hours. That means your budgeted overhead is 9 lakh. Budgeted hours are 60,000 rupees. 15 per hour. Recovery rate. Absorption rate is 15 per hour, no standard rate. Now standard rate is 15 per hour and you have to absorb for 12 hours here because machine hours required is 12 they are telling. So 12 into 15. 180 na? So how much is the standard cost per unit? 4. Standard cost is sorted. First answer is sorted. 446. Next they are asking, they are telling, for the year ended 31st March 2024, the cost incurred and other relevant information is given below. Direct material used are 1 lakh kgs at the cost of 10 lakh 50,000. That is your actual consumption, that is actual quantity and actual cost, not actual price, because together it is 10 lakh 50. Direct wages are 3 lakh 10,000, again actual cost for 62,000 units, that is actual hours. Production overhead is 9 lakh 26,000, that is your budgeted overhead. Machine capacity used is your actual hours. Actual output is 4,800. Assume no stock of WIPR finished goods is there. That means whatever you have produced, for that only we have consumed. Whatever finished, only for that it is consumed. Now, first one what they are asking. Material cost variance. One of the easiest question in the sense, easiest question. Because 1 mark it is. I mean, 1 line answer it is. Not even 2 type of material, 2 type of labor is there. Correct now? First one what they are asking you told? Material cost variance. What is the formula for material cost variance? Come on guys. Standard cost minus actual cost. Standard cost is what? Standard quantity into standard price minus actual quantity into actual price. Now listen. Standard quantity we know that per unit we have to take 20 kgs. But here standard quantity means standard quantity for actual output. Actual output is 4,800. So for 4,800, how many kgs we have to consume? 96,000 kgs we have to consume, and 96,000 guys into per unit you have to per kg standard price is 10 rupees minus actual quantity into actual price. I am not going to split directly, they have given actual cost. Directly I will take 10 lakh 50,000. So your standard was 9 lakh 60, actual is 10 lakh 50. That means 90,000 you incurred more adverse. 90,000 adverse. Any doubt? Next one, what they're asking? Material price variance, price and usage, all those things they're asking. Price variance, what is the formula? Standard price minus actual price into actual quantity. Guys, here again I have to determine actual price and all. Instead of doing that drama, what I will do is I will write standard price into actual quantity. If you want to find out, you find out and do. Otherwise, you can do this way. Actual price into actual quantity. Got it? So, standard price is 10 rupees. Actual quantity is you're consuming 1 lakh kgs because nothing is left there. No closing stock is there. That means whatever you purchased, everything you consumed. 10 into 1 lakh. That is your actual quantity at standard price, which is 10 lakh minus your actual price into actual quantity is 10 lakh 50,000. That means you incurred 50,000 rupees more. You have incurred 50,000 rupees more. That is your price variance. Is that clear? Next is your material usage variance. Material usage variance is standard quantity minus actual quantity into standard price. Standard quantity is how much, guys? For 96,000, right? We computed now 96,000 minus actual quantity is 1 lakh kgs into standard price rupees 10, which means rupees 40,000 adverse. So total, just check 90,000 adverse. Yes, that's it. Material variance done. Next, what they're asking? Labor, which one? Just cost variance they're asking. They're asking rate, efficiency and cost. So here labor rate variance, what is that? Standard rate minus actual rate into actual hours. In fact, actual hours paid, but here idle time information is not given. Moral of the story, actual hours paid and actual hours worked is same. How much is the standard rate? Leave. Here I will just write it in one more this thing. Standard rate into actual hours minus actual rate into actual hours. Reason being, I didn't divide that actual rate. Correct? No. So standard rate is how much they are telling per hour. Standard rate per hour is 5.5. 5.5 into actual hours. Actual hours is 62,000. 3,41,000 minus actual wages really paid is 3,10,000. Moral of the story, we paid rupees 31,000 rupees more. We call it as, sorry, 31,000 rupees less. We call it as favorable. Is that clear, everyone? Hello? Next, what they're asking, efficiency, right? Labor efficiency variance. What is the formula? Standard hours minus actual hours into standard rate. Guys, standard hours, we know that per unit we need 12 hours. We are producing how many units? 4,800. So 4,800 into 12. 57,600. Whereas actual hours we have taken is 62,000 into standard rate is 5.5. So 20. Adverse favorable because you have taken more time than what you should have taken. Next one is labor cost variance, that is standard hours into standard rate minus actual hours into actual rate. Guys, standard hours are 57,600. Standard rate is 5.5. Actual hours into actual rate is your 3,10,000. Correct no? So how much is 57,600 into 5.5?
62,000. 3,16,800.
3,16,800 minus 3,10,000. That means 6,800 favorable. Favorable only, no? Or adverse? Cost variance favorable. So just check these two are matching with this 31 6,800 matching. That's it. Labor cost variance. Next, what they're asking? Fixed overhead, all the four variances again they're asking. So first one, fixed overhead cost variance, that is nothing but your absorbed overhead minus actual overhead. Absorbed overhead is standard hours for actual output. Standard hours required is 12,000 12 machine hours they are telling. So 12 into 4,800. 57,600 into standard rate we computed, no, somewhere here 15 rupees per hour. Absorption rate is 15 rupees per hour minus actual overhead is how much? You don't have question now. 9,26,000. 36,000 what? Answers adverse, favorable, what is it? 9,26,000, no? 9,26,000. Where 9 lakh? 9 lakh is budgeted. What? 62,000 what? Adverse. Your actual is more than absorbed. Absorbed is how much? 8 lakh? Adverse. Next, fixed overhead. Expenditure variance. Fixed overhead expenditure variance is your budgeted overhead minus actual overhead. Budgeted overhead is 9 lakh. Actual overhead is 9,26,000. That means rupees 26,000. Got it. Next one they are asking fixed overhead volume variance. Volume variance they are not asking, I feel. No, they are not asking volume. Instead of volume they are asking capacity and efficiency, which will end up to volume. But yeah, we'll find out volume also, no problem. What is the volume variance formula? Absorbed overhead minus budgeted overhead. Absorbed overhead is how much, guys? 57,600 into 15. 8,64,000 minus budgeted is 9 lakh. That means around 36,000 you have under absorbed, adverse. 36 plus 26 is 62. Correct. Matching. Next, this could be divided into fixed overhead efficiency variance. What is the formula? Standard hours minus actual hours into standard rate. Standard hours are how much? 12. 12 per unit, no madam. 57,600 minus how much is the actual hours worked? 60,000 into standard rate. Standard rate is rupees 5.5. 5.5, yeah. 15 fixed overhead. How much? Got it? That means your capacity variance should answer come as 0. Because your volume variance is efficiency plus capacity, no? Efficiency is 36,000 adverse, no? No. Fixed overhead, capacity variance. Guys, what is the formula for capacity variance? Actual hours minus budgeted hours into standard rate. How much is actual hours? 60,000. Budgeted hours are 60,000. Standard rate is 15, which is gonna be nil. Can you imagine this much they have asked for? 14 marks. Whereas worst part is whoever skipped the standard costing in that attempt. 23 marks from standard costing.
Not even standard costing, sir. Fixed overhead.
No. Full standard costing is for 23 marks in this. 6A is also standard costing only. They're asking material variances here. Simple 7 marks question. See there. Count Limited using standard costing system produces a chemical product by blending two basic raw materials. 60% of material A and 40% of material B at 50 and 60. A standard loss of 20% on input is expected. Moral of the story. If at all you give input of 100, you will get output of. In that 100, A should be, B should be. Got it? A should be 60, B should be 40. Now, a standard loss is done. Cost 540 kg of material A at rupees 60, 260 kg of material B at rupees 50. The quantity processed are 680 kg of good products. So we are processing how much? 680 kg of good product. Moral of the story, output is 680. So I will just show you the standard quantities here. Guys, if at all you want output of 80, you have to give 60 as input, material A. Now you are getting 680. For 680, how many kgs of A should be given? 510 kgs. What about B? To get output of 80, B you have to give is 40. You are getting output of 680. 340 kgs. Okay. Done. Now, if you want to do the table, guys, two materials are there. A and B, standard quantity, standard price, actual quantity, actual price, revised standard quantity, as they're asking mixed variance also. Standard quantities just now we computed 510 and 340. Standard prices are 50, 60. Actual quantity 540, 260. Actual price 60, 50. Rescue how much? Rescue total is 710, 810. Sorry, 800. 800 in the standard ratio, that is 60, 40, 480, 320. That's all. Using that, you are applying the formula and calculating material cost variances, standard cost minus actual cost, price variances, standard price minus actual price into actual quantity, mix variances, revised standard quantity minus actual quantity into standard price, and yield variances, standard quantity minus revised standard quantity into standard price. Is that clear? With that, the 21 marks, simple 21 marks you would have scored if at all you learned standard costing and you have to give an exam in that particular attempt. Done. Next is June 24 standard costing MCQ number 7, MCQ number 14. 14, right? 7 and 14. MCQ number 7 and 14. What they are asking? Identify the actual output in units. They have told fixed overhead volume variance is 4000 adverse. What is the formula for volume variance? Come on guys, fast. Absorbed overhead minus volume variance. Absorbed overhead minus budgeted overhead. How much is budgeted overhead they are telling? 80,000. Absorbed overhead, what is the formula? Standard hours per actual output into standard rate. But the thing is, here they have given it on unit basis. That means actual output into standard rate. Actual output we don't know. That only they are asking. But standard rate is how much? 80,000 was there. 40,000 was planned. So budgeted overhead is 80,000. Budgeted output is 40,000. That means per unit we planned 2 rupees. That gave us 4,000 adverse. 4,000 adverse means our budgeted is more than absorbed. So budgeted we have written in negative terms. So here I will write 4,000. If at all you have written it as budgeted overhead minus absorbed overhead, I would have written 4,000 as positive number. Now AO is equal to 76,000 divided by 2. 38,000 now.
38%.
Simple. Next what I told? 14th. Labor efficiency variance they are asking. What is the formula for labor efficiency variance? Come on, standard hours minus actual hours into standard rate. Guys, standard hours what they are telling? A limited produces 500 units of a product in 7,500 hours against a standard of 8,000. Oh my god, why they even gave this question? Just to give trauma to those people who left and went standard costing. So they will come out of their examination, all their friends will say, "Ayyo, 2 mark simple question they have asked, I have seen." Oh, is it? How much it is? 25,000 favorable because you have taken less number of hours. Yes. Shall we proceed? (6A) for 7 marks they have asked. Overhead variances. Awesome. What and all are they asking? Calculate the standard variable overhead rate and fixed overhead rate. They're asking standard rate. Budgeted overhead divided by budgeted hours or budgeted output. Budgeted hours because they're asking per hour. Calculate variable overhead efficiency and expenditure variance. Ayyo. Calculate fixed overhead expenditure and capacity variance. JK Limited has furnished the following information, guys. Standard overhead absorption rate is ₹4 per unit. Standard rate per unit is 4. And standard rate per hour is 4. By the way, this is overhead. They didn't divide it between fixed and variable. Please keep in mind. Budgeted production is 12,000 units. That means 12,000 into ₹20.
60.
Eh?
30. 24.
Okay. 2,40,000 is your budgeted overhead. I mean inclusive of variable as well as fixed. Budgeted standard rate into budgeted output will give you budgeted overhead. No. Also, listen here very carefully. They are telling standard rate per hour basis 4 rupees. On unit basis 20 rupees. That means, can I say that each and every unit is taking 5 hours? 20 by 4. Unit basis 20 rupees you are charging. Hours basis 4 rupees you are charging. But end of the day absorption amount should remain same. No. That means you are charging. Sorry, your standard hours are 5 hours per unit. Actual production is 15,560. Actual overheads are 2,95,000, out of which 62,500 is fixed. So how much is variable in it? 2,32,500. By the way, how much is standard hours? Actual production is 15,560 into 5 hours. 70? 77,800 hours. Actual hours is 74,000. Awesome. Overheads are based on the following flexible budget. Production 8,000, 10,000, 14,000. Total overheads are 180, 210, 270. Moral of the story. if you remember, change in cost divided by change in units will give you variable cost per unit. Because fixed may no changes are there. If fixed changes are there, you have to eliminate the change effect of fixed first. After changing that, what you get is only change due to variable cost. That changes you should take. For example, now if they told 10,000 unit, fixed is gonna increase by 5,000. That means here you should not take 2,10,000, you should take 2,05,000. Only change due to variable. Then you can take change in cost by change in units as variable cost per unit. Got it up? Now any 3 level, any 2 level you take. Here 2,10,000 and 1,80,000. 30,000 is a change in cost. Units are 2,000. That means 15 per unit. 15 per unit. Here also you just check once. 60,000 and 4,000. 15,000 is it? 15 per unit, right? Okay. That means try to understand. Budgeted was, variable was 15 per unit. How much was the budgeted output? Or you leave, you don't have to worry about it. You know that you are planning to recover 20 rupees from each and every unit. So variable is how much in it? 15 rupees. Variable cost, standard variable cost per unit is 15. No. That means remaining 5 you are planning towards fixed. But this is per unit. No. They're asking per hour. You know that budgeted hours per unit is how much? 5 hours. That means standard variable overhead recovery rate per hour. Per unit 15 rupees. Each and every unit 5 hours. That means you are planning to recover 3 rupees per hour. Fixed overhead per unit 5 rupees. Budgeted hours are 5 hours. You are planning to recover 1 per hour. Mark this question as LMR. Done. June 24. Calculate variable overhead efficiency and expenditure variance. What is the formula for efficiency and expenditure? Efficiency formula is standard hours minus actual hours into standard rate. Standard hours we computed somewhere here 77,800. Correct? No. Actual hours we computed, they have only given 74,000. Standard rate variable per hour is 3. Don't take 15. That is per unit. Here you have taken hours. 11,000 favorable. Why favorable? You have taken less hours than allowed hours. Standard hours are allowed hours. Time allowed. Next, what they are asking? Expenditure variance. What is the formula? Standard rate minus actual rate into actual hours. Guys, standard rate was how much? I will write it as standard rate into actual hours minus actual rate into actual hours. Standard rate is how much? 3 rupees per hour. Correct? No? 3 rupees per hour. Into actual hours are how much? 74,000. How much is 3 into 74,000? 2,22,000 minus actual rate into actual hours. That is your actual cost. 2,32,500. 10,500 adverse. Because you are incurring more than what you are supposed to. Correct? Next, what they are asking? Fixed overhead efficiency and capacity. What is the formula for efficiency variance? Come on, guys. Standard hours minus actual hours into standard rate. Standard hours are 77,800. Actual hours are 74,000. But standard rate for fixed overhead is 1 rupee. Because out of 20 rupees standard, 15 rupees is variable, 5 rupees is fixed. But that is per unit. We know that each and every unit will take 5 hours. That means per hour it is 3 rupees and 1 rupee. Correct? No? So it's gonna be 3,800 favorable. Because we have taken less time. Efficiency is always simple. Capacity is actual hours minus budgeted hours into standard rate. Actual hours somewhere we have taken no 74,000 minus how many hours we have budgeted? We budgeted 12,000 units and we decided that 1 unit standard hour time allowed is 5 hours. That means we are budgeting 60,000 hours. 12,000 into 5. 60,000 hours. Standard rate is 1. That means 14,000 hours in fact favorable. Because, sir, but actually is more, no, sir. We were expecting you to work for 60,000 hours. You work for 74,000 hours. Am I incurring some extra cost? But because you are working, are you producing something extra? Then it is favorable. Is that clear? Simple question, but nice question. This kind of nice question.
20 hours.
Here I found out no variable cost per unit. In the 20, because it is budgeted data. In the 20, 15 is variable because it's overhead rate. They didn't tell variable overhead rate, fixed overhead rate, total overhead rate. 15, remaining 5 should be out of fixed. Hope it's clear, guys. Next is what? That's all. December 23 na? December 23, question number 3, 7, 4 marks plus 6A, 7 marks, total 11 marks. Which and all I told? 3. What are the actual hours work they are asking? Okay. AB Limited uses standard costing system. The following information pertain to the direct labor for product X for the month of March 2023. Standard rate per hour is rupees 8. Actual rate is 8.4. Standard hours allowed is 2000. Efficiency they are asking. They are given. What is the formula for efficiency? Standard hours minus actual hours into standard rate. Here, standard hours, how much they are telling? 2000. Actual hours, how much they are telling? That only we are computing. Into standard rate, how much they are telling? 8. That is equal to efficiency variance adverse they are telling. Adverse means your actual is more. Actual is denoted in negative terms or positive terms? Negative. That means the higher number is in negative. So answer also will be in negative. So minus 1600. Got it? Now, here actual hours minus actual hours is equal to, this will go minus 200, this will go 2200 I feel. 8 divided by 1600, sorry, 1600 divided by 8 minus 200 and again this 2000 will go minus so minus 2200. This minus cancel 2200. And also, you can use your brains a bit because before taking 1800, they told adverse. Adverse means your actual should be more than standard or less than standard. When it's more than standard, standard itself is 2000. So actual, can it be less than that? Right. Next one, what did I say? 7. Material cost variance they are asking. Standard output is 1000 units. Actual output is 800. Standard price per kg is 2 rupees. Actual price is 3 rupees. Standard quantity per kg is 4. Actual quantity is 4000. Cost variance they are asking. Now, standard output 1000. In Josh, don't do 1000 into 4. Standard quantity 4000. Always remember, standard quantity means standard quantity for actual output. Actual output is 800. 800 into 4. 3200. Into rupees 2. That is your standard cost. Minus actual cost you consumed 4000 kgs at the rate of 3 rupees. That is 12,000. 6,400, 12,000. Option C. Anyone in doubt there? 6 na? They're asking fixed overhead variances. This is the same question, type of question which I have taken for the example. If you have seen that calendar variance example I have taken, no, same type. Measure Gems Limited provided you the following data for the month of March. Standard means budgeted, it is actual. Units produced are 1000, hours per unit is 1 and 1.1. That means actual hours you have taken how much? 1200 into 1.1. 1320 hours. Correct now? Standard hours is how much, guys? Per unit it is 1. You produce 1200 units. So it should be 1200 hours. Budgeted hours is how much, guys? Budgeted output is 1000. Per unit 1. That means 1000 hours. Correct now? Standard rate is how much? Budgeted overhead 30,000 divided by budgeted hours 1000 rupees 30 per hour. Anyone any doubt in writing this data? However, we need revised budgeted hours also here because number of days they have given. By the what actual rate? Revised budgeted is 1000 is the budgeted, that is for 20 days, but actually you are working for 23 days. 1150 now. 1150 hours. Data is ready. Data is ready. All you have to do is apply the formula. What is the efficiency formula? Standard hours minus actual hours into standard rate. Standard hours 1200, actual hours 1320, standard rate 30. 120 into 30. Adverse because you have taken lot of time. Capacity. Actual hours minus budgeted hours into revised budgeted hours. Calendar they have given. Correct. Actual hours minus revised budgeted hours into standard rate. So actual hours 1320, revised budgeted hours 1150, standard rate 30. 5000 favorable because you are taken more hours than what you estimated to be taken. Idle time variance. Idle time variance, let it be. Idle time variance, let it be. Idle time variance is your calendar variance, simple. Or take it. Revised budgeted hours minus budgeted hours into standard rate. Revised budgeted hours 1150, budgeted hours 1030. 4500 favorable. Ayo sir, idle time variance, how it is favorable? You thought you are going to keep your company idle for 10 days, but you kept only for 7 days. That means you worked more than what you estimated. You are exploiting your capacity. This building was supposed to be used for 20 days. Now, I came to take class. So, Sundays and all I will give holiday, no? So, automatically 30 days it is. Automatically we use more days or less days. Rent did we pay more? Batch got over fast. ArivuPro saved some money. Peace. Next, volume variance. What is the formula? Absorbed overhead minus budgeted overhead. Correct? No. Absorbed overhead minus budgeted overhead. Absorbed overhead is standard hours into standard rate. Standard hours is 1200. Standard rate is 30. 36,000 minus budgeted overhead is 30,000. Rupees 6,000 favorable. Or you can simply take it as standard hours minus budgeted hours into standard rate. Budgeted or expenditure variance. Actual overhead, budgeted overhead minus actual overhead. Budgeted overhead is 30,000. Actual overhead is 35,000. 5,000 adverse. Fixed overhead cost variance. Absorbed overhead minus actual overhead. Absorbed overhead, how much we told? 36,000, no? Actual overhead is 35,000. That means 1,000 favorable. 1,000 favorable. Simple, isn't it? Now, can you tell me the total of this, please? 3,600 adverse, 5,100 favorable, 4,500 favorable. That is 9,600, 9,600, 3,600 adverse, 6,000 favorable. So volume variance is 6,000 favorable. 6,000 favorable, 5,000 adverse, 1,000 favorable. Got it. Any doubts? Pakka. 200%. That's it. Done. No standard costing, standard costing. What is there in standard costing? Simple, simple question. Simple, simple answers.
When I'm on the third one.
No, that's what. You should practice it.
Fixed overheads. I'm okay.
Apart from fixed overhead. Hey, come on, Madhu. Can't say that. Fixed overhead, you have to try to revise. Remember this one. We did know one table. I will again do it. Concentrate. What is it? Absorbed overhead, actual overhead, budget overhead. This minus this will give you cost variance. This minus this will give you expenditure variance. This minus this will give you volume variance. Clear? Okay. Now volume variance. One small line, one big line. Small line when calendar information is not given. Big line when calendar information is given. Small line when calendar information is not given. So volume variance. What and all we compared? Standard hours with budgeted hours. So one side standard hours, one side budgeted hours. In between actual hours. So standard hours and actual hours difference. Efficiency. Small kid also should say after doing all those variable and labor. Actual and budgeted capacity. Here standard hours, budgeted hours. In between not one line, it is two line. Actual hours, revised budget hours. Standard hours, actual hours. Actual, revised, budgeted. Revised, budgeted, budgeted. That's it. But yeah, while computing standard rate, standard hours and all, you should be very careful. For that, you have to practice a lot of questions. Hope it's clear. How many times you will take this, madam? Already you have taken that. You have already taken this nice one. Why you want that? Where it went? Hey. This one you didn't take? Such a nice handwriting, such a nice presentation, such a crazy color combinations. Done. With that, we have completed our standard costing. We'll do one thing. Now we'll start with marginal costing, the basics. Then last we'll keep budget and budgetary control. Okay. We'll start with marginal costing and how this marginal costing will work, sir, or how the marginal costing will be taken. That whole chapter, marginal costing basics, application of marginal costing, transfer pricing, all these three will be taken in one slot, in one single shot. Then all these three chapters questions will be seen later together. Okay, let's not divide it into particular chapter as such. Okay, so here and there bit of mixture might happen, so don't get confused, sir. That is of short term, or this is of long term and all. Nothing. Now we'll be starting with marginal costing. Here I am not taking those separately, I am mixing it up and taking. So marginal costing, first I will be taking whatever the common concept between cost accounting and management accounting. Then we will be going for certain decision making and transfer pricing of management accounting. Now concentrate. Technique of costing used to make, it's a technique, okay, it's not a method of ascertainment of cost, it's a technique of costing we use to make the decisions. Generally here decisions will be taken on the basis of marginal cost. Marginal cost. By the way, what do you mean by marginal cost, guys? Additional cost incurred to produce additional in unit. Additional cost incurred to produce additional unit. Generally it is variable cost, but it's not restricted only to variable cost. Generally it is variable cost, but it is not restricted only to variable cost. Please keep in mind. Your marginal cost is the additional cost incurred to produce additional unit, but it is generally variable cost, but not only variable cost. Sometimes what happens, if you are at the edge of your level, then if you want to produce one more, you might have to incur some extra fixed cost also. That time, that will also be considered as the marginal cost. That extra cost what we incur, everything we call it as marginal cost. That only we call it as differential cost also. That is change in the cost in the two different levels. That cost we call it as differential cost. The cost, for example, when you are producing 10 units, the cost is 1000. When you produce 20 units, the cost is 1800. Now that 800 is there, no, that is your differential cost. If at all the cost is increasing, that differential cost we call it as incremental cost. If the cost is decreasing, that differential cost we call it as decremental cost. Got it up? Okay. So cost you can divide it into variable cost as well as fixed cost. Fixed cost as per marginal costing concept, guys, we call it or consider it as a period cost, because it has nothing to do with the production. It is time based. Time based. You produce, you don't produce, doesn't matter. You are in the business for so much time period, you have to incur it. That's why we call it as a period cost. MCQ question. Fixed cost as per marginal costing is considered as dash, blah cost, blah blah cost, blah 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 cost, period cost. Period cost, option D. I mean here. Okay. Now, fixed cost could be divided into, see, variable cost is always and always and always has impact on decision making, no doubt. Because you decide to produce more, you will incur more. You decide to produce less, you will incur less. But fixed cost, you can't say that always it has a impact on decision making, because it could be sunk or irrelevant also. What do you mean by sunk or irrelevant or a committed cost? That is cost what we have already decided to incur. Cost we already decided to incur. We decided we are going to incur. So, are we committed? We are already incurred. Then that is your irrelevant cost. Relevant cost means if at all you want to do any activity, you are going to incur it. If you are not going to do that activity, you are not going to incur it. For example, guys, ArivuPro want to run CMA unique batch. Now, rent is there, no? It's a sunk cost. Because you run the unique batch, you don't run the unique batch. For morning batch, already we are running, paying a rent, no? Are we supposed to pay any extra rent for that unique batch? No. Now the rent has no impact on decision making. It's a sunk cost. However, to run the unique batch, we have to appoint one more staff. Admin team. For admin team, we have to appoint one more, because morning batch they come at 6:30 to the work. They will go by 4:30. Then unique batch, if you start at 2:30, you have to be there till 8:39. For that, you have to appoint new one. No. So to appoint new one, extra salary you have to incur. Now my question is, relevant or irrelevant? Relevant. Because if you run the batch, you will appoint them. If you don't run the batch, you will not appoint them. But variable cost is always relevant. For example, app access to students. We give you app access, no? Do you think it's come for free? For you guys, free. But for ArivuPro, is it free? We have to provide to our service provider, no? Some LMS, something is there. Now, for them, let's say we are paying 2000 per student. Now, when unique batch student comes, variable it is. 10 student comes means you have to pay 20,000. 100 comes means you have to pay 2 lakh. Getting it? So, automatically, that is your relevant cost. So, always remember, variable cost is always and always and always and always and always and always relevant. Whereas, sunk cost, fixed is, it could be sunk or it could be relevant. They might ask that kind of question out of the cost, which is relevant, which is irrelevant. All you have to do is whether incurring that or not incurring that affects the decision making. For example, now you opened a branch in Tambaram. Now, whether should we open the branch in Tambaram or not to open the branch in Tambaram? Don't you think we should have done the market research? Do you think our directors are that free that so that they will go and research? We will hire an agency to do that. Now for that example, now that agency is charging us 5 lakh rupees. Now when they are charging us 5 lakh rupees, is it relevant for decision making whether to open in Tambaram or not to open in Tambaram? Irrelevant. Sunk cost. You already committed them 5 lakh. They say market is there, go and open. Still you have to pay 5 lakh. If they say, ayo, market is not there, don't open there. Still you have to pay 5 lakh. Irrelevant. Let's say you are my market researcher. I will tell you to do the research. Now you come up with the conclusion that don't open, market is not there. Will you leave me without paying 5 lakh? Not rent. Not rent. Is that clear? Done. Now, marginal costing statement for decision making, guys. When the inventory and all is not there, remember, sales we will take. From that variable cost we will reduce. We will get the contribution. From the contribution, if you reduce fixed cost, we get the profit. What is contribution? Amount of sales which is available to recover fixed cost and contribute towards generation of profit. Amount of sales which is available to recover fixed cost and contributes towards generation of profit. For example, now sales is 10 lakh. Or let me take sales units as 10,000 units. Okay. Selling price, let me take it as 50. That means sales will be 5 lakh. Variable cost, let me take it as 30 rupees per unit, or let's say 40 rupees per unit. So 10,000 into 40, 4 lakhs. Contribution is 1 lakh. Your contribution is profit for marginal costing. Okay. Fixed cost, let's say we are incurring 50,000. Now, for marginal costing, decision making and all, generally we will be deciding on contribution unless and until the fixed cost is relevant in nature. So profit will be how much? 50,000.
The description you gave now.
Amount of sale which is available to recover fixed cost and star, no? Star. Done. Now. Listen very carefully. If at all you want to express contribution in terms of sales, can I say that when sales is 5 lakh, contribution is 1 lakh? Can I say that contribution percentage is 1 lakh by 5 lakh into 100? 20%. That is, contribution here is 20% of sales. You don't have to take the total also. Per unit also it remains same only. Per unit how much is the contribution? 10 rupees. 50 rupees is selling price. Variable cost is 40 rupees. Contribution per unit is 10. So 10 by 50 into 100, 20% only. So this thing we call it as contribution margin percentage. Contribution percentage. In fact, with more love, we will call it as profit volume ratio. What? Profit volume ratio. Contribution by sales into 100 is profit volume ratio. Whereas if you want to express your variable cost in terms of sales, we call it as variable cost by sales into 100. Variable cost is 4 lakh, sales is 5 lakh into 100, 80%. 80%. Now, this we call it as variable cost percentage. Variable cost percentage. Now, can I say that if the total sale is 100%, of course, total sales will be 100%. That will be nothing but 80% towards variable cost and 20% towards contribution. So can I say that variable cost percentage plus contribution percentage is equal to sales? Or can I say that 100% minus variable cost percentage will give you PV ratio? Can I say that 100% minus PV ratio will give you variable cost percentage? Okay. No doubt. Okay. So remember guys, contribution to sales ratio or contribution ratio is nothing but total contribution by total sales into 100 or contribution per unit divided by selling price per unit into 100. We also call it as PV ratio. Variable cost to sales ratio is, or variable cost ratio percentage is, total variable cost divided by total sales, or variable cost per unit divided by selling price per unit into 100. Sales, which will be 100%, is nothing but variable cost percentage plus contribution percentage. And PV ratio is nothing but change in profit by change in sales into 100. So what the hell is that? Concentrate here. Let's say there are 10,000 units I took, no? 10,000 units, 15,000 units. This is year 1. This is year 2. Now, sales. Selling price is 50 rupees. 10,000 into 50. 5 lakh. 15,000 into 50. 7 lakh 50,000. Minus variable cost. I know it is 80%. Correct now? Which is 4 lakh and 6 lakh. That will give you contribution 1 lakh 50,000 minus fixed cost 50,000. That will give you profit 50,000 and 1 lakh. Correct? Now listen here guys. Can I say that change in sales is 2.5 lakhs? Change in sale is 2,50,000. Change in variable cost is 2 lakh. Guys, how much is 2 lakh by 2,50,000 into 100? 80%. That means, can I say that variable cost, I can also tell it as change in variable cost by change in sales. Change in variable cost by change in sales, or change in cost by change in sales into 100. That is your variable cost percentage. What is contribution change? 50,000. Fixed cost nil. Profit 50,000. Guys. Now can I say that my change in contribution will be equal to change in profit? My change in contribution 50,000 is equal to change in profit 50,000. Now, what is this 50,000 divided by 2,50,000? 20%. That means, can I say that change in contribution by change in sales will give you PV ratio? Change in contribution by change in sales will give you PV ratio. Also, I know that change in profit is equal to change in contribution. So can I reframe that formula as change in profit by change in sales into 100 will also give you PV ratio. Change in contribution by change in sales will give you PV ratio. Correct? No? Now, if you take out contribution, profit change and contribution change are same. That means, again, change in profit by change in sales also will give you PV ratio only, provided there is no change in fixed cost. Provided there is no change in fixed cost. If fixed cost changes, you can't do it directly. You should eliminate the change in fixed cost, then you should do it. Now listen, sir, but why you are telling all these things? Sometimes in examination, they give only this much. Year 1, year 2, they will tell sales 5 lakh, 7 lakh 50,000. Profit, they will tell 50,000, 1 lakh. That's it. All other things they will ask you to do. They will ask you to compute break-even point. They will ask you to compute MOS. They will ask you to compute how much is fixed cost. Everything they will ask. PV ratio, everything they will ask. How can you do that using these two information? Can you do profit by sales into 100? No. Profit by sales into 100 will give you net profit percentage. Change in profit, I know that equals to change in contribution. So I will write change in profit 50,000 divided by change in sales 2,50,000 into 100. PV ratio is 20%. Now PV ratio I found out. If they ask you to compute fixed cost also, how can you find out? 50,000. Listen, if they ask you to find out fixed cost, any level you can take. Let me take year 1. Let me take year 1. So year 1, sales is how much, guys? 5 lakh. I know that 20% is PV ratio. That means contribution is how much? 1 lakh. Contribution is 1 lakh, no? PV ratio into sales is equal to contribution. From that, if I reduce fixed cost, I should get the profit. So fixed cost is equal to 50,000. Got it? This is how you can compute fixed cost also. Anyone, any doubt here? What if first year there is a loss of 50,000, second year there is a profit of 1 lakh. How much is the change in profit? Not 50,000. Change in profit is not 50,000. 1,50,000. 1 lakh minus 50,000. Loss, no? 1 lakh minus 50,000. Hope you guys are able to understand all these things. Any doubts? Paka. 200%. Great. Now, sir, some nonsense thing you are telling no, sir, about fixed cost change. What is it? Let's say they gave like this. They gave something like this. Sales they told 5 lakh, 7 lakh 50,000. Profit they told here 1 lakh. Next they told 1 lakh 20,000. And also they told that in year 2, fixed cost increased by rupees 10,000, or let's say 20,000. They say that in the year 2 fixed cost increased by rupees 20,000. That means try to understand. Here 1,20,000 what you got, no? That is not only due to change in contribution. Here straight away we used to take it as 0. But here this is not 0. Here there is a change of 20,000. That means this won't be 50,000, this will be 70,000. Like that. Getting it? So in that scenario, what you should do, sir? First, eliminate the effect of fixed cost. What if this 20,000 effect was not taken? What if I had taken my old fixed cost only? What if I had taken my old fixed cost only? Guys, if I had taken my old fixed cost, then my profit would be 1,40,000, not 1,20,000. Because I have taken 20,000 extra cost, because of which my profit is showed 20,000 less. Got it? Now, what was the profit last year? 1 lakh. What is the profit this year without change in fixed cost? 1,40,000. That means change in profit 40,000. Change in sales 2,50,000. How much it is? 16%. So your PV ratio is 16%. Got it? Now, can you tell me how much was the fixed cost for the first year? 5 lakh into 16% is a contribution. 80,000. Profit during the period is 20,000. That means your fixed cost was 60,000. This is in first year. In second year, it increased by 20,000. That means in second year, it became 80,000. So whether whatever the calculation we have done is correct or no, how to check? What is the contribution? 7,50,000 into 16%. 1,20,000 minus my fixed cost is 80,000. First year fixed cost, how much I got? Sorry, profit here was 1 lakh, no? Profit here was 1 lakh, no? So fixed cost was 20,000. So when we added here, it became 40,000. Sorry. It became 40,000. Now when we reduce 40,000, we'll get the new profit. Got it? How much is 7,50,000 into 16% you told? 1,20,000. Old fixed cost was 20,000. So it will become 1. Like that you have to compute. Okay. First you have to change the effect of fixed cost and you have to take. Generally this effect they won't give, but still to be in the safer side. Got it? And one more thing, guys. One more thing. If you know that our variable cost is 80%. If you know our variable cost is how much? 80%. So listen here. Sales units. Right now we are selling 10,000 units, right? 10,000 units. Selling price rupees 100, not 50. Selling price 50. Variable cost is 80%. We have already discussed about it. If you know, variable cost is 80% only we have taken, no? Done. Fixed cost we have taken rupees 50,000. Now there is one proposal. What is that proposal? To give discount of 20% or let's say 10%. To give discount of 10%. So sales quantity shall increase by 40%. Now should you give the discount or no? When will you give discount? If at all your profit under new approach gives you more than or comes more than old profit, of course you are going to give that discount, otherwise you won't give that discount. Now profit under existing, when you are selling 10,000 units at 50 rupees only, what will be the sales? 10,000 into 50, 5 lakh. Hello? Variable cost is 80% of this, 4 lakh. Contribution 1 lakh. Fixed cost, profit. Now I will give discount if at all my profit goes beyond 50,000. Now how many units we will be selling if we give discount? 40% extra, 14,000 units. Correct now? Sales won't be 50 rupees per unit. Selling price will be 10% discount, but that means 45 rupees. How much it is? 6,30,000. We know that variable cost is 80% of it. How much it is? 5,04,000. Contribution will be 1,26,000. Fixed cost 50,000. Profit 76,000. So will you accept or no? Accept no, because your profit is more. Wrong. Correct. But still you don't know what is it. You know that I explained, but you don't know. Listen. It won't change. Listen here, guys. Due to change in selling price, variable cost per unit will not change. Due to change in selling price, variable cost per unit will not change. You give discount. Will your supplier give you the same discount? You give discount to your customer. Does that mean that your supplier also will give you the same discount? You're understanding? That means Here variable cost was rupees 40, no? Now you changed your selling price to 45. Does that mean that your supplier who was supplying you at 40, he will also give you discount? No. That means always remember, variable cost per unit will not change with the change in selling price. Variable cost per unit will not change with change in selling price. Anyone, any doubt here? That means variable cost will remain 40 rupees only. So 40 into 14,000. 5 lakh 60,000. Contribution 70,000. As I already told you, fixed cost is irrelevant for decision making. You can see there. Contribution last time it was 1 lakh. Now it is 70,000. That means your contribution is reducing. Moral of the story, your profit also will reduce by 30,000. You can check. 50,000, 20,000. Last time it was 50,000. Now it is 20,000. Will you accept? No. So please keep that point in mind, guys. Variable cost will not change with the change in selling price. Total variable cost will change only due to change in number of units sold. And also if the question says sales increased or decreased, if they say change in sales, if they don't tell whether it is due to change in selling price or sales quantity, always remember it is due to sales quantity. If they don't tell increase or decrease in sales is due to change in selling price or change in sales quantity, always remember it is due to change in sales quantity. Is that clear? If the question says sales increased or decreased, it is assumed to be due to change in sales unit and not selling price. Hope it is clear. And also sometimes they will give like that only. What they will do, you know, on this particular point, if at all you are able to understand this point, the question is sorted. If you are not able to understand this point, there is no other alternative to solve this kind of questions. What is it, sir? They will tell sales for year 1, some amount they will tell. PV ratio, some amount they will tell. Using that variable cost, some amount you can find out. Sales second year they will tell some, and they will give one line. Sales quantity remains same. Any change in sales is due to change in selling price. Nothing else they will give. Here what you should do, guys, sales quantity in year 1 as well as year 2 is same. Sales quantity is same. You know that due to change in selling price, variable cost per unit will not change. That means whatever the total variable cost you got in year 1, that only should be your total variable cost in year 2 also. I am not telling variable cost per unit. I am telling total variable cost also will remain same. You understood what I am trying to say? Because unit sold is same, no? Unit sold is same. Now you know the total variable cost. Using that you can find out how much is variable cost percentage. Using that you can find out PV ratio for second year. When you know PV ratio, easily you can find out selling price for second year. Like that you can solve. Okay. In ICI material, few questions are there. You just have to look at those questions. Whatever we have solved in class, that is more than sufficient. Whatever ICI question we have discussed in class, that is more than sufficient. Relating to this point and also we have discussed already. Okay. Whoever didn't see that additional question discussions, you can just now go and see the questions in our ICI material, so you can find some nice questions there. Okay. Hope this point is clear. Fine. About break-even point, MOS and all, we'll see tomorrow. Tomorrow we'll try to wind up this marginal costing and other decision making, etc. Day after tomorrow we'll keep only small topic budgeted. Okay. So now we'll be continuing our discussion on marginal costing. Now listen, there is something called as break-even sales or break-even point. What is this break-even sales, break-even point? Few students will get confused regarding this. They think break-even sales means it will be in rupees. Break-even point means it will be in units. There is nothing like that. Break-even point rupees also they can ask. Break-even point units also they can ask. Break-even sales rupees also they can ask. Break-even point, break-even sales rupees also they can ask. So it's just a name. Both are same only. BEP as well as BES is same. What is that, sir? that is nothing but the number of units you should sell or the amount of sales you should make to make sure you end up earning no profit, no loss. To make sure you end up earning no profit, no loss. That is break-even sales or break-even point. At that scenario, your total revenue will be equal to total cost. Your total revenue will be equal to total cost. Got it? At break-even point, total revenue will be equal to total cost. See there. Let's say selling price rupees 100, variable cost let's say rupees 30, contribution per unit rupees 70. So PV ratio will be how much? 70%, or let me write ulta. 70, contribution is 30. PV ratio is 70%. Now fixed cost, let's say fixed cost is around 60,000. Fixed cost is around 60,000. Now the thing is break-even sales, how to compute. What did I say about break-even sales? First let's discuss from unit point of view. What did I say about break-even point units? Number of units you have to sell to make sure that your profit or loss will be zero, or in simple, when you sell X number of units, break-even point number of units, your sales will be equal to your cost. So listen, let me take the break-even point units be X. So sales will be how much? Can I say 100x minus variable cost? Can I say it will be 70x? That means contribution, can I say it is 30x minus fixed cost, can I say 60,000. What did I say about X? X is the unit break-even point. That means at break-even point sales, your profit will be zero. That is, when you are selling X number of units, your profit is zero. Now, can I simply write it as 30x minus 60,000 is equal to 0. Can I write 30x is equal to 60,000. Can I write x is equal to 60,000 divided by 30, which is gonna be 2,000, right? 2,000 units. X is gonna be 2,000 units. That is, when you sell X number of unit, you end up making no profit, no loss. If you want, you can check 100 into 2,000, 2 lakhs. Correct? No. Variable cost 70 into 2,000, 1,40,000. Contribution will be 60,000. Fixed cost will be 60,000. Your profit will be 0. Your profit will be 0. Is that clear? So you can say that your break-even point is 2,000 units in terms of units. Can you see something here? Contribution is 60,000, fixed cost is 60,000. That means, can I say something like this? At break-even point, contribution shall be equal to fixed cost. How do we arrive at contribution here? Break-even point units multiplied with contribution per unit, because unit into rupees we should do to arrive at a rupees is equal to fixed cost. So break-even point unit is equal to fixed cost by contribution per unit. This is the formula. Fixed cost by contribution per unit. You can see there. Here, what was X? X was break-even point in units. What was 60,000? Fixed cost. What was 30 rupees? Contribution per unit. So always remember, fixed cost divided by contribution per unit. If you do, you will get break-even point in units. Got it? Now, in terms of amount, shall we find out? In terms of amount, let's say break-even point sales be B. That is the sale at which you end up making no profit, no loss be B. Then variable cost will be how much? PV ratio is 70%. That means variable cost is 30% of sales. Point 3B. Contribution will be 0.7B. From that, if I reduce fixed cost, as B is the break-even sale. What is the meaning of break-even sale? Sale at which you end up making no profit, no loss. Profit is 0. Now, can I simply say it as 0.7B minus 60,000 is equal to 0. Can I say that 0.7B is equal to 60,000? Can you tell me B is equal to? There we got 2 lakh, no? Ulta we have taken. Variable cost is 0.7B, not contribution. Contribution is 0.3B. PV ratio is 30%. So, 0.3B, 0.3B, 2 lakhs. Or in one more step I will write here. Rupees 60,000 divided by 0.3, which is gonna be 2 lakhs. So again, the same rule applies. At break-even point, contribution is equal to fixed cost. At break-even point, contribution is equal to fixed cost. How do you arrive at contribution when it's break-even sales? Sales amount into PV ratio or contribution per unit? PV ratio, no? To arrive at contribution, sales amount into PV ratio. Sales units into contribution per unit. Please keep in mind. Units you will multiply with contribution per unit. Amount you will multiply with PV ratio. So, into PV ratio, that is equal to fixed cost. So, can I say that break-even sales in rupees is equal to fixed cost by PV ratio. So, this is one more formula. So, remember, if at all you want it in units, you can divide it with contribution per unit, fixed cost divided by contribution per unit. If at all you want it in amount, then you are going to divide it with PV ratio. Got it? So, when and all will your PV ratio changes? Sorry, break-even point changes when the fixed cost changes, when the PV ratio changes. When will your PV ratio changes? When your selling price or variable cost changes. Please keep in mind. In these 3 scenarios, break-even will change. Otherwise, irrespective of your sales, break-even won't change. Irrespective of your sales, your break-even is 5 lakh. Now you are making 10 lakh or 12 lakh or 14 lakh. Will your break-even sale changes? No. Why it will change? That won't change. So that is the thing. Hope it is clear, everyone. When either fixed cost changes or PV ratio changes. PV ratio will change when it is there is a change in selling price or change in variable cost. Change in number of units sold will not affect. Okay, because sales as well as variable cost will move in same proportion. No, sales as well as variable cost move in same proportion. That's the thing. Got it? Now, there is something called as desired profit. There is something called as desired profit. Now, let's say that is you want to achieve some amount of profit. How much sales to be made to achieve that desired profit? Let me take sales to achieve the desired profit. That is nothing but your desired sales as A. Desired sales is what? A minus variable cost. I know that variable cost is 0.7 A. That will give you contribution 0.3 A minus fixed cost 60,000. Now let's say our desired profit, we want to achieve the profit of 30,000. We want to achieve profit of 30,000. Now the question is, to achieve the profit of 30,000, what should be my sale? According to our calculation, our sales should be 0.3. Sorry, sales should be A to achieve the desired profit of 30,000. That means, can I say it as 0.3A minus 60,000 is equal to 30,000. Listen, wherever you don't want to apply formula, you can use this statement and you can compute by taking it as unknown number. No problem at all. If you are not comfortable with the formula, just make sure you do the table and you take it. But make sure you denote what is what. For example, there X I took it as break-even point units. You should write that. B I should take it as break-even sales rupees. You should write that. Here A I took it as desired sales to achieve profit of 30,000. That you should denote what is it. Now, can I simply say it as 0.3A is equal to 60,000 plus 30,000. Can I say A is equal to 60,000? Ayyo, maths weak, madam. Wait. 60,000 divided by 30,000. Sorry, plus 30,000 divided by 0.3. So A is equal to 3 lakh. Not that week also. You don't have to do again 90,000 divided by 0.3. Now, if you make the sale of 3 lakh, you end up making profit of 30,000. If you want, you can check. How? Sales, how much I told? 3 lakh. Contribution will be how much? 30% of 3 lakh. 90,000. From the 90,000, if I reduce fixed cost of 60,000. Got it? Now, you can use the table method and find out. No, sir, I don't want to do that. I want formula only. Then look at this. What was A? Desired sales is equal to, what was 60,000 plus what was 30,000? Desired profit divided by PV ratio. PV ratio. If at all you wanted in units, you should divide it by contribution per unit. If at all you wanted in units, you should divide it by contribution per unit. Hope it is clear. So what is the formula for break even? Come on. Fixed cost divided by PV ratio or contribution per unit. How to arrive at desired profit? Contribution plus desired profit divided by PV ratio or contribution per unit. Got it? Anyone any doubt in this? No doubt. Now, by the way, two sales level I have taken. Here, 3 lakh, right? Let me take my sales, total sales as 3 lakh. Total sales as 3 lakh. Minus variable cost, 70% of this, which is 2,10,000. 2,10,000. That will give us contribution 90,000. From that I will reduce fixed cost 60,000. That will give us profit 30,000. This is my total sales. Now also I computed break even sales for the same. Correct now? Break even sales we got 2 lakh, right? So break even sales for the given data was 2 lakh. Variable cost was 2 lakh into 70%. 1,40,000. Contribution was 60,000. Fixed cost was 60,000. Profit was 0. Guys, out of 3 lakh, I will achieve break even when my sales go for 2 lakh. That means here excess sale is how much? 1 lakh. Whether that excess sale will come with the variable cost or no? Of course. Any unit you sold, you will incur variable cost. 70%. 30,000. How much is profit? Sorry, contribution. 30,000. How much will be fixed cost? Nil. In break even already we recovered fixed cost. I am talking about sales over and above break even. From the sales over and above break even, I don't have to contribute anything towards fixed cost. Because whatever the contribution required to fixed cost, that is already recovered in your break even sales. Got it? So that will give you profit of 30,000. See there, 30,000 profit you are getting from this. So, if this 2 lakh we call it as what? Break even sales. Then this 1 lakh we should call as what? Margin of safety. Margin of safety. Got it? Got it. By the way, in break even sales, we wrote something here. What was it? At break even sale, contribution shall be equal to fixed cost. In margin of safety, guys, contribution shall be equal to profit. Is that clear? Pakka? Now, guys, how to arrive at contribution at margin of safety? Margin of safety amount, correct? Into PV ratio, if I do, I will get contribution at margin of safety now is equal to profit. That means, can I say that margin of safety in rupees is nothing but profit by PV ratio. Please remember one thing, few students will get confused in this also. Margin of safety itself they think as profit. No, margin of safety is the sales over and above your break even sales. Whatever is sold, everything is not profit because you have to incur something called as variable cost. So everything is not profit. Is that clear? Hello? Pakka? Oh. So margin of safety in rupees is profit by PV ratio. Is that clear? If at all you want it in units, it will be profit by contribution per unit. Profit by contribution per unit. Also, I can say that total sales is break-even sales plus margin of safety. So whenever they give break-even sale, easy to find out margin of safety. Total sales minus break-even sales. Whenever they give margin of safety, easy to find out break-even sales. Total sales minus margin of safety. Is that clear? This is how we will arrive at all these things. These are the basics about marginal costing. Of course, if at all they ask cash break even, what is cash break even, sir? The amount of sales you have to achieve to make sure at least cash expenses are taken care. That means in numerator we don't take total cost, we take only fixed cost with fixed cost where the cash outflow is there. That means cash expenses we will take. That is, we are trying to recover at least cash expense. To recover cash expense, how much should be my sales? That is your cash break even. Is that clear, everyone? Any doubts? Okay. So see there, guys, break even sales or break even point, level of sales at which there will be no profit, no loss. That is level at which revenue will be equal to total cost. At break even point, contribution is equal to fixed cost. Break even point in units means number of units to be sold to achieve break even sales. So break even sales in units is fixed cost by contribution per unit. Break even sales in rupees is fixed cost by PV ratio. Cash break even is sales at which revenue will be equal to cash expense. Fixed cost, that is incurred in cash, divided by contribution per unit, or fixed cost, that is incurred in cash, divided by PV ratio. Depends on whether you want it in units or you want it in amounts. If you want it in units, you will divide by the contribution per unit. If you want it in amount, you will divide it with the PV ratio. Margin of safety, sales over and above the break even sales. At margin of safety, contribution is equal to profit. So sales is nothing but break even sales plus margin of safety. So margin of safety is nothing but sales minus break even sales. So margin of safety is profit by PV ratio or profit by contribution per unit. Is that clear? Any doubt? Contribution per unit. Not only MOS, either MOS, desired profit or PV, this one break even sales. Whenever you want it in units, you should always divide it by contribution per unit. Reason being, amount by amount will give you unit. Amount by percentage will always give you amount only. Got it? That's why whenever you want it in amount, you divide amount by percentage. Fixed cost by PV ratio. Whenever you want it in units, you should divide amount by per unit rate. That is fixed cost by contribution per unit. Got it? Now, there is something called as shutdown cost. There is something called as shutdown cost, SDC. Here we are going to revise about shutdown cost and shutdown point, SDC and SDP. Got it? Now, what is this SDC, sir? SDC is those costs, guys. If at all you close the business, still for temporary period you have to incur it. The cost which you have to incur even though you close down your business. The cost you have to incur even though you close down your business, that we call it as shutdown cost. Shutdown point is point if at all your sales goes below that, it is advised to close the business. Shutdown point is the sales level. If the sales goes below that, it's advised to close the business. Got it? Now, let's say in my business, selling price is there, rupees 100. Variable cost is there, let's say rupees 60. So, contribution will be 40 and your PV ratio shall be 40%, 40 by 100. Clear? Now, fixed cost, concentrate. Let's say there is 4 lakh rupees is the fixed cost. There is a fixed cost of 4 lakh. Now, in this 4 lakh, guys, there is a fixed cost which is 2,40,000 and 1,60,000. Now this 2,40,000 is your avoidable fixed cost. What do you mean by that? 2,40,000 you will incur only if you run the business. If you close the business, you are not going to incur it. 2,40,000 you will incur if you run the business. If you close the business, you are not going to incur it. Whereas 1,60,000, whether you run the business, whether you don't run the business, you have to incur it. Whether you run the business, whether you don't run the business, you have to incur it. That cost we call it as shutdown cost. And sometimes shutdown cost is not only restricted to that. They might say in your fixed cost, if you close down the business, will be reduced to 1,60,000, they will tell. That means 1,60,000 is your shutdown cost. Because if you close down the business, it will come to 160, means 160 you have to incur when you close down the business. No. Also they will tell to shut down the business, you have to incur additional 40,000. In that case, your shutdown cost will be 2 lakh. 1,60,000 from this plus additional expense of 40,000. Total 2 lakh. So they might say that additional expense also that you should add to this. Hope it is clear. Now, let's say around 12,000 units I am selling. How much I am selling? 12,000 units. Should I run the business or close the business? Guys, 12,000 units if I run, how much will be my contribution? 12,000 into 40. 4,80,000. From that, if I reduce fixed cost of 4 lakh, how much will be the profit? Guys, should I run the business? Should I close the business? Run the business because I am making profit. Why I will close the business? Correct? No. What if my sales comes to 8,000 units? What will be your contribution? 8,000 into 40. 3,20,000. As we are running the business here, we will incur fixed cost of 4 lakh. Loss of 80,000. Now my question is, will I run the business, close the business? Close, you should run. You should run. Why? If you run the business, how much will be your loss? 80,000. Run the business, how much will be the loss? 80,000. If you close the business, still you have to incur 1,60,000, no? If you close the business, still you have to incur 1,60,000. Guys, try to understand. What will be your contribution if you close the business? 0. Sales will be 0 units. Contribution will be 0. But still, fixed cost, how much you are going to incur? 1,60,000. Loss will be how much? Loss of 1,60,000 is better or loss of 80 is better? Loss of 80 is better. The other day when I am teaching this, I told you. You remember? What is it? No, I told one. Rastrith's quote. When world is full of red flags, settle for the red flag which is not so red. That means when you are already making loss, choose the loss which is less loss. Although you are making loss, I agree, but go for less loss. Got it? Now, 1,60,000 and 80, which is better? 80 is better. So now my question is, once you reach what unit, you should close the business. Let's say our sales reaches to 3,000 units. Our sales reaches to 3,000 units. Guys, if sales is 3,000 units, contribution will be 1,20,000. I'm running the business or closing the business? Running the business. So my fixed cost will be 4 lakh. How much will be my loss? 2,80,000. My loss will be 2,80,000. That means my business, it is advised to close, because if I close, I will incur 1,60,000. If I run, I will incur 2,80,000. So it's advised to run or close. Now, if your owner asks you, okay, one you are telling close, one you are telling run, blah, 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 blah. You tell me some point. Till then, I should run the business. If my sales go below that, I should close the business. Tell me that place point they ask means what you will tell. Boss, you will be running business. If your loss is up to 1,60,000. If the loss goes beyond 1,60,000, then better close the business and restrict your loss to 1,60,000. If your loss goes beyond 1,60,000, better to close the business, because if you close the business, your loss will be restricted to 1,60,000. So that point itself is shutdown point. Now we will find out if you sell what number of units, you will end up making maximum loss of 1,60,000. So shall I take units to sell to make the loss of 1,60,000 be? Yes. Then sales will be, selling price is 100, units is yes, 100s, variable cost is 60, units is yes, 60s, contribution will be 40s. Here I am trying to run or I am trying to close? Run. That means my fixed cost is going to be 4 lakh. Many students will take as 1,60,000. Wrong. Here I am thinking 40s, how I am getting contribution? I am getting because I am running. When I am running, my fixed cost is 4 lakh or 1,60,000? 4 lakh. That should give me loss of 1,60,000. That should give me loss of 1,60,000. Can I say it as 40s minus 4 lakh is equal to minus 1,60,000? Can I say it as 40s is equal to 4 lakh minus 1,60,000? S is equal to, wait madam, Wait. Weak in maths. Now tell S is equal to 6,000 units. That is, if at all you sell 6,000 units, you run the business, still your loss will be 160,000. You close the business, still loss will be 160,000. However, if at all sales are more than 6,000, run the business because your loss will be something less than 1,60,000. If the sales are more than less than 6,000, close the business because your loss will be more than 1,60,000. You can check. Let's say one sale as 5,000, one more sale as 7,000. Now, when it's 5,000, what will be your contribution? 5,000 into 30, is it? 40. 2 lakh. 7,000 into 40. 2 lakh. 80,000. Fixed cost is how much? 4 lakh. Loss will be, here the loss will be 2 lakh. Here the loss will be 1,20,000. Loss will be 1,20,000. So here loss is 1,20,000. If you close, it will be 1,60,000. So you advise them to run or you advise them to close? Run. Because loss is restricted to 120,000, not 160,000. But here will you advise them to run or close? Close. Why? Because if you close, your loss will be restricted to 1,60,000. So this is your shutdown point. If units sold are less than shutdown point, shut down the business. If units sold are more than shutdown point, close the business. Understood? By the way, you can use the table method and find out, like the way we found out that 6,000. No, sir, I want formula only. Then what was the S, sir? Shutdown point is equal to, what was that 4 lakh? Fixed cost minus what was that 1,60,000? Shutdown cost divided by what was that 40? Contribution per unit. So shutdown point is fixed cost minus shutdown cost divided by contribution per unit. If you want it in amount, then you should divide it by PV ratio. If you want it in amount, you should divide by PV ratio. If you want it in units, you should divide it by contribution per unit. Is that clear? So if the units sold are less than, if your units sold are less than shutdown point, close the business. If units sold are more than shutdown point, run the business. Is that clear? Hello? More means run the business. Because your contribution will be more. Less means close the business. Shutdown cost which is to be incurred, although we temporarily shut down the business, and shutdown point is if number of units sold falls below SDP, then loss of running business shall be more than shutdown cost. So decision making, if sold units are greater than shutdown point, run the business because your loss will be less than shutdown cost. If at all your sold units are lesser than shutdown point, close the business because your loss will be more than shutdown cost. Got it? Anyone any doubt here? Paka? Oh. Zuma. Nice. Now, absorption costing versus marginal costing. However, absorption costing different compared to marginal costing. Guys, listen. Cost of production under absorption costing. Cost of production under absorption costing. Remember, cost of production under absorption costing means the value includes your prime cost plus production overhead. Production overhead includes variable production overhead as well as fixed production overhead. What? Under absorption costing, your cost of production includes prime cost plus variable production overhead plus fixed production overhead. All the three it includes. But in marginal costing, your cost of production includes only prime cost, variable manufacturing overhead. I am not telling that from sales you should reduce only cost of production in variable cost to arrive at a contribution. No. I am not talking about total cost. I am talking about only cost of production. Remember, all the variable costs should be reduced from marginal sales to arrive at a contribution. No doubt in that. Not only cost of production. Please keep in mind. But cost of production includes in absorption three elements: prime cost, variable overhead, that is production overhead, fixed production overhead. And remember, fixed production overhead means not actual but the absorbed amount. Not actual but it is absorbed amount. And absorption will be done generally on the normal capacity basis. Absorption will not done on actual capacity. Absorption is not done on your 100% capacity. We will do it generally on the normal capacity. If the question is silent, 100% capacity will be our normal capacity. Got it? Okay. Now listen how the income statement will look like. First, talking about absorption costing. Sales we will take, keep it aside. Direct material, direct labor, direct expense, variable manufacturing overhead. Fixed manufacturing overhead absorbed will give you cost of production. To the cost of production, we will add opening stock of finished goods minus closing stock of finished goods. You will arrive at cost of goods sold. Now to the cost of goods sold, I will add admin overhead, both variable as well as fixed. Selling and distribution overhead, both variable as well as fixed on actual basis. Also, if at all I under-absorbed, what do you mean by that? I have incurred more expense, but I booked less expense. That's why we call it under-absorption. So whatever the expense is not booked in COP, no, that you add here. Add under-absorption. And over-absorption means what? You incurred less expense, but you have booked more. That means you have booked some extra expense which we really didn't incur. So that you reduce from the cost. You will arrive at total cost of sales. From the sales, if you reduce cost of sales, you will arrive at profit. You will arrive at profit. Is that clear, everyone? Once again. Sales you will take. Forget. Direct material, direct labor, direct expense, variable manufacturing overhead, fixed manufacturing overhead, absorbed. It will give you cost of production. To the cost of production, we are going to add opening stock of finished goods minus closing stock of finished goods will give you cost of goods sold. To the cost of goods sold, if you add admin overhead, both variable as well as fixed. Selling and distribution overhead, both variable as well as fixed. Add under absorption of fixed factory overhead minus over absorption of fixed factory overhead. You will arrive at profit under absorption. Got it? One last time. Sales, leave it. Direct material, direct labor, direct expense, variable manufacturing overhead, fixed manufacturing overhead, absorbed amount will give you cost of production. Add opening stock of finished goods minus closing stock of finished goods. Guys, how will you value closing stock of finished goods if the question is silent about valuation? FIFO. That means in closing stock, whatever we produce during the period, that is left. That means cost of production divided by produced units will give you cost per unit. that you should multiply with closing stock. So you will arrive at COGS. To that, if you add admin overhead, both variable as well as fixed, selling and distribution overhead, both variable as well as fixed, add under absorption of overhead minus over absorption of overhead, you will arrive at total cost. From sales, if you reduce total cost, you will arrive at profit. Is that clear? Sometimes in some questions, they might generally give variable production cost, fixed production cost. Variable production cost, not variable production overhead. That means variable production cost includes your direct material, direct labor, direct expense, variable manufacturing overhead. You don't have to take this four separately again.
Variable production.
Variable production cost means it includes all the four. Whereas fixed production cost means it will include your fixed production overhead. Got it? Now talking about marginal costing. Listen, sales we will take. Then direct material, direct labor, direct expense, variable manufacturing overhead. What? Variable manufacturing overhead. That's all. Will give you COP. Don't add fixed manufacturing overhead, because in marginal costing, irrespective of that overhead, we are going to treat it as period cost. We are going to incur on time basis, not on production basis. So direct material, direct labor, direct expense, variable manufacturing overhead will give you cost of production. To that we will add opening stock of finished goods minus closing stock of finished goods will give you cost of goods sold. To the cost of goods sold, if you add variable admin overhead, variable selling and distribution overhead, you will get total variable cost. From the sales, if you reduce total variable cost, you will get contribution. From the contribution, if you reduce fixed manufacturing overhead, fixed admin overhead, fixed selling and distribution overhead, you will arrive at profit. Got it? Got it, everyone? Once again, sales, leave it aside. Direct material, direct labor, direct expense, variable manufacturing overhead will give you cost of production. Add opening stock of finished goods minus closing stock of finished goods will give you cost of goods sold. Add variable admin overhead, variable selling and distribution overhead, you will arrive at contribution, total variable cost. From sales, if you reduce total variable cost, you will find out contribution. From the contribution, if you reduce fixed cost includes fixed manufacturing cost, fixed administration cost, fixed selling and distribution cost, you will arrive at profit. Guys, generally, not generally, whenever the stock is there, profit under absorption and profit under marginal will not match. Profit under absorption, profit under marginal will not match. Generally, what students will think is that is because of under absorption, over absorption. That is not the case. Because under absorption, over absorption, anyhow we are adjusting here. Before arriving at profit, if at all we book less expense, we are adding cost and increasing expense. If we book more expense, we are reducing and taking it out. That means whatever the difference is coming, that is not due to absorption. Because our under absorption, over absorption is already adjusted. Then what is the reason, sir? Reason is valuation of inventory. Why? In absorption costing, your inventory cost includes 5 costs: direct material, direct labor, direct expense, variable manufacturing overhead, fixed manufacturing overhead. These 5 things will be there. Whereas in marginal, this includes only 4 expense: direct material, direct labor, direct expense, variable manufacturing overhead. That means automatically your value of opening stock, value of closing stock won't match. Value of opening stock, value of closing stock won't match. When value of opening stock, value of closing stock won't match, do you think your profits will match? Which inventory will have more value? Absorption costing, because it has 5 cost elements. And you know that if opening stock is more than closing stock, that means effect of opening stock will be there. How opening stock and profit are related? Inversely proportional, because opening stock will increase the cost. Whereas if closing stock is more than opening stock, then closing stock effect will be there. How closing stock will be related to profit? Directly proportional. Why? Because closing stock is reduction of the expense booked during the period. Reduction of the expense leads to more profit. So this is the case. That means in any given question, if the opening stock is more than closing stock, that means opening stock effect will be more. We know that whether it's opening stock or closing stock, in which method the value of inventory will be more? Absorption. So in absorption, profit will be less compared to marginal. If closing stock is more than opening stock, that means closing stock effect is there. In absorption, value of inventory will be more. That means profit will be more in absorption, less in marginal. Like that. Got it? Absorption. Always value of inventory, whether it's opening or closing, it's always more in absorption. So when it's more in absorption, we are going to take whether it is opening stock is dominating or closing stock is dominating. If opening stock is dominating, then profit in absorption will be less, because opening stock is more in absorption compared to marginal. If closing stock is dominating, then profit under absorption will be more, because closing is dominating opening, and absorption only closing stock value is more than marginal cost closing stock. Got it? And always remember, whenever they ask you to reconcile, you are not going to take your under absorption, over absorption and all. Reconciliation will be done just by taking your valuation of inventories. Okay, done. So these are the certain things. Hope it is clear. So profit under absorption costing and marginal costing might not match due to valuation of inventories. If opening stock units are more than closing stock units, then marginal cost will give more profit. If closing stock are more than opening stock units, then absorption costing will give you more profit. Got it? And sometimes they don't give the value of your opening stock. That time what you should do, you should value it as per standard cost. Standard cost they will give. Okay, they will tell standard variable cost. They will tell budgeted overhead, fixed budgeted units. Using that you can find out standard rate per unit now. So under absorption costing, how do you value your opening stock? Standard variable cost plus standard rate of fixed cost. In marginal costing, it is only valued as per standard variable cost, because your value of inventory won't include your fixed cost. You should refer practical problem 17 of ICAI material. ICAI material. I mean, in class we already solved it. You just go and check it once. Whoever didn't see it, it's advised to go and check ICAI marginal costing practical problem number 17. They are telling no, variable cost standard is 11, actually is 35,000 more. What you should do for a variable overhead or variable cost, 11 into units produced plus 35,000. Okay. Whereas for opening stock valuation under marginal, you should take 11 rupees per unit. Under absorption, you should take 11 rupees per unit, and they are telling your budgeted factory cost is 3,80,000. and 3,60,000 and normal capacity is 1,80,000, you will find out 2 rupees per unit. Now what you will do, you will add this 13 rupees and take it. Under marginal only 11, under standard it is 13 for the opening stock. Hope it is clear. Don't worry if it is not clear. Just all you have to do is go and check the ICA practical problem number 17. This point will be clear. In ICMA material, such questions are not there, but you never know. We have already seen many questions getting repeated. That is the thing. Fixed manufacturing overhead should be absorbed on the basis of normal production capacity and not on the actual or total capacity. Fixed manufacturing overhead should be absorbed on the basis of normal production capacity and not on the basis of total capacity. Hope you guys got this. Yes? Fine. Okay. Now we'll be starting with IDP, indifference point. What is it? IDP, indifference point. Guys, what is the meaning of IDP? IDP is level of production at which cost or profit under different alternatives shall be same. In management accounting, this is there in chapter number 4, short-term decision making. In cost accounting, questions are not there on this, but the concept to know it is always better. So, level of production at which cost or profit under different alternatives shall be same. That only we call it as IDP. That means, if we say cost IDP, what do you mean by that? Cost IDP means, if at all you produce, let's say some X number of units, you produce X number of units under alternative 1, or you produce X number of units under alternative 2. You produce X number of units under alternative 1, or you produce X number of units under alternative 2, your cost shall be same. That is your cost IDP. Profit IDP means, if you produce X number of units, if you produce X number of units under alternative A, if A1 produced and sold, same. If you produce X number of units in alternative 2, then your profit shall be same. In that scenario, we call that X as a indifference point. Profit indifference point. Got it? And always remember this point, guys. Indifference point exists only if one alternative is better in terms of variable cost and the other one is better in terms of fixed cost. Your indifference point exists only if one alternative is better in terms of variable cost and one more alternative is better in terms of fixed cost. Reason being, if only one alternative is better in both the terms, then there is no point that they both are going to meet. To coincide, there should be, one should be going slow in something, one should be going fast in something, then only somewhere the chart will meet. Otherwise, both difference will keep increasing rather than decreasing. So always remember, IDP will exist only if one alternative is better in terms of variable cost, one more alternative is better in terms of fixed cost. Listen, I will just show with one example. Listen. Let's say we have two machines available in the market. Machine 1, machine 2. Sir, that IDP you told no exists only if like variable fixed, one is better. How to, like, what if we get confused in exam? Remember, in examination, if at all you get IDP as negative number, then recheck once. Still you got negative. That means IDP in positive it won't exist. That means negative means don't write and come IDP minus 200. No, IDP don't exist. IDP don't exist. Negative we will get only and only if one alternative is better in both the terms, variable and fixed. So IDP don't exist. So if IDP if you get positive, then only it exists. It will exist only if one is better in terms of VC, one is better in terms of FC. Now listen. Machine 1 is there, machine 2 is there. Machine 1, variable cost per unit. Let's say machine 1 100, machine 2 120. Fixed cost. Machine 1 1 lakh. Machine 2, let's say 90,000. Machine 1 1 lakh, machine 2 90,000. Now, how to find out cost indifference point? You know that indifference point exists here. Why? Variable cost wise machine 1 is better. Fixed cost wise machine 2 is better. Variable cost wise machine 1 is better. Fixed cost wise machine 2 is better. Now, listen. Can I say that let indifference point, that is cost indifference point, be X. Let the indifference point or cost indifference point be X. Then can I say that total cost under machine 1 will be 100X plus 1 lakh. When you produce X number of units, your total cost under machine 1 will be how much? 100X and 1 lakh. When you produce X number of units, in machine 2 cost will be 120X plus 90,000. What is X, by the way? Indifference point. What do you mean by that? If you produce X number of units, under alternative 1 as well as alternative 2, cost will be same. Got it? Now, can I say it as 20X is equal to 10,000. 20X is equal to 10,000. Can I say that X is equal to 500 units? That means if at all you produce 500 units, cost under alternative 1 as well as cost under alternative 2 shall be same. Cost under alternative 1 as well as cost under alternative 2 shall be same. Is that yeah, because it has nothing to do with the units. I mean, sorry, fixed cost. Fixed cost won't change. And fixed cost is total, not per unit. Now, X is 500. That means at 500, cost under both the alternatives shall be same. However, now, what if your units to be produced is less than 500? What if your units to be produced is more than 500? What if your units to be produced is less than 500? What if units to be produced is more than 500? Guys, if it is less than IDP, go for one with the lower fixed cost. If at all it's less than IDP, go for one with the lower fixed cost so that you can recover your fixed cost in a faster manner. Whereas if more than IDP, then recovering fixed cost is not a problem because you are having good demand in the market. That means you are going to incur lot of variable cost. So select one with the lower variable cost. Got it? If units produced are less than IDP, go for alternative with the lower fixed cost. If the units produced are more than IDP, go for alternative with the lower variable cost. Lower fixed cost, more than IDP, go for lower variable cost. All you have to remember is English alphabets. A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, Q, R, S, T, U, V. Here, if at all it is lower than IDP, go for one with the lower fixed cost. If it's more than IDP, go for one with the lower variable cost. Got it? Because lower the fixed cost, early you can recover it. So when less number of units, you want to recover it as soon as possible so that you will come out of that break-even point. Whereas if it is more units you are producing, break even is not your problem at all. Your problem is you incurring more and more cost. What cost you will incur more and more? Variable cost, because fixed cost is fixed. So we will select one with the lower variable cost. Few questions are there in your material, as well as few questions we have seen in the ICA material. If you remember one marginal costing, ICA material practical problem, last one question is there. Last but one, I'm not sure. They have given X and Y, something like that. Okay, X and Y are there. Contribution of Y is 1/5 less than X, something like that they are telling. F1 and F2, fixed cost which is equal to 180,000, etc., etc. You should look into that question. Okay, that is nice question which is there in practical problem of ICAI. So if units produced are lower than IDP, select the alternative with the lower fixed cost. If the units produced are higher than IDP, select the alternative with the lower variable cost. So cost IDP means what, guys? Variable cost of alternative 1 and fixed cost of alternative 2 will be equal to variable cost of alternative 2 and fixed cost of alternative 2 if the IDP is X number of units. Profit IDP means what? Profit of alternative 1 shall be equal to profit of alternative 2. How do we arrive at profit of alternative 1? Contribution of alternative 1 minus fixed cost. Contribution of alternative 2 minus fixed cost. How do we arrive at contribution? Sale of alternative 1 minus variable cost of alternative 1. Sale of alternative 2 minus variable cost of alternative 2. That is your profit indifference point. Hope it is clear, everyone. Oh. Next, we have something called as key limiting factor as well as combined break even. Okay, key limiting will come later. These are the common topics. These two are the common topics of your costing as well as management accounting. After these two common topics, we will be discussing only management accounting related stuff. Okay, fine. Now we'll be starting with break-even point when multiple units are produced. Break-even point when multiple units are produced. How to find out break-even point when multiple points are produced, sir? Units are produced. For example, let's say A is there, B is there, C is there. Okay. Selling price per unit of, let's say 50, 40, 30. Selling price per unit are 50, 40 and 30 minus variable cost. Let's say 30, 25, 20. Okay. Now contribution per unit 20, 15, 10. 20, 15, 10. So listen, sales mix units, sales mix units. Let's say if you are selling 10 number of units, in the 10 number of units, 3 will be A, 4 will be B, other 3 will be C. Understood? If at all you are selling 10 units on an average, in that on an average, 3 will be A, 4 will be B, 3 will be C. Your fixed cost is, let's say, rupees 1 lakh. Your fixed cost is rupees 1 lakh. Now, is this fixed cost related only to A? No. Is this fixed cost related to only to B? Is this fixed cost related to only to C? No. Generally, what is the break-even point formula? First, let me talk from the units point of view. Break-even point, units. Fixed cost divided by contribution per unit. Correct, no? Fixed cost divided by contribution per unit. But here, will you take contribution of A only, B or C, or all the contribution together should contribute towards 1 lakh? All of that together should contribute towards 1 lakh. So what I should do is, whenever there are multiple products are there, how to arrive at break-even point, sir? Combined break-even point I have to find out. Combined break-even point I have to find out. How do you find out? I will take the fixed cost divided by combined contribution. I will find out combined contribution per unit. Now, how can you arrive at a combined contribution per unit, sir? Very simple, guys. Combined contribution is weighted average of your contributions. That means what, sir? Product A, how much is the contribution per unit? 20. How many units are sold when total 10 units are sold? 3. Plus product B, how much is contribution? 15. How many units are sold when 10 units are sold? 4. You can take decimals also, 0.3, 0.4, 0.3, like that. Or 10 is the contribution per unit. When you are selling 10 number of units, 3 units were sold. Divided by 10. Weights. Total weights. Summation WX divided by summation W. How much? 15. Let's say then fixed cost is 1,50,000 to be, reduce that, round off all those nonsense things. Is that clear, everyone? Hello? Now, guys, how much is your fixed cost? Fixed cost is rupees 1,50,000 divided by how much is your combined contribution? Rupees 15, which means 10,000 units. You should sell 10,000 units. In this 10,000 units, you should sell A, B, C. Correct? No? A is there, B is there, C is there. A 3 by 10, right? So 10,000 into 3 by 10. 3,000 units. B is 4 by 10. 4,000 units. C is 3,000. 3,000 units. Got it? So you should sell 3,000, 4,000 and 3,000 units so that together you can achieve break even. For example, you can see here 3,000 of A. Per unit, how much is the contribution of A? 20 rupees, right? 20 into 3,000. 60,000. Here 4,000 into 15. 60,000, right? 3,000 into 10. 30,000. How much is your total contribution? 1,50,000. How much is your fixed cost? 1,50,000. Break even is achieved. Got it? They might also ask you, they will give like this only. What should be the sales of ABC when you want to achieve profit of 30,000 on it? Then what you should do? What is the formula for desired profit? Desired sales. Desired sales is equal to fixed cost plus desired profit divided by PV ratio or contribution per unit. Here, for the fixed cost, I should add desired profit and do the normal workings. Just like normal workings only. Understood or no? Sorry? You have to recover fixed cost plus desired profit from the contribution of all the 3 products. Is that clear? Hello. Now, what if? What you guys are doing? What if the break even they want in amount? What if break even they want in amount? Then what you should do? Listen. What is the formula for break even in amount? Fixed cost divided by PV ratio. That means I want combined PV ratio, not combined contribution. Same like that only we are computing. But remember, to find out combined PV ratio, sales mix ratio you take, no, that should not be the sales unit ratio, because we are not talking from unit point of view, we are talking from amount point of view. That means you should take sales amount ratio. What is that, sir? Listen. Sir, instead of this, can't we just find out in units and multiply with amount? You can. But the problem is not there. Problem is here. ABC 3 products are there. Sales they have given. Sales they have given. Let's say 1,50,000. $1,60,000 and 90,000. Sales they have given like this. Now, selling price they are telling 50, 40, 30, right? 30. Sir, simple, you can find out number of units sold, that would be the ratio, no? You can do that way also, no? You can do, but why to complicate? It is also easy only. See what I will say now. Variable cost is there. 30, 25, 20. PV ratio 40%. How much is 15 by 40? 37.5. 37.5% and 10 by 30, 33.33%. They have given like this. So, listen here what you should do. Can you tell me the sales mix now? Sales mix in ratio, if you want me to say. Let's say in percentages. Guys, total sales is how much? 4 lakh. Correct? Or 3 lakh? 4 lakh. Now, 1,50,000 divided by 4 lakh into 100. 30? Point? That's it. 37.5%. 40%. 90,000 divided by 4 lakh into 100. 20? 22.5%. Now listen guys. What I should do, I should find out combined PV ratio. How can I find out combined PV ratio? Sir, I will take PV ratio 0.4 into, guys, always remember, I should take the ratio of sales amount, not the sales units. So here I know that 37.5, 40 and 22.5 are sales amount ratio. So I will take directly 37.5 plus 0.375 into 40 plus 0.3333 continuously will get into 22.5. Sir, one you took in decimal, one you took in whole number. I just don't want to multiply with 100 at last. I don't want to divide by 100, multiply by 100, all those drama I don't want. That's why one I took as whole number. Now, how much is this? Like that 0.333 continuously you took. Still you got how much? 49999. 37.5 then. So your combined contribution is 37.5%. How much is combined contribution? 37.5%. Therefore, your break-even sales in terms of rupees will be, how much is fixed cost? 1,50,000. How much is combined PV ratio? 0.375. How much is combined break-even sale? 4 lakh. Okay. Now, this 4 lakh I should divide between A, B and C. A sales is 37.5%. 4 lakh into 37.5%. 1 lakh. Ayyo, our bad. Coincidentally, I have taken that. Apparently, it's proving that those are the break-even sales. Can't help. Leave. Next one. 1 lakh 60,000. 90,000. Correct now? Whether it's correct or no, how to check, sir? Guys, what is the contribution from A now? 1,50,000. Contribution percentage is 40%. 60,000. B, 1,60,000. Contribution percentage is 37.5%. 60,000. And C, 90,000. PV ratio is 33.33. 30,000. So how much you are recovering? 1,50,000. That's it. Is that clear or not clear, everyone? Hello. So this is what you have to do when it is given in terms of amount. So you should take combined PV ratio, but always remember while finding out combined PV ratio, it should not be the ratio of units. It should be the ratio of amount. It should be the ratio of amount. Now, sir, whatever they have given, how to find out whether it is in terms of amount or whether it is in terms of units? If they say sales unit ratio, of course unit. If they say sales amount ratio, always amount. Sometimes they don't say that. Sometimes they don't say that. So when they don't say that, what you should do? If at all they give in ratios like 5:4:2, that means here they are talking from the point of view of units. If they say 40%, 30%, 30%, like these percentages, then they are telling you that it's a sales amount ratio. They are telling it as a sales amount ratio. Got it? Which one? This one? In ICI material, one practical problem is there. If I'm not wrong, it should be 20. Prisha Limited. That one question you have to go and check. Okay. Assuming all the questions of ICMA material is done once. See there, break-even point when multiple units are produced. If you want in units, common fixed cost divided by combined contribution per unit. If you want it in amount, combined or common fixed cost divided by combined PV ratio. How do we arrive at combined contribution? Weighted average of contribution per unit in the sales mix, that is sales mix unit ratio. How to arrive at amount? Combined PV ratio, that is PV ratio into sales mix ratio, but sales mix ratio of amount. Sales amount, not sales units. If sales mix is given in ratio, assume it to be unit ratio. If sales mix is given in percentage, assume it to be sales amount ratio. Sometimes they will tell sales amount ratio and they have given in ratios. That time you don't assume anything. They have already told sales amount, no. That is sales amount ratio only. Don't tell that, oh, yo, it's not given in percentage, it is sales unit ratio. No. Hope it is clear about your combined break-even. Anyone, any doubt? Combined break-even as well as combined desired profit. Both are covered here. Anyone, any doubt? Great. With that, we have completed our break-even point when multiple units are there. One last common topic is remaining, but examination point of view, one of the important common factor, that is key limiting factor. Ha, madam, what is it? What? Where? Here I am taking in percentage only, no madam. Why division of 100 will come? That's what. Then you should have taken it as both as whole numbers. Weighted average you have to apply. That's it. You have to find out weighted average. If you are taking whole numbers, then you should divide by 100. If you are not taking whole numbers, then no need to divide by 100. Just weighted average it is. Okay. Now we are starting with something called as key limiting factor. We call it as KLF. What do you mean by this key limiting factor, sir? Key limiting factor is nothing but, guys, if anything stops you from producing how much ever you want. If anything stops you from producing how much ever you want, that thing only we call it as key limiting factor. It could be unavailability of material, it could be unavailability of labor, it could be unavailability of the capacity, all those things. Whatever will stop you from producing how much ever you want, that thing only we call it as key limiting factor. If many factors are stopping you from producing how much ever you want, then which will restrict you the most? Which will restrict you the most? That will be called as key limiting factor. All other things will be called as limiting factors. Then how to determine key limiting factor, sir? Find out as per limiting factors how much maximum you can produce everything. In that, which one is restricting you to the most, lowest of all those, that will be your key limiting factor. Okay. For example, as per production capacity, I can produce 20,000 units. But as per material, I can produce 18,000 units. As per labor, I can produce 16,000 units. Here all the three are limiting factors only. But in that, which is restricting me the most? Labor. I can produce maximum 16,000. Now that labor will be known as key limiting factor. Labor will be known as key limiting factor. Now, how it is useful for decision making, sir? Listen. Let's say we have two products. We have three products, let's say. A is there, B is there, C is there. A is there, B is there, C is there. Now, demand. Demand. For A, there is demand for 10,000 units. For B, there is demand for, let's say, 8,000 units. For C, there is demand for 6,000 units. Okay. Now, capacity. Capacity. A, you can produce, let's say, 8,000 units. B, you can produce 10,000 units. C, you can produce, let's say, 5,000 units. Now, my question is, guys, if at all the material, labor, etc. is available, A, how much you will produce? You will produce 8,000 units only. Why will you produce 8,000 units only, sir? Because although you have demand, you don't have so much capacity. B, how much you will produce? 8,000 units only. Why? Although capacity is there, you don't have demand for it. When capacity, demand is not there, capacity is there, what you will do with that? C, 5,000. Although demand is there, capacity is restricted. So always remember, whenever demand and capacity is there, you will select to produce the one with the lowest, not the highest. Lower of either capacity or demand you will take. Lower of either capacity or demand you will take. Is that clear? Okay. Now, listen. Selling price. A, let's say selling price is 100. B, let's say selling price is 150. C, let's say selling price is 120. Okay. Variable cost. Let me divide variable cost into material as well as other variable cost. Material as well as other variable cost. Now let's say A is using 5 kgs of material. A is using 5 kgs of material at the rate of, let's say, 5 rupees. Material cost will be 25. B is using, let's say, 10 kgs of material at the rate of 5 rupees, which is going to be 50. C is using, let's say, 4 kgs of material at the rate of rupees 5, which is going to be 20. Other variable cost, let's say 50, 50, 50. Other variable cost, let's say 50, 50, 50. That will give you contribution. That will give you contribution per unit. Please keep in mind, contribution per unit. First one 25, second one 50, third one 50. Guys, A is there, B is there, C is there. Everything is giving you positive contribution. That means you would love to produce everything. Yes or no? Because if negative contribution, that will increase my loss. If positive contribution, of course, it will always contribute towards my profit, or at least towards recovery of my fixed cost. So if it's positive contribution, I don't mind producing. Here I don't mind producing A, B and C. But the problem is, to produce 8,000 units of A, how many kg of raw material you need? 8,000 into 5, 40,000 kgs you need. To produce 8,000 of B, you need 80,000 kgs of raw material. To produce 5,000, you need 20,000 kgs of raw material. Correct? No? That means you need 1,40,000 kgs in total. For A 40,000, for B 80,000, for C 20,000. You need 1,40,000. But your raw material is restricted to raw material availability. Raw material availability, let's say 1 lakh kgs. To produce all the three, as all the three are giving me positive contribution, I should go for, I need 1,40,000 kgs of raw material. It could be, they can give labor hours, they can give machine hours, they can give units, anything as a restricting. Whenever question is silent, always remember, units are limiting factors. Units, what you can sell is limiting factor. That's why you are stopping yourself. Otherwise, why will you stop your production? Correct? No? That is the thing. So, now let's say raw material availability is limiting factor. Now my question is, can you produce all the three? 8,000, 8,000, 5,000? No. Then, which one you will produce more? Which one you will produce less? We don't know. Now, we will take a call on the contribution per unit basis, but here unit is not a restricting factor. Here raw material is a limiting factor. So what you should do, guys, step number 1, you found out contribution per unit. Sir, fixed cost you didn't take into consideration. I produce A more or A less. Fixed cost I have to incur. B more or B less. Fixed cost I have to incur. C more or C less. Fixed cost I have to incur. Yes or no? That means here I can't take call on the basis of contribution per unit as well as fixed cost. I should take a call on the basis of contribution per key limiting factor. You should take you should take decision on what basis? Contribution per key limiting factor. What do you mean by that, sir? Here you are making 25 rupees by using how many kgs of raw material? 5 kgs of raw material. That means per kg of raw material, how much you are earning? 5 per kg. Make it as 45. Or make it as 60. How much is contribution here? 40 na? Correct, no? Now 40 rupees you are making, 40 rupees you are making by using how many kgs of raw material? 10 kgs of raw material. That means per kg of raw material you are making 4 rupees. Per kg of raw material you are making 4 rupees. And talking about C, you are making 50 rupees by using 4 kg of raw material. That means per kg of raw material you are making 12.5 per kg. Got it? Now what I will do is I will rank them. This will be rank 1. Second step. Third step. This will be rank 2. This will be rank 3. Now I have to decide which one, how much I should produce. First I am going to produce C. So first I will produce C. How many units I will produce? Maximum how much ever I can. 5000 units. And how many kgs it will consume? 4 kgs. Correct? No? That means 20,000 kgs is what we consume here. Total how much was there? 1 lakh was there. Total how much was there? 1 lakh was there. Now in that 1 lakh you consumed 20,000. You consumed 20,000. That means you left with 80,000 kgs. Now my second priority is A. Rank 2 is A. A, how many units demand is there? Total 8,000 you can produce maximum. Correct? No? 8,000 into each and every unit will take 5 kgs. That means it will consume 40,000 kgs. That means in that 80,000, 40,000 is gone. Remaining is how much? 40,000 kgs. In that 40,000 kgs, I will decide to produce B. Because that is also giving me positive contribution. No, until my products give me positive contribution, I don't mind producing everything. So, in that 40,000 kgs, each and every unit takes 10 kgs. Correct? No? That means I can produce 4,000 units. I can produce how many units? 4,000 units. Anyone, any doubt here? Pakka. Great. Now this is my optimum product mix which will maximize my profit like anything. Other than this, there is no product mix which will maximize my profit. So how to find out contribution now? A is there, B is there, C is there. Total.
It also have 8,000 units. 5 rupees per kg means 40,000. It will be completing 1 lakh. Why it will have
40,000 was there.
but 8,000 units we could produce.
Yeah, but we don't have so much material. When I don't have so much material, I will go for one with the which will give me highest profit. I can't produce how much ever I want now. So A will produce how much, guys? 8,000. B we will produce how much? 4,000. C we will produce how much? 5,000. Okay. Now contribution. Generally what students will do is, here in Josh they will take contribution per kg. Gone. Those are units or kgs? Then you should take contribution per unit. A, how much is contribution per unit? 25, 40, 50. 25, 40, 50. So the total contribution will be 8,000 into 25. 2 lakh. 4,000 into 40. 5,000 into 50. Total 6 lakh 10,000. From this, whatever the fixed cost is there, I will reduce. I will arrive at a profit. I will arrive at a profit. Is that clear? Simple. These are your key limiting factor stuff. So, sir, what if they ask you minimum A you should produce so much, minimum B you should produce so much, minimum C you should produce so much? In that case, minimum how much ever we have to produce, for that how much kg of raw material required, you keep it aside. Remaining raw material will be there. Now, after producing minimum, that you rank, that you allocate on the rank basis. First, you should keep aside the minimum requirement. After that, whatever is available, you should allocate it on the rank basis. Allocate it on the rank basis. Now, I am not going to solve any key limiting factor here to explain you the concept, but in YouTube, you can find this one question, video. Go to this channel. If you haven't subscribed, subscribe. Go to video section. There here only. 1, 2, 3, 4, 4, 4, 8. 11th video is so far. As of now, 11th video, you will find this thumbnail. Crazy questions on decision making like that. This one. Here we have discussed 3 questions. First question is on pricing decision. Second question and third question is on key limiting factor with decision making. One with the minimum criteria. All these 3 questions you should go and watch once. So that in examination, if they give, it will be an advantage. Okay. Some examination questions I have taken and discussed. Okay. Other 3, if I really want to discuss that now, it will take around 45 minutes. That's the thing. Now, that was your key limiting factor thing. So, what is it, guys? Factors which is available in limited quantity and because of which organization will not be able to satisfy all the demand. Example, availability of raw material, machinery capacity, etc. What are the steps for selection of optimum product mix? First one, compute contribution per unit. Second step, compute contribution for KLF. Third one, rank on the basis of step number 2. When more than one limiting factors are there, one which limits the production to the minimum level out of all limiting factors shall be considered as KLF, key limiting factor. Got it? That's it. Which one? This is the notes. This there now already in chart. This one now. So with that, the common topics of cost accounting as well as management accounting in terms of marginal costing is done. Now we'll be going for the particular concepts of management accounting, whatever is left. Okay. Of course, in the chapter number 3 wise, nothing is left. It is all about decision making as well as transfer pricing. We'll take pricing decision and transfer pricing together. Before going for that, we'll complete all other decision making stuffs and okay. Now we'll be discussing about remaining concepts of marginal costing. If you know, already we discussed on our this shutdown or continue limiting factors. These 2 are already done. Remaining things we are going to see. As I already told you, pricing decision will be taken along with the transfer pricing as those are related. Now we'll be straight away jumping into make or buy decision. We are jumping into make or buy decision. Guys, tell me when it is advised to make, when it is advised to buy. For example, we need some raw material. We need some material for our production. We have 2 options. Option number 1, we will make it. We will make it or we will buy it. We have 2 choices. You can make it or you can buy it. So, how to take a call? When to make or when to buy? Very simple. The cost of making is lower than cost of buying from outsider. We would go for making. If at all cost of making is more than cost of buying, then we will go for buying. Cost of making is more than cost of buying, we'll go for buying. If cost of buying is more than cost of making, we'll go for making on our own. Now the thing is, listen to this very carefully. What do you mean by cost of buying? Always remember, cost of buying means not only what you pay to your vendor, not only what you pay to your vendor, not only the purchase price. Then what is that, sir? Purchase price. Sometimes whatever your vendor sells, it might not be suitable for you directly. That means after buying, you might have to make some modifications. After buying, you might make some modifications. So, purchase price plus cost of modifications, if any. Purchase price plus cost of modification, if any, that will be your cost of buying. That will be your cost of buying. Now, cost of making will be what? Cost of making. Guys, cost of making will be nothing but variable cost of production. Variable cost of production. Sir, why not fixed cost, sir? Are you make it or you don't make it? End of the day, you are incurring. So, why I will consider it for decision making? If I consider that in decision making, in the cost of making, that also should be added to cost of buying also. Why? Either you make or either you buy. You have to incur it, no? So, variable cost of production plus any specific fixed cost. Any specific fixed cost. That is, if at all you make, you are going to incur any specific fixed cost. That also will be treated as cost of making. And also one more thing, very important, very important, very important. What is that, sir? Opportunity cost. What is that? Opportunity cost. Now, sir, what the hell is opportunity cost? Guys, opportunity cost is nothing but your contribution lost. What is it? Contribution lost. Opportunity cost is nothing but your contribution lost. Sir, what is this contribution lost? Listen, guys. If at all I have idle capacity in my factory, that is, if I produce, I will utilize that factory capacity. If I don't produce, I won't utilize that factory capacity. If that is the case, there won't be any opportunity cost. But listen, if at all I should go for the production, then I have to sacrifice my other production. For example, we are talking about raw material R. R takes 2 hours. Now, our total capacity of the factory is 1 lakh hours. We are producing finished product, let's say F, which takes 5 hours. Finished product F, which takes 5 hours. That means, or let's say 2 hours only for the time being. That means that F will give me contribution of 20 rupees. Now listen, we are not utilizing full 1 lakh hours. We are utilizing 50,000 hours. To produce F, we are utilizing our factory to the extent of 50,000 hours. Now R, we want 40,000 units. Or let's say R, we want 20,000 units. How much we want? R, we want 20,000 units. Either we can go for buying or we can go for making. If at all we go and buy, what we pay to them? Purchase price plus cost of modification. However, if at all we make, we have to incur variable cost. Along with that, listen here very carefully. To produce this 20,000 units, how many hours is required? 40,000 hours. So many hours, by any chance is it free here? Of course it is free. Why? Out of that 1 lakh hours, only 50,000 hours are utilized. Other 50,000 is idle. That means we can use that. That means you are losing nothing by producing product R. Are you losing anything? No. But what if we are already utilizing 1 lakh hours? What if we are already utilizing 1 lakh hours? Guys, if at all we are utilizing 1 lakh hours, that means to produce this 40,000, we have to reduce our production of F. Because if I allot 40,000 to producing R, then I can allot towards F how much? 60,000. I can allot towards F how much? 60,000. That means I am losing somewhere 40,000 hours towards F. In that 40,000 hours, how much unit I should have produced? F. I would have produced 20,000 units. I would have produced 20,000 units. After producing 20,000 units, how much contribution I would have made from this? I would have made 4 lakh rupees of contribution. Correct? No? That means when I produce raw material R, will I be able to produce this 20,000 units? No. That means I am losing 20 rupees per unit. Yes or no? That means, don't you think that is also our cost? I am not incurring it, but I am losing it. Opportunity cost. I am letting it go. So always remember, guys, if at all you are working at full capacity or the capacity is not sufficient, if you are working at full capacity or the capacity is not sufficient, then you will go for buying. I mean, if you go for making, then you have to incur some opportunity cost. Opportunity cost is nothing but because of producing that product, what you are losing. Because of producing that product, what you are losing, that will be your opportunity cost. Hope you guys understood this point. Yes? 1 second. Okay, look into this now. Make or buy. If cost of making is greater than cost of buying, what we will do? If cost of making is greater than cost of buying, what we will do? Buy. If cost of making is lesser than cost of buying, what we will do? Make. And cost of buying is what? Whatever we pay to purchase plus additional cost incurred to modify, if any. What is your cost of buying, making, guys? Listen. Operating at lower than capacity. You are already operating at lower than capacity. And resource required for making also won't exceed that idle capacity. That means you don't have to sacrifice anything. You don't have to sacrifice anything. In that case, it is just variable cost plus additional cost, if any. Okay. However, you are operating at full capacity. That is, at capacity means full capacity, or operating at lower than capacity. But resource required for making exceeds idle capacity. That means you have to sacrifice something. Then it includes your variable cost plus additional cost plus opportunity cost. Got it? Understood or no? That is your make or buy decision. Quickly look into this illustration number 2. You are the management accountant of XYZ Co Limited. The MD of the company seeks your advice on the following problem. What is the problem? Company produces a variety of product, each having number of computer parts. Product B takes 5 hours to produce on machine number 99 with working at a full capacity. Guys, we are already working at full capacity. B has a selling price of 50 and marginal cost of 30. That means product B, what is your contribution? 20. What is your contribution? 20. A10, a component part which could be made on the same machine in 2 hours. By the way, 20 rupees you are making from how many hours? 5 hours. That means per hour how much it is contributing? 4 rupees. Please keep in mind. Per hour how much it is contributing? 4 rupees. Part A10, a component part could be made on the same machine in 2 hours for marginal cost of rupees 5 per unit. The supplier's price is 12.5. That means if at all you go and buy from outside, you have to pay how much? 12.5. No information about cost of modification. So we are going to consider it as 12.5 only. Cost of buying is 12.5. Should the company make or buy it? Assume the machine hours are limiting factor. That means you can't exceed. What do you mean by that, sir? Listen, to make, how much you will incur? Variable cost to make. For marginal cost of rupees 5 per unit. 5 rupees you will incur. But to make that, you need 2 hours of machine. If at all you use 2 hours of machine to produce this, then you can't produce product B for 2 hours. Product B is giving per hour how much contribution? 4 rupees. That means don't you think you will lose 8 rupees? By producing product A, you are incurring variable cost of 5 rupees. Plus, because it is operating at full capacity, if you want to produce product A10, then you can't produce B. When you don't produce B for 2 hours, you will lose contribution of 4 rupees per hour. That means you will lose, 20 rupees you will lose for 5 hours. That means in 1 unit of B time, you can produce 2.5 unit of product A10. That means per unit of product A10, how much you will lose? How much opportunity cost you will lose? 20 rupees, 2.5 units. So per unit, 8 rupees. You are understanding? That means 8 rupees you are going to lose. So you will incur 5 rupees plus 8 rupees you will lose in that. So your cost of making is how much? Not 5, it is 13. Cost of buying is how much? 12.5. Will you buy or will you make? Buy. So see there, cost of buying is 12.5. Cost of making 5 rupees variable plus 20 rupees you would have made by using the machine for 5 hours. That means per hour you would have made 4 rupees. Because you are using for this part, you are not able to make that. When you are not able to make that, 13 rupees will be your cost of making. So contribution loss due to not producing B is rupees 8. So as cost of making is costlier compared to cost of buying, it's advised to buy the component A10. Got it? Look into one more illustration, illustration number 3. One more illustration, illustration number 3. At a TV manufacturing company finds that while it costs 6.25 to make the component X, the same is available in the market at 4.85 with the assurance of continued supply. The breakdown of the cost is as follows. Should you make or should you buy? Listen guys. What are the cost of making? Material, labor, other variable, depreciation and other fixed cost. That means this is fixed cost. Yes or no? Moral of the story. You make or you buy. You have to incur this. That means, should I take this for decision making or no? If I take it for decision making, I should take it for both making as well as buying. If I don't take, I should ignoring both. Listen. That means excluding that, your cost of making is how much? 5. Cost of buying is how much? 4.85. Still cost of buying only is cheaper option. So we should go for buying the product. Understood? If at all you consider both into factor, then it will be 4.85 plus 1.25. 6.1. Cost of making is 6.25. So as per unit it will be costlier by 0.15. It's advised to go for buying. Hope you guys understood there. Look at this question one more. Carbon Limited manufactures 50,000 units of product with the following cost breakup. See there, they have given fixed cost of 4 rupees. So this is 16. That means other than fixed cost, how much is your cost? 12. Correct now? The product with the same specification is available in the market for 14. So if you go to buy, it will cost you 14. If you make, it will cost you 12, not 14. Please keep in mind. Because in the 2 is fixed. You make or you buy, anyhow it's not going to affect. That means, will you make or will you buy? You will make. What would be your decision if the supplier offers at rupees 11? We will buy it. What about 12? You make or buy, it's not going to make any difference. But it would be great if we buy. Why? Our capacity will be idle. So we can use it for some other purpose if any opportunity is there. Got it? I mean, you can conclude it this way. As cost under both the alternatives are same, from financial perspective, any alternative can be chosen. However, it is advised to consider non-financial aspects also while making decisions. Rather open the notebooks, you will find the same. If you have written. Okay. Now listen. Look at this. Look at this illustration number 5. Or this illustration 5 and all you do. They might give 2 different fixed costs. In that case, what we should do? See illustration number 17. I think it should be additional illustration number 17. Rather than just flipping the pages, just concentrate here. Rather, after going home, you can find those illustrations. Okay? Concentrate now. You are the management accountant of F&Co, which manufactures stove, has an opportunity to buy the handles for the stove for rupees 8. The MD is not sure about what should be done for the best interest of the company and need your help in arriving at the decision. This purchase would affect price, volume and cost as follows. If you buy it, then they are talking about selling price of stove 340. 500 units you can produce. If you make also 500 units you can produce. Moral of the story, no opportunity cost as such. No opportunity cost as such. Unit variable cost if you buy will be 88. If you make, it will be 95. Purchase part will be 8 rupees 0. And see there, fixed cost is not same. If at all fixed cost is same, I would have taken decision just on this basis. If I make, my variable cost would be 95. If I buy, it would be 96. I would have gone for making. But here fixed cost is different. So see there. Variable cost would be how much? 88 into 500, 44,000. 500 into 95, 47,500. Purchase cost, only in buying it will be there, 8 rupees. 8 into 500, 4,000. In make it won't be there, fixed cost is there. By looking at the cost of making is costlier than cost of buying. So it's advised to go for buying. So whenever it is there like this, 2 different fixed costs are given, please use this concept. Okay, consider both for decision making and take a decision. If fixed cost was same, I would have taken directly. Got it? That's it. Buy or make? That's it. Shall we see one more? No. Make or buy done. Remaining whatever make or buy is there, that we are going to see examination question. Next one. Guys. Next one is your accept or reject. Accept an order or reject an order. When will you accept the order? When it gives you profit more than what is existing, or when it gives you desired profit. When you will reject? When it won't give you the desired profit. Any proposal it is. That's the case. That's it. That's your accept or reject. Next, your KLF we have already discussed, and few questions we have discussed. Correct? Here one question is there. In costing also it's there, as well as in FM also it's there. Sorry, FM no. MA. It's there. When sales units are key limiting factor, then contribution per unit and rank them. Sales amount is key limiting factor, then contribution per rupee of sales you have to find out, rank them. Material and labor. If you remember, today morning we discussed. This is the one I told. In class it's discussed already in additional question discussion of this one. Wheat, paddy, that question. Test also I had given. One more, baby rose, baby lily. That also we have discussed. If you are confused about this, just you have to go and check that YouTube video. There you will find. One more is your replacement decision, guys. When will you replace the machine? When? Exactly when? When it stops working. Crazy. When the cost under new alternative will be lower than cost under old alternative. When cost under new machine will be lower than cost under old machine. In simple, when new machine proves to be more beneficial than old machine, we will change it. Otherwise, we won't change it. Here your indifference point, that concept and all will come. Okay. So there is one question of this x1, x2, x3. Just go through that once. Baby rose, baby lily. Where? Then it's there in YouTube. Same. In MA additional we took. In additional it's there, it seems. Check, go and check. Now listen. I think in MA additional we have taken all the questions of marginal costing from ICMA plus ICAI. Because 20-30 marks chapter can't take risk. No risk. Look at this illustration. I will just show it. Okay. When 3 or more alternatives are there, how to go for indifference point. X Limited want to replace one of its old machine. 3 alternatives, namely X1, X2, X3 is there. The cost associated with these machines are as follows. Direct material, direct labor, variable overhead. So X1 will cost you per unit 100 rupees, variable cost. X2 200, X3 400. Fixed cost per annum are 250, 150, 70,000. Compute the cost indifference point. As I already told you, indifference point you can't compute for all the 3 together. You should go for different set. X1, X2, X2, X3, X3, X1. Now, first X1, X2, if I take IDP B, A, then cost will be what? Variable cost will be 100A plus 250,000. That is cost under X1 is equal to 200A plus 150,000. Using that, we got to know that A is 1000. Second, X2 and X3. If I take IDP B, then it will be 200B plus 150. That should be equal to 400B plus 70,000. Then B is 400 units. Cost IDP B 400. Next one, X3 and X1. That is 400C. If IDP of X3 and X1 is C, then 400C plus 70,000 should be equal to 100C plus 250,000. That will give 600. Now, how to make the decision? Guys, listen. Whenever there are more than one IDP is there, then it's very simple. Lower than IDP, select one with lower fixed cost. Higher than IDP, select one with lower variable cost. But whenever you get like this 3 range, what you should do is take the higher number first. Lower number you take. Which is lower number? 400. 400. If it is lesser than 400, 400 we got between X2 and X3. Correct? No? under x2 and x3, which is having lower fixed cost? x3. Under x2 and x3, which is having lower fixed cost? x3. Go for it. Because nothing can beat x3 when units are less than 400. Next, go for the higher number, which is higher, 1000. That is, what if it's more than 1000? 1000 where we got? x1 and x2. Under x1 and x2, which has lower variable cost? x1. Select x1. Higher than 1000, select x1. If it is somewhere between 400 and 1000, select x2. Reason, logic and all, now I can't keep telling as it's a revision. Remember, whenever the units are like this, first you should select lower range, higher range. What if it's lower than that lower range? Out of that to select one with the lower fixed cost. What if it's higher than higher range? Out of that select one with the lower variable cost. In between whatever is there, that will fall under that range. Hope it's clear how to do. Forget. Listen. Lower than 400. 400 is the least, no. 400 least is what we are getting compared to x2 and x3. That means x1 is not even in game. x1 is not even in game. That means x2 and x3. In that, of course, we will select. So x1 is gone. In x2, x3, we will select one with the lower fixed cost. So we selected x3. Correct? No. Now, more than 1000. More than 1000 we got in the x1 and x2. That means x3 is out of game. x3 is out of game. In x2 and x1, we will select one with the lower variable cost. That is x1. Now try to understand. Somewhere between this 400 and 1000. Now, when compared to x2 and x3, more than 400, which is better? x2 is better because it has lower variable cost. Now, x2 and x3 comparison is done. Whenever it's more than 400, we decided that x1 is top notch. Sorry, x2 is top notch. Now, when you compared x2 and x3, sorry, x2 and x1, see, when you compared x1 and x3, sorry, x2 and x3, we have decided that if it is something more than 400, go with one with the lower variable cost. Which has lower variable cost? x2. x2. That means x2 is a clear winner more than 400. But x2 is not the only winner. Even x1 has a lower variable cost when it is more than 1000. Now, when you compared x1 and x2, we got to know that x1 is better if units are more than 1000. Units are less than 1000, which is better? x2 is better. That means moral of the story, more than 400, less than 1000, which is falling under that category? x2. That's why we will select x2 for that. Got it? All these things you are going to see once you just go through that. And this is the question which I told about ICAI. If you want answers, just quickly take the photos, question as well as answer. Practical problem 19. That IDP I told now one question. This one. I think in additional question, we have discussed this already. But yeah, if you don't have notes, 19. 17 is for that absorption versus marginal. Done. You apply filter also. Take other half an hour. Add that snap me Sunday 1805. You don't like Snap. Then why you are in Snapchat? Just for seeing what others are doing. Me and you both are in same page now. I mean, I am there just to make sure, just to check who and all are studying, who and all are roaming, all those things. And best part, out of 200 snap, you will find 3 to 4 in front of their study material. All other 50 will be blank. Some black this thing. Finger you keep and take. That's the new way of studying. At least to put snap their opening book. That's the best part. But I analyze also. I check the chapters. Fine. We'll do one thing. Remaining things we'll see after break. We'll take break and we'll see the remaining things later after the break. Okay. We'll start. Now we'll be going to unit number 6. That is evaluation of alternative choices. It could be relating to cost. It could be relating to revenue. Out of different choices, alternatives available, which one would you select? The one which is going to give you more benefit. Simple. Revenue wise, which is going to increase your revenue. Cost wise, which is going to decrease your cost. That's it. Not much. All those things, when you see the question, you will get to know what to do. All these things, theoretically, not much things. Even your subcontracting or ancillarization, what is that? You can produce it on your own, or you can ask someone else to produce on your behalf. When will you produce it on your own? When subcontracting is costlier than what you are producing. Otherwise, you will go for subcontracting only. Expansion of business, when will you expand? When it is profitable. Your profit is going to be more than existing profit. You will be okay with expanding business. Otherwise, there is no point in expanding business. Got it? No, they are important, but question, when you see in question only, everything will be there. You don't have to go and solve it again. I mean, you don't have to go through theories and all. When you see the question, you will get to know. That's it. And this question you see once, guys. They are asking by noting PV will increase, PV will decrease, or PV will not change. As the case may be, state how the following independent situation will affect the PV ratio. Like this they will ask. They might ask in MCQ also. If this is the case, how you should solve? Always remember, if this is the case, all you have to do is take some digits of your own. Because they haven't given anything. Correct? No. Let's take selling price as what? 100. Okay. Variable cost 60. Contribution 40. Units 10. Done. First, what they are asking here? Increase in the physical sales volume. First, existing, how much is the PV ratio, guys? Sales will be 1000. I mean, you can say 40% directly, or for the time being. Sales is 1000. Variable cost will be 600. Contribution will be 400. Now, what if the sales volume, that means sales units, will increase? Now, let's say sales unit increased by 2 units. Then your sales will be 1200. Variable cost will be, your contribution will be 480. PV ratio will be how much? 40%. Last time how much? So moral of the story, PV ratio will not change. PV ratio will not change. Next, increase in the fixed cost. Will fixed cost has anything to do with PV ratio? No changes. A decrease in the variable cost per unit. Let's say variable cost decreased to rupees 50. Because of this, will selling price change? No. Then, can you tell me How much will be the sales? 1000 only. Main data is 1000. No. How much will be the sales? 1000 only. Variable cost will be 50 into 10. 500. Contribution. PV ratio. So automatically your PV ratio will increase. A decrease in the contribution margin, they themselves telling contribution margin decreases. If contribution margin decreases, PV ratio will decrease. An increase in the selling price per unit. Let's say selling price per unit will go to 150. Now 10 units into 150, 1500. 10 units into 60, independent scenario. Variable cost will be 600. Contribution will be, PV ratio will be 900 by 1500, 60. So PV ratio will increase. Decrease in fixed cost. It has nothing to do with the PV ratio. 10% increase in both selling price and variable cost per unit. So selling price will be how much? 110. Variable cost will be how much? 66. That means straight away without units also you can find out. 66 by 110 into 100. 60%. Earlier how much it was? Sorry, contribution is how much? 44. So 44 by 110 into 100. 40%. So no change. Correct? No? No change. A 10% increase in selling price per unit, 10% decrease in physical sales volume. So 10% increase in selling price, 110. 10% decrease in units, 9 units. 110 into 9, 990. Variable cost, 9 into 60, 540. Contribution, 450. PV ratio, 450 by 990 into 100. 45.45%. Moral of the story, increase. 50% increase in variable cost, 50% decrease in fixed cost. This has nothing to do. But 50% increase in variable cost. That means your variable cost is going to be 90. Selling price will be 100. So 90 by 100 into 100. Sorry, 10 by 100 into 100. 10%. That means your variable, PV ratio will decrease. They might not give like this conclusion, but they might ask it in the MCQ. How the PV ratio will react. Or when you are solving anything, they might give PV ratio increase, PV ratio decrease. You should know when it will increase, when it will decrease, all those things. Hope it's clear. Okay. Next we have transfer pricing as well as pricing decision to be done. Okay. We'll be discussing now pricing decision and transfer pricing. First, let's discuss pricing decision. First, let's discuss pricing decisions. After pricing decision and transfer pricing, we will be going to PYP. Okay, pricing decision. Give me a second. Okay, now we'll be starting with our pricing decision. Examination point of view, one of the important. Okay, one crazy question on ICA is there on this pricing decision, that is already covered in that YouTube video which I told. Three questions I told. No, in that first question is this one. So pricing decision. What is this pricing decision, sir? Pricing decision is all about how much you should charge to your customer. What should be the selling price? What should be the selling price? That's what your pricing decision is all about. Guys, to do this pricing decision, to do this pricing decision, all you have to do is simple. How much minimum price to be charged? If they don't give any desired profit, tell me one thing. How much minimum price we should charge? For example, listen here. I'll just show this through this example only. See there. Let's say we have capacity of 100 students. We have capacity of how much? 100 students. Now, in that, 60 students are already occupied. That means still we have idle capacity of how much? 40 students. Now 30 students came to us. They are like, sir, we want to join academy. Okay, fine, join, no problem. Now the thing is, they are asking us how much we should pay. Already existing students are paying 50k. Now listen, we have faculty cost of rupees 10,000 per student and app access cost of 2,000 per student and other variable cost of 3,000 per student. So variable cost is how much per student? 15,000 per student, and we have fixed cost of 20 lakh. We have fixed cost of 20 lakh. Now these 30 students are asking us, sir, how much will be fees for us? Minimum you quote. Minimum how much we will quote, guys? What do you think? How much we will quote? We will quote to recover our cost. At least to recover our cost. Correct now? What are the cost I should consider there? Only variable cost. Why only variable cost? Because this whether those 30 is going to join, not going to join. End of the day we are anyhow incurring it. Correct now? So I will quote them minimum 18,000. Sir, why minimum 18,000? Because if I quote them something less than that, still from my pocket for each and every student 15k is going. So why I will quote them something lower than 15,000? So minimum I will quote them is how much? Variable cost. Minimum I will quote them is what? Variable cost. However, they are like, sir, you people will give study material in soft copies. No, we want. I am not comfortable with soft copies. We want printout. Okay, you go and order through website. No, sir. You only give it to us. Okay. For us, let's say printing cost come to 5k. Now, 15k is our variable cost. Other 5k I am incurring on these people. Other variable cost. That means now I will charge them how much? 20,000. Now I will charge them how much? 20,000 minimum. Because if I charge them something less than 20,000, then will I incur loss or no? Of course I will incur loss. If I charge them more than 20,000, will I make profit or no? Of course I will make profit. Why? Fixed cost has nothing to do. More the contribution, more the profit. Correct no? Now, what if they offer us 50 students? They're like, sir, 50 of us are there. Guys, if 50 of them are there, my class capacity is how much? 100. Already how many are sitting? 60. That means how much vacancy is there? 40. But they are telling how much? 50. That means don't you think to accommodate this 50, I should let go 10 students out of this 60? My old students are there. No, in that I can accommodate only 50. Because to let come all the other 50 students, I should let go of this 10. Because they are not okay with coming in part. I can't say them 40 of you come. No, sir, everywhere we go 50 only. That means I should let go my old students. Guys, then how much should I charge? Should I charge them only 15 or 20,000? No. Why? I'm letting go of my old students. How many students I'm letting go? 10 students. How much they were paying? 50,000. Should I recover full 50,000 from them? No. Am I losing 50,000? Am I losing 50,000? I'm not losing 50,000. Why, sir? Because of the 10 students, I used to incur 15,000 of variable cost. No. That means I'm losing contribution, not the sales. If I lose sales, I have nothing to do. Because full sales is not my profit. In full sales, there will be variable cost also. Anyhow, if those students come to my class, on the 10 students, I have to incur 15,000. That means how much I am losing? I am losing 35,000. That means in total I am losing how much? In total I am losing 3 lakh 50,000. This 3,50,000 I should recover from this 50 students. That means per student how much I should recover? 7,000. That means minimum now I should quote them is 27,000. Minimum I should quote them is 27,000. Just like your make or buy only. Try to understand. Now you see, you will understand here. Operating at lower than capacity and new order also won't exceed the idle capacity. That means, will there be any opportunity cost? Will there be any opportunity cost? Why? Because whether I go to satisfy my new orders, I am losing nothing in terms of my old order. That means at least I am going to recover is variable cost. At least I am going to recover is variable cost. However, my customers are telling, no, we don't want normal packaging. You have to do some crazy packaging. For that extra 20 rupees we will incur. That means I am going to charge them variable cost plus additional cost. Variable cost plus additional cost. Is that clear? Is that clear or no? Okay. Now, minimum price to be charged if you are operating at capacity, that is full capacity. At capacity means always remember 100% of capacity or lower than the capacity. But new order exceeds the idle capacity. If no additional cost is involved, then minimum price to be charged is variable cost plus opportunity cost. If additional cost is involved, then minimum price to be charged is variable cost plus additional cost plus opportunity cost. Now, what do you mean by opportunity cost, guys? Contribution sacrifice from the existing sales to accommodate the new order. Whatever we are sacrificing from the existing sales to accommodate the new order. Hope you guys understood this. So how much minimum I should charge them if there is no desired profit given? If desired profit given along with the variable cost, I should recover my desired profit also. Getting it? So if we are operating at less than capacity and new order is also not going to ask us to sacrifice anything, then we are going to minimum charge them is variable cost. However, if at all our new requirement asks us to bit of adjust our existing sales, then whatever we are losing in terms of contribution, that also we should make sure will recover along with the variable cost. Otherwise, it will be loss for us, no? Just because I let go my 10 students, if I don't recover from these people, from the 10 students, I'm losing, no? That's the thing. Hope you guys understood. Just go through this once. Go through this once. If you need quick. If you need, quickly take the photo of this. At capacity means always 100. Less than 100%. So lower means that doesn't mean that always no opportunity cost. If you're operating at lower, but the new order, if you accept, it will exceed your idle capacity. Then again, you have to sacrifice your old sale. For example, your capacity is 1 lakh units. Now you are operating at 60,000. That means you are operating at lower. Now if the new order is for 40,000, up to 40,000, no problem. But if new order is for 50,000, you have to lose. Although you are operating at just 60,000, still the new order will make sure the 40,000 won't be sufficient. That's the opportunity cost will come into picture relating to whatever you lost. Is that clear? Scroll up. Swinger. Waves. What do you want me to do? Scroll down. Up. No, this is down. Yeah, this is scrolling down. Just I only don't understand. What you understand? Done. Done.
It's not in the PDF.
Sorry? Which PDF? No, this is not there in the PDF. 1 second, give me a second. Look at this, everyone. A company is manufacturing a product, marks an average net profit of 2.5 per piece on selling price of 14.3 by producing and selling 6,000 pieces at 60% capacity. That means at 100% capacity, how many units we can produce and sell? 10,000. 60%, 6,000, 100% question mark. His cost of sales is as under. His cost of sales when it is 6,000 units. Material cost per unit is 3.5, direct wages 1.25, works overhead 6.25. In that 3.125 is variable, 3.125 is fixed. Now the fixed is per unit in the given scenario. Fixed, always remember, per unit changes, total won't change. Variable, per unit won't change, total will change. Now sales overhead 0.8, in that 25% is variable, 0.2 is variable, 0.6 is fixed. During the current year, he intends to produce the same number, but anticipates that fixed charges will go up by 10%. With the direct labor rate and material will increase by 8% and 6% respectively, but he has no option of increasing the selling price. So he can't go beyond rupees 14 rupees he is telling. Under this situation, he obtains an offer for the further 20% of the capacity. Now my question is he losing any opportunity cost here? No. Why? Is operating at 60%, 40% is idle. New offer is for just 20%. That is means it is still well within the idle capacity. What minimum price he will recommend for the acceptance to ensure overall profit of 16,730? Guys, if at all this profit element wasn't there, then what we would be quoting them to recover? Only variable cost. No opportunity cost is there. No. Minimum how much they should recover? Variable cost involved to produce that. But here minimum criteria is there. Then what we should do, sir? See. Direct material right now 3.5. Yeah. They are telling it's going to increase by 6%. Students will generally do this mistake in exam. Material wages, they have given material first, wages first. But when giving increase, you see there. Direct labor and material they are telling. Material 6%, labor 8%. So material 3.71, labor 1.35. Works overhead 3.125, sales overhead 0.2. That means variable cost per unit as per news cost is 8.385. Computation of fixed cost, because 3.125 is at the given level. That means total fixed cost is 18,750 and 3,600. 6.25 into 50%. 3.125 into 6,000. 0.8 into 75%. That is 0.6 into 6,000 will give you variable cost. Because when you divided total variable cost by 6,000, you got 3.125 and 0.6. That doesn't mean that per unit it's going to remain always the same, because it is fixed cost. Getting it? So, and they are telling fixed cost is increasing by 10%. So your total fixed cost is 24,585. Your total fixed cost is 24,585. Is that clear? Now, whatever the selling price I should charge to them for the 20,000 unit, let it be X. 2,000 units, let it be X. Right now, this 6,000 I am going to sell at 14.3 only. For the 2,000 I am going to sell at X. My sales will be 85,800 plus 2,000 X. Variable cost. Because my selling price is changing, will my variable cost will change? No. 8.385 multiplied with 8,000. Variable cost you will find. That will give you contribution. From the contribution, if you reduce fixed cost, you will get profit. So when you solve it, you will get X as 11.3. That means minimum selling price you should quote them is 11.3. However, if that minimum criteria wasn't there, then you should have quoted them just 8.385 minimum. Because all I have to recover is this. If I recover a rupee more than this, that will contribute towards my profit. Because am I losing anything in terms of fixed cost? No. Whether I accept this, whether I don't accept this, I will incur that. No. That means extra cost what I am incurring, differential cost, at least that I should recover. Simple. Got it? Look at this. Next one, illustration number 8. GL company is attempting to decide sales price for two products L and T. The products are both made by the same workforce and in the same department. 30,000 direct laborers are budgeted for the year. The budgeted fixed costs are rupees 30,000 and it is expected that department will operate at full capacity. Variable cost per unit are as follows. Material 4 rupees, 4 rupees. Labor 2 hours, 3 hours. Per hour it is 3 rupees. That's why 6 rupees and 9 rupees respectively. Labor for L it is 2 hours. For T it is 3 hours. So for 3 hours if you are paying 9 rupees, it should be 3 rupees. No? Expenses, one machine hour, 2 rupees is recovery rate. Total is 12 and 15. Expected demand are 7,500 and 5,000 units of T. Now calculate the unit price which will give profit of 20% on full cost if overheads are absorbed on the following basis. First you tell me how much is total overhead. Guys, how much labor hour we are expecting? 2 hours for L, 3 hours for T. And total labor hour they are telling 30,000. Total labor hour they are telling 30,000. So recovery rate will be how much? 30,000 divided by 30,000. 30,000 labor hours budgeted for the year. The budgeted fixed cost is 30,000. So overhead recovery rate is rupees 1 per hour. So here overhead will be, labor is 2 hours. So 2 rupees. Here 3 hours, 3 rupees. Got it or no? Labor is 2 rupees, 3 rupees. Because 2 hours and 3 hours. Per hour recovery rate is 1 rupee. That means your total cost will become 14 and 18. So the profit is 20% on cost, which should be 2.8, 3.6. You will get the selling price. Next one they are telling, what if the overhead is absorbed on machine hour basis? Guys, how many machine hours we are taking? Expected demand is 7,500 and 5,000. So 7,500 into 1 hour, 5,000 into 1 hour. Total 12,500 hours is what we expected. Correct? No, because we are operating at full capacity. That means 30,000 is your total cost. Overhead, your machine hour is 12,500. That means per hour how much I should recover? 2.4. So from both I should recover 2.4 and 2.4. So your total cost will become 14.4, 17.4. Add profit of 20%, you will get it. Got it? Interpret the result as per your machine hours basis. L is overcosted, whereas T is undercosted. Like that. You should write the conclusion. This one, as I already told you, you should take some selling price. They will give and some random numbers you should take and you should try to compute. Simple, not a big deal. Hmm? Which one? Look at this. I think this should be your practical problem 5. Concentrate. If labor cost and material cost are likely to go up by 10% and 5% respectively per unit, what is the percentage increase necessary in the selling price to keep PV ratio of 20% as before? Assuming that the ratio between material and labor is 3:2, variable overhead is nil. That means only variable cost involved is your labor and material. So when they don't talk about any numbers, what did I say? Take numbers of your own, but not for everything, of course. See there. Let me take selling price as 100. They are telling existing PV ratio is how much? 20%. Then contribution should be 20. Contribution should be 20. So total variable cost should be how much? 80. Getting it? Total variable cost is 80. And they are telling this 80 in between material and labor in the ratio of 3:2. That means 48 and 32. Got it? Now, what they are asking, what is the percentage increase in selling price is necessary to keep the same PV ratio? Moral of the story. Let me take the selling price as X. New selling price as X. They are telling, I want to maintain the same PV ratio. That means my contribution should be 20% of sales, 0.2x. 0.2x. Is that clear? Hello? That means X is sales, 0.2x done. No doubt. Material, what they are telling, it's likely to go up by 5%. Labor likely to go up by 10%. So, labor 32 plus 10%, material 48 plus 5%. $48 plus 5%, no, 50.4. Labor 32 plus 10% because they have told labor and material, not material and labor. Got it? Now, that will give you new cost. 80 plus? No, because cost is different, no, and ratio is different, no. You can't take that way. Both are not going in the same manner. Now, when you solve it, x minus 85.6 is equal to 0.2x. So, x you will get 107. But that is not the selling price what you want. They are least concerned about actual amount. What they asked? How much should be the increase in selling price? Last time it was how much? Now, 107. That means your selling price should increase by 7%. Simple question, but nice question. Any doubts in this? No. ICMA material only. Practical problem 5. Unsolved 1. Look at this unsolved one. Following data are in respect of firm manufacturing a single product for a particular period. Best part about ICMA material practical problem is whatever answer you do, that is correct. Because there is no answer key. Best. Now, following data are in respect of firm manufacturing a single product for a particular period. Sales they are telling 20,000 units. 2 lakh rupees. That means selling price per unit is how much? Selling price per unit, guys. 10 per unit. Cost of production 1,20,000. Selling and distribution 30,000. Maximum capacity is 25,000 units. That means how much is idle capacity? 5,000. Listen, fixed cost included in cost of production are 40,000. That means in this 1,20,000, in this 1,20,000, 40,000 is fixed cost. Remaining 80,000 is variable cost. And variable cost included in selling and distribution expense are commission of 10% on sales and packing expense of 20 paise per unit. Guys, that means selling price is 10 rupees. Commission of 10% means, can I say 1 rupee per unit? Hello? Plus packaging cost of 0.2 per unit. That means, can I say 1.2 per unit is variable cost here. So for 20,000, how much it will be? 1.2 into 20,000. 24,000 will be variable cost. Remaining 6,000 should be where? Fixed cost. Anyone any doubt? Now, an offer for purchase of 4,000 units is received from outside India. No sales commission is payable on such foreign order. That means you don't incur this 1 rupee. You won't incur this 1 rupee. Then no sales commission is payable, but packing cost will be 80 paise per unit. How much will be the packing cost? 80 paise per unit. Right now how much? 20 paise. But if you go for foreign order, then it will be 80 paise. That means what should be the minimum price? Guys, at least I should recover my variable cost. Because whether I go for this foreign order, I am not going to go for this foreign order. I have to incur my fixed cost now. So I don't have to recover any fixed cost here. Plus, I have still capacity left is 5,000. They are offering us for 4,000. That means order is well within idle capacity. Order is well within idle capacity. So I can go for it. That means how much I should recover? Variable cost is how much? 80,000, no? 80,000 divided by 20,000 per unit 4 rupees, is it? Per unit 4. Production cost is per unit 4. One more variable cost I am incurring is packing cost 0.8. That means I should recover at least 4.8. So minimum I should quote them is 4.8. Minimum I should quote them is 4.8. Hope you guys understood now. What should be the minimum price if the offer size has been 8,000 instead of 5,000? That means to satisfy that 8,000, you have to sacrifice your 3,000 regular sale. Sir, how come 3,000 regular sales, sir? Now how much you are doing? 20,000. Extra order came for how much? 8,000. Can you accommodate full 8,000 here? If you want to accommodate 8,000 in 25,000, inside 25,000, you want to accommodate 8,000 means outside for Indian customers you can give only 17,000. That means right now 20,000 Indian customers we have. When we accommodate only 17,000, that means 3,000 will go out from us. 3,000 will go out from us. Now what is the problem? Problem is we are going to lose something. How much we are going to lose? Guys, by the way, what is the variable cost to Indian customers right now? 4 rupees production cost. Hello. 4 rupees production cost. 1 rupee sales commission because I am selling them at 10 rupees and commission is required, and 0.2 rupees packaging. Yes or no? So how much will be my variable cost to Indian customers? 5.2. What is the selling price? 10. That means from each and every unit I will lose 4.8 rupees. From each and every unit I will lose 4.8. To accept this offer, how much we are letting go? 3,000. Some students will take 8,000. Why you will let go 8,000? You have 5,000 capacity idle, no? First accommodate that. For extra 3,000, you have to let go 3,000. So how much you will lose because you are not satisfying Indian customers? 14,400. Don't take the selling price, take the contribution. Now I should recover this 14,400 from my foreign customers. From how many units? 8,000 units. So per unit, how much I should recover? 1.8. Already I know that I should recover 4.8. Along with 4.8, I should recover 1.8. Total will come to 6.6. Simple question, mark it as LMR. Mark it as LMR. Hope you guys understood this. This is your unsolved question number 1. Hope you guys understood how to deal with your sacrificing things. Clear? This JC Limited is one ICI material question which I told, and that is already taken in that particular video. You can go and check. All these questions are on the basis of your pricing decisions. Kindly go and check once. Okay, but here in this question, guys, this should be your illustration number 4. This should be your illustration number 4. Here what they have done is they have given wrong answer. I mean, in table they have given wrong answer, but in conclusion they have given correct. What is happening is, as per table, this should be 1,80,000. This should be 1,50,000. Here they left some 50,000 or so. They made it as 130 or some nonsense thing they have done. No, here they made it 2 lakh. Something like that they have done. And while concluding, they concluded you should go for sales trade. Something like that is there. Don't worry, similar question is there in PYP. There we will discuss that. But yeah, while giving in the table, they have given wrong answer. That's what I am trying to say here. Okay. That's all. Now we will be discussing transfer pricing. Now we will be discussing transfer pricing. Listen, guys. Transfer pricing is just like your pricing decision only. What do you mean by that, sir? Concentrate. First, what is transfer pricing? Guys, transfer pricing is nothing but you have your own division. You have your own division, or you have one parent company. Now let's say, for example, Tata Sons. Tata Sons. It has different companies. End of the day, profit will be of Tata Sons, but it has different companies. Like, let's say, Tata Motors, Tata Steel. Tata Motors, Tata Steel. Now, Tata Motors uses steel for their car. Correct? No? Tata Motors uses steel for their car. Now, when Tata Motors uses steel for their car, they can go and buy from the outsider. They can go and buy from the outsider, or they can buy it from the Tata Steel. But the thing is, when I am checking the performance of my departments, will Tata Motors go for the cheapest option, or will they go for Tata Steel, telling that, oh my god, I am going to buy from you only because you are my parent company, I mean associate company? Nothing like that. They will go and buy from the where it is cheaper for them. But from company point of view, sometimes buying it from our own company will be the better option. Correct? No? Now, at what price your Tata Steels will send it to the Tata Motors? If your own division send to the other division, that price only we call it as transfer price. That price only we call it as transfer price. Got it? That is our own one division will send product to other division at what price? That will be your transfer price. There are different methods to decide transfer price. What are those different methods, sir? One is your marginal cost method. Here what is it, sir? Tata Steel will send to Tata Motors at the marginal cost. That means whatever the variable cost they incur to produce that steel, at that price they will send it to Tata Motors. At that price they will send it to Tata Motors. Absorption cost is again, along with your marginal cost, they might absorb some fixed cost also. Standard cost is in the beginning only Tata Motors and Tata Steel people will sit and decide this year you are going to send me steel 1 kg at 60 rupees. That means going forward, irrespective of the actual cost, you have to send me at 60 rupees. That is your standard costing. Two-part tariff is what? Tata Steel will charge them variable cost. At the end of the year, they will also charge them with the share of fixed cost. One part regularly they will charge variable cost. At the end of the year, they will charge them share of fixed cost also. That is your two-part tariff. Please keep in mind. It might be MCQ question. Two-part tariff. That is, they will charge the marginal cost plus share of fixed cost. Market-based is whatever is running in the market, we will send at that price. For example, Tata Steel to outsider we are selling at 60 rupees per kg. That means for Tata Motors also it will be sold at 60 rupees per kg. However, sometimes what might happen is to outsider when we are selling, we might have to incur some special packing of 5 rupees per kg. But if it's for our own organization, own division, other division of the same organization, then we might don't have to incur this. Then they will send it to Tata Motors at 55 per kg. Because contribution wise, are they losing anything? No, because they are reducing this cost. So to maintain that same contribution, I will reduce this and. Generally, this marketing expense and all, if it's a own division, why you have to incur? When it's outsider, you have to incur marketing cost. No. When it's own division, why will you incur? You don't incur it. Got it? Negotiated transfer price is basically two managers will sit and they will decide what should be the transfer price. Like that. Sometimes what happens? One manager, let's say Tata Steel manager is telling, boss, I am going to sell at 60 only, nothing less. The cost of that is 40. Variable cost of that is 40. Now, outside market, they are selling at 50. Now, Tata Motors guy is ready to buy from the outsider. Why? If they buy from Tata Steel, it will cost them 60. But if you buy from outsider, it will cost you 50. But can you tell from the group company point of view, is it better to buy from outsider or is it better to buy from the other division? Outsider. Why? Madam, other division is incurring just 40 rupees to make it. The 20 is our inter-process profit. Actual profit is what? Actual cost is what? What goes to outsider? Actual profit is what? What comes from the outsider? This is just a divisional performance measurement. That means, being the Tata group, what is your cost to manufacture 1 kg of steel? Just 40 rupees, not 60 rupees. Ayyo. Why? 1 second. Give me a second. By the time pen charges, you tell me what is it? Solo. See, madam, very simple. Let's say you are there. Your sibling is there. Your sibling is there. Fine. Now let's say your sibling is very good at cooking. Assume. Now, your sibling prepares biryani. The cost of preparing that biryani is 150. Your sibling is telling, you pay me 200 rupees, I will give you biryani. Now, if you go to other biryani shop, you can get the biryani for 180 rupees. Now, from your point of view, you will be okay with going and buying outside or buying from your sibling. Outside. Because if it's your sibling, you have to pay 200 rupees. If it's outsider, you just have to pay 180. From your parents' point of view, parents who is managing both the cost revenue, from their point of view, is it better you go and buy from your sister or is it better you go and buy from outsider? Sister, not because family, because how much is the cost to make it? Your parents has to get grocery of how much rupees? 150. Inside you pay her 200, she will collect 200. Your parents has anything to do with that? Anything to do with that? Nothing. You pay her 200, she will collect 200. End of the day, whose money it is? Your parents' money. They have nothing to do with this. But if at all you buy from your sister itself, because of your craving for biryani, then they have to incur just 150 rupees towards grocery. However, if at all you want to go out and buy, if at all you have to go out and buy, then you have to take how much money from your parents? 180 rupees. How much money will go? 180. That means from your parents' pocket, 30 will go out. Getting it? So from whole company point of view, this is, you should check from the point of view of how much we are paying to outsider, how much we are collecting from outsider. But one more thing you have to keep in mind. There might be opportunity cost also. Like what, sir? Your sister's biryani has crazy demand. That means if you are not ready to buy at 200, someone else will be ready to buy at 200. If you are not ready to buy at 200, someone else will be ready to buy at 200. That means, now, should your parents interrupt and make you buy at 200, or should your parents let it go? They should let it go. Why? If you don't buy, someone else will buy. She will make 50 rupees, no? You will pay to outsider extra how much? 30 rupees, no? Net 20 rupees profit only, no? So when opportunity cost is there, you should keep in mind that also will come into picture. That also will come into picture. Hope it is clear, everyone. So always remember, whenever there is an opportunity cost, you are not only recovering that, whatever the variable cost, you will also recover along with variable cost, opportunity cost also. Same like pricing decision only. You don't have to worry about it. Now, when the conflict is there, now as per this conflict, your sister is not ready to give you at less than 200 because you are not buying, someone else is buying. You are not ready to buy at 200 rupees because if you buy at 200, your money is gone. You are okay with only 180, but your parents want you to buy from your sister only, let's assume. They want you to buy from your sister only. Then how to resolve this conflict? They will tell you, for you, cost should be how much? 150, no? You are okay with 150, no? Or up to 180, you are okay, no? For you, I am going to debit your account with 180 only. Don't worry. Your sister will be like, no, 180, I am not fine. Did I tell anything to you? No. For you, I am going to credit with 200 only. Sir, books will mismatch. No, nothing will mismatch. Why? This is happening inside organization. This is happening inside organization. This is your dual pricing model. They don't have to pay. They have to pay whom? For example, now Tata Steel people are telling not less than 60 rupees per kg. Tata Motors people are telling, Array, if you don't give me at 50 rupees per kg, I am going to stop my production itself. Now Tata Group will come in between. What they will tell? They will ask Tata Steel, whether can you send for less than 60? Tata Steel will be like, no way. No way I am going to send for something less than 60. Tata Motors, they will come and ask, can you buy at 60? They will tell, no way I am going to buy at 50. Is because of this transaction, whether Tata Group's profit or loss is getting affected? No. Interprocess, no. That means, now what Tata Group will tell you, no? Deal. Both of you, close your eyes. Close. They will transfer the goods. Now Tata Motors people will tell, I don't want 60 rupees. They will be like, who told you it's 60? It's just 50 only, keep it. That means, while measuring the performance of Tata Motors, cost they will take as 50 only. Will Tata Motors manager is happy? Yes. But Tata Steel guy is unhappy. Why? He is not ready to send it 50. Tata Group will tell, wait, your sales is 60 only, not 50, you don't worry. Tata Steel guy is also happy. Whether transfer happened in between division only, your head office is also happy because transfer happened in between. This we call it as dual pricing model. That is, for the transferee department, the one which is receiving the goods, for them charging one different price, and the transferor department, for them we are charging one more different price, just to make sure that transaction takes place, because this prices has nothing to do with overall profitability. Understood? For Tata, how it will be a loss? See, their variable cost is 40 rupees, let's say. Tata Steel quoting 60 rupees. Tata Motors getting from outsider 50 rupees. Now tell me, being a Tata Group, if at all you buy from outsider, how much money will go out of the company? 50 rupees will go out. Outsider. If you go out and buy from outsider, how much you have to pay? If at all you make it on your own, how much will be your cost? Now Tata Group want Tata Motor to purchase from Tata Steel or from outsider? Purchase from Tata Steel. But Tata Motor guy is telling, I am not ready to pay something more than 50 rupees. Because I am getting from outside 50. Tata Steel guy is telling, I am not ready to give it at something 60 rupees. Less than 60 rupees. Now in this scenario, should I allow these guys to go and buy from outside? Because for me, end of the company, what matters? What is going out of the company matters. This money stays inside company only. So if at all our Tata Motors go and buy from outside, 50 rupees will go out. If Tata Steel, if they go and buy outside, only 40 rupees will go out. Because 60 will go to pocket of Tata Steel. So to motivate them, what I will tell, for you purchase price is 50, for you selling price is 60 for decision making. For decision making. In real case scenario, it has nothing to do. Inside organization, what is happening, it has nothing to do with the group profit or loss. That is the thing. This only we call it as goal congruence. What is goal congruence? As per the interest of company, Tata Steel should transfer to Tata Motors. But is Tata Steel ready to transfer? Because they are looking at their own interest. Is Tata Motors ready to buy? They are looking at their own interest. This is a situation of goal congruence. That is, our goal of company is not matching with goal of divisions. In that case, it's always better to go for dual pricing. For them, sales will be different. For these people, cost will be different. Because it has nothing to do with our actual profit or loss. End of the day, you have to check whether buying from outsider is profitable to you or buying from our own division is profitable to you. One more thing is there called as international transfer pricing. Again, if I keep explaining this, it will take other half an hour. But already there is a one video as well as one question solving in the YouTube. Go and check that, you will understand. You will understand in a better manner. Okay, that video should be of around 40-45 minutes. In the same CMA channel only it's there. Just go and check it, you will find it. International transfer pricing. Got it? So these are the things. For transfer pricing, I recommend you guys to go and see the question from the material. Whatever is there in the CMA material, just go and check those questions. Wait, I will just show few questions. Okay. Now listen. Tell me the page number, no? Oh, the PQRS one question is there. That we have to check. The PQRS question we have to check. Okay. Tell me the illustrations. Padapat. Illustration 1, 2, 3 and all is your this thing. Here this illustration 3 is also that unnecessary, okay, because they are telling about RI plus profit they are telling. That is nonsense thing. Look at this fourth illustration. Fourth illustration you see. See, Arthur Company is a multi-divisional company and its manager have been delegated full profit responsibility and autonomy to accept or reject the transfer from other division. So you can buy from other division or you can go for outsider. Division X produces a sub-assembly with a ready competitive market. The sub-assembly is currently used by Division Y for the final product and sold to outsider at 1200. Division X charges Division Y market price for the sub-assembly, which is 700. Variable cost is 520 and 600 for Division A and Division B. They should make it as X and Y. Now, listen. Tell me one thing from company point of view now. Should Division Y go for transfer pricing or should they go for outsider? Outsider, they have to pay 700 rupees. From company's point of view, 700 will go out of the pocket. But if it's our own division producing and transferring, they will incur variable cost of only 520 to make it. So, Division X will come and ask the group company for how much rupees? 520 rupees if they want to make and transfer. At what rate they transfer has nothing to do here for decision making from company point of view. If at all division want to go and buy from the outsider, they will ask how much? 700 rupees. Now, which is costly for the company's pocket? 700. So, company here interested in transfer pricing or not? They are. Got it? Now, that is the thing. So, go for transfer pricing. That is the thing. Few alternatives are there. Just go through that. Now, listen to this one. This is nice question. Fifth question. Illustration 5. The Webel Limited manufactures and sells television sets. The assembly division assembles the television sets. It buys the picture tubes from the television set from the picture tube division. The picture tube division is operating at capacity. Moral of the story. Picture tube is already operating at full capacity. That means there is a demand for the product. The incremental cost of manufacturing the picture tube is 700 per unit. So variable cost for picture tube is how much? 700. Now my question is, will the picture tube division be okay with selling it at 700? No way. Why? Because they have full market ready. That means if our own division don't buy, someone else is ready to buy, no? Why I will lose? Now, the picture tube division can sell as many picture tube as it wants to outside market at 1100. That means when you come and ask me, let's say I am picture tube division, you are assembling division. You will come and ask me for picture tubes. Will I quote a single rupee less than 1100? Why? You say, you tell, ayo, you are our own division only. Please give me. I will tell, go and ask someone else. Because I have outside customer who is ready to buy my full capacity. If it was idle, I would have given you at 700. Because I have nothing to lose if at all I give it 700. But am I sitting idle? I'm operating at full capacity. But that means outside market 1100. From company point of view, whether they want you to deal with it, or I mean you have to buy from me, or they expect you to go and buy from outsider. For them it doesn't matter at all. Why? If at all I go and sell it to outsider, I will make 400 rupees. You go and buy from outsider, you will lose extra 400 rupees. Net company has anything to lose? Simple. If it's idle capacity and I am not ready to give, then company is going to interrupt. Why? I am losing nothing by giving it 700. If at all I don't give you, and is there anyone outsider ready to buy it? Then am I losing anything? I'm not getting that extra contribution. But when you go and buy from outsider, you have to pay 400 extra. So company is gaining nothing but losing extra 400. Will company be fine with it? So you should think from this point of view. Company point of view, you should think. If it sells picture tube in the outside market, the picture tube division will incur variable market and distribution cost of 40. That means if I go and sell it to outsider, I have to incur 40 rupees extra. That means what is the minimum price I am ready to pay you? I mean, give you guys at 1100 is outside market. But if I sell it to you guys, then I don't have to incur that 40 rupees. No. That means I am ready to give you at 1060, not more than that. So minimum price I am going to give is 1060. Similarly, if the assembly purchase picture tube from outsider, it will incur variable purchasing cost of 20 rupees per screen. That means being a purchase division, you are ready to pay how much maximum? If you go and buy from outsider, you have to pay them 1100. Not only so much, 20 rupees extra you have to incur. That means you are ready to pay outsider 1120. Maximum is 1120. If at all I quote you more than 1120, will you come to me? What you will tell? Outsider is giving me 1120. I will go and get. Correct? No? Now, using the general guidelines on transfer pricing, what is the minimum transfer price? 1060. What is the maximized own income? Either by transacting internally or buying it from the outside. Guys, anyhow, from this transaction, we are losing nothing. Because if we sell it to outsider also, we'll be making some money. So it's not going to make difference. Got it? This is nice question. Illustration 6. Correct? No? Go to illustration 6. Huh? So much of? Huh? No, you don't have to write so much. You have to write what you understood in that question. You have to write and show it. Basically, it's all about you are communicating to your examiner that what you are doing. Look at this sixth question. Nice question. Give me a second. I should be having this working. Give me a second. I have taken some extra hours also here to get the concepts right. Listen here, everyone. Very nice question. Mark it as LMR. LMR Pro Max. We marked it as LMR Pro Max, is it? Then LMR Pro Max. This time it might come. Concept. Because it has your limiting factor as well as transfer pricing together. Division A is a profit center which produces 4 products PQRS. Each product is sold in the external market also. Data for the period is as follows. Market price they have given, variable production cost they have given, labor hours required also they have given. So each product is sold in the external market also. Selling price they have given as well as variable cost they have given. Product S can be transferred to division B. Product S is there, no? This product S, our division B is also in need of it. But the maximum quantity they might require is 2000 unit of S. The maximum sale in the external markets are 3000, 3500, 2800, 1800 units. Division B can purchase the same product at a slight cheaper price of 225 rupees from outside, instead of receiving from that department. Yes. Now from company point of view, if at all there is idle capacity, is it advised to go for transfer pricing or go and buy from outsider? Transfer pricing, because for company cost will be 185. If you go from outsider, buy from outsider, 225. Only if it is idle. Only if it is idle. Please keep in mind. What should be the transfer price for each unit of 2000 unit of S if the total labor hours available is 24,000 and 32,000? Guys, listen. First, here we know that hours are limiting factor, because to produce 3000 units of P, you need how many hours? 3000 into 3, 9000 hours. Correct? To produce 3500 units of Q, you need 3500 into 4, 14,000 hours. To produce 2800 units of R, you need 5600 hours. To produce 1800 units of S, you need how much you need in total? You need 34,000 hours. How much you need? 34,000 hours. But do you have so much? All you have is 24,000 and 32. Not only this much, plus to my other division also I can send no 2,000. To produce that, how much I need? 6,000. That means to satisfy each and everything, I need in total 40,000 hours. But all I have is either 24 or 32. In that case, what I should do? I should prioritize and produce first. I should prioritize and produce. Listen. How to prioritize here? On the basis of contribution per labor hour. How much is the contribution of P? 20 rupees. Q? 35. 35 only, no? R? 100. Yes? 50? 45. May I know the contribution per unit? Sorry, contribution per hour. 6.67. Next one. 8.75. 50. 15. So what is your rank 1? R. What is your rank 2? Yes. What is your rank 3? What is your rank P? 4. Got it? This much is clear. That means my first choice will be to produce R. Correct, no? So when I first produce R, how many units I will produce? Full 2800 I will produce. R I will produce how much? 2800. So that will consume 5600 hours. Out of total 24,000 hours, 5600 is gone. How much is remaining? 18,400. My second choice is yes. Yes, how much is required? 5,400. That means yes, I will produce 1800 hours also. Now total was remaining was 18,400. In that 5,400 hours is also gone. How much is remaining now? 13,000 hours are remaining. In that my next priority will be Q. Q need how many hours? 14,000 hours. But do you have 14,000 hours? Then how many units of Q you can produce in that 13,000 hours? 4. 3250. Correct, no? Now if at all I want to transfer it to my own division, how many hours I need? 2000 units I should transfer, 3 hours per unit, which is gonna be 6,000 hours. 6,000 hours means, guys, first I have to sacrifice which? Q. I can't produce Q. Now I am producing Q because to the extent of 3250 because I am not selling it to my own division. If at all I want 6,000 hours there, then can I give 13,000 hours to Q? I can give only 7,000 hours to Q. In that 7,000 hours, how many units I can produce? 1,000. That means because of selling it to my own division, how many units of Q I won't be able to produce? 1,500 units of Q I won't be able to produce. Yes or no? Sir, why Q, sir? Why can't you take R? Mad or what? When I want to sacrifice, I will sacrifice my least profitable product or high profitable product. Least. If that is not sufficient, next one. If that is not sufficient, next one. Here, Q is sufficient, no? Q is sufficient or no? It is sufficient. So first I will sacrifice 1,500 units of Q. Here, when I sacrifice 1,500 units of Q, from each and every unit I would have made 35 rupees. No? Contribution. So how much I am losing? I am losing 52,500. Correct, no? Now I should recover it from 2,000 units. Opportunity cost, what I am losing? 26.25. That means along with the variable cost of S 185, I will also recover 26.25 because I am losing that 26.25 per unit. How much it will be? 211.25. Hope you guys understood. See there, I found out rank there. R we will produce full, remaining units become 18,400. Yes, we will produce full, outsider one, remaining will become 13,000. In that 13,000 remaining, P we can't produce anything because Q only it's not sufficient. Q maximum we can produce is 3,250. To produce extra 2,000 units of product X, we need to curtail our sale of product Q by how much? 1,500. Because 2,000 units need 3 hours, which will become 6,000, whereas 6,000 divided by 4 hours will give you 1,500. You have to curtail how much? 1,500 units. So how much you will lose from 1,500? 1,500 into 35. 1,500 into 35 divided by 2,000 units is what you are going to recover from. Correct, no? So you have to recover around 211.25 at least. Because I am losing my opportunity cost there. Is this point clear? Next one, what they told, second one, 32,000 hours. Guys, this one is important, 32,000 hours. Listen. Now, after producing S, listen, after producing S, we have 21,000 hours left. Next choice will be my Q only. Correct, no? Q, how many units we have to produce maximum? 3,500. What is the demand for Q? 3,500. So when you produce 3,500 guys, can you tell me 3,500 when you are producing, how many hours it will take? 14,000, but you have 21,000. That means still 7,000 is left. In that 7,000, you will choose to produce P. So how many units of P you can produce? 2,333.33, because 1 unit of P takes 3 hours. Now, if at all you want to go for yes, then first you will sacrifice P. So you have to sacrifice 6,000 hours of P. That means P you can produce only to the extent of 1,000 hours. In 1,000 hours, how many P you can produce? 333.33. Earlier, how much you would have produced? 2,333. That means you are sacrificing 2,000 units of P. Correct? No? When you sacrifice 2,000 units of P, what is the contribution per unit of P? 20 rupees. So 2,000 units of P you have to sacrifice. That means 40,000 you will lose. That 40,000 I should recover from this transfer pricing of 2,000 units. That means 20 rupees per unit. Along with variable cost of 185, I am going to recover 20 rupees also. 204. This is how you should do it. However, along with that, I have taken two more examples of 35,000 and 30,000. Shall I explain you that? Now, what if the available hours are 35,000? Sorry, 30,000. First you will produce which hour, which will take 5,600. Remaining hours 24,400. Next you will produce yes, that will take 5,400. Remaining hours 19,000. Next one 3,500. That will take 14,000 hours. Remaining hours 5,000. In that 5,000, how many units of P you can produce? 1,666.67. Now, if at all you want to produce yes, how many hours are required? Now, if at all you want to produce yes, how many hours you need? 6,000 hours you need. So, will just sacrificing P is enough? No. You have to sacrifice full P. After sacrificing full P, you also have to sacrifice Q. To what extent? 1,000 hours extent. In 1,000 hours, how many units you can produce? P. 250 is it? Q takes 4 hours. So, how much you are sacrificing? P you are sacrificing 1,667 units. Q you are sacrificing 250 units. So, whatever your total sacrifice is, that is 1,666.67 into 20, that should be recovered from 2,000. Also 250 into 35, that you should recover from 2,000. Sacrifice of P and sacrifice of Q, along with the variable cost. Hope you guys understood this. Hello? Understood or no? Next. Sorry? You have to sacrifice 1,000 hours, no? Q needs how many hours per unit? 4 hours per unit. So how many units you have to sacrifice? 250 units. Next, what if the number of hours are 30,000? Oh, 30,000 I explained now. Huh? What if it is 35,000? See there. 35,000 means after producing PQRS full, still you are left with 1,000 hours. Because to produce PQRS you need 34,000. Still you have 1,000 hours extra. But to produce 2,000 units of yes, will this 1,000 hours be sufficient? You need extra 5,000 hours. That will be sacrificed by P. That will be sacrificed by P. How many units you have to sacrifice P? 5,000 divided by 3 hours. 1,666.67. Moral of the story. How much you will lose? 1,666.67 into 20 divided by 2,000 is what you should recover along with your variable cost. Hope you guys understood. You understood this question? So, relating to the 1,000 hours, there is no opportunity cost at all because it is idle. Remaining 5,000, there is an opportunity cost. This is how you will compute. Anyone, any doubt in this? No doubt. Pakka. Great. That's all. Now we will see few past year paper questions. Few past year papers questions of decision making as well as marginal costing. Shall we? First we'll go for December 2025. Correct now? Go for December 2025. Sorry. December 2025, you can see there. Question number 5, 6, 7, 8 are from this particular unit. I mean, you can tell it as set. From this particular set, it is 5, 6, 7, 8. 4 questions are there. 8 marks from this. Plus question number 3A, 3B, 4A, 4B, 28. 28 plus 8. 36 marks was there from this particular division altogether. Okay. Shall we see that? December 2025 first. Which and all question it is? 5, 6, 7, 8. 5, 6, 7, 8. Look at the fifth one. Measure Vishnu Limited sells 2 products A and B in the ratio of 3:2. Variable cost as a percentage of sales are 95%, 90%. If the total fixed cost is 7,000, break-even point is question mark. That means they're asking you combined break-even. Correct? Now 2 products are there. Guys, they are telling A and B 3:2. Correct? Now sells 2 product A and B in the ratio. Fine. Here you have to assume it as sales amount ratio only, because about contribution per unit and all they didn't give. They didn't give anything. So you have to take it as amount ratio only. Guys, how much is PV ratio here? 5%. How much is here? 10%. So can you tell me how much is 5 into 3 plus 10 into 2 divided by 5? 7. So what is the break-even point formula? Combined common fixed cost divided by combined PV ratio. Combined PV ratio is how much? 7%. So 7,000 divided by 7%. 1 lakh. Option A. Anyone, any doubt in this? Okay. Shall we proceed? Go to the 6th question. A company's sales decline from 9 lakh to 7 lakh, causing the profit of 50,000 to become a loss of 50,000. What is the PV ratio? Normal, change in profit by change in sales ratio. How much is change in profit? 1 lakh, not 0. 1 lakh. Profit 50, loss 50. Difference is 1 lakh. Divided by change in sales. 2 lakh into 100. Option C. Next one. ABCA manufacturing company is evaluating 2 machines for its product line. The associated costs are as follows. Variable cost they have given, fixed cost they have given. Based on the cost analysis, which of the following decision is correct? Guys, you tell me. As per variable cost, which is better? Fully automated is better. As per fixed cost, which is better? Semi-automated is better. That means if the IDP is how much? Find the IDP. If you take IDP as X, semi-automated it will be 10x plus 12,000 should be equal to 4x plus 30,000. That means 6x is equal to 18,000, x is equal to 3,000. X is equal to 3,000. That means if at all units are more than 3,000, one with the lower variable cost is better. Fully automated is better. If the units are less than 3,000, one with the lower fixed cost is better. That is, semi-automated is better. Now, which answer will give you this? The semi-automated machine should be chosen if the expected production is 2,500 units. Correct, no? Less than 3,000, semi-automated. Fully automated should be chosen if the units are 2,500. No, it should be chosen if it is more than 3,000. Next, semi-automated machine should be chosen if the expected production is 3,500. No, it should be chosen if it is less than 3,000. Choice between, no. Option A. Anyone any doubt in this seventh one? Indifference point. No doubt? Which of the following is not the method of transfer pricing? Total cost method, marginal cost method, skimming price method, market price method. Skimming price method. Next one. That's it, huh? That's it, right? Next one is 3A. 3A. Look at the question. Nice question it is. That is, your home limited manufactures a kitchen appliance that consists of 4 components. Each component can either be produced in-house or can be purchased from the external supplier. That means this question is relating to make or buy. Make or buy. The cost detail of the market price of the relevant information are as follows. Numbers required. If you want to produce, this will be the thing. If you market price, this is the thing. There are a constraint in the machine time manufacturing all the components. Total machine hours available is only 12,000 hours. That means just because you are making is beneficial to you, you can't make everything because there might be constraint of that. In that scenario, what will be your call? Make the one which is saving you the highest first. Whichever saving you least, that you can go and buy from outsider. Correct, no? Now, it is possible to use the machine time in the second shift, which will attract 20% extra wages and other fixed cost of 6,000 for every 1,000 hours or part thereof. If you want to increase it, you can increase it, but it will increase your wages by 20% plus 1,000 hours are, for fixed overhead of 6,000. Based on the above situation, you are required to determine the most cost effective make or buy decision for the 4 component. Please support your answers with the relative workings. Listen. If you are going to make it, what will be the cost? See, this fixed cost I am not going to consider only. This fixed cost I am not going to consider only because whether you make or whether you buy, you have to end up paying that. Correct, no? That means how much will be the variable cost for making? First one, 260 na? Second one, 280. Third one, fourth one, 280. Now, can you tell me the contribution? Not contribution, I can say it as savings. 40. Because if you go and buy from outsider, you have to pay 300. If you do it in-house, all you have to pay is 260. So, it's gonna give you how much? 40. Next one, 40. Next one, 50. Next one, 10 loss. That means D anyhow you are not going to produce. Because if you produce, you will lose 10 rupees. So better to go and buy. But ABC you can produce. But if at all there was no constraint, I would have produced all the three. No doubt in that. But can I produce all the three? I don't know. I have to check. See, 3000 units of A. Direct labor is 40 rupees per machine hour. 80 rupees we are charging means how many machine hour we are taking? 2 hours. Here 1.5 hours. Here 2 hours. Here 2 hours. So how much machine hour is required? 3000 into 2 M plus 3500 into 1.5 M plus 2000 into 2 M plus 3000 into 2 M plus MRC. 21,250 hours is required to produce. Sorry. Did you take 3000 also here? I reduce that 3000 into 6000 you reduce. You need 15,250. Correct? No. But do you have that many hours? You have 12,000 hours. Moral of the story. It is a key limiting factor. That means here you have to find out now savings per machine hour. Guys, 40 rupees we are able to save by using 2 hours of machine. So per hour how much you are saving? 20. 40 rupees you are able to save by using 1.5 hours of machine. So per hour you are saving. Sorry? 26.67. 50 rupees you are able to save by using 2 hours. 25. So which one will be the rank 1? B will be rank 1. C will be rank 2. A will be rank 3. Clear? Anyone any doubt? Now, listen. I have different alternatives over here. What are those different alternatives, sir? Alternative number 1. Don't go for extra hours. Whatever is there, you can produce in 12,000 hours. Produce that. Remaining things you can go and buy from outsider. Correct? Alternative 2. Go for 13,000 hours by incurring extra wages and extra factory overhead. Remaining whatever is there, that you go and buy. Alternative 3. 14,000 hours you produce. Remaining you go and buy. Next one. 15,000 hours you produce. Remaining you go and buy. Next one. 16,000 hours you utilize. Remaining you are not going to buy. Understood? Now, so we need 5 alternatives here. Shall I take 5 alternatives and check which is going to be more economical for me? Whichever is less costlier, that will be my more economical. Alternative 1 is what? Operate for 12,000 hours. 15,250 is sufficient. Because if you give me opportunity, still I don't produce B. Because contribution is negative. 14,000 hours. 15,000 hours. 16,000 hours. Now, if it is 12,000 hours, first you will produce which one? B you will produce because that is saving you more. How many units you can produce? 3,500 and it takes 1.5 hours of machine. That means how many hours you need for that? 5,250 hours you need for B only. Still you left with how many hours? 6,750. My next alternative will be C, which takes 2000 units 2 hours. That means it takes 6000 hours. 2000 units 2 hours. 4000, sorry. It takes 4000 hours. You will be left with 2750. In this 2750, how many units of A could be produced? 1375 units. How much we need in total? 3000. That means how much you have to buy from outside? 1625 you have to buy from outside. That means here the cost will be how much, guys? Try to understand. Cost will be how much? You are not going to buy product B. Whatever is required, 3500 you are going to manufacture it on your own. How much is the cost for manufacturing? 280 rupees. So 280 into 3500. 1 lakh 9,80,000. Okay. Next, C, right? C, you are going to manufacture everything in house. 2000 into 350. 7 lakh. Next, A, right? You are going to manufacture 1375 units. So 1375 into 260. 3,57,500 plus you are going to buy 1625 from outsider. So 1625 you have to pay 300 rupees. 4,87,500. D, anyhow you are going to buy from outsider. So 270 rupees you have to pay for 3000 units. 270 into 3000. 8,10,000. So in the first alternative, how much will be your cost of raw material required? B, C, A, D, A, B. 32 lakh. 33 lakh 35,000. 33 lakh 35,000. Next we have 13,000 hours. 13,000 hours means, of course, B and C we are going to produce full. A, how much we can produce? Last time when it was 12,000, we were left with 2,750 hours. Now if it's 13,000 means we will be left with 3,750 hours. In the 3,750 hours, how many units we can produce? Sorry? 1,875 you can produce. That means how much you have to buy from outsider? 1,125 you have to buy from outsider. Is that clear? That means these two things, of course, I am going to produce on my own. 9,80,000 I will produce on my own. 7 lakh I can produce on my own. Plus, listen, whatever you are producing also, there is some problem. Out of 1,875, 1,375 you can produce without incurring any additional cost. That means for that 500, some additional cost will come into picture. I will tell what. First, to produce that 1,375, all I am going to incur is 3,57,500. Correct? No? But for that 500, listen what I am going to incur. My labor cost won't be 120. They are telling labor cost will increase by 20%. Labor cost will increase by 20% if you go beyond 12,000. That means it's not going to be 120. It's going to be 120 plus 20%. 144. Your variable cost for manufacturing won't be 350. It will be 374. 150 plus 144 plus 80. 150 plus 144 plus 80. 374. 374. Now, 374 into 500 units. 1 lakh. This is what I am going to incur. Is that clear? Plus, anyhow, I am going to buy how many units from outside? 1125 units from outside. That will cost me 1125 into, talking about A, right? Ayyo. Then it is wrong. A, how much is direct labor? 60, no? 60, no? 60 plus 22, 72. That means your cost will be, won't be 260. It will be 260 plus 12. 60 plus 20% is 72, no? Correct, no? 272, no, in total. Now, 272 is what we are going to incur if we buy, if we manufacture that 500 units. 500 into 272. Oh, by the way, did we take 300 only, no, for these things also? For A? Just check here whether you took 260 or no. In first case, how many units it went? Oh, where it is? First case is this, no? 1375 and 1625. 1375 into 260. 3,57,500. And 1625 into 300. That is correct then, no problem. Now, this 500 is there, no? To manufacture that 500, my cost will be 272. How much? 1,36,000. How much I have to buy from outside? 1,125 I have to buy from outside at the cost of 300 rupees. 1,125 into 300. 1,125 into 300. 3,37,500. Got it? D, anyhow I am going to buy from outside only. Along with that, as I increase my 1000 hours capacity, I have to end up paying fixed overhead of 6,000 extra. Got it? That is relevant here for decision making. Because I produce, then only I will incur that. Otherwise, I don't incur that. Relevant cost. So, how much will be the cost here? 33 lakh? 33 lakh 27,000. 33 lakh 27,000. Moral of the story. Compared to alternative 1, alternative 2 looks better. Compared to alternative 1, alternative 2 looks better. Yes or no? Okay. Now, shall we go to the 14,000 hours? First I will produce B, no doubt in that. That will cost me 9,80,000. C, I will produce 7 lakh. A, listen. Guys, A, try to understand. How many hours were available? 14,000 hours were available. That means 14,000 में 14,000 hours are available. No? 14,000 minus 15,250. Sorry, 5,250. 8,750. Balance after producing C. 4,750. In this 4,750, how many units of A could be produced? It takes 2 hours, right? How much? 2,375. That means you have to produce. So you have to buy 625 units. Also, while producing 2,375, please keep in mind, when it was 12,000, How many units you would have produced? A, just check and tell me once again. 12,000 minus 5250 minus 4,000, 9,250. That means 2,750. Nah, 2,750 divided by 2, 1375. That means I would have produced only 1375. Here I am producing 1000 units extra because I am going for extra hours. Because I am going for extra hours. That means relating to that 1375, my cost will be same 3,57,500. But relating to that 1000, my cost will be computed on 272 rupees basis. Because labor cost will increase. 1000 into 272. 2,72,000 plus I am buying from outsider how much now? I am buying from outsider 625 units. So 625 into 300. 1,87,500. D, anyhow I have to buy from outsider 8,10,000. This fixed cost, as I increased it by 2 times, for every 1000 hours increase, I have to incur 2,000 rupees. 12,000 rupees. Total cost. $33 lakh. $19,000. That means this is much better than alternative 1, alternative 2, alternative 3. Is that clear, everyone? 16,000? I didn't get you. Check now. Let's check. No worries. Now, next one. We are producing B same 9,80,000. C 7 lakh. A, relating to that first so many units, we are going to incur so much only. But listen. Now, I will just 1,375. No. Now listen. If at all it's 15,000 hours, at last how many hours will be available? 5,750 hours will be available. Last time it was 4,750. Now it will be 5,750 divided by 2. 2,875. Correct? No. That means how much you have to buy from outside? 125 you have to buy from outside. Here 1,375 you can buy at a normal price. I mean, you can produce at normal price. Remaining 1,500 you are going to produce at higher price. So 1,500 into 272. 4,08,000 plus when you buy from outsider, you are going to buy 125 units. That's it. 125 into 300. 30. This 8,10,000 D anyhow I am going to incur because I am buying from outside. And this, as I increased it 3 times, it will be 18,000. Fixed cost will become 18,000. How much? 33 lakh? 11,000. Is that clear? Okay. This looks much more interesting. But now you see 16,000 hours. That means everything you are going to make in-house. A, B, C. Because B will cost you 9,80,000, no doubt in that. C will cost you 7 lakh, no doubt in that. A, first 1,375 you are going to produce at 3,57,500. Anyhow, next one you have enough number of hours. You don't have to worry about it. You have enough number of hours. So, how much it will cost you? 1,375 will cost you the normal 260 rupees. That means remaining 3,625 will cost you 272 rupees. out of 5,000, required, 5,000 only, no? 3,000, sorry, then 1,625 will cost you 272 rupees. How much it will be? 4 lakh 42,000 plus you don't have to pay anything to the outsider, 0. And 8 lakh 10,000 anyhow you will incur. Here fixed cost they say part thereof, that means irrespective of whatever you utilize, 6,000 will increase. Even extra 1 hour you utilize, 6,000 will increase. How much it will be? Got it, madam? Here it increased. So you can't conclude that way. So out of all the alternative, which one is better? 15,000. So what was the conclusion there in that 15,000? Produce B full. Produce C full. Produce A to the extent of, this one only, no? Produce A to the extent of 2875. Remaining 125, buy from outside. D, fully you buy from outside. So, this is the conclusion. Anyone any doubt in this? This is what I told you, make or buy decision along with the key limiting factor in it. Hope it's clear. So if you want photo, because in material, I mean in suggested answer, they have solved it in different way. This will be picture number 1. Done. This will be picture number 2. Picture number 2. Is that done? Yes. Now we'll be discussing remaining questions. That is question number 3B. Okay. Question number 3B. First, Gemini Electricals follows a cost plus pricing method for interdivisional transfer, where transfer prices are calculated by adding an estimated return to the cost incurred by each division. So how we are calculating transfer price? They are telling whatever the cost is there, for that we will add the estimated return, profit. The relevant portion of the budget for the division A for the 25-26 is given below. Yesterday I told no one question, they have given both return as well as residual income in same, which is not proper. That rectified version is here. Luckily in examination they don't do mistakes. Once in a while they do, but generally they won't. So that is, look at this. It's getting, yeah, look at this. The relevant portion of budget for division A for the year is as follows. Fixed asset they have told, current asset other than debtors they have told, debtors they have told, annual fixed cost for the division they have told, variable cost per unit they have told, budgeted volume of production per year they have told, per year, and desired return on investment they have told 28%. You are required to determine the transfer price for division A. Guys, how much is our asset? How much is our asset? Fixed asset plus current asset other than debtors. And debtors. Yeah, so here, what is our asset? Total asset 5 lakh plus 3 lakh plus 2 lakh, 10 lakh. Our total asset is rupees 10 lakh. That means whenever they don't give directly capital employed, our capital employed is nothing but our total operating asset 10 lakh. Done. Next, annual fixed cost of the division is 8 lakh and we are planning to produce 4 lakh units. That means this we are planning to recover how much per unit? 2 per unit. 8 lakh divided by 4 lakh. Sir, but you told only variable to be considered. Here they are telling full cost plus profit. That's what we are recovering. Okay. And variable cost is 10 rupees. That means towards cost we will recover 12 rupees. Return how much you want? On 10 lakh you want 28%. That means you need total 2 lakh 80,000. Whereas how many units you are planning to produce? 4 lakh units. That means per unit how much you have to recover? 0.7 now. That means your transfer price would be 12.7 rupees per unit. Hope it is clear. Your transfer price would be rupees 12.7 per unit. Hope it is clear. Done. Next one. Suppose division A sells 20% of its output to the external market at a competitive price of rupees 14. Discuss how this external size frame may influence the transfer price charged to other division given that division A cannot increase output beyond 4 lakh. Guys, that means 4 lakh is there. In that, externally, we are selling how many units they are telling? 20% we are selling. How much we are selling? 20% we are selling. That means 4 lakh into 20%. 80,000. That means 80,000 I am going to sell it outside. 80,000 I am going to sell it outside. Now, when I sell outside 80,000 into, I know that my cost coming to how much? 12 rupees. My variable cost is how much? Variable cost is 10 rupees. Fixed cost is 2 rupees. Now listen. What I can do, just like a pricing decision, what I will do, I will just divide that 4 lakh into 80,000 and 3 lakh 20,000. 80,000 is external sale. 80,000 is external sale. 3 lakh 20,000 is transfer price. So total I will be utilizing my 4 lakh capacity. Total I will be utilizing my how much capacity? 4 lakh capacity. Correct now? That means now first sales will be how much? When I sell 80,000 units, my sales should be how much? 80,000 into 14 rupees. 11 lakh? 126, 140. 11 lakh 20,000. 3 lakh 20,000, I don't know the selling price for the time being. Transfer price, I don't know. Let me take it as T. This will be 3 lakh 20,000 T. So, no, that is for that point. Always remember, once you find out for any particular point, after that if they don't link between two subdivisions, always the main data prevails for all other subdivisions. Unless and until consider price of part 1 and all, then you should never consider main data it is. Always main data. Here, how much will be your sales? 11 lakh 20,000 plus 3 lakh 20,000 T minus variable cost. Guys, variable cost, I am not going to just write it here for two things because I know that end of the day whether I transfer in-house or I am going to transfer outside, end of the day 10 rupees per unit. That means which is going to be 40 lakh. Correct now? That means my contribution will be how much? 3 lakh 20,000 minus 28 lakh 80,000. 3 lakh 20,000 minus 3 lakh 20,000 T minus 28 lakh 80,000. Correct now? From this, I am going to reduce my fixed cost. How much was the fixed cost? 8 lakh. How much profit I should get? They are telling I have to make the profit of 15% on my asset. So we decided that we have to make the profit of total 2,80,000. Correct now? That is my target now. 2,80,000. That means, guys, can I say that 3,20,000 T minus 20,80,000 is equal to 2,80,000. Now 3,20,000 T is equal to 18 lakh. Correct now? So T is equal to sorry 5.625. 80,000 we took 3,20,000. 80,000 into 14, how much we got? Sorry, 11,20,000. 3,20,000 into transfer price, we took it as T. Done. So the sale became 11,20,000 plus 3,20,000 minus 40 lakh. So 28,80,000. Oh yeah. This will become plus now, guys. 20,80,000 will become plus now. So this also, this is not 28 lakh minus 28 lakh 80 minus 8 lakh will become 36 lakh 80, no? This one if you do, I just missed that step. 3,20,000 T minus 28,80,000 minus 8 lakh is equal to 2,80,000. So 3,20,000 T is equal to 2,80,000 plus 8 lakh, 10,80,000 plus 28,80,000, 39,60,000. 39,60,000. T is equal to 12.37538. So if at all this is the case, the transfer price will fall to 12.38. Earlier how much it was? 12.7. Now how come it fell to 12.38, sir? Whatever the profit I have to recover, I don't have to recover from the everything from the transfer price only, because when I'm selling that 80,000 units, I'm making some profit. So whatever the profit I have to make, 2,80,000, that will get contributed from this also. This is one approach. One more approach you can use that. See, whatever the profit of 2,80,000 I have to achieve. Forget about profit of 2,80,000. To achieve profit of 2,80,000, when the fixed cost is 8 lakh, how much contribution I have to achieve? 10,80,000, no? 2,80,000, 8 lakh. 10,80,000 I have to achieve. Total contribution to be achieved is how much? 10,80,000. Agreed. Now, in this 10,80,000, I know that contribution from my outside sale will be how much? 10 rupees is variable cost. Fixed cost is 4 rupees. Contribution is 4 rupees. 4 into 80,000. 3 lakh. 3,20,000, right? 3,20,000. That means how much contribution I should make from my this thing, transfer pricing, 7,60,000. That means how much contribution I should make per unit from there. 7,60,000 divided by, I'm going to sell 3,20,000. 2.37. So contribution I have to make 2.37. Contribution is nothing but variable. Selling price is nothing but variable cost plus contribution. Contribution I know, variable cost I know 10 rupees. So how much I should charge them? 12.37. Hope you guys got it. This is one more approach of doing. Yeah. This is one more approach of doing. Hope it is clear. Either you can go for normal approach of full lengthiest answer, or you can go for two-line approach. It's completely your choice. Yeah. It's just the way of presenting it. If you're able to tackle it in the second method, that means you know better, in fact. Got it? Okay. No, on that, it just falls on this tab. You didn't attend classes? Costing? In this classroom? Generally, this is kept off. Because it straight away falls on the tab. That's the thing. Go to 4B. 4A, sorry. Go to 4A. What they are telling? Happy Holiday Home organizes excursion trip for school children on a payment basis. Relevant information for the proposed excursion trip is as follows. Revenue per child is 4,000. Before that, can you tell me what is the formula for break even? Fixed cost divided by PV ratio or fixed cost divided by contribution per unit. They're asking you find the minimum number of children to cross the break even point. Minimum number of children. That means they're talking from the point of view of units. So what should be the formula? Fixed cost by contribution per unit. Per children here. Per child. Expense that have been incurred. Train fare per child. Variable cost or fixed cost? Variable cost. More the children, more the cost. Less the children, less the cost. Meals per child. Variable cost. Craft materials per child. Room rent 760 rupees. 4 children can be accommodated in the room. Per student how much? 760 divided by 4. 190 na? Okay. Local transport at a picnic spot per vehicle. Each vehicle can accommodate 6 children excluding driver. That means per child how much? 200. And fixed cost is 5,18,130. So may I know the total variable cost here? I mean average variable cost. You can't take it as exact variable cost also. Reason being these two are not exactly in that manner. But anyhow, we can't help. Not much information is given. 2,990. Guys, how much is your fixed cost? 5,18,130. How much is your selling price? 4,000. How much is variable cost? 3,990. 2,000. 2,990. That will give you contribution, no? May I know how much? 1,000? 1,030, no?
The contribution for it.
No. Final answer.
My
513. 513 children is required to break even. Simple, isn't it?
That young one from me.
Which one?
Minimum number of children to cross the day.
Cross the break even means exact break even is this.
Cross
That's what, if at all. No, margin of safety is different between your total sales and break even sales. Here cross means if any student crosses more than 513, that is cross of break even. Like that. Done. Shall we go to the next one? 4B. 4B, they're asking for 7 marks. What is the question? An evaluation of proposal with supporting workings whether or not to accept the proposal. A statement of estimated savings that will accrue to the company if the proposal is accepted. So this is the question on acceptance or rejection. Shall we discuss this? Nice question. Concentrate. RRS Limited, a consumer good manufacturer, uses a large volume of tin containers which are sold on a returnable basis to their local distributor, who are required to deposit ₹25 per tin, refundable on return of the tins. That means that is not our sale. Please keep in mind. When they return the tin, we are going to give their 25 rupees back. We are not making anything from that. The company incurs the cost of 32 per tin, which depends upon its condition on return, can be used 6 to 8 times. Unusable tins are sold at scrap of rupees 8 per tin. Normally 15,000 tins are scrapped each month. That means normally for us 15,000 tins will become unusable. Done. The company has received a suggestion from an employee to convert such scrap tins into usable lids for the containers. So our one employee is there. What our employee is telling? Right now what you are doing? Monthly 15,000 tins you are getting. Monthly 15,000 tins you are getting. And you are selling it at rupees 8 per tin. That means how much money you are making? 1 lakh. Straight away you are making 1,20,000 because you are not incurring any cost towards it. Whatever the scrap, that everything is your income only. So 1,20,000 you are making. Now listen everyone. If that is 1,20,000, now what our employee is telling, don't tell this, sell this 15,000 tins. Convert it into lids. Convert it into lids. That means what now? By converting into lids, if you are able to get benefit of more than 1,20,000, you will accept the proposal. If at all by converting to lids, if your cost or if your benefit from converting to lids is not more than 1,20,000, then you will reject it. Shall we see? Okay. As a cost reduction, following data is available. Each rejected tin can be converted into 5 lids of acceptable quality after rejection. Moral of the story, if at all this tin you want to convert to lids, how many lids you can produce? 15,000 into 5 and everything is acceptable quality. That means everything is good. You can produce 75,000 lids from this. Cost of conversion of lid is rupees 50 per 100 pieces. That means rupees 50 required to convert tin into lids. Whereas for how many units? 100 units. Now you have to convert 75,000 lids. How much is the total cost of conversion? First cost we are incurring is 37,500 to convert tin into lids. Done. Next, each tin weighs 1 kg and each lid weighs 120 grams. What do you mean by that? One tin will be of how many grams? 1000 grams. Correct? No. One lid will be of how many grams? 120 grams. Using one tin, how many lids we are producing? 5. That means how many grams of tin is utilized? 600 grams. That means 400 grams is waste. Correct? No? What they are telling here? Scrap lids and other offcuts can be sold at rupees 5 per kg. That means this 0.4 kg is there, no? Per tin, that you can sell it at 5 rupees. By the way, how many tins we are converting? 15,000 tins. Correct? No? How many kgs are waste? 6,000 kgs are waste. And that will fetch you rupees 5 per kg. Is it expense or is it income? Income. So try to understand. 37,500 we incurred to produce the lid. But whereas due to the wastage etc., we are again losing 30,000. I mean, cost is decreased by 30,000. Next, what they have told, company's requirement of lids are 1 lakh per month, which is going to currently buy at 2 rupees per piece. We need 1 lakh lids. If at all I didn't convert, then I should have bought 1 lakh lids from outside only. That would have costed me how much? 2 lakh rupees. That would have costed me how much? 2 lakh. Now, if at all I convert the lids, then 75,000 I am going to produce in-house. 25,000 I'm going to buy from outside. Correct now? When I buy 25,000 from outside, how much it will cost me? 50,000 it will cost me. Plus, to produce this 75,000, how much it will cost me? Just 7,500. Why just 7,500, sir? Whatever you are incurring in that 30,000 you are getting as a scrap and you are selling it off and you are getting. That means total, how much you are spending on the lid? 57,500. If at all you didn't produce, then you would have spent how much? 2 lakh. So how much you are saving? 1,42,500. Now, instead of selling the container, when you converted it to lid, you saved 1,42,500. However, if at all you had sold it as scrap only, then you would have made 1,20,000. You tell me, which is better? Converting to lid is better because you are saving 1,42,500. That means around 22,500 you are getting additional benefit. Is that clear or not clear? Clear? For presentation, you should check the suggested answer once. But hope the concept is clear here. This is the accept or reject. This is what I told yesterday. You can't particularly read theory of accept, reject, evaluation and all. You should go and check particular thing. There, if it's beneficial, you will accept. If it's not beneficial, you will not accept. Anyone, any doubt in this? Very nice question. So in this 14 marks, whatever they have asked, 14 plus 14, 28 marks. Break even was easy. In fact, dead easy. Your transfer pricing was easy. This is average. I agree, first point you have to use your brains a bit. Correct? No, first point might be bit here and there. Other than that, this should be easy. That means in 28 marks, don't you think you would have scored at least around 18 marks? Easily. 18 to 20 marks you would have scored easily. That means half of the paper is here, other half is in MCQ. Sorted. Remaining whatever is get is a bonus. So always remember the rule of 40 plus 20 plus 10 plus 10 plus 10 plus 10. First make sure 40. After that, slowly go to next level, get the 10 marks, next level, get the 10 marks, next level, get the 10 marks, like that. Don't pressurize yourself for 100 marks every time. Hope it's clear. I think that paper is done now. That's it. Shall we go to the June 2025? June 2025. Guys, MCQ 2, 3, 11, 6. 2, 3, 6, 11. Nah? How many marks? 8 marks. Plus 14, 7, 7. 28. 28 plus 8. 36 marks. Now, first question number 3, question number 4, question number 6, question number 11. 3, 4, 6, 11. Anyone, any doubt in this? No doubt? Oh. Three, 4, 6, 11. Shall we proceed? AXR Limited is a manufacturing company, has a break-even point when sales are 20 lakh and fixed cost is 8 lakh. If the selling price is rupees 5, PV ratio is how much? Guys, what is the formula for break-even? Fixed cost by PV ratio. Fixed cost, how much they are telling? 8 lakhs. PV ratio, I don't know. But when I do 8 lakh by PV ratio, I should get answer as 20 lakhs. Correct now? So PVR is how much? PVR will go that side, 8 by 20, 40%. Option B. Third one, option B. Any doubt? Okay. Third one done. Fourth one. Difference in the total cost that result from the two alternative action is differential cost. Next one which I told. Sixth. Division A transfers its output to Division B at variable cost. Once a year it charges a fixed fee to the Division A. That is two-part tariff. If you remember yesterday's theory what I told. Next. 11th. What is the maximum price that XYZ should be willing to pay that outside supplier for the gadget, assuming there is no change in fixed cost? Listen, so it's make or buy decision. XYZ Limited makes a special gadget for the car to its manufacturers. The machine for the gadget works to full capacity and incurs 15 lakh and 40 lakh towards variable cost and fixed cost, and we are operating at full capacity. That is important. That is important. If all the gadgets were purchased from outside supplier, the machine could be used to produce other items which would earn a contribution of 25 lakh. See, this fixed cost has anything to do? Nothing. Whether you buy from outside, you produce it on your own, you are going to incur 40. However, if you produce, you are going to pay 15 lakh towards variable. Not only so much, because of you producing this, are you able to produce other thing? No. When you are not able to produce other thing, how much you will lose? 25 lakh you will lose. That means your cost of making is how much? 40 lakh. I told you yesterday, if you remember, cost of making is not only variable cost plus opportunity cost. What is the maximum price XYZ should be willing to pay? 40 lakhs. If at all they quote for more than that, I will tell I will produce it on my own. For example, if they quote 45 lakh, that means for producing it takes me 40 lakh. No, I will save around 5 lakh. Yes or no? Anyone any doubt in this? Next one which I told. That's it, huh? Descriptive 3. Concentrate. Nice question. Worth 14 marks. Worth. See that. Color Paints is a manufacturer of industrial dyes. It can produce and sell at its maximum capacity of 20,000 liters. Selling price is 100. Present sale is 15,000 liters. That means there is idle capacity of 5,000 liters. The current cost structure is as follows. Direct material 30%. Direct labor 20%. Variable overhead 20 rupees per liter. Profit is 15 rupees per liter. That means direct material cost is how much? 30. Direct labor cost is 20. So your total variable cost is 70. Correct, no? Total variable is 70. But the profit is coming only 15. Then where other 15 is going? Fixed cost. How much it is? 15 per unit. That is when you are selling 15,000 units. So total is how much? No. 2,25,000. 2,25,000. Hope you guys understood how to arrive at a fixed cost here. I found out my total selling price. I found out my total profit. I got to know that my cost should be 85. But my cost they have given only 75. That is variable. So other 15 per unit should be fixed. That is 15 per unit when the units sold are 15,000. So we get to know how much is our fixed. Is that clear, everyone? To produce over 20,000 liters and up to another 10,000, some balancing equipment are to be installed at rupees 10 lakh and same will have a lifespan of 10 years. That means per year it will cost me how much depreciation? 1 lakh. 10 lakh is the cost, 10 years is the lifetime, That means per machine it is, per year depreciation is 1 lakh, please keep in mind. But you will install this only and only if you want to operate it more than 20,000 but less than 30,000. The present cost structure is estimated to go up due to price escalation as under 10% of direct material from its present level of 30%. That means direct material no more 30, it's gonna be 33, 30 plus 10%. 25% of direct labor, it's no more 20, it's gonna be 20 plus 25, 25. Done. 50,000 of fixed overhead. So fixed overhead is not going to be 2,25,000 anymore. It's going to be 2,75,000. These are the changes irrespective of whatever the combination you apply. Okay. Now listen. There is a proposal from the customer to take 10,000 liters additionally over the present level of output on a long-term basis at the price of rupees 90 per liter. Apart from the investment of rupees 10 lakh, that is in fixed asset, fixed overhead will go up by 50,000 due to additional admin expense. That is, if at all you accept this 10,000 liters order, your fixed cost won't be 2,75,000. It will be 2,75,000 plus 50,000, extra 50,000. The company is in dilemma as to whether to accept the order for 10,000 or use the present capacity of 5,000, for which there is an additional selling expense of 50,000. That is, whether accept that or that 5,000 you try to sell it to someone else, but that will come up with the cost of 50,000. As a management accountant of the company, you have to give your recommendation. Guys, here the determination of proposals is the one which is going to give you headache. What are those, sir? First, what are the proposals available? Boss, whatever it is, maintain it. You are selling 15,000 units, no more drama, just maintain whatever it is. Second alternative, no extra, nothing. Whatever 15,000 units you are selling, I know that there is a capacity to produce other 5,000 units that you sell to outsider and make some extra profit if you want. Or else 20,000 already you have. 20,000 already you have. Do one thing. Whatever the extra you can do, 10,000 units extra you can do, that you do. Then what you will do? 15,000 to the existing, anyhow it's going to be, plus 10,000 to the new order, plus 5,000 to the new sales drive, outsiders, same. Got it? One more option, 15,000. In that 15,000, do one thing. Sell to outsider 10,000 units. Remaining 10,000, you send it to the new customer. That is also an option, no? One more option. Possible any other option? $10,000 you sell to. No more option. These are the 4 major options you can say. Any other options? What you can use? 10,000, 10,000, 5,000. You can do this also. 15,000. That is already done now. And plus only 10,000. Not much. Only 10,000. Don't do that sales drive. Shall we see now? Of course, as your sales drive is going to give you positive contribution, it doesn't matter. The last option doesn't matter at all, because that is always not going to give highest profit, because anyhow we are making a profit. So more units you sell, more better it is. But yeah, can't help. Now listen, 15,000 units. Sales will be how much, guys? Sales. 15,000 units, we can sell it at rupees 100. Correct now? So 15,000 into 100. 15 lakh will be the sales. Next one, you can accept the outside customers demand, but if you go for outside customer, then they are ready to give you only 90 rupees per liter. So second option, 15 lakh you can make it from the existing customer, plus from that 5,000 customers you are making 90 rupees, means how much you will make? 4 lakh 50,000. Next one, 15 lakh you will make from existing customers. From the 10,000 customers you will make 9 lakh. For the remaining 5,000, they are not telling any new selling price, so it will be old selling price only. That is rupees 100. 5 lakh. One more option available is don't increase capacity and all. 10,000 existing, 10,000 new customer. Cut down your existing, that's what they are telling. So 10,000 into 100. 10 lakhs. 10,000 into 90. 9 lakhs. Next one, 15,000 into 100. 15 lakh. From this 10,000 you will make 9 lakh. But here you increased your capacity. Now listen guys, this will give the total sales, which is going to be important thing over here. Sales will be how much in first case? 15 lakhs. Second case, 19 lakh 50,000. Third case, fourth case, these your sales. Anyone, any doubt in the sales? Pakka. Now, next is your variable cost. Guys, how much is the variable cost? Material cost will be 33. Hello? Labor cost will be 25. Your variable overhead, no change as of now, 20 rupees. So your variable cost is how much? Sorry? 53.78. Correct now? So, variable cost has nothing to do with how many units you are selling or buying, etc. Straight away, if it is 1,15,000 units, then it should be 15,000 into 78. 11 lakh 70,000. Next one, 20,000 into rupees 78. Why we should take previous variable cost? We are doing it for current period. In current period also, whether I want to maintain it or should I go for the additional? That's what we are deciding. Whatever incurred last year, we have nothing to make the decision. Sunk it is. Correct, no? So, how much it is, guys? 20,000 into 78. 15 lakh 60,000. Next one, 25, 30. 30,000 into 78. 22 lakhs 40,000. 23. 23 lakh 40,000. 20,000 into 78. 15 lakh 60. Done. Total 24 lakh into 78. Why we? I'm asking you, you should tell the answer. Waiting for the answer. 25,000 into 78. 19 lakh 50,000. Got it? This is your sales. This is your variable cost. Now, fixed cost. This is very important. Guys, if it is a 15,000 units only, then your fixed cost will be 2,75,000. Last year you incurred 2,25,000. This year, irrespective of your decision, 50,000 you are increasing, 2,75,000. Correct? No? Next, if you go for 20,000 units, why you are going 20,000? 15,000 to existing, other 5,000 to new sales drive. New sales drive will cost you how much? 50,000 more. 50,000 more. That means 2,75,000 plus 50,000. Got it? Done. Next one. If you go for 25,000, 30,000, sorry. If you go for 30,000, guys, normal 2,75,000 I am incurring. Normal 2,75,000 I am incurring. Am I doing the sales drive? I am doing sales drive. That 5,000 units. 15,000, 10,000, 5,000. Done. Also, my sales, is it going beyond 20,000 units? Yes. That means it comes up with the new fixed cost of 1 lakh. It comes up with new fixed cost of 1 lakh because you are installing a new machinery. Not only so much, because you accepting this 10,000 also, that will come up with other 50,000 of administration cost. So here these many costs will be there. Got it? Now going to 10,000, 10,000. What is the 10,000, 10,000? This 2,75,000 that will be there. Along with that, my new customers, I am telling them okay. That means that will cost me extra 50,000. Sir, not this 50,000. This is sales drive cost. This is your depreciation. This is your additional cost. Correct? No? Now, sales drive cost, anyhow we are not doing sales drive. It's not going to be there. Additional depreciation, anyhow I am not increasing my capacity. So that is also won't be there. But additional cost to manage them, I need 50,000 rupees. Got it? Next, 15,000 and 10,000. What and all is there in this? 2,75,000 to anyhow we are going to incur. Correct? Your sales drive cost won't be there because you are not selling it there. Next, depreciation, it will be there because your production exceeded 20,000. So that 1 lakh will come into picture. And 10,000 units you are selling to the outsiders, which will come up with extra cost of 50,000. See, they have taken 1 and 2, 2 and 3, 3 and 4, some nonsense stuff they have did in answer key. You don't have to do that. You can follow this approach. So first one, how much is the profit? 15 lakh minus 11 lakh 70,000 minus 2 lakh 75. 55,000. Next one. Huh? 65,000. Huh, madam. Last one. 25,000. Okay. Sorry. Fourth one, 15,000. 5 lakh. 15,000. So out of all the alternative, which is giving you more profit? 5 lakh 15 you are getting. I doubt. Check. It cannot be 5 lakh 15. $85,000 or 1,85,000? 85,000. So out of all the alternative, which will give you more profit? 85,000 will give you more profit. So your advice is to go for 30,000 units. That is, whatever existing is there, you maintain that. Plus, whatever the sales drive will get you, that also you maintain. Along with that, other 10,000 external sale, that also you accept. That is, you accept the project or you accept that proposal. So what is the conclusion? Go for 30,000 units. Hope it's clear, everyone. Simple one only, no? Now it's clear. So they have given some alternative solution 1, alternative solution 2, some nonsense, blah, 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 blah. Scenario 2, scenario 3, alternative 1, alternative 2, etc. Hey, just check this one. Fourth one. How much you are getting? $15,000 only. Second one, how much you are getting? $65,000. Here one. Guys, here we sold that 5,000 units. No, 5,000 units we sold as sales drive, right? So selling price is gonna be 100 only, not 90. 5,000 you sold it as sales drive, no? Everywhere sales drive we have taken 100 only. Only there I don't know why we took that. But yeah, 5 lakh. So your sales will be 20 lakh. That means your profit will increase by 50,000. 1 lakh, 15,000. So conclusion change. Make that changes. I don't know why we took that. But yeah, you understood what changes we did. For that 5,000 extra units sold, it's gonna be 100 only, not 90. Because for extra offer, we are giving that extra 10,000. For them, we are allowing them this thing. How much? 90 rupees as a 10 rupees as a discount. But if you are making sales drive, we don't have to give them discount. We have to incur that extra units. That's it. I mean extra cost. That's it. Hope it is clear. Any doubts? Nice question. Marked as LMR Pro Max. These are the kind of question which I told yesterday. In study material, they are given some different wrong answer. One of this 50,000 they have left there like that. Okay. But in suggested answer, they have taken many alternative, many scenarios, some jatre, all those things they have done. You don't have to do that. You have to do this 5 approach. Out of all the alternatives available, these are the only options available for you. This was 3B, is it? 14 marks. June 25. Next, 4A. Look at this 4A. Aeon Limited furnished the following data for the financial year 24-25. You are required to calculate revised fixed cost, revised sales, new break-even point. Awesome. Sales is 10 lakh. Contribution to sales is 37%. That means, can I tell that variable cost percentage is 63%? In the existing scenario, how much is variable cost? 6,30,000. Contribution is how much? 3,70,000. 3,70,000. Margin of safety is 25%. That means how much is margin of safety? 2,50,000. I know the difference between margin of safety and total sales is break even sale. 7,50,000. Is this clear? Anyone any doubt so far? Now listen. A decrease in the selling price and decrease in the fixed cost could change contribution to sales ratio to 30% and margin of safety to 40% of the revised sale. Now my question is very simple. Right now contribution sales ratio was 37. Hello. Contribution to sales ratio was 37. It will fall to 30 because of what? Because of change in selling price. Because of change in selling price. Now my question is, along with change in selling price, will the variable cost change? No. My next question is, by any chance your number of units sold changed, they are telling? No. That means, can I say that my variable cost per unit is not changing? Fixed cost has nothing to do. Concentrate. Number of, like, my variable cost per unit is not changing. Number of units sold is not changing. That means, can I say that my total variable cost of last year, total variable cost of current year will be same? This is similar to ICI material question, one illustration. I told no the other day when I am explaining change in selling price don't affect the change in variable cost. So hope you guys understood. That means, can I say that for the current period also, total variable cost is gonna be 6,30,000. Can I say this or no? You guys understood what I am trying to say? Selling price change, they are telling. Variable cost, no information. We assume it didn't change. Sales units, no information. We assume it didn't change. When variable cost per unit, number of units sold won't change. How come total variable cost will change? Total variable cost for last year, total variable for current year, both will be same. Total variable cost for last year, current year, both will be same. That means for the current period, my variable cost will be 6,30,000. 6,30,000. By the way, current year PV ratio is how much? 30%. Guys, if current year PV ratio is 30%, current year PV ratio is 30%, then variable cost percent should be how much? 70%. Can I say that 70% means 6,30,000? 100% means question mark. So can I say that my new sale is nothing but 9 lakh? My new sale is 9 lakh. Anyone any doubt in this? No doubt. Also, they are telling margin of safety will go to 40% of the new sale. How much will be the margin of safety here? 9 lakh into 40%. 3,60,000. Guys, out of 9 lakh, if 3,60,000 is margin of safety, then remaining 5,40,000 is what? Break even. 5,40,000 is break even. Next, they are asking revised fixed cost. Can I say that contribution at break even is equal to fixed cost, contribution at margin of safety is equal to profit. Now, do I know the break even? 5,40,000. Do I know the PV ratio? 30%. How much is the contribution at break even? How much is the contribution at break even? 5,40,000 into 30%. 1,62,000. That means your new fixed cost is 1,62,000. Simple. So this is what I told the other day. If at all the question they ask this variable cost change adjustment, they don't give much information. And without starting with that 6,30,000 is 70%, there is no other way to start this question. Can you solve it any other point? No, everything else is changing. Unit sold and variable cost per unit is not changing. Using that, you have to solve this. Quickly go through this. Then we are going to 4B. So that 14 marks was easy. This 7 marks was easy. 21 marks, simple. Next one is also much more easy. What is it, madam? Your understanding is correct? Done. Shall we proceed now? 4B. What they are asking? Advise company as to whether any or all the export orders should be accepted or no. So it could be pricing decision or it could be accept or reject. But end of the day, it doesn't matter. You have to apply marginal concept here. Concentrate. PSO Limited, having installed capacity of 1 lakh units of product, is currently operating at 70%. That means right now we are producing 70,000 units. That means 30,000 units are idle. At current level of input prices, the unit cost, that is after taking credit of all those things, works out to be as follows. Guys, if at all you operate at 70%, that means if you go for 70,000 units, your cost per unit will be 97. Will it has only variable in it or will it have fixed also in it? Both together. Next, 80,000 if you operate, it will go to 92. 90,000 if you operate, it will go to 87. 100% if you operate, it will go to 1 lakh. It will go to 1 lakh. Now, the company has received 3 foreign offers from the different sources. Source A, 5,000 at the rate of rupees 55. Source B, 10,000 at the rate of rupees 52. Source C, 10,000 at the rate of rupees 51. Advise whether company has to accept it or no. Very simple. If my revised revenue is more than my incremental revenue is more than my differential cost, I will accept. Otherwise, I will not accept. And is it well within the idle capacity? Yes, because my idle capacity is 70,000. Sorry, 30,000. Correct? No. Now listen. If at all I accept, before accepting, can you tell me, if you are operating at 70%, how much will be your total cost? This question is there in study material 2 times. I mean, one in illustration, one in, I think two times in practical problem, something like that. How much? 67 lakh, 90,000. Next one, 80,000 into 92. 70? 60,000. And next one, 90,000 into 87. 78 lakh. Guys, can you tell me whether change in cost divided by change in units, for all the level you are getting the same amount or different amount? Check and tell. First you check 70 and 80% difference total cost divided by the units. Next, 80 and 90 divided by the units change. Then 1 lakh and 90,000 divided by the units change. First one, cost is changing by 4,70,000, I feel. Correct, no? 4,70,000, 4,70,000 or 5,70,000? 5,70,000. So 5,70,000 divided by 10,000, 57. Next one, 78,30,000 minus 73,60,000. 4,70,000 divided by 10,000, 47. That means try to understand. Here directly we can't apply that formula. Change in variable cost divided by, change in total cost divided by change in units will give you variable cost per unit. Not possible at all. Why? Because here change is not only due to variable cost. That means you have to take the bulk and you have to answer. Like what, sir? Listen. Right now I am operating at 70%. If I accept this 5,000, what will be my revenue? 5,000 into 55. 2,70,000. But I have to go for this production. Correct now? What is the increase in the cost? 5,70,000. Correct no? Difference was 5,70,000 no guys. But 5,70,000 is for 10,000 units. For 5,000 units it should be 2,75,000. This one 2,75,000 na. 5,70,000 divided by 10,000 into 5,000. 2,85,000. Will you accept it? The offer is rejected. Why? Because your incremental cost is more than incremental revenue. What about you get 10,000 units as offer, sir? How much will be the incremental revenue? 10,000 into 52. 5,20,000. And all you need is 70 to 80 only because 10,000 units. That will cost you 5,70,000. That will cost you 5,70,000. Will you accept? Why? Your incremental cost is more than incremental revenue. What if you go for this 10,000? Then your revenue will be 5,10,000. Your incremental cost will be 5,70,000. Will you accept? You won't accept. So 3 separately though you don't accept. What if you are going for first A and B? What if you accept A and B? Guys, if you accept A and B, this one you understood separately, we are not accepting anything. If we go for A and B together, how much will be my incremental revenue? 5,000 into 55, M plus 10,000 into 52, M plus MRC. 7,95,000. Okay. This is my incremental revenue. This is my incremental revenue. Now, right now I am at 70, no? How much increase I should do? 15,000 units. That means I should jump till here. I should jump till here. Guys, when you are producing 70%, your cost was 67,90,000. Now, when you are producing 90,000, your cost is 78,30,000. What is the difference? 10,40,000. By the way, 10,40,000 is to produce 20,000 units. Now we are discussing about just 15,000 units. 7,80,000. So if at all we go for A and B, that will give us profit of 10,000. Is there any doubt in this? If you go for A and B, that will give you profit of 10,000. Because 7,85,000 you got, no? 80, then 15,000. A and B will give you profit of 15,000. Is that clear? Okay, fine. Now, shall we check B and C? If you go for B and C, if you go 10,000 into 52, 5,20,000, 10,000 into 51, 5,10,000, 10,30,000 will be your incremental revenue. 10,30,000 will be your incremental revenue. You need 90,000 units in total. That means full 20,000 you have to produce. To produce that extra 20,000, it's gonna cost you 10,40,000. We compared no here 70 to 90. 10,40,000. That means your incremental revenue is 10,30,000. Your incremental cost is 10,40,000. Will you go for B and C? You won't go for B and C. Now one more option left is C and A. C and A. What will be the incremental revenue? 5,000 into 55, M plus 10,000 into 51, M plus MRC. 7 lakh 85,000. And we already know that to go for A and C, you need 15,000 unit extra. To produce 15,000 units extra, we already calculated 10 lakh 40 into 15,000 by 20,000. How much cost? 7 lakh 80,000. So to go for C and A, you will make profit of 5,000. So compared to C and A and B looks attractive. Compared to C and A and B looks attractive. Now, what about A, B and C? What about A, B and C? Guys, together, what will be the sales? Incremental revenue. A 5,000 into 55, M plus 10,000 into 52, M plus 10,000 into 51, M plus MRC. 13 lakh 5,000. So extra how many units you need? 25,000 units you need. That means from 70,000 you should jump to 95,000. From 70,000 your production should jump to 95,000. That means I need to calculate first 70% to 100%. How much is the difference? 14 lakh 10,000. But the thing is 14 lakh 10,000 is to produce 30,000 units. But we want to produce just 25,000 units. 11 lakh 75,000. So what will be your profit? 1 lakh 30,000. That means you can make around profit of 1,30,000 if you go for A, B and C. So it is advised to go for A, B and C. Got it? Anyone any doubt in this? Yeah, A, B, C, A and B, B and C, C and A, B and C. 7 marks they are giving, no? Everything won't be for free. Like Tamil Nadu government. Jai Vijay TVK. But worth. Because see, if that's the case, this won't take like more. It might take 20 minutes. But here you are getting how many marks? 14 marks. Getting it? In material, while solving, what they are doing is they are taking, rather than average cost, they are taking slab based. So they are getting some different answer. This also will be fine. If you do this way also, this is also fine. What they are doing is, in material, for example, now A, B and C, how much it fell? 95,000. No, that means for first 20,000 they adjusted in this slab at this rate. They found out per unit rate here. They adjusted 20. Remaining 5,000 they took here. But what we did, all the three we adjusted in the difference. So it's absolutely fine. It's all about differential. Okay. Anyone any doubt? No doubt. Then we can proceed. 4B, no? That's all? What are you talking? Seriously? Done. So that was which paper? June 25. Now going to December 24. Guys, fourth one is there. Fifth one is there. 7th one is there, 12th one is there, 6 marks, 15th one is there, 1, 2, 3, 4, 5, 10 marks in MCQ, and 14 plus 7 plus 7, as usual, 28 marks. Shall we check now? What are those things they have asked? 4, 5, 7, 12 and 15. 4, 5, 7, 12 and 15. For Measure Zimbra Limited sold 65,000 units of its product at rupees 80 per unit. PV ratio is 20%. Margin of safety. Guys. What is the formula for margin of safety? Profit divided by PV ratio. Okay. But also can I say that my total sale is, see, I can do directly also. I can find out contribution, reduce fixed cost, find out profit by PV ratio. That is your normal approach. For MCQ, you can do much more easily. How? 65,000 units if you sell at 80 rupees, what will be your sales? Sorry? Or forget, don't even have to do that. Tell me how much is the contribution per unit. 80 rupees is selling price, 20% PV ratio. 16 rupees. Guys, fixed cost divided by contribution per unit will give you what? BEP in units. 6,40,000 divided by 16. 40,000 units. Guys, total units sold 65,000. In that break even is 40,000. That means 25,000 is what? MOS. To obtain break-even point in rupees, total fixed cost should be divided by PV ratio. For inter-level, that question is next level. Which one of the following is not considered as method of transfer pricing? Negotiated transfer pricing, there. Market price based, of course there. Fixed cost based, opportunity cost based. Which one is not the method? Fixed cost based. It's never a method. Next. This relevant cost for manufacturing product in-house. Measure Xeon Limited is currently manufacturing a component of finished goods which is readily available in the market for 25 rupees. So cost of buying is 25. In-house manufacturing cost per unit will consist of direct material 10, overhead 15. In that 60% is fixed. So whether you buy it, whether you make it, end of the day that will be there, no? That means you should consider only variable. So 15 into 40%. 6 rupees. So total 16 rupees. If the company decide to buy the component from the open market instead of manufacturing in-house, machine can be used to manufacture other component which will contribute 12. That means it's opportunity cost, no? Yes. So your cost, relevant cost per unit is option D. Is that clear, everyone? Next one what I told. 15. Which of the following is not true? Marginal costing is system of costing. It's a technique of costing. This is not true. Key factor is important in ascertaining the profitability. True. Under marginal costing technique, fixed costs are charged off to revenue fully during the period in which they are incurred and not taken into account while valuing inventory. True. Plant and machinery may depreciate more quickly when kept idle than when it is used. True. Rusting and all will be more, no? So moral of the story, option A is not true. Third one, no? See there, measure Garlic Hotels has 3 categories of rooms in the hotel, 5 suites, 50 superior rooms, 40 standard rooms. Room tariff of standard room is 5,000 per day. What is the selling price? 5,000. Garlic Hotels provide you the following details in respect of standard room for the financial year. Room tariff collected 400 lakhs. That means how many room days we have given them, guys? 400 lakhs. That is 4 crore divided by 5,000. 3 zeros gone. 40,000 divided by 5. 8,000. 8,000 room days. Variable cost is 160. Guys, 160 divided by 8,000 room days. Per room day, how much? 8,000. 160 lakhs, in fact. 200, no? 160 lakhs. 1 crore 60 lakhs. 2,000 or 200? 2,000 per room day. Fixed cost is 60 lakhs. Apportioned cost is 100. That means total fixed cost is 160 lakhs. Salary of housekeeping less than 7,500. It's gonna be 10. 7,500 to 9,500, 15. And above 9,500, 20. Based on occupancy, hotel employed following housekeeping staff at 60,000 per month per staff. You need so many staff. Now, the projection for the next financial year is as under. All cost except apportioned cost of hotel and admin will go up by 10%. That means other than your fixed cost, your variable cost will go up by 10%. That will become 2,200 per room day. Hello? Per room day, 2,200 it is. Now, 60,000, that will become 66,000. Got it? Apportioned cost of hotel admin will increase by 11. And also this will also increase, no? Fixed standard, this will also increase 66. This will become 66 lakhs. And hotel apportion, they are telling it will increase by 11 lakh. That means it will become 171. It will become 171 lakhs. Done. Already 160 is there. Sorry, 100. 111. It will become 111. Done. Next. There will be salary hike of housekeeping staff by 5%. So here don't take 66. If the question was silent, you would have taken. But here housekeeping separately they are telling. So I will take it as 63,000. I will take it as 63,000. Done. Room tariff will increase by 10%. So the room tariff, it won't be 5,000 anymore. It will be 5,500. Room occupancy is not likely to increase in the next financial year. That means it's gonna be 8,000 only. The management is actively considering a proposal to convert all standard rooms into superior rooms in the event of the fixed cost can be avoided. Okay. Determine the profitability of the hotel in respect of standard room segment for both the year. For the current year, how much will be the sales? 400. How much is variable cost? 160. Fixed cost 60, 100. Also housekeeping staff. Guys, 8,000, that falls under this category. So how much you need? 15 workers you need. So 15 into 60,000 was their salary. How much is 15 into 60,000? But that is per month. Per annum into 12. 10 lakh. So 108 lakhs. 108 lakh. So how much will be the profit in the first case? Minus. So there is a loss of 28 lakh in the first year. Now second year, they are telling number of room days gonna remain same. 8,000 only. Selling price will be 5,500. So 8,000 into 5,500. So 440 lakhs. Sales will become 440 lakhs. Variable cost. Last time it was 2000, but now we know that it's going to increase by 10%. So it will become 2200. So 2200 into 8000 room days. 1 crore? 1 crore 76 lakh. Fixed cost, it will increase by 10%. It will become 66. Apportioned hotel administration, it will become 111. Salary of housekeeping. Guys, same 15 staff only we need. But 15 staff will not be earning 60,000. They will be earning 63,000. 15 into 63,000 into 12. One 113.4. May I know the profit? Minus 26.4. Clear? Next, what they are asking. Calculate the break-even room occupancy for the next financial year. Very simple. My fixed cost divided by contribution. How much will be my fixed cost, guys? My fixed cost will be, listen, 66 plus 111. 66 plus 111 plus housekeeping staff. But housekeeping staff, do I know the break-even room days? I don't know. Then which one I should take? 10 na, 15 na, 20 na? You should go for trial and error. You should go for trial and error. First trial by taking 10 housekeeping staff. So 10 into 63,000. 10 into 63,000 into 12. Huh? 0.756. Sorry, 75 lakh 60,000. 75.6 in lakhs, no, divided by contribution per unit. I know that my variable cost is 2,200. My selling price is 5,500. Correct? No, new sales is 5,500 only. No, how much is contribution per unit? 3,300. What students will do is, in full Josh 3,300 they will divide. Some decimals name they will get answer. Multiply with 100 they will do. Some random stuff they will do. Above every amount is in lakhs. It is in 1,000. You should convert it into lakhs. If you take everything in lakhs, 0.033. 7,000. That means they are telling break even will come to 7,654. But for housekeeping, what was our assumption? For break even, what was our assumption? Less than 7,500 room days. Can you achieve your break even at less than 7,500? Our assumption was wrong. So this is not the break even. That means that is not our housekeeping staff salary also. Shall we go to the next level? If we go to next level, we assume we are going to keep 15 staff. Then my fixed cost will be 66. My apportioned cost will be 111. Salary to them will be 15 into 63,000 into 12. Huh? 113.4 divided by my contribution will be 0.033. 8,000. Is it falling well within the category? Yes. That means that is your break even. So your break even is 8,800 room days. Your break even is 8,800 room days. Is that clear? No doubts. Whenever they give slab basis, you should do this way. I mean, this question was a bit different, but yeah. Suggest increase, if any, in the room tariff to justify the continuance of the standard room segment at existing occupancy. All you have to do is, by taking price as X, whatever the profit you want to achieve, you should take it and find out 8,000 room days into X will give you sales minus variable cost 2,200 into X. That will give you contribution. From the contribution, how much ever the profit you want to achieve, that you check and you can calculate. Got it? You will get the answer. Not a big deal there. That was for 14 marks. Worth. Look at this fourth question. 4A and 4B. Let's see this 4A and 4B and then we'll take a break and we'll continue with the remaining two. Measure Streaker Limited provide you the following data for the year ended 31st March 2024. Selling price is there, material is there, labor is there, variable and fixed together they have given 1 lakh. Measure Streaker Limited sold 2000 units in the year 24-25, that is next year. In 25-26, the selling price per unit will remain same. Direct wage rate will increase by 20% and fixed cost will decrease by 6,000. If 3,000 units are sold in 25-26, the variable and fixed overhead will be 1,14,000. You are required to calculate the profit for 24-25. Determine the total cost to be sold in the year 25-26 in order to earn the same amount of profit as in 24-25. Actually, this they should have given grace marks, if you ask me. From some question they have taken this. In table they forgot to change the date. Here they are using the term 24-25. But they are giving the table of 23-24. Getting it? So it's kind of mistake. Hope they had given, I don't know, I'm not sure. But anyhow, as a student, you won't think so much also. You also think whatever they have given is 24-25 also. So done. Now, calculate the profit per unit they are asking. Guys, calculate the profit per unit. Very simple. How much is your selling price? 200. Variable cost 130. Contribution per unit 70. How many units you are selling? 2,000. So how much will be your contribution? 1,40,000. How much is your other cost? 1 lakh. That means how much is your profit? 40,000. They are asking per unit, no? So 40,000 divided by 2,000 rupees. Is that clear? Next one, what they are asking. Determine the units to be sold in 25-26 in order to earn the same amount of profit per unit. Now, the thing is, I will take that units as X. Selling price, I will take everything, I will take, that's fine. But if this was only fixed cost, shouldn't be a problem. If this was only variable cost, shouldn't be a problem. But this they are telling variable plus. That means it is having both the elements in it. Then how to deal with it? See what they are telling. If 3,000 units are sold in 25-26, total variable cost and fixed overhead will be 1,14,000. Don't you think you can make change in cost by change in sales? Sorry, change in cost by change in units. Now the cost is how much? 1,14,000. Last time how much? 1 lakh. Divided by last time how many? This time how many units? Last time how many units? But there is one catch here. What is that catch, sir? Is it purely due to change in variable cost? If it's purely due to change in variable cost, I would have taken that way. But is it purely due to change in variable cost? No. Why? What they are telling you, see. Fixed cost will decrease by 6,000. That means This 1,40,000 is after giving that effect. If you remember in class day 1 also I told, while revising also I told this. Take out the or eliminate the effect of fixed cost. Fixed cost increased by 6,000. If that didn't happen, then how much would be my this cost for next year? 1,20,000, no? Hello? If that 6,000 effect wasn't given, then my cost would be 1,20,000. But now it is 1 lakh. So 20,000 divided by 1,000. 20 per unit. Now I will apply to any level. Let me apply to this level only. 2,000 into 20. 40,000. Total cost was how much? 1 lakh. Total cost was 1 lakh. Whereas 40,000 is your variable cost. That means fixed cost is how much? 60,000. But this is before change. Because I eliminated the change. So after change, your fixed cost should be 54,000. Got it, guys? Hello? Now, this is your fixed cost. We got to know fixed cost is 54,000, variable cost in it is 20. Now, they're asking determine the units to be sold in order to earn the same amount of profit. Shall I take units as X? Then my sales will be how much? 200x. 200x minus my direct material 100 rupees. Any change is there by any chance? No. So that will be 100 per unit. So 100x only. My wages 30 rupees right now. They are telling it's going to increase by 20%. So it will become 36. So 36x. And other thing will be 20x in this 1 lakh. 20x. And your fixed cost is going to be somewhere we have taken no 54,000, no? Fixed cost is going to be 54,000. And by any chance, are they asking you to find out a sales or sales to achieve the same amount of profit or same amount of profit per unit? Per unit. That means here I will take 20 per unit. 20x. If at all they told same amount of profit like last year, then I would have just taken 40,000 here. Because my total amount should be 40,000. Here per unit only they need it to be 20. So it should be 20x. Understood? So 200 total 156x. So 44x. Correct, no? 200 minus 136, 156. 44x minus 54,000 is equal to 20x. So 24x is equal to 54,000. X is equal to 54,000 divided by 24. 2,250 units. And remember, you should write the conclusion for all the questions. You should write as to achieve the same profit per unit like last year, you should sell 2,250 units. Understood or no? Simple one, no? For this 7 marks is like 5 minutes work. But yeah, this adjustment you should know. And of course, it is not a new adjustment which came in examination directly. This is there in the study mat also. We have discussed also. Hope it's clear for A. This which attempt December 24. Huh? We have 2 more papers, no? Okay. Now look at this B. Analyze the cost reduction program to be envisaged. That is reduction in the fixed expenses product wise. What they are telling. Acona Limited manufactures 2 types of mobile phone, XB and YB. Due to severe competition, it has to reduce prices for the next production period. Following information is provided. Right now, our selling price is 10,000, 12,000. PV ratio is 25%, 30%. That means how much is my contribution? 2,500, 3,600. Product specific fixed cost are 10 lakh and 15 lakh. Next period, selling price is gonna be 8,000 and 9,000. For the next period, company wants the current PV ratio to be maintained and to achieve the break even for both the products as 400 units. So they are telling that your PV ratio should be same. PV ratio should be same and they want to achieve the break even of 400 units, in fact for both. It is assumed that number of units to be sold to break even as well as to total number is same. That means ratio is same. They are telling you, don't have to confuse about multiple break even here. Analyze the cost reduction. Are very simple. Listen, how much PV ratio they are asking you to maintain? 25 and 30. Break even how much they are telling? 400. That means, guys, I don't know why they have given this question in first place. For 7 marks. You will get to know why. Tell me the formula for break even. Contribution per unit. Contribution per unit. But here PV ratio is 25. To maintain the same PV ratio next year, how much will be my contribution? 2,000 and 9,000 into 30%. 2,700. Agreed or no? 2,000 and 2,700. Agreed? My next year, my contribution should be 2,000 and 2,700. That means my variable cost should be how much? 6,000 and 6,300. My variable cost should be 6,000 and 6,300. Whereas last time it was 7,500 and 8,400. Because last time selling price was 12,000, contribution was 3,600. You understood? Now, they just want to know how much is the reduction in the fixed cost. Guys, you know the new break-even point? How much? 400. Correct now? How do you arrive at this 400? Fixed cost divided by contribution. Do you know the fixed cost for the period? You don't know. Shall I take it as F? Divided by new contribution is 2,000. So F is equal to 8 lakh. Last time how much it was? 10 lakh. So how much should be reduced? 2 lakh should be reduced. Next one also they want 400 units only, it seems. Shall I take this fixed cost as F divided by how much is the contribution per unit? 2,700. May I know how much it is? 10 lakh, 80,000. Last time how much it was? 15 lakh. So how much should be reduced? Tell me what is there in this to give 7 marks. Correct, no? You never know. I don't know why students will conclude on their own. This attempt it will come, this attempt it won't come. You didn't write this paper. Sad. Life. Always you won't get what you want. My ex gave that lesson. Oh, this is going on recording, is it? Shall we proceed? What if the delusional girlfriend sees it? I mean, delusional ex-girlfriend sees it. 4B is done now. Nothing will happen now. Future will see. Ayyo. Delulu? Yeah. Delulu Lakshmi. Fine. We'll do one thing. Now we'll take a break and we'll continue with the remaining papers. Look at this, June 2024. There are two MCQs, 11 and 13, and descriptive, 3 questions. Of course, one decision making, one marginal costing, one more decision making. Total 28, 28 plus 4, 32 marks. June, no? Question number 11 and 13. Look at this question. In dash, both fixed and variable costs are considered as product cost. That is absorption costing. In marginal costing, it's only variable plus the variable, that's it. Variable manufacturing cost. Next one, 13th. Or actually 7th one also you can see here. Measure Unicorn Limited sold 200 units and 300 units in the year 23-24. If the total overhead of 23-24 are 10,000 and 12,000, how much will be the fixed overhead? Change in cost, 2,000 divided by change in units, 100 rupees. That is your variable cost. You take to any level. Let's take to first level. 200 into 20, 4,000, but the total cost is, that means fixed cost is, got it? Next one. PV ratio is 20%, selling price is 50, contribution per unit is 10. Why? Other level, that is 300, 300 into 20, total cost is 10 rupees is contribution, MOS is 2000 units and fixed cost is 30,000. So break even is how much? 30,000 divided by 10. Fixed cost divided by contribution per unit. How many units? 3,000 units. Break even is 3,000 units. Margin of safety is 2,000 units. Total option C. Is that clear? Next, which one I told? That's it, right? 3 na? What they're asking here? Suggest the quantity of each product of measure Posco Limited should manufacture or purchase to maximize its profit. Calculate the profit under suggested method. See there. We are give me a second. Okay. See there. Question number 3. Measure Posco Limited is manufacturing 4,000 units of product Zimzam utilizing 100% of its machine capacity. The selling price per unit and cost per unit are as follows. Selling price is 700, cost per unit is 100, 150 rupees 100 per machine hour. How many machine hours we are using? 1.5 hours of machine we are using. Correct now? Other factory overhead is 180, selling and distribution is 200, total 630, profit is 70. Posco Limited can sell maximum 8,000 units of product Zimzam in market. However, due to limited machine hour capacity, it can produce maximum 4,000 units of product. That's there, they have given already. Measure SB Limited, a quality supplier of product, can supply up to 3,000 units of product Zimzam at the price of 620 up to Posco place. That means they are having one supplier who is ready to do and give that product. But maximum they can give is 3,000. Posco Limited can use its facility to manufacture an alternative product called Bonbon. It can sell up to 10,000 units of Bonbon annually. The selling price per unit and cost per unit of Bonbon is so. Direct material, variable, that is machinery is 0.5. Correct now? When per machinery you are charging 100 rupees, for 0.5 machinery will charge 50. Other factory overhead 50, selling and distribution 100, profit is 200. POSCO Limited provides you the following additional information. 1. Variable S&D cost per unit as under. Manufacturing product of Zimzam in-house 80. Purchasing product Zimzam from Measure SB, it will cost you just 60. Manufacturing product of Bon 70. POSCO Limited uses machinery as the basis for assigning fixed factory overhead cost. Fixed factory overhead cost is 2,40,000. This cost will not be affected by the product mix. Suggest, that means it is relevant or irrelevant. Irrelevant. Suggest the quantity of each product that Measure POSCO Limited should manufacture or purchase to maximize its profit. Calculate the total profit of Measure POSCO as per first alternative. First one. Guys, how much units of Bon can be produced? Right now, if we produce 4,000 of Zimzam, our machine hour will get completed. How many hours of machine we are using? We are using how many hours of machine? 1.5 hours. That means, can I say total machine hours available are 6,000. 6,000. So how many units of Bon can be produced? 6,000 divided by 0.5. 12,000. But are you really required to produce 12,000? No, because demand is there for 10,000. Demand is there for how much? 10,000. Is that clear? Now tell me one thing. Here can I say machine hour is restricted? Machine hour is restricted. Because 6,000 you can't produce both Zimzam as well as Bon. Now Zimzam will give how much contribution per unit? Per machine hour. Per unit it is giving you, here they are telling something, no? Selling and distribution overhead cost per unit, manufacturing product in-house, it will be 80 rupees. If you purchase, it will be 60. If you manufacture, 70. Now listen, Bon you don't have any choice. Now if at all you produce, guys, if at all you produce, selling and distribution overhead, how much they are telling? 80 is variable. That means here 200 they have taken. Correct now? That means in this 80 is variable, 120 is 80 is variable, 120 is fixed. Okay. Here they have told total overhead is how much? Fixed factory cost? 2,40,000. And we are assigning it on hourly basis. Total how many hours I told? 6,000 hours I told. How much it is? 40 per hour. Here we are charging how much? 180. By the way, if at all machine hour basis we are charging 40 rupees per hour, if we charge, how much will be the fixed cost in it? 40 into 1.5. 60 is fixed cost. That means variable is how much? 120 is variable. Got it? Segregation. This is how we will segregate. So now my variable cost will be direct material 100, variable machine operation cost 150, and your other factory overhead 120, not 180, because 60 is fixed in that, and your selling and distribution 80 is variable they are telling. Correct now? 80. That means how much is your total variable cost? rupees 450 is your total variable cost. Selling price is how much? So how much is your contribution? 250 is your contribution. Correct? No, that is per unit. Per hour how much? Divided by 1.5. 166.67. This is my contribution per hour of machine, because that is limiting factor. Here if you go, my direct material 300 is variable, no doubt in that. Variable 50 is variable. Other factory overhead, I know that in the other factory overhead we are charging 40 rupees per hour. This is using half an hour of machine. Correct? No, 0.5 hours of machine. So in this 20 rupees is fixed. That means 30 rupees is variable, and selling and distribution variable is 70. That means other 30 is fixed. So my variable cost is how much total? 350 plus 100, 450. My selling price is 700. My contribution will be how much? 250. So per hour how much? Contribution per hour. So contribution per hour under my machine is, my Zimzam is 166.67. As per your bonbon is 500. So which one is better to produce? Bonbon is better to produce. Which one is better to produce? Bonbon. So my first priority will be for bonbon. So I will produce bonbon, but I am not going to produce 6,000 units just because I can produce, 12,000 units just because I can produce 12,000. Maximum demand is there for 10,000. So 10,000 if it takes 0.5, it will take 5,000 hours. Total availability was 6,000 hours. That means in that 1,000 hours, you are getting which one? You are getting to produce Zimzam. But will you produce Zimzam or no? That also we should check. One thing is very clear, bonbon we are going to produce, no doubt in that. That too prioritizing Zimzam. Now, whether in this 1,000 hours should I produce Zimzam or let it go? That also we should check. How, sir? I have to check now whether cost of making Zimzam is costlier or buying Zimzam is costlier. Guys, cost of making, in that case, I will make contribution as how much? Found out no somewhere here. 250 rupees. Correct? No. What if I buy? 620 rupees is what they are going to sell it at, plus I have to incur 60 rupees selling and distribution. No? That means my cost of buying will be 680, whereas I can sell it at 700. That means here I will make 20 rupees. If I produce, I will make 250 rupees. If I buy, I will make 20 rupees. Should I produce first or should I buy first? Produce. So in that 1000 hours, how many units of Zimzam we can produce? 1000 divided by 1.5. 666 units. Okay. Now, you can go to the next number also, no problem. But actually that many hours are not available. So it's always advised to go for the previous number. Now, 666 units you can produce. How much is the demand? 8,000 is the demand. That means how much you are going? 8,000 is the demand, no? $8,000 is the demand. But we can produce how much? 4,000 units. We can produce how much? 4,000 units. Whereas these guys are ready to supply us 3,000. Demand is 8,000. We are producing 666. So how much we are ready to buy? 7,334 units we are ready to buy. Because If I buy also, I am making some positive contribution. If at all it was negative contribution, I wouldn't have bought. I would have produced triple six, and I would have left it there. For example, if these guys were quoted me rupees 650, around extra 60 rupees I have to incur for marketing. Total it will become 710 na. I'm selling it at 700. Instead of doing this drama, if I shut up and sit, will I lose the 10 rupees? That means I'm ready to buy because still I'm making 20 rupees. So I'm ready to buy 7,334. But are those guys ready to sell so much? They can give us maximum 3,000. So how much we are going to buy? 3,000 we are going to buy. Got it? So basically, what is our mix, guys? Our mix will be Zimzam. 666 we are going to produce. 3,000 we are going to buy. Bonbon. 10,000 we are going to produce. 10,000 we are going to produce. Now all the cost etc. is there. You have to find out profit. That won't be a big deal. Take the sales amount for this. Zimzam 3666 into 700. Bonbon 10,000 into 700. 10,000 into 700. That will give you sales. Then reduce all the cost. You will automatically arrive at profit. Okay. That thing you try solving it on your own. I am not going to discuss now. But you understood the mix, selection of mix. First we will select. If I manufacture Zimzam, what I will make. If I manufacture Bonbon, what I will make per limiting factor. Based on that we decided to manufacture Bonbon. 1,000 hours are left. Just because 1,000 hours left, straight away you are not going to manufacture Zimzam. You are going to check whether buying is beneficial or manufacturing is beneficial. If buying is beneficial, that will be given priority. But here manufacturing was, so I gave that priority. Still demand was there. So, and buying was also giving me positive contribution. So we went and bought it. If at all that was giving us negative contribution, we wouldn't have bought it at all. Understood or no? That's the way you should select it. Go to 4A. RNS Limited, a manufacturing company, has introduced a new product and marketed 20,000 units. The variable cost and profit of the product are 20 and 4 rupees per unit respectively. The fixed overhead is 3,20,000. Fixed overhead is 3,20,000. Analyze the break-even point in quantity and margin of safety in amount. Guys, right now we are marketing 20,000 units. Variable cost is 20. Profit is 4. Listen. Be very careful here. How much variable cost they are telling? 20,000 into 20. 4 lakh. Guys. 4 lakh is your variable cost. Agreed? Profit how much they are telling? 4 per unit. So 20,000 into rupees 4. Profit 80,000. Fixed cost also they are telling 3,20,000. Guys, can I say that variable cost, fixed cost plus fixed cost will give me total cost? How much is my total cost? 7,20,000. 7,20,000 is my total cost. Total cost plus profit will give me what? Sales. Can I say that at a given level, my sales is 8 lakh? Can I say my sales is 8 lakh? Guys, 8 lakh is sales when you are selling 20,000 units. So per unit, can you tell me how much? Rupees 40 per unit. Your selling price is rupees 40 per unit. Variable cost is 20 rupees per unit. That means your PV ratio is 50%. Understood? Then all other things are very easy. First one, Analyze the break-even point in quantity. What is the formula? Fixed cost divided by contribution per unit. We know that contribution per unit is 20 rupees because selling price is 40, variable cost is 20. So fixed cost divided by contribution per unit, 3,20,000 divided by 20. 16,000 units. Margin of safety they are asking. Guys, can I say that my total sales is 20,000? Break-even sale is 16,000. That means margin of safety units are 4,000. But they want it in amount. 4,000 into selling price 40 rupees, which is going to be 1,60,000. Anyone, any doubt in this? Calculate the margin of safety if the profit is 64,000. Profit divided by PV ratio. $1,28,000. Got it? If the selling price is reduced by the company by 10%, that means new selling price is 36. Demand is expected to increase by 5,000 units. So demand will go to 25,000 units. Analyze the impact on profit. Guys, 25,000 unit contribution will be, variable cost, will it change along with selling price? No, it will remain 20 only. So contribution per unit 16. So 16 into 25,000. Contribution is 4 lakh. Fixed cost is how much? 3,20,000. Moral of the story, profit will be rupees 80,000. No impact. No impact. Why no impact? Because earlier also we were making 80,000. Now also we are making 80,000. No impact. Break-even point in quantity they are telling. What will be the fixed cost? That's gonna remain 3,20,000 only. But my contribution is restricted to 16 rupees. My break-even will be 20,000. Last time it was 16,000. So break-even will increase by 4,000. Break-even will increase by 4,000. Margin of safety in amount. Guys, my sales will be how much? 25,000. Break-even. So margin of safety into rupees 36. 1 lakh. Last time how much it was? 1,60,000. Now it is 1,80,000. That means your margin of safety will increase by 20,000. Like that you are going to calculate. Here the major crux is in determining the selling price. You should get to know that when they give variable cost, fixed cost, profit, you can easily find out total sales. Got it? Huh? Okay. Shall we see one more? What they are asking here? For 7 marks. Prepare a comparative statement of profitability and suggest the best alternative. There are different things they are asking. What is it? 1. Kautilya Limited currently working at 80% of capacity with the following particulars. At 80% we are making sales of 48 lakh, direct material 15 lakh, direct labor 6 lakh, variable overhead 3 lakh. So how much will be our total variable cost? 24 lakh. Correct now? Then my PV ratio is 50%. See, always remember this particular chapter, this 3-4 units together. Read the question thrice, nothing you will lose. You will get much more clarity. And best part about this chapter is when you read the question, you will get much more clarity and you can apply it directly because all the information will be there in question only. So don't just read for the sake of reading. Slowly you read. Slowly you read, you try to understand what point they are telling, then proceed. Easy to score. When you read the question, not only this, anything, when you read the question, there only half the answer is done. Other half is just presenting. But while reading question only, if you do mess up, then it will be a problem. Now, fixed overhead is 19 lakh. An export order has been received that would utilize 50% of the capacity of the factory. The order cannot be split. That is, either it is to be taken in full and executed at 10% below the normal domestic price or to be rejected. See, right now we are operating at 80%. That means how much is the idle capacity? We got one offer to utilize 50%. Can we satisfy it full? Can I tell that I will satisfy only 20%? They are telling either you accept full or leave full. If you accept, you are going to give it to me at price 10% lower than domestic price. That means if at all you want to satisfy that, you have to give up how many percentage of your domestic sale? 30%, not 50%, because you are operating at 80. At 100%, you are operating at 80, no? To satisfy that demand, all you need to give is other 50%. All you need to give is other 50%. So when you give that other 50%, the other first 50% will go towards export order, means other 50% will go towards domestic. Right now you are giving 80. When you go for future 50, that means you are giving up your 30%. That means for pricing and all, opportunity cost is there. Now listen. The alternatives available for the management is as follows. Reject the order and continue with the domestic sales only at the present level of sales. 2. Accept the order, split the capacity between overseas and domestic and turn away the excess domestic. That is 50-50. Increase capacity so as to accept the export order and maintain the present domestic sales. By what? Buying an equipment that will increase capacity by 10%. Still you need how many percentage? Still you need 20 more percent. Right now you are operating at 80. Extra 50 means you need 130%. Correct? No. Now 100% anyhow sorted. Other 10% you can increase by increasing your machine. Also, work overtime to meet the balance required capacity. That is for the 20%. In that case, labor will be paid at 1.5 of the normal wages required. Prepare a comparative statement. That means there are 3 alternatives here. In 3 alternatives, whichever gives me maximum profit, we will go for that. Shall we see which are the 3 alternatives? First alternative, operate at 80%. Second alternative, operate at 50 plus 50. Third alternative, operate at 80% plus 50%. Operate at 80% plus 50%. Is that clear, everyone? Now, if at all I operate at 80%, how much will be my sales? No changes in cost, nothing they are telling. Correct? No? So, 48 lakh. Sales will be 48 lakh. Variable cost will be how much? Just now we computed 24 lakh. My profit will be, contribution will be 24 lakh minus fixed cost. See, I am not going to take decision only on contribution basis because different alternative fixed cost is changing. So fixed cost is relevant. So fixed cost is how much? 19 lakh. So how much profit you will make? You will make 5 lakh. Correct? Now, if at all you go for 50%, 50%. Guys, at 80% you are making sale as 48 lakh. So at 50%, how much will you be making? At 80, 48, 50 question mark. So from domestic sale, you will make 30 lakhs. Correct? Plus from export sales, remaining 50%. Actually, they should pay 30. Are they ready to pay 30 or 10% less than 30? So that's gonna be 27 lakh. So my total sales in this scenario will be 57 lakhs. Anyone any doubt in this? Anyone any doubt in this? See, Right now we are operating at 80% and making 48 lakh. When we operate at 50, how much will be my sales? 30 lakhs. Remaining 30 lakhs, I am going to give them a discount. Remaining 50%, that is 30 lakh at the 10% discount. So my total sales will be 57 lakhs. My total sales will be 57 lakh. Guys, my variable cost was 24 per lakh when it was 80. Don't take that PV ratio 50 straight away, 50 gone, because your selling price is changing for the second half. So remember this way. For 80% operation, it was 24 lakh. Correct? Now, for 100% question mark. Contribution will be, fixed cost will it change? It will be 19 lakh. Profit will be, anyone, any doubt in this? So second one proves to be better than first one. Now going to third one, this is very important. Please concentrate. From domestic sale, I am not compromising anything. 48 lakhs only I will make. But from export sale, I am going to make 27 lakh. So my sales will be 75 lakhs. Huh? Hello? My sales will be 75 lakhs. Talking about variable cost. Talking about variable cost, concentrate. What they are telling about variable cost. Material, 15 lakh when you are operating at 80%. So for 130% question mark. For 80%, 15 lakh. For 130% question mark. 15 divided by 80 into 130. 24 lakh. 37,500 plus. Now wages is very important. Concentrate. 6 lakh is the labor they are telling. Guys, 6 lakh is the labor for how many percentage? 80%. So can you tell me per percent how much? $7,500 per percent. Correct? No? Now listen very carefully. Up to 1 lakh 10%. Sorry, 110%. Already 100 we have. Plus 10 we are going to increase just due to equipment changes. That means up to 110%. Should I give any overtime, etc.? No. For that, it will be normal wages only. So up to 110%. I am going to pay 7,500 per percent only. How much it will be? 110 into 7,500. 8 lakh 25,000. That will be this. Now for the next 20%, I am not going to pay just 7,500 because I have to pay them overtime of 1.5. That means, see, together overtime plus normal wages, together it is 1.5. So into 1.5 times. I am not going to pay them normal. I am going to pay them 1.5 times for this. 2,25,000. Now my total wages will be 10,50,000. My total wages would be 10,50,000. I repeat again, per percentage we got 7,500. So for up to 110%, you don't have to give any overtime. So 110 into 7,500, 8,25,000. So for the next 20%, it is 20 into 7,500 into, I'm going to pay them 150%. 2,25,000. Total is 10,50,000. Once the video is out, you have to see this particular point. Very important. So how much it is? 10,50,000. So your material is that, labor is 10 lakh 50,000. Done. Next, what else is there? Variable overhead is there. That is not going to change anyhow. For 3 lakh it is, sorry, for 80% it is 3 lakh. For 130% question mark. 4,87,500. So may I know the total variable cost? 39 lakh. Anyone, any doubt here? 39 lakh 75,000. Hope you guys understood about that labor. Hope you guys understood about that labor. Anyone, any doubt in that? No. Which one? That is material, no? For 80% so much, for 130% question mark. Done. How much is contribution? 35, 25. 35 lakh 25,000. Now talking about fixed overhead. It's gonna increase by 1,50,000 for increasing that 110%. So fixed overhead is 19 lakh. 19 lakh plus 1,50,000. 20 lakh 50,000. How much will be the profit? 75, 25, 75, huh? 14 lakh 75,000. So out of all the three alternative, which one is better? Hope it's clear. The same question is there in study material also. Here also it's there. Just go through that. But here the third one has some adjustment. 20% that one. Huh. So hope it's clear. Okay. So and also sales computation you should be very careful. Sales computation you should be very careful. Hope this question is clear. We can proceed then. 4A, 4B is done now. 4A, 4B. Done. One last paper we are going to see now. That is December 2023. Look at the MCQs. 1, 2, 3, 4, 5, 6, 7. 14 marks plus here other 28 marks. 42 marks straight away. Almost half of your paper. Pass mark, yeah. Whoever studied went to only this chapter, pass. So, shall you see this? Shall you see this? December 23. First question. Which one of the following would decrease unit contribution margin the most? Which would decrease the most, they are asking. 10% decrease in selling price, 10% increase in variable cost, 10% decrease in variable cost, 10% decrease in fixed cost. See, option D is not even an alternative. It has nothing to do with the contribution. Option C, decrease in variable cost will increase the contribution margin, not decrease the contribution margin. Now, whether it is 1 or 2 is the question. Correct? No? In this scenario, I told you, use some random numbers and find out. Sir, time waste? No, sir, it's just MCQ, 2 marks. So up to 5 minutes is absolutely fine in some cases. Because few theory will be there, no, that you can solve it fast. Now listen. Let's say my selling price is rupees 100. Let's say my variable cost is rupees 50. To be, ease the things out. My units will be, let's say 10. Now, how much is my contribution? 1000 minus 500. Margin is 500. First, what they are telling? 10% decrease in selling price. Guys, selling price will come to 90. Contribution will go to 40. 40 by 90 into 100. Yes, Shishi. Yeah, 40 by 90 into 100. 44.44%. So from 50 it fell to 44.44. Now going to the next one. 10% increase in variable cost. Variable cost will become 55. Selling price will be 100 only. That means contribution will become 45. 45 by 100 into 100. 45%. That means next case PV ratio is 45%. Where it decreased to the maximum. Option A. Is that clear? Simple. Next one which I told. Fourth. First one is done. Fourth. Sixth. 4 done. 5 done. Sixth. Guys, measure SP Limited sells glucon P at the selling price of 100 per unit. Variable cost is 80. Contribution is 20. Fixed cost is 3 lakh. Actual quantity sold during the year is 1 lakh boxes. The break-even point and margin of safety. Guys, break-even point. Fixed cost divided by contribution per unit. 1 lakh divided by 20. Sorry, 3 lakh divided by 20. Break even is 15,000. Total how many units you are selling? 1 lakh. That means your MOS should be option sixth one, option C. Is that clear? Next. 10th one. The relevant cost of manufacturing biodegradable disposable. Guys, rubber manufactures 10,000 units of biodegradable disposable container. Material cost is 6 rupees. Direct labor is 15 rupees, of which 2 by 3rd is fixed. That means rupees 5 is variable. Correct? No? This is same question. They changed the name there. I mean, this came first. Then they gave that question in the upcoming attempts. So, fixed factory overhead is 20 per unit, of which factory overhead is 20 per unit, of that 60% is fixed. That means 40%, rupees 8 is variable. So how much is this cost of manufacturing? 90 na? Also, the labor used for manufacturing biodegradable containers can be used to manufacture another product having selling price of 40, material cost of 10. That means contribution is selling price is 40. Hello. Selling price is 40 now. Okay. Material cost is how much? 10. Labor cost, it's gonna be 15 only. Variable cost, variable in nature. Sorry, labor you are going to take 5. Fixed you are not going to take for decision making. There also, here also. Done. 40, 10, 5. And overhead 60% is fixed. That means variable is 8. No. How much is contribution? Sorry? 70. So opportunity cost is 17 rupees. Because if you produce that, you can't produce this. That means your 36 is relevant cost. Option C. Anyone? Any doubt in this? No doubts? 6 rupees material. 4. Done. Next. Fixed cost is relevant cost if it is. Fixed cost is relevant cost if it is discretionary. If it's sunk, then why it will become relevant? Unavoidable. Whether you choose that, you don't choose that. You have to incur that. That means it is irrelevant. Periodic. Again, you do work, you don't work. Still you are going to incur it. Periodic. Unavoidable. Next. 13th. New break even they are asking. Measure NABARD Limited has provided you the following data for the financial year 22-23. Break even is 2,66,000. selling price is 100, variable cost is 70, contribution is 30. Fixed cost is, by the way, how many percentage? PV ratio 30% because selling price is 100. Fixed cost is 80,000. If the selling price per unit is reduced by 10% next year, that means selling price will come to 90. Will your variable cost change? That will remain same. So new contribution is 20. So new PV ratio is 20 by 90 into 100. 22.22%. They're asking what is new break even. Fixed cost is 80,000. 80,000 divided by 22.2222222222. I mean 22.22 percentage into 100 you do 3,60,000. 13th one B. Is that clear? Next one. Measure Agartala Plastic Private Limited has provided you the following information. Fixed asset is 10 lakh, current asset is 10 lakh. Total annual fixed cost of packaging is 16 lakh. Variable cost is 10 lakh. If the budgeted volume per year is 8 lakh units, return on investment is 18%. The transfer price of packaging division will be, guys, listen. How much is my fixed asset and current asset? Total investment is how much? 20 lakh. How much I am expecting return? 18%. That means I am expecting return of 3,60,000. Fixed cost is coming to how much? 16 lakh. Variable cost is how much? 10. That means for 8 lakh how much it will be? 80 lakh. So total how much should be my sales? These two will give you cost. This one will give you profit. How much will be my sales? This question we have already seen. 99 lakh. Whatever it is, divide it with 8 lakh units. Option B. If at all you want to do it on unit basis, very simple. Variable cost is how much? 10 rupees. Plus fixed cost per unit is how much? 2 rupees. 16 lakh divided by 8 lakh. Plus you have to achieve 3,60,000 by selling 8 lakh units. That means you have to achieve 0.4, right? 3,60,000 divided by 8 lakh. 45, yeah. So it is 12.45 per unit. You can calculate this way. Is that clear or not clear? Clear? Next one. Under marginal costing, the opening and closing stock is valued at which of the following basis? Opening stock is valued at variable cost, closing stock is valued at total cost. No. Opening stock is valued at total cost, closing stock at variable cost. No. Both opening and closing is valued at variable cost. Both opening is closing is valued at total cost. That is under absorption costing, not marginal costing. Anyone any doubt in this? Next, which question? 3A na? 14 marks. What they are asking in 3A? 3. They are asking, determine whether measure Bishalgarh Tiles Limited should invest in the product promotion campaign and advise how the production facility would be best utilized. Listen. Measure Bishalgarh Tiles Limited is manufacturing and selling 4 types of PVC pavers block which is used for laying the public parks. The board of directors is considering a proposal for a product promotion campaign which would cost the company 2,50,000. The business development department of Bishalgarh Tiles provides you the following 2 alternatives. Without product promotion campaign, you can sell these many products. Alternative 2, with product promotion, you can go for this. Selling price and variable production cost is so and so. Next, measure Bishalgarh Tiles Limited provided you the following additional detail. 1. The variable production overhead is absorbed on machine hour basis at the rate of 1.2 per machine hours. So, how many machine hours are utilized here? 0.84 divided by 1.2. 7 na? 0.7 hours are utilized here. Correct no? 0.72 divided by 1.2. 0.6 hours here. Here we are utilizing 1 hour of machine. Here we are utilizing 1 hour of machine. Anyone any doubt in this? If they give this information, then you should get to know. It is KLF. It is KLF1. Now, next, the variable production overhead is absorbed on a machine hour basis at the rate of 1.2 per machine hour. Fixed overhead is 35,000 per annum. Okay. Production capacity during the budgeted period is 8,90,000 machine hours. Product Aeon and Xeon could be bought from the market at 10.5 and 15.5 per unit respectively. The machine capacity will not increase after product promotion campaign. Determine whether Bishalgarh Tiles should invest in the product promotion campaign and advise how the production facility would be best utilized. Guys, listen. How much will be my contribution per unit here? Aeon. Variable cost is how much? 5 plus 2 plus 0.84, 7.84. That means 4.16. Contribution per unit. Second one, 6.5, 2.5, total 7, 8, 9, 9.72. That is 4.28 per unit. Correct? No, guys. Next, 8, 11.5, 11.5, 12.7. 12.7 means 3.3 per unit. Correct or no? Next one, 10, 14.5, 14.5 plus 1.2, 15.7. Correct, no? 15.7 means 6.3. 6.3. Now, can you tell me how much is contribution per machine hour? First one, 4.16 divided by 0.7. 5.94. 4.28 divided by 0.6. 7.13. 3.3 divided by 1. 3.3, 6.3. Which one is rank 1? Neon is rank 1. PP is rank 2. Aeon is rank 3. Xeon is rank 4. Got it? Now, if at all you go and buy it from the market, your Aeon and Xeon is available at 10.5 and 15.5. 10.5 and 15.5. If that is the case, how much will be your contribution? 1.5, 0.5. Of course, they are giving you positive contribution, but still not as much as production will give. If you buy and sell also, they are giving you positive contribution. Moral of the story, our first priority will always be to produce. If sufficient machine hours are not available, we don't mind buying and selling also. Why? Still we are making some profit. If we buy and sell also, we are able to make some positive contribution. That's the reason. Got it? Understood? No? Now, first what they are asking, whether we should invest in the product promotion or no, they are asking. So, all we have to do is check with product promotion how much we will make, without that how much we will make. Whichever gives me more profit, I will go for that. Before that, I want to check how many units of what I can produce, because machine hour might be restrictive one. Listen here. How many machine hours are available? 8,90,000. My first priority is to produce. Let's first assume alternative one without without product promotion. My first priority will be neon. Correct? No. If I produce 3,50,000 units by taking 0.6 hours, how many hours it will take? How many hours it will take? Neon without product promotion 3,50,000 na. Each and every unit will take 0.6 hours. So 3,50,000 into 0.6. 2,10,000. This I will produce neon. So balance left is how much? 6,80,000. My second priority is what? PP. Now PP 1,90,000 and each unit will take 1 hour. So we will utilize 1,90,000. So we are left with how much? 4,90,000. My third priority is what? Aeon. Now if at all I go for Aeon, guys, 2 lakh units will take 0.7 hours. 1,40,000. That means we will be left with 3,50,000 hours. In that, I am going to produce Xeon, right? Xeon. It takes 1 hour. We need 3,20,000 hours. Awesome. Moral of the story. You don't have to buy anything, because you will be still left with 30,000 hours. That means in first scenario, you don't have to buy anything. Everything you are going to sell without buying from the outside. Now, guys, Aeon, when I make 2 lakh units, I will make the contribution of 4.16. So 2 lakh into 4.16, M plus 3,50,000 into 4.28, M plus 3,20,000 into 3.3, M plus 1,90,000 into 6.3, M plus MRC. How much? 45 lakh? 83,000. lakh 83,000. Guys, this is what I make if at all I don't go for promotional activity. How to present it, sir? Take the variable cost, whatever you calculated, take the selling price, tell them these are the contribution, these are the units we are going to produce and sell. So this will be my sales, like that. Got it? Now, what if I go for sales promotion? Then what will be my profit? Let's check. First, I will produce neon, correct? That is the main one. Neon, 3,80,000. That will take 0.6 hours. How much is 3,80,000 into 0.6 hours? Sorry? 2,28,000. Left is how much? 6,62,000. After producing neon, my next priority will be PP. PP will take 1 hour. That means 2 lakh units we are going to produce and sell. Left is how much? 4,62,000. Got it? 4,62,000. Now, listen. Aeon, if I buy from outside, it will cost me 10.5. Correct? If I produce in-house, it will cost me how much it will cost me? Just tell the total of this. 7.84. What is the difference? 4.16 or no? 10.5 minus 7.84. 2.76. So per hour, how much I am saving? 0.7. Per hour, how much I am saving? 3. So by making it in-house, per hour I will save 3.8 rupees. Here don't decide on the rank basis which to produce first, which to produce later. Your Eon and Xeon, don't decide on that basis. Check which is saving you more by producing in-house. Whichever saves you more, that you go for. First we decided that making or buying both will give me profit. Irrespective of that, I am going. Now when the limited time is there, whether Eon I should produce or Xeon I should produce, whichever saves me more amount for the machine hours they use, that one I will produce. Correct. Next one. How much? That is Xeon, right? How much is my variable cost? 11.5, 12.5, 13.7. Your total cost is 15.5. 13.7 minus 15.5. 1.8. 1.8 you can make by using machine for 1 hour. So savings is how much? 1.8. That means savings of my Aeon is more than Xeon. So moral of the story, my first priority should be Aeon. Rank wise also Aeon only, no doubt in that. But still, what if the buying and making difference is there? No, that is different. Then that basis you should take a call. My first priority will be Aeon now. Aeon, how much you can sell? 2,40,000. It takes how many hours? 0.7 hours. 2,40,000 into 0.7. 1,68,000. You are left with 2,94,000. Guys, how many units of PP you can produce in this? You can produce 2,94,000 units of PP. Correct, no? Oh, Xeon is the last one, no? Xeon is last. 2,94,000. That means when the requirement is 350, you know that when you buy, what is it, madam? Xeon? Correct. Savings. How much it is? 2.8. Still, I think the first one gave us better alternative. So that's fine. 2.8 you got. 2.8 per hour. I think first one gave us some 3 point something. So still first one is better. Now, in this 2,94,000, what we produce? That means as buying also gives me profit. 2,94,000 I will produce in-house. Remaining 56,000 I am going to buy from outside. Remaining 56,000 I am going to buy from outside. Is that clear? Now, as per this, you have to find out profit. Listen. First one is, first alternative was which one? Neon. Correct? Neon, no. Neon. Next is Iona. Iona. Neon and PP. Second alternative is PP. Third alternative is Eon. Fourth alternative is Xeon. Correct? Now, Eon, how much you will sell with product this thing? 2,40,000. You will sell 2,40,000. PP, how much you will sell? 2 lakh. What, madam? What is it? This is Neon. This is PP. This is Eon. This is Xeon. Now, where were we? PP. Eon you are going to produce and sell 2,40,000 units. Correct? Whereas Xeon you are going to segregate. That is 2,94,000 you are going to produce and sell. 2,94,000 you are going to produce and sell. Remaining 56,000 you are going to buy and sell. Remaining 56 you are going to buy and sell. Now, all these four, when you produce and sell, what will be your contribution? First one, neon 4.28, 6.3, 4.28, 6.3, Aeon 4.16, 3.3, 4.16, 3.3. Xeon, when you buy and sell, what will be your contribution? 0.5. If at all it was negative, I wouldn't have bought and sold. I would have left it there only. 10 lakh? 12,60,000. 9 lakh? 98. 98,400. 9,70,200. Total 42,83,800. However, it comes up with some additional cost, I feel. Right? For promotion, there is no additional cost. With promotional activity, they didn't say anything about promotion. Here it's there, no. 2,50,000. Otherwise, of course, I will go for promotion. Correct, no? When that gives me more profit straight away, then I will go for promotion only. That means there should be promotion cost. 2,50,000. How much will be your profit in case of this? I mean, contribution only I am considering. Fixed cost I am ignoring. How much? 43,33,800. Without promotion, 45,83,000. So, how much you will gain? Difference 5,49,200. So, if they at all they are going to promote, then if they don't promote, they are going to gain more. So that is better to not to promote. Okay, that is the thing. Or you understood the process, right? We might have gone some numbers here and there due to the urgency, but yeah, fixed cost is not going to affect variable cost. Done. So this is the way you should solve it. Okay, try solving it on your own once. You will get the 1 second answers. So 4A, just check. How many units are required to be sold next year so that same amount of profit per unit can be achieved? Measure BLB. This is the same question if you know. We have discussed there. Total for next year is 12,000. That I told no, year data they have given wrong. 24, 25 they have given as on 24. That one. Ditto question, nothing else. So you can do it on your own. That should not be the problem. B1. Calculate the variable cost of producing each component in-house, extra cost of buying in each component, and determine which component should have produced priority. Whichever gives me more contribution per key limiting factor should be priority. Here, whenever it's make or buy, not on the basis of contribution, it should be on the basis of savings. Got it? Company XYZ produces 2 product component M and N and is planning the allocation of its available resource for the next period. 750 unit of component M and 600 units of component N are required to be produced, but machine hour capacity is restricted to 3000 hours. Moral of the story: machine hour is limiting factor. Any deficit of the component can be made up by purchasing the component from outsider. The objective of company is to satisfy the requirement of components at minimum total cost. Of course, any company's objective will be that only. Following information is available. M. Direct material 62, direct wages 51, variable 12, fixed production cost. Will it affect? Will it matter? No. Total leave. Machinery is 2 rupees. Price from outsider is 185. Guys, how much is cost of making? Cost of making is 125. Cost of buying is 185. That is, if you make instead of buy, you will save 60 rupees. Going for N, how much will cost? Variable cost. It will cost you 175. If you buy from outside, it will cost you 259. 84. Variable cost of producing each component we already computed, 125 and 175. Extra cost of buying in each component also we computed as a savings, 60 and 84. That means if at all instead of making, if you buy, it will cost you 60 and 84 more. If you make instead of buy, it will save you 60 and 84. Now determine what should be prioritized. Guys, 60 rupees will make by using 2 hours of machine. That means 30 rupees is per machine hour. Correct? Next, 84 you will make by 3 hours of machine. 28. What should be prioritized? M should be prioritized. Remaining N should be produced how much ever is possible because it's saving us. Still, if it's not available, then you can go for buying. Now, M, how much is the demand? 750. Correct? No. 750 if it takes 2 hours. How many hours is gone? 1500 hours is gone. How many hours are available? 3000 hours. Now, how many hours are left? 1500. In that, 3 hours if it takes, how many units of N you can produce? 500. But demand is there for. So, buy outside, from outside 100, produce 500 in-house. Got it? With that question, we have completed discussion on our major biggest chapter. Okay? Done. With that, we have completed almost everything except budget. Budget is a small topic. Theoretically, it will be around 10-15 minutes and questions will be there that we will see. Okay. Now we'll be starting with budget and budgetary control. What is this budget and budgetary control, guys? Listen. Budget and budgetary control is nothing but how much we are predetermining. How much we are predetermining. That is your budget. That is how much sales I should achieve. How much profit I should achieve. How much cost I should incur. Like that, we will predetermine our figures. That only we call it as budget. So, budget is nothing but future plan denoted in terms of numbers. Future plans expressed in quantitative terms. That only we call it as budget. Budget could be many. It could be on the basis of time period. It could be short-term budget, long-term budget, medium-term budget. On the basis of function, it could be sales budget, production budget, purchase budget, procurement budget, direct labor budget, etc. And on the basis of flexibility, there is flexible budget, fixed budget. What do you mean by flexible budget? Here, the budget is not fixed for any particular level. What we will do is, we will divide our cost into variable, semi-variable, fixed like that. So, fixed anyhow, irrespective of change in level, it will be remaining same. In the semi-variable, fixed portion will be same as fixed. Variable portion, what we will do? For that level, so much variable. For the next level, how much? Like that. For the required level, we can compute. That we call it as flexible budget. If the cost is not segregated into variable, fixed, semi-variable, etc. and only for the given level you know the budget, that budget we call it as static budget. That budget static or fixed budget. Static budget or fixed budget. Okay. And there are function budget, etc., functional budgets like purchase, sales, etc., that I will tell. And there is something called as ZBB, zero based budgeting. What is that? Generally, budget will be incremental in nature. What do you mean by that? This year sales budget was 1 crore. Next year I will tell my sales should be 1 crore 10 lakh. How I told? Last year plus 10%. Next year it should be plus 10%. Next year it should be 1 crore 21 lakh. Like that. If I do this we will call it as incremental budget, or we call it as rolling budget. It keeps on getting added to the base number. But zero based budget means our base will be zero. We will be starting from the scratch. Each and every year we will start from scratch. Last time I agreed I had given you budget of 1 crore. But this time I will start from zero. I will analyze the situation from the scratch. Zero. And our manager should justify each and every rupee. They can't come and ask, purchase manager, last time you allowed me 60 lakhs. This time you give me 65 lakhs. No. Our purchase manager can't come and ask for budget like that. He should justify me from rupee zero. If at all they don't justify any money, there won't be no allowance of budget. If my purchase manager able to justify only 45 lakh rupees, he can't just say last year 60, this time 65. I'm allotting him only 45 lakhs. That is your zero based budget. I agree it's a time consuming process. I agree it's a costly process. But end of the day, it is going to give you better control. How any unnecessary uncontrolled costs are just going out without getting unnoticed, then straight away it will get noticed. For example, if my parents allow me, let's say my mom says 30,000, this, like in a month you can spend 30,000. Next year per month you can spend 35,000. Now I don't even check where my money is going, where my 30,000 is going. What if she says, give me count, how much exactly you want? Then I will go through that. Then I will get to know, oh my God, my Netflix subscription is going, I'm not watching, cancel it. ChatGPT subscription, cancel it. Gemini subscription, cancel it. Google Drive subscription, cancel it. Like that, my unnecessary subscriptions will be cancelled. If at all she don't ask and if she just increases the allowance, I am going to go and check what is happening there. So in zero based budget, any cost which is getting unnoticed and going out without adding any value, that will be eliminated. So zero based budgeting, one of the beautiful way of budgeting, but again bit of costly process because it takes a lot of time. It takes a lot of resource. There is something called as budget slack. What is this budget slack, guys? Budget slack is giving that comfort zone to my managers. For example, generally sales could be achieved is 1 crore. Normally we can achieve 1 crore sales, but you know how much target I am giving them? I am giving them target of 80 lakh. That means I am giving them comfort zone or no? Why? Generally you can make 1 crore, but still I am giving you target 80 lakh you do, that's fine. Let's say purchase cost. Generally you can incur 40 lakh rupees as material cost, purchase, but I am telling them budget allowed is 50 lakh. I'm giving them extra comfort zone. I'm giving them, that is, I'm allowing them expenditure more than what is required. I'm reducing my sales than what could be achievable. That means I'm not pressurizing them. That process we call it as budget slack. What we call it as? Budget slack. SLACK. Budget slack. Is that clear? Okay. Now, talking about functional cash budget. Cash budget is what, sir? What is my opening cash balance? What should be my closing balance, etc. Generally, how do we denote that? We will denote like this. We'll take the opening balance. We'll take the opening balance. To that, we will add the cash receipts during the period. Cash receipts. Cash receipts includes what and all? Revenue receipts as well as capital receipts. In cash receipts, it doesn't matter whether it's revenue or capital. All about thing is whether it is inflow or outflow. Whether it is inflow or outflow. Is that clear? Clear up? Also. Now let's say they have told asset which has a WDV of, or let's say asset costing rupees 10 lakh has accumulated depreciation of rupees 4 lakh was sold at profit of rupees 1 lakh. Now tell me how much I should take it as cash inflow. Asset costing 10 lakh which has accumulated depreciation of 4 lakh in it, sold for 1 lakh profit. What should I take in my cash inflow? I should take 7 lakh. Why 7 lakh? 10 lakh was total cost. Depreciation was 4 lakh. That means book value is 6 lakh. I sold at profit of 1 lakh means I sold 1 lakh more than book value. So I should take how much? 7 lakh. Is that clear? Is that clear? Done. That is your this thing, cash budget. And yeah, now I will get to know how much is cash available. Opening balance, for that I will add the cash receipts. I will get to know how much is cash available. From the cash available, if I reduce cash payments, both in terms of capital, in terms of revenue in nature, I will arrive at closing balance. I will arrive at closing balance. Sometimes they might also end up saying closing balance to be maintained is 20,000. Closing balance will be maintained is 20,000. Now let's say balance came to 30,000. Then what you should do? 10,000 you should invest. If at all they say company has a policy of maintaining closing cash balance of 20,000, then first month you got closing cash balance of 30. Then extra 10,000 more than required is there. No, that we will invest. Next time balance came as 16,000, but still I want to maintain 20. So what I will do? I will sell my investment to the extent of 4,000. I will sell my investment to the extent of 4,000. Next time I got, let's say, 2,000 as closing balance. I should maintain 20,000. I should maintain 20,000. Now what I should do? To the extent of 18,000, I should sell my investment, but I don't have so much investment. I have only 6,000 left. So what I will do? To the extent of 6,000, I will sell my investment. Remaining 12,000, I am going to borrow the money. Loan. Remaining 12,000, I will borrow the money. Next month, closing became 35,000. Then what I should do? 15,000 extra is there? No. Should I invest? No. First 12,000 I will repay the loan. Remaining 3,000 I will invest. Like that you should do. Hope it is clear. If they ask any particular closing balance, this is how you are going to do. You have to check whether any existing loan is there for this purpose. If it is there, repay it. If not there, directly invest. Like that. Got it? If it's less, check whether investment is there. If it is there, sell it off and take money. It's not there, then borrow it. Like that. First priority is to adjust what is existing. Hope this point is clear, everyone. No doubt. Now, next one. Guys, we'll produce or we'll do functional budget. What will do? Functional budget. It could be sales, it could be production, everything. Now tell me which is the first budget we are going to produce. Prepare. Listen. First budget you have to prepare is budget with key limiting factor. Because as per sales team, you can sell 80,000 units. But as per production team, all you can produce is 60,000 units. That means if you prepare sales budget for 80,000, can you achieve it? As per sales team, you can sell 80,000 units. Demand is there. But your production capacity is just 60,000 units. That means Sales budget, if you prepare, you will prepare for 80,000 units, no? 80,000 units, no? That means, can you produce 80,000 units? That means, don't you think that sales budget is waste?
Such case, we put
Always remember, not only in such case, always budget will be prepared. Starting point is budget of key limiting factor. When the question is silent, now let's say Reliance, if they are producing 1 lakh units, why they are producing 1 lakh units? Not because their production capacity is 1 lakh units. Why they are producing 1 lakh units? Because demand is 1 lakh units. That means when there is no other limiting factor exist, our demand itself is our limiting factor. That's why we will produce or prepare sales budget first generally when there is no limiting factor involved. Understood? When there is no limiting factor involved, that's the reason we will prepare sales budget first. It's not that you are going to prepare sales budget always first. First you should prepare budget with key limiting factor. It could be MCQ question. Okay, this budget slack, zero-based budgeting. Zero-based budgeting, they might ask as theory question also. So, budget slack, zero-based budgeting, which budget you are going to prepare first, all those things.
and there is no key limiting factor, we put sales budget first.
Because number of sales units is your key limiting factor. Okay, first, let's say we prepare sales budget. In sales budget, what we are going to prepare, guys? Guys, in sales budget, you are going to show how many units to be sold during the period and what should be my sales amount. It could be in terms of units, it could be in terms of amount. They will ask in particular. Let's say opening stock they have given, closing stock they have given, units produced they have given. Opening stock they have given, closing stock they have given, units produced they have given. Now can you tell me how to determine how many units to be sold? Units produced plus opening stock will give me what? Units available for sale. Yes or no? Whatever units produced plus whatever was there in opening, units available for sale. But did we sell everything? If we sold everything, I wouldn't have had a closing stock. That means here if I have closing stock, that means that will give you units sold. Units to be sold. That means your opening stock of, by the way, sales budget is relating to raw material or finished goods? Finished goods. You will not sell raw material, you will sell finished goods. Opening stock of finished goods plus units produced will give me how many units available for sale. From that, if I reduce closing stock of finished goods, a desired closing stock of finished goods, I will get to know units to be sold. Got it? After sales budget, next we are going to prepare is production budget. What we are going to prepare? Production budget, not purchase budget. Because I want to know how many units I have produced. So how do you determine units to be produced? If they gave sale units, let's say they gave units to be sold, closing stock of finished goods, opening stock of finished goods. How to ascertain units to be produced? Can I say that units to be sold plus closing stock will says me how many units is needed? During the period, how many units I need in total? I want to sell so much, I want to keep so much as closing. That means I need so many units. Does that mean that I have to produce everything? No, because I would be having already whatever I produced in terms of opening stock. So guys, sold units to be units to be sold plus desired closing stock. Units to be sold plus desired closing stock minus estimated opening stock will give us units to be produced. By the way, in production budget, are we dealing with finished goods or raw material? Finished goods. Why will we produce raw material? Raw material is called as raw material for some reason. Done. Now, after production, we are going to prepare something called as consumption budget. consumption budget. What this consumption budget says? Consumption budget says how much raw material you have consumed, how much labor you have consumed, like that. So how do you arrive at it? Units to be produced into requirement per unit. If at all loss and all is there, you should take care of it. For example, if they say units to be produced is 10,000 units and raw material per unit is 2 kgs. Now we will get 20,000 now, but they will also say raw material is let's say 20% loss. That means you need finally 20,000. That means you can't give input of 20. 20,000 means after you giving input 20% 20 as loss, that is giving you 20,000. That means 80 means 20,000, 100 means question mark, 25,000. So you will get 25,000 as input to be given. Got it? Now, how to find out raw material to be purchased? Guys, units to be consumed will be given. Correct? Found out. Correct? No? Units to be consumed. That is found out. Yes or no? Also, how much I want to keep in closing stock. This will tell about how much raw material I need during the period. How much I have consumed plus how much is kept as closing stock. That will give me how much raw material I'm required. But that doesn't mean that I have to buy everything, because there will be opening stock. Hope it's clear. Anyone any doubt? Clear. That's all. This is how you are going to prepare few budgets. And sometimes they might ask, find out the purchases and also tell the closing balance of any particular quarter. Like that, one examination question is there, as well as it's there in your study material also. In 3 quarters, we are going to purchase 30%, 50%, 20%. Like that, they will ask quarterly closing stock. No, we prepared stores ledger for that. So in that scenario, it's advised to prepare stores ledger so that we will get to know exactly. They will tell as per FIFO it is. So exactly how much is closing, like that you will get to know. So that time it's advised to prepare stores ledger if they ask the closing balance quarterly, when they use different methods for valuation of inventory. Till here, is that clear? Okay. Now remember guys, one fixed cost per unit will change. Total, no changes. Correct? No. Whereas variable cost per unit, no change. Total will change. Semi-variable, both per unit as well as total will change. Per unit as well as total will change. Now, semi-variable, how to segregate it into variable and fixed, we have already done so many times. Change in cost divided by change in level will give you variable cost per level. That apply it to any level. You will get the variable cost in that level. You know the total cost of that level. From the total cost, if you reduce total variable cost, you will get the fixed cost. Like that you are going to do. Many sums only we have done. Sometimes they might tell like this now. This very important adjustment in study material, they have done mistakes only majority of the time. What is it? Let's say direct labor rupees 10,000. Direct labor rupees 10,000. We are selling 1 lakh units. We are selling how many units? 1 lakh units. Now we plan to sell 1,50,000 units. Now we plan to sell 1,50,000 units. Direct labor cost increased by 10%. Straight away, can I say 10,000 plus 10%? No, because 10,000 is for 1 lakh units. You are getting it. And also, they will use the term efficiency or productivity. Efficiency or productivity is increased by let's say 5%, increase by 5%. Now how to deal with this? What do you mean by this? Try to understand what they are trying to say. Last time, if at all you are working at 100% capacity, 100% efficiency, you incurred 10,000 rupees. Got it? But this time you are going to operate at 105%. Still you are going to incur 10,000. That is the meaning of efficiency. Last time, if at all in 10,000 you are producing 100 units. This year with the same 10,000, you are not going to produce 100. Because of increase in your efficiency, you are going to produce 105. If they say decrease, that means you are going to produce 95 units, like that. Now, why is that relevant, sir? Listen. Now, I should not take for 100, 10,000, 105 question mark. No, I know that during the period, for 105 it is 10,000. My production increased by how much? 50%. Last time it was 1 lakh, now it is 1 lakh 50. That means this year production won't be 100. This year production will be 150. For 150 question mark. That is 10,000 into 150 by 105. Generally in book what they mention is, they will mention it like this. 10,000 into 1,50,000 divided by 1 lakh. This is adjustment for units into 100 divided by 105. This is adjustment for your efficiency. But sometimes in study material they have made it as 105 by 100. Wrong. Here you are increasing your cost. Due to efficiency, cost will increase or decrease? Decrease. Due to efficiency, cost will decrease. So your denominator should be more than numerator. But here they will mention it as 100 by 105. Absolutely wrong. If it is less efficient, whatever they have done would be correct. 95 by 100 by 95 if they do, correct. But if it is more efficient, it is not 105 by 100, it is 100 by 105. Also, it is cost is increasing by 10%. In simple, you can do this way, or you can go for here only. I will add 10%. See, last year 10,000 I incurred to produce 100%. But this year with the same 10,000 at the old wage rate, I will not produce 100. I will produce 105 because my efficiency of 5% is there. So for producing 105, it's going to be 10,000. For producing 150 of the production, how much? That is at old rate I got. This time rate is 10% increase plus 10%. Got it? So that will give you the wages for the period. This is how you are going to do. Hope you guys understood this wage adjustment, because in study material many places they have done a mistake. Got it? No doubt? Pakka? Now shall we see questions straight away? Okay. Look at the questions. Question 11 and 6A, 6B. One flexible budget they have asked, one cash budget. One more thing is there called as master budget. What is that master budget? It's your projected P&L. Everything will be there in that. Material cost, labor cost, etc. You can do it in terms of marginal costing approach. You can do it in terms of normal cost sheet approach. Whatever approach you are fine with, you can do it. But if they particularly ask, do it as per marginal approach, you should go for marginal approach. Peace. What is marginal approach? Sales minus variable cost, contribution minus fixed cost, profit. Done. Now, question number 11 as well as 6A and 6B. Question number 11 as well as 6A and 6B. Concentrate. Question number 11. first. Dash is the budget which is continuously updated by adding a further accounting period when the earlier accounting period has expired. Rolling budget. Once that period gets over, for the next period we'll add, next period we'll add, like that. Zero based budget means what? From the scratch we will start. We call zero based budget also as a priority budget. Got it? Next, which I told 5, right? Generally this fifth question will be budget for 14 marks. It could be one budget or it could be two budget. Continuous budget. Continuous budget and rolling budget is almost same only, but yeah, we generally use the term. Which is this? 6A, 6B, sorry. Listen, I will just delete. You won't get to know what is what. How? I have written some random stuffs. Done. The factory of RS Limited is currently running at 50% capacity and produces 5 lakh units at a cost of 900 per unit as per given below. Material, labor, factory overhead is rupees 150, 60 is fixed, that means variable is 90, 60 is fixed, guys, 60 is fixed when number of units produced are 5 lakh, per unit it will change. Admin overhead 100, in that 50 is variable, 50 is fixed. The current selling price is 1000 per unit. At 60% working, material cost per unit increases by 2% and selling price per unit falls by 2%. Next, at 80% working, material cost per unit increases by 5%, selling price will fall by 5%, and unless and until that fall and increase they tell on the previous level, it's always on the base level. Estimate the profit of factory for 60%, 80% working and giving an offer for your comment. So it's advised always whatever the percentage, they have given, that you take, and we need to do for 60 as well as 80. 60 as well as 80. First they have told selling price. Correct? No. First let me take sales. By the way, 50%, how many units we are producing? And in budget, it's always important which is amount, which is units, you should clearly mention. Amount, not on the budget, anywhere. Rupees you mention as rupees, units you mention as units. Now, at 50%, how many units we are producing? 5 lakh. At 60% it should be. At 80% it should be. Okay. Sales. Listen. At 50% selling price is 1000. So 5 lakh into 1000. 25 crore. Sorry, 50 crore. 50 crore. Now, if at all you go for 60%, your selling price will fall by 2%, they are telling. So, selling price will go to 980. 1000 minus 2%. 980. So, 980 into 6 lakh. One second, you give me. This is sixth one, right? 6A na. Okay, give me a second. 6A, page number 55. I will just show it through the answer key because no need of much workings and all here. Page number which I told? Huh? Yeah. I say miss. Majority of the places correct. The only problem is last 3 attempts they gave properly. Earlier 2 attempts, in fact, last 2 attempts they are giving in much more in-depth manner. Till then, 15 marks answer, 14 marks, whatever nonsense it is, 2 lines, 3 lines they used to give. So you need that workings. That's the thing. Now, here, sales, how much we got? In lakhs, they are telling. All figures in lakh. So, 5,000. Next one, how much you got, by the way? 58 crore? 80 lakhs. That is 5880. Next one, when you are selling 8 lakh units, what they are telling? Selling price will fall by 5%. That means new selling price will become 950. So 950 into 8 lakh. Done. Next, shall we go to the material? Material 500 right now. So 500 into 5 lakh. 25 crores. Next one, they are telling 60% material cost per unit will increase by 2%. That means from straight away from 2% it is going to be 510. Like from 500 it will go to 510. Correct? No? So 510 into 6 lakh. 30 crore 60 lakh. Next one, from 500 it will increase by 5%. That means it will go to 525. 525. So 525 into 8 lakh, 42 crores. Next is labor. 150. No changes, nothing. So 150 into 5 lakh. 150 into 6 lakh. 150 into 8 lakh. Got it? Next. Factory overhead. First I will address variable, which is 90 rupees in nature. No changes, nothing. 90 into 5 lakh, 90 into 6 lakh, 90 into 8 lakh. Next one, fixed, which is 60 rupees at the given level of 5 lakh units. How much it is? 30. Got it? Here they have done it on marginal basis. You don't have to do on marginal basis. You can follow the normal approach. No problem at all. Is that clear? Done. If they say fixed cost changes, then you will add and less. Next is admin. 50 rupees is variable. So 50 into 5 lakh. 25 crore, 30 crore, 40 crore. Next one, fixed, that is also 50 rupees but at the given level, that is for 5 lakh units. 50 rupees for the given level, that is 5 lakh units. 25 crores. Got it? All other things are there. You will find out a profit. And you can see there 60% and 80% is going to give you the same amount of profit. You tell me which one you will go for. 50 is, it's not giving you more profit. 60%. Only lazy people can answer this. No. When 60% you work, you end up making same profit. 80% you work, end up making same profit. Mad or what to work extra 20%? When you have extra, that they will give. If you have extra scope, then they will give that also. So it is advised to go for 60% because you don't have to work extra. That's what I'm telling. So you'll go for the lower capacity there. Hope it's clear. Next is what? B, yeah, I know. Some here alternative solution they have given. I told you, no, you can just show either of the way. Here they didn't do it as per marginal. Here they done it as per normal. Next one, 6B. Budget is one of the easiest topic to score. See here. Chandana is a large retailer of consumer durables. Okay. Now, 25% of her sales for cash. That means immediate cash collection. And the balance is on 1 month's credit. Though at least 20% of the total sales end up being collected in the next month. 20% of not credit sale, 20% of total sale. That means try to understand. If the sale is 100, 25% is cash sale, will be taken in the current month. Remaining 75% is credit sale. That should be taken in the next month. But practically speaking, what is happening in this 20%, not 20% of 75%, overall 20%, because they are telling 20% of total sale, not credit sale. 20% of this will be taken in the after 2 months. This will be taken in the next month. Remaining 55 will be taken in the next month. Hope you guys understood this. Budget reading question is important, that too in cash budget. You are given the following data. Total sales achieved in January, February, March. Total sales estimated in April, May, June. Schedule the cash collection expected in the month of April, May and June. An estimate of additional collection in April, May, June if credit period of 1 month is to be enforced strictly. So now, first they are asking you how much you are going to collect in the month of April, May, June. Listen, whatever you sold in January, 25% collected in the month of January only. In the remaining 75%, 55 is collected in the month of Feb, 20 collected in the month of March. That means will April get affected by this? Okay. April relating to January month sale, nothing. However, February month sale, 25% collected in February only. 55 will be collected in 55 or 50? 55. 55 will be collected in the month of March. 20% of February total sales, not credit sale. If they say credit sale, I should take 120 into 75 of that 20%. No, 55 will be collected next month. Now, February month, 20% will be collected in the month of April. So, 120 into 20%. 24. And whenever amount in lakhs, you should write rupees in lakhs. Then March month, 160. 25 collected in the month of March. 25 collected in the month of March itself. 55 collected in the month of April. 160 into 55. 88. 20 collected in the month of May. 32. Got it? Now, April month. 25 collected in the month of April. 200 into 25. 55 collected in the month of May. Correct? 20 collected in the month of June. First line talking about 2 month credit. Second line talking about 1 month credit. Third line talking about cash sale. Please keep in mind. Next, May month, 200. 25% collected in May. 55% collected in June. Other 20% collected in July. We are least concerned. Next, June month. 25 collected in June month. 50. So, how much we are collecting in the month of April, May and June? 162, 192, 200 in June. Now, what if we collect with strict policy? That means nothing doing, boss. You are going to give me in 1 month only. I am not going to allow you to take whatever the time you want. I am giving you only 1 month credit. If that is the case, April, May, Huh? I said you are zoned out. You didn't hear only. Oh my god, my voice, if you don't hear, I don't know whose voice you can. Mine should be the loudest voice. You didn't listen. Good. Whatever we are doing, we are going for the strict policy. That is 1 month credit. No 2 months drama, 25%, 20% drama. That means January month, whatever sold, 25% collected in the month of Jan, 75 collected in the month of Feb. Feb, whatever sold, 25 in Feb, 75 in March. March, whatever sold, 25 in March, 75 in Feb. Sorry, April. 120 in April. Got it? April, whatever sold, 25 in April, 75 in May. Not 55, 75. Strict policy. Next month, May month, whatever is sold, 25 in the month of May, 75 in the month of June. Whatever is sold in June, 25% in the month of June, 75% in the month of July. First one, 170, 200, 200. Students will write this and happily will come out. But the problem is, no one concerned about how much you will collect. They are concerned about how much additional collection you are doing. Reading question is very important. So, 170, otherwise you would have collected 162. That means additional you are collecting 8 lakhs. 200, otherwise you would have collected 192. Additional you are collecting 8. 200, additional you are collecting nil. So 8, 8 and nil is what you are collecting, something extra. Anyone, any doubt in this? For presentation purpose, you can go and check once the material. Some nonsense things they have done here and some nonsense things they have done here. Alternatively, some nonsense things you can do like this, like this. Exam you copied? Which exam? Oh! Is it? Well, guys have given this.
Taking that 55%.
You might have taken that 75% of 20 and all. Done. That was December 25. Shall we go to June 25? In June 25, MCQ 8 and wow, 5 and 6B. So total they have asked for 21 plus 2, 23 marks. Okay, budget is easy. That doesn't mean that you should skip and go. Got it? Shall we see this now? Okay. Don't worry. That only. We'll play every day. Guys, the term budget slack means difference between budgeted output and break even. That is your margin of safety. Additional capacity available which can be budgeted for. That is idle capacity. Extended lead time between preparation of functional budget and master budget. Deliberate overestimation of cost and underestimation of revenue. D. 5. Answer is B now. What 5? Done, no 2 questions. Whatever it is. What they are asking, calculate the unit selling price and present the budget for 25-26 in a meaningful format. Because of your answer only they are giving this. Don't laugh like shameless person. What? No, I told no, last 2 attempts suggested answer is like top notch. No compromise. Look at the question. The operating result of PKS Limited for the year ending 31st March are summarized below. Sales they have given 48 lakh, trade discount they have given 2.4%. That means how many percentage discount we are giving? 5% discount we are giving. Correct now? Net sales 45.6. By the way, how much is selling price per unit here? 48 lakh divided by 40,000.
20,
120 per unit. Correct no? Discount is how much? 5% of this. 6. Correct no? Net sale is how much? 114. Direct material 14.4. So per unit how much? 14.4 divided by 40,000. 14.4 lakh. 14 lakh 40,000 divided by 40,000. 36 per unit. Direct labor 12 lakh 60,000 divided by 40,000. 31.5 per unit. Factory overhead, admin overhead, selling and distribution overhead, let it be, because in that generally there will be fixed as well as variable in nature. Now, the following changes are incorporated in the budget for the 25-26. Sales unit shall be increased by 25%. So, from 40,000 it will go to 50,000. 50,000 units. Material price will be increased by 15%. Don't do 14.4 plus 15%. Per unit you should check. 36 plus 15%. 41.4 per unit. No lakh thousand. We are calculating per unit. Next, direct wages to go up by 12%. 31.5 plus 12%. 28 what? That's it. I mean, no continuous number. Done. Overheads. Factory overhead will increase by 15%. In addition, a new facility will be added to the factory laboratory at a recurring cost of 12,500. That means factory overhead, if I take it as fixed in nature, then it's gonna be 6,30,000 plus 50%. 15%. 7,24,500. For that extra 12,500 will get added. New fixed cost. 7,37,000. Next one is admin and selling and distribution are estimated to increase by 10% and 14% respectively. Admin will go from 3,60,000 plus 10%. And selling and distribution will go by 4,50,000 plus 14%. 5,13,000. Is that clear? Inventory, no change they are telling. Great. Profit target for the year is 6 lakh rupees. Awesome. No change in the rate of trade discount. So no change in the rate of trade discount. Calculate the unit selling price and present the budget in the meaningful format. Unit selling price is very simple. Guys, how much is my variable cost here? Only two things are there. New cost is here. 41.4 plus 35.28. 76 point. This will be my variable cost. How much will be my fixed cost? These three. Sorry? 16,46,000. Guys, listen now. Let me take my selling price as X. How many units I am going to sell? 50,000 units. By the way, here selling price means I am talking about selling price after discount. After discount. So, selling price as X. So, my sales will be 50,000 X. 50,000 units I am selling, so 50,000 X. Variable cost will be 76.68 into 50,000.
38 lakh
34,000. My fixed cost will be 16 lakh 46,000. After that, I should still get profit of 6 lakh. So what is the value of X? 6 lakh plus 16 lakh 46,000 plus 38 lakh 34,000 whole divided by 50,000. 97.6. But this is after giving discount. That means I'm giving discount of 5%, right? 5%, right? So 95 means 97.6. 100 means question mark. 121.6. So 95 means 121.6. 100 means question mark.
128.
So my selling price before giving discount is 128. After giving discount, 121.6. Anyone any doubt in this? We got 128, right? 128. Accordingly, they showed you a budget in a meaningful format. Got it? See, can you imagine this question for 14 marks? Now, scenario 2 is treating overheads as a variable. You don't have to do scenario 1, scenario 2. If they don't tell anything about overhead, fixed or variable, you treat it as fixed and just knock it off. Okay, let them play alternative answer. We have nothing to do with that. Next one, 6b, is it? See, everything alternative solution. Then imagine the level of questions they are taking out. Yeah. 6b. What they are asking? That stores ledger I told, no, quarterly and all, that you ignore. Okay, that point you ignore. You don't have to study because the recent attempt they have asked it in December 25. They have asked. Are they going to ask in June 26? As if you went and set the paper. If anyone tells this, don't believe them. There is no rule that if in previous attempt it came, this attempt it won't come. Nothing like that. They can ask. There are instances of asking. So remember that. Don't study that way. Previous attempt this came, this attempt this won't. Nothing like that. Please keep it. You never know. That depends on how lucky you are. This should be the costing question, if I am not wrong. Give me 1 minute. What? There you go. See, 65, 60, 55, 60, 65, 60, 55, 60, 100, 110, 120, 105, 100, 110, 120, 105, shameless people. Raw material, everything data they have given, that is your illustration 40. First listen, we want, they are asking what? Find out the annual purchases. Guys, before knowing the consumption, we don't know purchase. Before knowing production, we don't know consumption. So first thing is, you have to find out how many units to be produced. See, in quarter 1, we are working for 65 days, we are producing 100 units. 60 days, 110, 55, 120, 60, 105. That will give us how many units to be produced. 6,500, 6,600, 6,600, 6,300, 26,000 is the total. Now, you have to produce 26,000. That means how much you are going to consume. 2 kgs if you consume. They are telling 2 kgs no here. Raw material required is 2 kg per unit. So to produce 26,000 units, you need 52,000 kgs. You need 52,000 kgs. However, opening 4,000 is there, closing 2,000 is required. When you need 52,000 to be consumed, 2,000 you want to keep as closing. That means in total how much you want. But you don't have to buy everything because already 4,000 is there in opening. So how much you have to purchase? So units to be purchased is 50,000 kgs. Now purchase budget. How you are going to purchase 50,000 in the ratio of 30%, 50%, 20%. 30%, 50%, 20%. 15,000, 25,000, 10,000. And purchase prices are, they only have given 1.5 will get purchase cost. They're asking closing balances also. How to do it? Opening balance they told 4,000 at the cost of 4,000. That means per unit it will come as 1 rupee. Next we purchase 15,000 units at the rate of 1 in quarter 1. We issued 13,000 in the first quarter. That means first 4,000 out of first lot as we are applying FIFO method, 9,000 out of second lot. So in the first quarter we left with 6,000 units of 1 rupee. In the second quarter we bought 25,000 units at rupees 1.05. Now we issued 13,200. In that 13,200, first we will issue first lot of 6,000. Remaining 7,200 is out of second lot. That means we will be left with 17,800. That is closing stock of second quarter. Like that you are going to do. In fourth quarter, there is no purchase, only outflow. That is consumption. Is that clear? This is how you are going to do. We are not going to discuss it now because we already discussed in the regular class, etc. Illustration 40. Illustration 40. Okay. Wait. Next. That's all in this paper. Great. Now how many papers are remaining? 4. 3 no. December, June, December. Question number 8 in case of MCQ and question number 6B, production and purchase budget. That's it. Just 7 plus 2. 7 plus 2. Question number is 8. That doesn't mean that they give 8 marks. If that's the case, I would be answering only 15th question. Plus 14th question, 39 marks, plus 13 question, plus 12, exemption. Question number 8. Happens. I mean, from morning you are sitting now. I can understand. Don't worry. Here you. Which attempt you are seeing, I told? December 24, question number 8, right? What is the name given to budget that has been prepared by re-evaluating activities and comparing the incremental cost of those activities with incremental budgeting? We call it as incremental budget. Only with extra. Rolling budget is continuing for the next accounting period. Zero based, start from scratch. Flexible, which can be changed for the different level of activities. Static or fixed is you can't change for required level of activity. Next is which one I told? (6B). Prepare a functional budget for the year ended 31st March 2025 under the following headings: production budget for product M and N, purchase budget for material Z in kgs as well as in values. G Limited has 2 products M and N. Both products are using the common raw material Z. The raw material Z is purchased at the rate of 72. The company has decided to review inventory management policy for the forthcoming year. The following forecast information has been extracted from the department for the year ended 31st March 2025. Sales they have given in terms of units. Finished goods stock increased by year end. That means your closing stock is more than opening stock. Guys, units to be produced. How to compute? Units to be produced. Units to be sold plus closing minus opening. Here they have given this value. Closing is more means positive is more, add it. Opening is more means negative is more, reduce it. Simple. They have given net value. Got it? So you don't have to adjust two things. They have given here post production rejection rate. Awesome. That means whatever you are getting now, that is net production. Units are available for sale. That doesn't mean that you produce so many units, because whatever you produced, in that 4% as well as 6% is going as loss. Material Z, you are going to use 5 kg and 6 kg net of wastage. That means after wastage it is 5 kg, 6 kg, because there is a wastage of 10 kg and 5 kg. Got it? Now they're asking production budget and purchase budget. Listen. Which are the two products they're telling? M and N. M is there, N is there. Units to be sold. Units to be sold. M, how many units to be sold? 28,000, N 13,000. Correct now? 28,000, 13,000. For that, I will add increase in closing stock over opening stock. First one it is 320, second one it is 160. $320, $160. This will give us units to be produced. Units to be produced. Net loss. That is after loss. This is not the total number of units you are producing, because there is a rejection now. So 28,000, 320, 13,000, 160. They only told, no? I mean, when you will be able to sell, you will be able to sell the perfect product, or you will be able to sell the scrap product. That means that is net loss.
Rejection rate, that means before that we profit.
This post production. That means after production there will be rejection. After that net you will need 28,320 and 13,160. Otherwise you can't sell so much, no? You can't sell so much, you can't keep closing so much. If at all you are totally producing so much. So total production is how much? Total production. Try to understand. You produce some X number of units. You produce some X number of units. But in that 4% is going as loss. After that, you are getting 28,320. That means, can I say 96 means 28,320. 100 means question mark. 29,500. Got it? Now, can I say that there is a loss of how much? Ayyo. Someone is cursing. 6%. That means 94 means 13,160. 100 means question mark. 14,000. Is that clear? These are the units to be produced. In that anyhow loss will go and finally we'll get the good units. Now, to produce these many units, I have to consume how much raw material? After everything, 5 and 6. So 5 kgs, 6 kgs. How much we are going to consume? 84,000. But the problem here is, am I going to give this much only input? No. If I give this much only input, I don't get output of 28,500 and 14,000. Why? There is a loss. Mark this question as LMR. Okay. How much loss is there, guys? 10% and 5%. That means I'm not giving input. Input to be given. Input to be given. I'm not giving 147,500 as input because whatever input I'm giving in the 10% is going as waste. After that 5 kg is left. You can find out per unit and then multiply it, or you can find out like this and do it. That means whatever I'm giving of that 90% is 147,500. 100% is question mark. Next one. Leave. Next one. 5 kg is wastage. 5% is wastage. Correct? No. That means whatever we have given is just 95% of, whatever is there, that is just 95% of what we have given. So how much we have given?
8,421.505.
This is what you have to consume. You have to consume. Also, they have given, by any chance opening, closing they have told? That's it. Then you are going to find out how much. And they are telling the management of G Limited has decided there should not be more than 40 orders in a year. You will add these two. You will get to know how much kgs you want. Divide by 40. If you do, you will get to know how many orders to be placed. Simple question. That's it now in this attempt. Next attempt, please. June 2024. Question number 8 for 2 marks. Question number 10 for 2 marks. Question number 12 for 2 marks. Total 6 marks in MCQ. And question number 5 for 14 marks. And question number 6B for 7 marks. So 21 plus 6, 27. So for budgeting, there is no normal end, either extreme low or extreme high. There is no uniformity of 14 marks and all. So 8, 10 and 12. First one. The first one, first chapter. 8. Okay. Now, FBT Limited is presently operating at 60%, producing 600 units. The cost structure is 60% level of activities, material 50, labor 25, direct expense 5, factory overhead is 20,000. Of that 60% is variable. That means how much is variable? 12,000 is variable. Correct? No. That means per unit how much? 20 na? 20. Variable cost per unit is 20. Next, admin overhead is 15,000. Of that 60% is fixed. That means 40% is variable. So 6,000 is variable. 6,000 is to produce 600. Per unit 10. What will be the total cost per unit for production at 80% capacity? Guys. 10 rupee plus 20 rupees, 30 rupees plus 5 rupees, 35 plus 25, 60 plus 50, 110. Correct? No? Rupees 110. Rupees 110 is variable cost. So at 80% capacity, how much will be producing? 800 units. Correct? No? Leave. Any variable cost per unit won't change. Now fixed cost. Here how much it is? 8,000, 40% of that, plus 9,000, 60% of that. 17,000 is it? 17,000 divided by 800. 21.25 per unit. How much? 131.25. Hope you guys understood. Next question is what I told. 10th one. Dash is defined as a budget continuously updated by adding a further accounting period when the earlier accounting period is expired. Rolling budget. Whoever saw this PYP and went to that examination would have answered this. Correct? No? Next one. That's it. Forget. Next one is what? I told 4 or 5 or 5. This is your cash budget. Listen, here I will just tell in this question, nothing much special is there. Just simple. You will get to know how many units to be sold. And they have told that what will be the increase here due to the change in selling price. So new selling prices you will get, new cost you will get, new units you will get. Apply that and find out your cash budget with the given data. Nothing is there in this question. Nothing is there in this question. Simple only. You try solving. If you are not able to solve this, while in costing marathon, if you get the time, we'll solve it. No problem. But yeah, simple it is. You just have to apply whatever they have given, additional deduction, all those things. Next is 6B now. Prepare production budget and prepare purchase budget. An electronic gadget manufacturer prepares sales budget for next few months in respect of the following figures. Sales they have told. Apart from other material, 2 units of batteries are required to manufacture a gadget. So to produce one gadget, you need 2 batteries. Company wants to hold a stock of batteries at the end of each month to cover 30% of the next month production. And hold stock of manufacturing gadget as 25% of next month's sale. 3250 units of battery and 1200 were in stock. Listen, if at all they don't give this information, how much they're in stock, how to produce, you have to check whether they have used the term newly established organization or so. If no, that means they are there in the business from long time. That means, can I say that January month's opening is closing of December? What is the condition for closing? 25% of next month's sale. That means, can I tell December month closing is 25% of January month sale? December month closing is next month 25% sale, January month sale. So this into 25% will give you closing stock of December, which is opening stock of January. That's how you should do. Not that they haven't given opening stock, so there is no opening stock. Not that way. Got it? Now, guys, all you have to do is take the opening stock, take the sales units, add the closing stock. I will just do it. See, January month, what is the closing stock they are telling? 25% of next month's sale. So 6,000 into 25%. March month it is 25% of February month, March month's 25%. And they're asking for which month? March, January, February, March, April. No. In March month it is. Production is for April month. For purchase it's only January, February, March. 1,875. April 2,000. Minus opening stock. January month opening stock is 1,200. Correct? No? They have given. Otherwise, you should have taken 1,250. If they haven't given, you should have taken 1,250 by calculating. February month, 1,500. How much is closing of January?
That 1,500.
This is closing stock. This is opening stock. February month's opening stock is January month's closing stock. Then how much it is?
We have to calculate 5,000.
What is the closing stock criteria? Next month sales 25%. So January month we will keep 25% of February month sale. February month sale is 1,600. 25% of it is how much? What? Opening stock is 1,750 here. 1,875. Only for first month you need to do all those drama. If they don't give. Every month you don't have to complicate the things. First one, second 300 akka 5000. Who will add the sold units? 5300, 6250. I am teaching from 7:30 morning, or you guys are teaching, I don't know. My brain is still working, your brain is already off. 7125. 7. Done. These are units to be produced. Units to be produced. Got it? And they are telling each and every unit will take 2 batteries. So what is the consumption? 10,600, 12,500, 14,250, 15,250. Correct? No? These are your consumption. What they are telling about battery stock? The company wants to hold a stock of battery at the end of each month to cover 30% of next month's production. 30% of next month's production. And hold stock of manufactured gadget that will give 30% of next month production. Here opening if they haven't given, then for January month opening will be December month closing. December month closing will be 30% of January month's consumption. Got it? Got it? But here they have given. So what I will do for the consumption, I will add 30% of next month's consumption minus opening. Opening is what? Previous month's closing. You will get units to be purchased. And only till March they have asked, not for all. They are very smart. They don't have to take risk. 1 mark, 1 mark, 1 mark, 1 mark. 7 marks, no. 1 mark, 1 mark, 1 mark. If they ask April month, they have to allot. Otherwise, they have to allot point and all. No risk. Easy. I want to be examiner of CM. Hope it's clear. Then I can't teach. Jan alone solve. Which one? Battery na. See, you need 10,600, no? 10,600 is what you are going to consume. Add how much you want to keep in closing stock. 30% of February month, 12,500 into 13%, 1,250 into 3, 3,750. This you want to keep it as closing. Minus opening, they have told 3250. That means 11,100 is what you should purchase. Understood? Now talking about February, 12,500 is what you want to consume. Plus closing is 30% of February month. 14,250 into 30%. 4,275 minus January month's closing stock, which is 3,750. Or you can take this month's 30% also. You will get the same. How much? $13,025. March month, how much you are consuming? 14,250 plus 15,250 into 30% minus opening what you are keeping, 4,275. That is a February month's closing. 14,550. Clear? Anyone in doubt? And also, May month they haven't, April month they haven't asked because you want to know the May month's production. May month's production they haven't asked because you want to know the June month sale. Simple. Got it? 3 also I solved. Next up. That's all? Or we have one more paper to discuss? 2023, one they have asked in MCQ. Answer is master budget. Cash budget they have asked. Production requirement of purchase 6A and 5 and 6B. That is standard there. What is the number of MCQ they told? 8. That is for how many marks? Smart. That is the budget which incorporates all functional budget which is finally approved and adopted. Master budget. It includes all the budget summary. 555. These are just like the question previous one I told, no? Same way, they have given us sales units and all. You just go and check all these things once. If you get any doubt, let me know. Let's not see that. Here they're asking all material will be purchased on 3rd June. Okay. Prepare production budget and material requirement budget for the requirement budget means consumption budget. For the June and material purchase budget indicating the total expenditure. So cost you have to multiply here with the units purchased. So they have told here actual inventory, budgeted inventory. That means opening stock and closing stock they have told here. For this is for final products, this is for raw materials. Here they have told X chemicals manufactures 2 AB and CD by mixing the raw materials in the proportion. To produce AB, you need 80% and 20% of A and B. To produce C and D plus, you need 50% and 50% of C and D. The finished weight of A and B are equal to the weight of ingredients. That means there is no loss they are telling. During the month of June, it is expected 60 tons of AB and 200 tons of CD will be sold. AD how much? 60 and 200. How much we want to keep in closing? They are telling 5 and 60. Correct now? And how much there is opening? 10 and 50. 10 and 50. So how much you have to produce? 65, 55 you have to produce. Here 260, 210 you have to produce. Got it? And they are telling tons you have to produce. Correct now? Now AD will take product A and D in the ratio of 80 and 20. That means 11 and 44. This is your consumption. 210 in the ratio of 50-50. 105, 105. This is A, this is D, sorry, this is B, D, this is C, this is D. Actually, this is B. No, I wrote it as D. B. Got it? Now we got to know how much is consumption. 44, 11, 105, 105. I know the closing. 15, sorry, 20, 40, 300, 200. I know the opening. See, always don't think add closing minus opening. If at all you want to find out the units to be sold, you have to add opening, reduce closing from the purchase production. So 15, 10, 200, 250. First one 49. Normal English, not Urdu, to come back. Come backwards. Sorry, 41, 205, 55. Correct no? These many units you have to purchase. And you know the purchase prices also. Into 500, 400, 100, 200. First one 24,500. Huh?
60,400.
Okay.
20,500.
Done. That's it. Simple. Hope you guys understood this. The 2 cash budgets, you have to check it once. Okay. With that, we have completed June 23. Since which chapter we are solving? She lost it. She's gone. Like, she went mad. I don't know. Hopefully, will be proper till you write your exams. So, with that, we have completed management accounting marathon discussion. I hope you guys learned something, revised a little bit. Yes. So, fine. Hope you guys have liked it, and whoever is watching through YouTube, all the best. Whoever is sitting here, all the best, of course. She told. I was about to say something else. She told all the best. Yeah, all the best for your exams, all. And yes, please subscribe to our channel. Bye. Fully watching and all. No, 2x they will watch. Chalo, bye. And keep me posted on your result. Hope you guys get good marks. Tomorrow we'll see you guys for costing marathon. Bye.